for easing the life of a common citizen. Once the requirement goes up, there is going to be acceleration in the automatically, organically. This is going to give a growth to the both satellite manufacturing as well as for the launch. The upstream is going to take care of that.
So on that point, Mr. Mishra, many satellite operators today, they opt for rideshare launches. They go on larger rockets because that becomes cheaper. Does that make the business case for dedicated small satellite launchers that much more challenging?
Right, sir. Mission like SpaceX company, Rocket Lab, and Arianespace, these all big launch vehicle companies are doing nowadays because their lift-off capacities are so huge. If you are coming with a 15, 20 or 100 kg also, it is inadequate for them to have the trade-off. So they need multiple satellites once it is booked. So in one shot, they will send to the orbit. But coming to the small satellite launch vehicles, probably their carrying capacity will be around 500 or 1000 kg in maximum. So they just don't wait, or they don't want to keep so many satellites waiting. So as long as their slots are filled, they will launch. And one better advantage is, unlike rideshare, these small satellite launch vehicles will take you to your desired orbit. They will not leave you loitering in other orbits, and you have to struggle to reach your own intended desired orbit. So that is advantage with this low capacity launch vehicles for this low Earth orbit missions, especially.
So, you know, I ask you this because India often talks about becoming a launch hub. But now with everything that I'm hearing, is the real opportunity actually going beyond launches into satellites, into communications, into Earth observation, into data services? Mr. Mishra.
See, launch vehicle, of course, it does not contribute much with respect to the space whole economy.
Right.
If you see 35-40% comes for data, then 30-35% from satellite manufacturing, then remaining in ground segments like ground centers, and then balance falls with launch vehicles. But to master the launch vehicle technology itself is a Herculean job. You know, there is a joke people say that there is no insurance company provide insurance for launch vehicles, but you will get insurance for satellites. It means once you master this launch vehicle, definitely you can master other technologies. Of course, coming to economy point of view and cost and generating revenues, still data is the king. Processing satellite data and information is the king. However, we cannot ignore launch vehicle, because if you don't have the vehicle, then how will you reach your destination, and how you will generate the revenue?
But Manish Purohit, looking at now India's space economy projected to grow dramatically over the next decade, I want to understand from you whether it's launches, services that are built on space assets, the route that you think is going to serve us best at this stage, considering the success of Vikram 1 at one level, but also considering where the startups are placed right now, where our capabilities are getting concentrated.
See, actually, at this moment, we are talking about Vikram, but I'm involved with multiple startups.
Yes.
And we are, and over the period of last around 10 to 12 months, I have come across some 50-60 brilliant startups that are right now active in India. So we are not just building launch vehicles, I'm telling you. As the sir was saying that about the P&T, position and navigation and timing information, we have startups that are specifically working for the navigation stuff. We have the startups that are specifically working for the strategic forces, for data relay, for optical communication, for high fidelity information. Almost everything right now is happening in our ecosystem. And the best part is, funds are flowing. So that is the big thing, that right now, the venture capitalists, they are believing into the story of Indian space ecosystem with the startups, and they believe that coming decade we will be very strong, getting good businesses. And these startups, what we are talking about, whether upstream, downstream, about the satellite manufacturing, yes, there are startups who are actively involved right now, and they are progressing in a really positive way. So the future is really promising right now as we sit here.
It is promising, but it is capital intensive, this business. Rajiv Jyoti, wouldn't you agree? Yes. This is a highly capital intensive business. So is enough long-term financing available for all these ambitious private ventures?
Yeah, I think you said this, that it is a very highly capital intensive, and that's why from the government of India, from InSpace, we are bringing a lot of manufacturing hubs in the country, where we are creating facilities, because those facilities which will be commonly used by all these companies for manufacturing, they could not concentrate on developing their individual facilities. This will be available by with each state. Right now, we are talking about Gujarat and Tamil Nadu. We are talking about both for launch vehicles as well as for the small satellite and also for the data applications. Where common facilities will be made available to them, so which they will pay per use. And also, we are making sure that the satellite companies require two types of technologies. One is a satellite bus, which carries a payload. Payload can vary every time. And so we have created from InSpace the satellite bus as a service, which is going to give a platform. Right now, 3 companies we have awarded the contract, and they were going to give a services to the satellite bus as a service. So payload companies are going to develop their payload, and hosted payload services will be given by the satellite bus services providers. And also ground station services also are going to be equally important, which is required to develop the whole ecosystem.
Yes.
So the whole ecosystem is very important. It's not only the manufacturing, not only it's also ground station, the satellite, the payload hosted services, the launch services, and also our requirement which will be coming from our common citizen, the space-based applications, which will be through all the sectors. And also we need to tap all the companies those countries which are non-faring space-faring countries.
Yes.
Where those demand also has to be captured by some at the low-cost solution, which will be coming out of this ecosystem which is developing in the country.
Well, the consensus seems to be that Vikram 1 is far more than just a successful rocket launch. It is actual proof that India's space reforms are working and that Indian private enterprise can deliver world-class technology. But tonight's debate is also saying that reaching orbit is the milestone, it's not the destination. Now the real test begins, because in the space race of the future, success is not going to be measured by how many rockets we launch, but by how much value we are able to create. And for that, we need reforms push as well, that kind of support coming through from the government side now that the private sector is participating in such a huge way. My thanks to Manish Purohit, Devadatta Mishra, Pranit Mehta and Rajiv Joshi. Thank you very much for joining us with your insights. So yes, Vikram 1 has shown that India can build rockets. The next challenge is proving that India can build a world-leading space economy around them. That is the big question.
This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise and excellence meet. In the presence of the Finance Minister, Nirmala Sitharaman. NDTV Profit Business Leadership Awards, 26 July on the NDTV network. India's unshakable news habit. NDTV.com is India's #1 English news website. The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026. 26 July. Only on NDTV.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Amid further escalations and new threats exchanged between warring US and Iran, reports suggest that mediators are scrambling to bring both parties to the negotiation table. Reports also indicate a possible 10-day ceasefire. Meanwhile, fears of higher energy prices and inflation concerns stripped Wall Street of all early gains in the closing session. US futures trade flat as investors await another round of corporate earnings. Oil holds on to steady gains. Weak global cues, oil volatility and earnings impact Dalal Street as Nifty closes the first session of the week in the red despite a recovery in the second. Positive bias remains with GIFT Nifty indicating a flat opening today. Dalal Street to also see impact on respective stocks after a slew of companies announced results yesterday. While Paytm and Canara HSBC Life delivered healthy numbers, it was a mixed bag for Bajaj Health, weak quarter for transformers and rectifiers. And the RBI says banks have raised $17.4 billion under FCNRB deposit schemes since June 8. Central Bank highlights strong foreign currency inflows following the measures to bolster India's balance of payments. Good morning. You're watching Markets Today with me, Shreyanshi Singh, and over the next half an hour or so, we'll tell you everything that you need to know to start your day on the right note. In fact, let's begin with just that. Take a very quick look at the handover coming in. In terms of the Middle East tensions as well, and the conflict seems to have intensified further, with the US really carrying out a 10th consecutive night of strikes on Iran as Washington signaled operations will continue. You do have Iran claiming that there were fresh attacks on US military assets, while a tanker was also reportedly struck near the Strait of Hormuz. So that's the update that you're looking at, really renewing some of those concerns over maritime security, adding to the tensions. You do have Yemen's Houthis who've announced a blockade targeting Saudi shipping, raising some of those fears of a wider disruption as well. So that's also something that you're looking at in terms of key updates. But speaking of key updates, let's also talk about how President Donald Trump also imposed 50% tariffs on most Canadian goods, and that's also one important update that you're looking at this morning, declaring that Canada has unfairly discriminated against American autos, alcohol and dairy products. So the administration official previewing the action said that Canada, in fact, was one of the only nations other than China that retaliated against Trump's previous tariffs and must be held accountable. So that now is the word coming in terms of those Canada tariffs. Against that backdrop, let's also quickly take a look at what the handover then looks like, whether you talk about US markets or Asia for that matter. First, let's talk about US markets. And it's largely looking like a tepid session across the board when you talk about yesterday's session. As you can see on your screens, it's actually S&P 500. That's down about 0.2% there, about 0.5% uptick really coming in for Dow Jones in yesterday's session, and Nasdaq just about seeming to hold resilient in comparison to its peers. But when you talk about the US futures picture as well, you're looking at a little bit of close to the flatline move there as well. So not very decisive cues coming in there as well. When you talk about Asia as well, it's a little bit of a mixed handover that you have when you look at some of the Asian indices as well. So when you talk about Nikkei, that's the one that's up about 1.9%. Hang Seng down about 0.5%, and 0.5% uptick there about coming in for Shanghai as well. So that largely is the kind of handover that you have. Now, when you talk about the Nifty implied as well, slight bit of a weakness is what you're penciling in terms of the cues going forward into today's trading session. And speaking of today's trading session, let's also talk about what the F&O cues in fact seem to be indicating bright and early this morning, because there's a lot to look at even on that front as well, Puneet.
Well, most certainly, and we spoke about the pressure that could hamper the movement on the Bank Nifty, and that's exactly what played out, because despite ICICI's good performance as well, the whole banking pack led by HDFC, Axis and Kotak led to a downtick on the index today as well. You're seeing a 100-point implied open downtick, so we'll be closer to the 24,150 odd mark, and hence yet again breaching the 24,200 mark. It's been a weak support, but a support nonetheless. So you will be watching out for all those moves. In terms of the Bank Nifty, yesterday I mentioned about all of those key banking names that were under pressure, and hence you breached 58,000 yet again. You've largely done with the private banking names. So the PSU banking will have to take the baton going forward. Yesterday was the day where you saw that divergent trend. Nifty PSU index was one of the biggest gainers, while the private banks and the Nifty Bank were the biggest losers. Cash market also, there's been a similar story last week. FIS sold almost 9,100 crores in the cash market today as well. Roughly around 1,100 crores has been sold in Monday's session, and the index long, as we go into the expiry for the Nifty 50 today, you have seen largely maintained at the 10 to 11%. So not too much change in the weekly positions that they've been holding on. The put call ratio actually surprisingly have actually held on to that 1.37 mark. So it means that the puts and the levels of the puts compared to the calls is much higher. And that's visible on the open interest distribution as well, which we continue to monitor across levels. Now, yesterday we spoke about 24,000 to 24,200 for the puts. That has actually seen some deceleration, while the calls have actually built on at the 24,100 and the 24,200 mark, also on the 24,500 mark. So starting to see some moves, but yet again to watch out for in terms of where the index goes in the near term. And for stock specific action, you've seen some movement in terms of the gainers on Radico Kheta and GVTND, as well as on Torrent Pharma, all three seeing build up of longs. For the losers though, you have seen some moves yet again come through on Bandhan Bank, where longs have been unwinded. Indus Towers is the other one where a similar trajectory is visible. And PNB on the back of good numbers was a 5% saw covering of shorts yesterday. So that is the FNOQ for today. The Nifty expiry today, so watch out for all those moves. But the banking names will continue to be in focus if there is any reversal visible today.
Absolutely, and thank you so much, Puneet, for joining us with that update as well. Let's also talk about some of the counters coming in terms of the financial space that are in focus as well. And when you talk about something like a Paytm, that reported largely a stronger than expected set that you're looking at. And, you know, this was largely driven by payments and financial services, while brokerages are also raising some of their target prices when it comes to this particular counter. In fact, Sharad is standing by with that update. It seems like a very good set of numbers, and brokerages are taking note, Sharad.
Well, exactly. The numbers have been strong and beating the street estimates. And largely, if you look at the headline numbers, the company registered its highest ever quarterly EBITDA number. GMV, this is one of the key parameters to track. That has also done well, especially the financial services and the payment services. That is where the revenue growth is coming in. But the contribution margin, that's where sequentially there has been a slight decline coming in. But the brokerages seem to be quite bullish on the counter, especially for Citi. They have hiked their target price from 1425 to almost 1560 rupees per share, and the payment GMV is something which they are quite bullish on. They're seeing this upside to the earnings coming ahead if the UPI MDR is introduced as well, and that's what the buzz is happening in the market. Also, Goldman Sachs also has hiked the target price for Paytm, and they have stated that the strong traction is coming in the merchant loan distribution segment, and the EBITDA margin could actually double for Paytm versus the first quarter levels by FY28. So it will be pretty interesting to talk about. But yes, there is of course a little bit of a change in a strategic plan for Paytm when it comes to the bonus issue that was expected to be announced, but the company has chosen to call off this bonus issue announcement, and they've stated clearly that they'll be focusing on the long-term shareholder value creation, and the board right now is of the view that the company will focus further on the compounding growth and the profitability for shareholding value creation. But in short, the bonus issue announcement has been taken back.
No, absolutely, and thank you so much, Sharath, for joining us with that announcement really in focus as well. So watch out for the stock on the back of that announcement being taken back. Also, the decent, strong set of numbers as well. But speaking of strong, let's talk about Ultratech Cements as well, because that counter is going to be in focus on the back of a decent set of numbers that you're looking at. And Puneet, when you talk about across the board, whether you talk about the core numbers or the volumes or capacity utilization, it all seems to be a very healthy set.
Well, most certainly all going in the right directions for the company. Now, the results came during market hours, but just a quick peek as well. Because of 15% revenue growth that we saw in the quarter, EBITDA was up by almost 13.7%, margins maintained at that 20.3%, and the profits also grew subsequently by 16%. Revenue growth, we were anticipating roughly 9 to 10%, so it's much higher than that. Profit growth has also been much higher. But when you look at the volumes, it was a volume-led quarter. The 13% volume uptake was a major positive surprise, with the street estimating roughly 9 to 10%. Grey cement volumes up 12.2%. With the company's overall capacity utilization at 81%. What that has done is also boosted the EBITDA per ton in terms of good operating leverage coming through at roughly 1,214 rupees per ton versus 1,198 on a YOY basis. Now, when you look at the key highlights, of course, there was a rapid turnaround in India Cements, and that boosted the overall consolidated profit numbers too, because from a loss earlier, they have reported a profit of 52 odd crores. The other aspect that the India Cement volumes have actually also grown by 18.5%, shows you the turnaround in just 4 quarters after the company has acquired it as well. The current capacity stands at 200 million tons. They are expecting a capacity addition of 15.9 million tons in FY27, 29.8 in FY28. But the story also goes that the management was very positive in the conference call as well, and that's reflected in all brokerages raising target prices today. So when you look at some key highlights, Jefferies have actually hiked the target price to 14,065, saying that Ultratech is currently staying ahead of the pack. They also feel that the Q1 reflects a strong execution on both unit EBITDA as well as volume growth, and they feel that the management's pricing largely remaining stable through the monsoon is another big positive, which is generally a slow quarter for the company. Double-digit volume growth in FY27 is another something on the cards. Goldman Sachs maintaining a target price of 13,500. This one's also inched up from the previous one. And very interestingly, they've said that the company is actually growing as an incumbent company like a challenger in this particular market. So they feel that the dominance is visible to superior growth in terms of volumes as well as relatively better pricing. They feel that the company will be able to deliver 16% EBITDA CAGR over the next 2 years. It's a similar notion that Morgan Stanley has also passed through. High target price to 14,700, and they feel the sharp volume market share without compromising on realization is one of the most important points for them. They are watching out for demand post trajectory. And finally, in this rapid fire brokerage round, CLS is the last one where they have hiked the target price to 14,000 rupees and maintain that the company beat on all fronts, and the cost guidance has actually surprised them. So that's the overall picture on Ultratech, a strong quarterly results as well as guidance for the year.
Absolutely, Puneet. And when it comes to the earnings or the rapid fire brokerage, update as well coming in, the key takeaway here is that the brokerages really seem bullish here, and that's why the stock is going to be in focus. Thank you so much for joining in with that as well. So there you go. That's the entire update coming in when you talk about some of those counters. But let's also get you the management commentary, and they're striking an optimistic note on demand. The company is saying that its conviction in sustained demand has strengthened after the first quarter performance, while a healthy order pipeline across the board really remains intact as well. Let's go across and listen in to that bit of commentary coming in from the CFO.
The one big theme for us quarter after quarter is demand. If the demand is good, everything falls in line. And I'm delighted to report that the first quarter of fiscal 27 has reaffirmed that conviction emphatically. With a double-digit volume growth and a demand pipeline across infrastructure, housing, and urban real estate is as rich as it can be. Core sector growth slowing down in the month of May, lower coal and refinery output, and aggregate state capex in April-May growing a modest 2% year-on-year.
Alright, then there you go. So that's Ultratech that's going to be in focus as well. But that's said and done. When you talk about some of the other earnings, something like a Bluestone, Rallis India, all of those counters will remain in focus as well. In fact, Parth is standing by with an update on those and some more counters as well, Parth.
Yeah, that's right. So the earnings season is going through its peak right now, and there are a lot of companies that are reporting their earnings, but here are the top few ones. Starting with the ones that have reported some good numbers. The first one is Canara HSBC Life. The company saw a healthy growth of 29% in VNB, while the total APE grew by 19% year on year. The next one is Sobha, which has achieved its best ever quarterly pre-sales, and this was driven by new project launches. The collections during the quarter were up 8% year on year, while realizations also saw a growth of 9% year on year. The next one is Action Construction Equipment, which has achieved the best ever Q1 revenue and margins as well. The PAT also saw a growth of 22% year on year. Also talking about Bluestone Jewelry, it was a turnaround quarter for the company, with the company reporting profits versus losses last year, and revenue saw an uptick of 49% with a very strong same-store sales growth of 39%. The next one is Rallis India, which saw a strong growth of 19% in the B2C segment, which led the overall 7% growth in the overall crop segment, despite a 19% decline in the B2B segment as well. The last one in the positive category is Central Mine Planning, which has reported a very strong overall growth, with EBITDA being the key focus, growing at 62% year on year. Now there are two companies that have reported a weaker set of numbers. The first one is Taril, which has seen some weak execution, with order inflow and order book growing really well, but revenue only seeing a growth of 8% year on year. And the second one is Advait Jewels, which had a really weak fourth quarter of financial year 26. The PAT was down 46% year on year, while sales also saw a downtick of 28% year on year. So these are the top earnings that you should keep on your watch list for today.
Absolutely, and thank you so much, Parth, for joining us with that entire list. So there you go. Something like a Taril stands out on the back of weak execution. Some of those counters really in focus and will be possibly buzzing away in trade. Speaking of buzzing away, let's also talk about some of those counters that are going to be in focus on the back of news flow as well. And there's an entire list there which consists of RITES, Indigo as well. Some of those counters that really make it to Varsha's radar as well. Varsha, good morning.
Good morning. Let me start with SBI, wherein SBI Fund Management listing is today. So SBI will also be in focus. You have Ultratech Cement, wherein brokerages have turned bullish. A company has also announced 5,000 crore fundraise. You have RITES, which will be in focus on the back of MOU signed. Interglobe Aviation has also signed MOU. This is for order of 1,000 plus LEAP 1A engines. Atmos Solar Holdings will be in focus on the back of commissioning of their battery energy storage system project. You have India Glycols, wherein NCLT have sanctioned in company's demerger of Biopharma and Spirits undertaking. You have MCare Pharma, wherein they've received approval for liver drug. Reddington will also be in focus on the back of 5-year strategic relationship. This is for AI engagement, expansion across Middle East, India and SESA. You have Asiana Housing, wherein they've converted 224 units into bookings worth rupees 372 crores. So keep this stock in focus. You also have Gandhar Oil, wherein Neomile Fund has acquired 8.6 lakh shares. Two stocks which will also be in focus, but on a negative side, I would say you have Hindalco, wherein US offers to have aluminium duties for firms building in US. Even CV stocks will also be in focus, as there is weak commentary which was given by Ashok Leyland.
Absolutely, and thank you so much, Varsha, for joining us with that entire bit in terms of some of the stocks that are going to be in focus. But let's also talk about the stocks that are making it to brokerage radar as well. And you do have some of the NBFC or smaller private banks that make it to their list. There's Sona BLW and some of the FMCG stocks on the back of brokerage notes as well coming in. Jasmeet, let's talk about all the gamut of these stocks that I mentioned.
Well, very good morning and thank you for that. I have three brokerage notes with me. The two speak about the sector and one about a particular stock. Starting off with the first one, I have Jefferies on FCNR. That's basically foreign currency non-resident deposits. What they speak is the overall FCNR is off to a good start. They're seeing a good traction for this particular initiative. They also make a note that the fresh money is flowing in from UAE, Singapore and Hong Kong. They state that 50 to 70 billion mobilization will be a key positive for the entire sector, and for this particular play, they also state that NBFC and smaller private banks are the best at play for such mobilization. While the second one is UBS Note and Sonar BLW. Now what they have done is they've initiated a buy rating on this particular counter with a target price of rupees 830. While they state the sum is greater than the parts, the title of the report. Further, they also state that the stronger legacy business is something that's gaining a lot of traction for the company, and the company also has multiple growth engines apart from the legacy drivers. They also state that the company has an early more advantage when it comes to the overall potentially transformative industry, and they also expect the company to grow in a healthy way. In terms of the estimation, they estimate that the overall revenue to grow at a CAGR of 20% over next 5 years, while the overall earnings to grow, the EPS to grow at roughly 25% CAGR over next 5 years. And lastly, they also state that this is supported by the increased diversified mix of the company that's leading to the overall growth. While the last one is CLS on Indian consumer. Well, this particular brokerage has analyzed the entire FMCG segment and also picked up about the price hike that the brokerages of the FMCG companies that have been doing. While the first one is they see that the overall 5x more price increase that they have seen since the month of May compared to the cuts. They also state that the 18% of the samples they have taken from the estimation has seen a price hike. While they also said that the home care saw the biggest price hike in this segment, while the Britannia biscuits saw an uptick of nearly 8% in terms of the overall average price hike. While lastly, they say that the coconut hair oil saw a downtick of 11%, and that could be on the back of that lower input cost. While they also state that WAHO, that's the value added hair oil, saw an uptick of nearly 14%.
Absolutely, and thank you so much, Jasmeet, for joining us with all of those brokerage radar bets as well. Let's also talk about the RBI saying that banks have mobilized over $17.4 billion under the FCNRB deposit scheme since June 8 till July 17th as well. In fact, you do have Piyush joining in with all of those key takeaways there.
Yeah, that's right. The RBI special swap facilities, to attract this dollar inflows have brought in a total of $20.72 billion till July 17. This money is coming via, FCNR deposits, FCNR deposits, OFCVs and ECVs. A total of $1.97 billion of overseas foreign currency borrowing has come in till July 17th. And ECBs amounting to around $1.34 billion have come in. The RBI had announced these measures in its last MPC on June 5, to help bring in dollar inflows, because rupee was also, going to the lower level. And the scheme essentially for FCNR, the timeline is till December, and for OFCB and ECBs, banks are allowed to offer these facilities till December 31. RBI provides, essentially the RBI takes care of hedging costs in FCNRB deposit, the full hedging cost, and for ECB and OFCB there is some compensation given with regard to the hedging cost. So the expectation overall is that all these measures combined will bring in around 60 to 70 odd billion dollars, and with this timely report we know that already $20 billion have flown in.
Absolutely, and thank you so much, Piyush, for joining us with that entire update also coming in. So some of those banks are definitely going to be in the spotlight as well, and that's something to watch out for in terms of that entire pack. But speaking of what else to watch out for, let's also focus in on the company which is set to list on the bourses today. You're talking about SBI Funds Management, and there's been a lot of chatter around this. Now, we finally have a SWOT analysis also coming in on the day of the listing as well. Let's talk about this one, Sharad, and you've been talking about this one for a bit as well.
Well, exactly, and two important initiating reports have come in. We have already seen a good institutional participation, and the grey market premium is also suggesting at least 15 to 20% premium gains. There will be a good listing pop and follow-on buying also. But just to revise, let's get you the SWOT analysis. The strength, of course, is a strong parentage distribution. They're having one of the highest, you could say SIP market share. Passive as a percentage of AUM, you could say is highest amongst the peers. And if you look at the internals, especially margins, ROEs and cost structure, is way better than peers. Looking at the weaknesses, of course, the revenue is slightly lower than ICICI Pru AMC, and this is because of a higher exposure coming in the passive segment. Yields were impacted because of this as well, and the HDFC Mutual Fund and ICICI Pru have better negotiating rates with the distributors, and there is a little bit of concentration of fund managers AUM as well. But let's look at the opportunities also for SBI funds. There's a more headway, especially with the AUM growth coming in from the parent. They have another promoter which is from, of course, abroad, so we will have better connections and more AUM flows coming in. More potential they have in B30 markets because of the market share, passive book, and also there's a good growth coming in the non-mutual fund segment. And the last one threat is the industry's yield pressure which is there. There's a rising competition from fintechs and regulatory risk, and of course the current market sentiment. There might be a little bit of volatility.
Right, thank you so much, Sharad, for joining us with that update also coming in. And in fact, that's all the time that we have on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
Stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026, 26 July, only on NDTV. India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning and welcome to India Market Open right here on NDTV Profit from the NDTV Profit Suzlon studios in Mumbai with me, Niraj Shah, and my colleagues Alex Matthew and Hiral Tadia. And guys, if the global cues notwithstanding, I think the shot in the arm could well be the strength in the FCNRB data as it has come, because I think people were skeptical about whether it will have the desired inflows or no. I think the numbers show it's looking pretty okay.
Yeah, pretty okay. I mean, they announced on the 5th of June, started on the 8th of June, and so far, I think the data is till the 17th of June.
So June 8th to June 17th.
June 17th. And a strong, above $17 billion, a pretty strong number. And I think the disclosure that's coming from the RBI itself is telling you that there is positivity over there, because I don't think so there was any expectation that such disclosures would be made as well.
Yeah, in fact, everything that we've heard so far has been source-based information. Our reporters tried to find out from banking sources, and that has indicated levels that were healthy, but not levels that are $17.4 billion. That's quite robust. Yeah. So that just goes to show that with another 2 months to go for the close of the quarter, and indeed the limit for that FCNRB deadline, there's quite a bit that can be mobilized. In fact, there are a few words that are coming through. $40 to $50 billion is par for the course.
You know, I mean, if you look at the past data, and of the total NRI deposit base that did come in, I don't know the total number, but for 2026, FY26, the total FCNRB accounted for about $33 or $34 billion. So in consonance to that, the amount that they've garnered in this 1 month itself is telling you something.
Yeah, so it's a strong one, and we'll talk about it in detail. But Alex just got a message right now and said that please tell your resident personal finance expert to try and do a small piece on what should NRIs account for, including the currency volatility and the interest rate swap numbers, etc., and do a piece on it because it will be really helpful for people wanting to make a deposit.
Okay,
there.
I'll take that. I'm curious about who you got the message from, but I will take
It is an NRI friend.
Excellent, excellent. I'm glad that they're watching, and we will do a show specifically for you. Let's kickstart with a check of what's happening around the world, and geopolitics is front and center. In fact, another front is the question that a lot of people are asking. Yemen's Houthis have said that they would impose a naval blockade on Saudi Arabia, and that announcement was made despite signs of diplomacy. Iran officials told Reuters yesterday that Tehran received a proposal for 10-day ceasefire, and that's the reason why people are positive about the cessation of hostilities. Iran said that attempts were being made to salvage the interim deal that was signed on the 17th of June. Meanwhile, Saudi Arabia has condemned allegations by Yemen that it was besieging the Yemeni people, and it's also said, its ministry, that it would take all necessary measures to protect its ships. Now, in that time frame, you can assume that if another major oil-producing nation has a restriction on the oil supply, it would have a bearing on crude, but that wasn't the case. In fact, crude oil prices have come off to $88.5 to the barrel last I just checked with regard to Brent crude, and that really is the reason behind that is that there is a cessation of hostilities as things stand right now. Having said that, you had Wall Street overnight that ended just about negative. You had the tech-heavy Nasdaq, of course, that ended flat, but the Dow Jones Industrial Average lost about 300 points, and yields rose across the curve. So you had a 4 to 6 basis point increase in the bond yields in the US. Equities in Asia Pacific did start in the green, at least the three early rises. Let's pull up those indices. But you have the Hang Seng in Hong Kong and Shanghai that have started lower. The Nikkei coming back after a day of a holiday is trading in the green, and so too was the Kospi last I checked. Jonathan Bharat, the Chief Investment Officer, ETO Markets, joining us this morning. Jonathan, thanks so much for taking the time, and good morning to you. What do you make of this latest geopolitical issue of the Houthi rebels in Yemen saying that they're going to blockade Saudi Arabia? Already you had concerns about this dual blockade in the Hormuz Strait, and then one more front opening up. There's a big concern that doesn't seem to be having a bearing on crude oil prices, at least as of now.
Good morning. That's a very interesting point as to why we've seen oil come off rather than go up. When you do look at what the Houthi rebels could actually control, it's another 12% of energy, of oil that goes through the Bab el Mandeb Strait. So when they're targeting Saudi Arabia, it's a concern because we don't get that supply. So it's a little bit of a quandary as to why oil hasn't moved up so aggressively, because we feel with that out of the equation and the Strait of Hormuz out of the equation, in terms of giving supply, that we could see oil push on through that 90 area upwards and on to 100. So very interesting to see why it hasn't. But I do think as soon as the first missile or something occurs that follows through on the Bab el Mandeb Strait, then it's a different picture for energy.
Okay, Jonathan, and therefore, what is the different picture likely to be? If I were to put a gun to your head and ask you that, I want you to predict, okay, not literally, considering the current geopolitical situation, that's a bad thing to say. But if I had to push you to try and second guess what the likely crude price range would be from now until, let's say, October, what is your sense?
Well, what I would think, and expect a lot of volatility, and think that what Iran is doing, being controlled, still negotiating, I think play would still be the same down with the Houthi rebels. So I would think that fact that it won't be resolved will see prices back up to around about 100, 110 US dollars a barrel for Brent.
So $110 per barrel is what you're looking at. In consonance to this, Jonathan, good morning, Hiral here. How are you looking at the precious metal side of it? Because you have gold and silver also, which is corrected quite a bit from your recent highs during the West Asia crisis. Now, one, are you expecting both of the prices to consolidate in terms of the silver and gold? And if so, when do you see that uptick coming back yet again?
Yeah. Look, I think it's a very interesting play for both of those, although I do prefer silver over gold. I think the consolidation we've had since the record highs, and that's all it is consolidation. I do see that both precious metals will start to move higher soon. It is all dependent on where we see oil, where we see inflation panning out, and where obviously we see not just the inflation, where we see the Fed work on interest rates and global interest rates as to whether they go up or whether they go down. And that's going to be a reflection on where we see oil. But as it stands, I'm super bullish on silver, and I love gold at these levels as a form to buy, because I feel it'll all come together to see both those two metals a lot higher in the future.
Okay, interesting. So the current consolidation in terms of silver and gold, good opportunity to buy, and you do prefer a silver versus a gold. Thank you, Jonathan, so much for joining in. Always a pleasure to speak to you as well. So that's an interesting take when it comes to commodities. But if you have to look at Indian markets, yesterday's session we did open with a mild gap down. However, that mild recovery during the session was very interesting because the buying interest remained insufficient to sustain at higher levels as well. Now, the investor sentiment overall has stayed pretty much cautious amid the continued geopolitical tensions, the elevated crude oil prices, and weak results from HDFC Bank is something which actually weighed on the benchmark indices. I mean, towards the end of the day, we had 145 points kind of pressure coming in from an HDFC Bank versus 4 or 5, of the components or constituents which were trying to negate that. At close, you ended with gains of nearly 0.4% to settle 24,238, while on the sectoral front, you had the PSU Bank, Pharma and Healthcare. These were the ones which actually emerged as the top performing sectors. Private banks, real estate remained the key laggards. In terms of broader markets, you actually outperformed the benchmark indices and you saw continued participation beyond the large cap stocks in yesterday's session. Your mid cap 100 gained nearly 0.6%, whilst the small cap 100 advanced nearly 0.1%. You did witness a lot of selecting buying across the broader market segments as well in trade yesterday. So I think the second part of the trading session was much more interesting, Neeraj, because people didn't really want to give in. However, at lower levels, you were seeing some bit of buying that was emerging.
Yeah, and which may hold true per se, because the individual data back home is looking solid by virtue of earnings, this FCNRB, etc. But per se, from the trade setup perspective, I think the template is that oil prices steady at higher levels, which isn't very constructive for significant upside. So you've got to bear that in mind. The good part is that people are turning constructive on bottom-up data that is coming in India. And I think banks today, for example, might be strong on the back of this FCNRB data. So could be interesting. And look at what cement numbers are doing. They're starting to look constructive. And there is optimism on the street with regards to cement. Sure, JK Cement was an outlier, but Ultratech, and we'll talk about it in detail today. Sure, Parag Thakkar will weigh on it quite a bit, but Ultratech, Nuvoco Vistas, the management that we spoke to yesterday, I think there is a clutch of these conversations which are, or the numbers which are looking constructive. Won't be surprised if cement turns out to be a bit of a dark horse, even in the monsoon quarter in terms of preference. So I think there are pockets which people will want to keep an eye out for, and certainly banks today will be at the forefront of it all.
Particularly because those two private sector banks got beaten the way that they did, right?
Yeah.
HDFC Bank 5% down. When was the last time you heard that?
True.
And Axis Bank as well.
Yeah, and from what even Neeraj is pointing out in terms of cement, it is going to be interesting because the moment you had Ultratech numbers that did come in, you did see a spike in the entire pack. ACC, Ambuja, all of them did really well. So that's telling you that there is good demand, and they've been very resilient in terms of maintaining the EBITDA as well in spite of the cost pressures. So that's the interesting point to point out. But overall, if you have to look at the index, we've traded within Friday's range and defended the 100-day EMA for the second consecutive session. And despite the weakness that we've been talking about in terms of private banks and global cues, the broader trend has remained positive as Nifty has continued to trade above its key moving averages. Now look at the support, 24,135 and then 24,100, and the crucial floor is 24,000. In terms of resistance, 24,350 and 24,400 is what you should be watching out for. And if we break out above the resistance levels, then 24,500 to 24,600 should be the next target you should be watching out for. In terms of Bank Nifty, lower levels are seeing some strong buying support, and that has aided the index to recover close to almost 500 points in yesterday's session as well. The first support is coming in at 57,640, so watch out for that one pretty closely. And on the upside, there is resistance at 58,085, but if you're able to go past that 58,085 levels, then 58,220 is something that you should be eyeing. So the data is seeming to be very interesting, but where the buying is going to come in is the key question. And I think on the derivative side as well, it's important to take stock of that. Puneet is standing by to tell us more in terms of what the derivative and F&O cues are indicating this morning. Good morning, Puneet.
Good morning, Hiral. And as you rightly mentioned, right, because we saw the clutch of banking names continuing to be under pressure yesterday, and hence maybe, as you mentioned, the FCNRB deposit update could be the next big catalyst trigger. Today, of course, we have the expiry for the Nifty 50, so you have to watch out for all those moves. But 24,200 is where we are at this point of time. You have seen, in terms of the Bank Nifty yesterday, just a tad below that 58,000 mark, and hence not too far away from that near-term support of 58,200, 58,800 as well. So the moves on this index continue to be in focus. You've also seen that in the cash markets yesterday, again a sell number come through for the foreign investors. So almost in the last 6 days, 11,000 crores worth of selling seen in this particular by foreign investors in the markets. And that is clearly visible on the derivative side too. So you've seen pressure on the index long side at 11%. So 89% positions yet being short in the markets, but also the put call ratio that hasn't budged much from the yesterday's at at the 1.37 mark. So continuing to be there at this point of time. And that is also visible in the open interest distribution as we see across the key levels. So 24,000, 24,100 and 200 continuing to see red candlesticks as we see, and there hasn't been buying at the upper end, even at that 500-point gap that we've seen. So every time index has come close to the 24,000 mark, we've seen 24,500, 800 being activated. We have seen some buying, but not with rigor yet across those levels. So could see some consolidation in the near term. For stock-specific action, there's not too much that happened yesterday in terms of the F&O market. We saw some on Radico Khaitan, GVTND, and for the loser specifically, you saw some moves coming through on Indus Towers, PNB on the back of good results or covering of shorts, and Bandhan Bank was one where longs were being unwinded before the results come through as well. So it's a story of the benchmarks largely continuing yet again, and that could be something to watch today as well.
Got it. All right. Thanks so much, Puneet, for that. Let's jump straight into the stocks that you should watch out for. And there are quite a few of them. We've already highlighted the overarching pieces of information that could affect blocks of stocks. But let's get into individual names. And Paytm stands out. It is registered a beat versus estimates. And so for that itself is something that you should keep on your radar. It's recorded its highest ever quarterly EBITDA. You've had the merchandise value, or GMV growth, that has accelerated. That growth rose to 31% in the first quarter compared with 27% in the year ago quarter. The contribution margin has dropped, but it has stayed at their guided range of mid-50s. So take a look at this, right? The revenue uptick of 28% year on year, 8% sequentially, pretty robust. 182% improvement in EBITDA on a year on year basis, 50+% on a sequential basis, very robust number. And the margins have improved on a sequential basis as well from 6% standing at 8%. The contribution margin that I was speaking about stands at 54.7%, and the PAT number is up as much as 79% on a year-on-year basis, coming at 220 crore rupees. Now, one aspect is that they have called off their bonus issue, and essentially there was a justification that the board said they've evaluated the proposal. The board has said this, and this is from the perspective of long-term shareholder value and due deliberation, but they've said that they're of the view that the company should continue to focus on further compounding growth and profitability for shareholder value creation. So if at all that is a negative, it's a small negative really, based on the kind of numbers that the company has posted. Citi has weighed in on Paytm. It's maintained a buy with a target price hike to 1,560 from 1,425. It says that the EBITDA momentum is driven by financial services and lower cloud costs. The payment GMV growth has accelerated. In fact, has accelerated. I pointed that out, over 30%. Paytm is seeing growth acceleration led by both merchant and consumer franchises, and it's delivering strong operating leverage as well. They see an upside to the earnings quantum and quality if the UPI MDR is introduced. Remember that there is absolutely no word of this taking place. This is conjecture at this point, but it obviously would be positive if a merchant discount rate would be applied to UPI. Right now it's free, of course. Action Construction is the second stock on my list, and it's registered strong growth across the board. There is margin improvement as well that has aided the bottom line growth. The PAT margin has grown 33 basis points on a year-on-year basis, and quite significantly as much as 338 basis points on a quarter-on-quarter basis. And this is not related to raw material costs. So if I had to hazard a guess without speaking to the management, I think that they might have benefited from a mix improvement during the quarter gone by. Net profit is up as much as 22% revenue uptick of 20%, pretty healthy in the current context. EBITDA is up by as much as 27% as well, and margins have expanded. EBITDA margin coming in at 15% compared with 14.2%. Now, Bluestone Jewelry is the third stock on my list, and it depends. If you look at it on a sequential basis, and the PAT is actually contracted, but on a year-on-year basis, it continues to be a fabulous performance. The revenue growth has continued in the first quarter. EBITDA margin has declined on a quarter-on-quarter basis, but it's grown on a year-on-year basis. They've had a higher rental and advertising and marketing cost during the quarter, at least when you compare it sequentially, and as a result of which I think it would have had a bearing on the bottom line. A&M costs, that is advertising and marketing costs, have risen as much as 21% on a sequential basis and 49.5% on a year-on-year basis, and rental expenses are up as much as 13% sequentially, 35% year-on-year. But bear in mind that this is a company that is very rapidly increasing its showroom and square footage, and that therefore that rental cost going up is par for the course. They've seen a pretty substantial SSSG growth, which is same-store sales growth, and at a time when they've been adding showrooms, this is quite robust, and quite a lot of repeat customers coming through to them as well. 39% same-store sales growth is very robust, and net profit coming in at 7 crore rupees versus a loss of 34.5 crore rupees is what I was talking about, and margins coming in at 14.6% compared with 11.3% on a year-on-year basis.
Interesting names. Let's see what happens in terms of when markets open on these names as well. But on my watch list, we were talking about the cement pack, and we have Ultratech Cement. Now, brokerages have turned bullish, and that's the reason I'm picking that up. 5,000 crores is the fundraise that they've announced as well. Jefferies has maintained a buy. They've actually hiked the target price to 14,065, and they're saying that the company is staying ahead of the pack. Goldman Sachs has maintained a buy. They've hiked the target price to 13,500 from 13,160. What they say is that the results are strong and the incumbent is growing into like a challenger. Morgan Stanley, again an overweight. They've hiked the target price to 14,700 from 14,600. They're indicating that the sharp volume market share gains have been achieved without actually compromising on the realizations. CLSA has also maintained a high conviction outperform, and they've hiked the target price to 14,000, and they're saying that the growth pipeline is seeming very strong. In fact, let's hear what lies ahead also for the company as CFO Atul Daga shares the management's growth plans.
The one big theme for us quarter after quarter is demand. If the demand is good, everything falls in line. And I'm delighted to report that the first quarter of fiscal 27 has reaffirmed that conviction emphatically. With a double-digit volume growth and a demand pipeline across infrastructure, housing, and urban real estate is as rich as it can be. Core sector growth slowing down in the month of May, lower coal and refinery output, and aggregate state capex in April-May growing a modest 2% year-on-year.
Okay, so that's a strong outlook coming in as well in terms of the rest of the year and the second quarter of FY27. The second one on my list is central mine planning. Now, an interesting set of numbers, a strong quarter wherein the net profit growth has actually outpaced the revenue gains significantly this time around. Your lower fixed cost proportions have boosted the bottom line returns. It's the exploration segment which has remained the dominant division, which has risen almost 18% on a year-on-year basis. And your planning and design segment achieved a significant turnaround and returned to high profitability as well. So 53% profit growth, 17% revenue growth. In terms of the EBITDA, a 62% kind of year-on-year growth is what they've achieved, and the EBITDA margins have come in at 34.9% versus a 25.4%. So a thumbs up on this one. Soba as well. Now, in terms of the first quarter highlights, the company has achieved the highest ever quarterly sales during the first quarter, and this has been driven by new project launches in Bangalore and Gurgaon. They launched almost 6.89 million square feet saleable area in 3 projects during the quarter, and the real estate sales value stood at 3,656 odd crores, which is up nearly 76% on a year-on-year basis. The average realizations have come in at 15,655 per square feet versus a 14,395. So growth in terms of your average realizations also is what you've seen. 48% revenue growth. PAT was at 51 crores, growing at almost 274%. Collections, again, 8% growth is what you've seen. So I think that is something that you should be watching out for. And they've said that the inventory with a sale value of almost 19,224 odd crores is what they're looking at what they've looked at in the first quarter. And the upcoming launches have a sale potential of close to 30,000 odd crores and 361 acres of land development potential. So strong, drivers that you're looking at in terms of Soba, and the numbers are also looking pretty good, Neeraj.
Yeah, yep. I think we've seen mixed stuff from this sector thus far, but I think the devil might be in the details. So it'll be interesting to see how the actual numbers come out.
Even Oberoi looked okay, na?
Yeah, Rustomji looked very bad. Yeah. So therefore, I think it's well. Let's wait and watch. What looked very good is Rallis.
Yeah,
it did.
So no complaints for Rallis perspective. So pull up the numbers firstly for Rallis India, and I think profit up. I mean, revenues number were okay, but margins at 18.1 versus 15.7%. Net profit up 31.6% at 125 crores versus 95 crores. I don't think you could find a foot wrong. The numbers were above estimates. Volume growth in crop protection business boosted the profit for Rallis, and the fixed cost optimization improved the operating leverage, as a result of which the margins have come out the way they have. So, very good set of numbers. You could almost argue that from a results perspective and a reaction on results perspective, this could well turn out to be the stock of the day. So keep an eye out for Rallis India today. That will be one key thing to watch out for. You will hear out the management, Gyanendra Shukla, the MD and CEO of Rallis India, at 9:45 a.m. on your show, India Market Open. So you might want to stay tuned all the way, of course, till 10:30, but certainly till 9:45 because it promises to be a very a stock that will be very active, and you might want to hear what the management has to say about what they will do post the quarter one fireworks that they have posted. You might also want to stay till 10 because what we will do is cover SBI funds, right? And Equirius has come out with a note. They initiate a long with the target price of 675 on it. They say it's powered by reach and built to compound. The distribution moat is powered by the parent bank, and yes, certainly you can't argue against that when it comes to SBI. They believe, Equirius believes, there are multiple optionalities beyond the mutual fund segment as well, and they see equity and passive assets to drive a 16% mutual fund AQAAUM, which is average quarterly assets under management compounded annual growth rate. It's a tongue twister, but that's what it means effectively. And they expect revenue and EBITDA CAGR, which is the more simple norm now. Because remember, CAGR, we've spoken it so many number of times, you'll hear it everywhere. It's compounded annual growth rate. They expect revenue EBITDA CAGR of 14 to 15% over FY26 to 29. You know, a stock compounding at 15% compounded annual growth rate for a number of years actually turns out to be a winner, even if you were to buy it slightly more expensive, remember that. But the keyword is slightly more expensive. I'm not saying SBI Funds is, I'm just saying generally in stocks. Last but not, okay, yeah, that's the alert, right?
Average quarterly assets under management. You know, so obviously you know this, Neeraj, but just for the benefit of the viewers who will be wondering why you're not looking at AUM, the closing AUM at the end of a quarter might distort the picture, right? Because in any one quarter, suppose at the end of the quarter, you'll have a lot of institutions that sell fixed deposits, or not fixed deposit, but fixed income. So you will see a huge outflow from fixed income funds that distorts the overall picture. And so therefore you take the average over the course of the quarter to say how much is your AUM actually growing on a periodic basis.
And now you know why I like Moneywise so much. Okay, last but not the least, Sona BLW. Watch out for this one. The stock has been on a bit of a tear, really. If not a tear, at least a bit of an uptick. Now, UBS has come out with a note. They've initiated a buy with a target price of 830. The current price is 715, of course. They say the sum is greater than the parts. A strong legacy business, according to them, with multiple growth engines and having an established track record of scaling adjacent businesses. They are an early mover, according to them, in a potentially transformative industry, and UBS forecasts and consolidated revenue and earnings CAGR of 20 and 25% for the next 5 years, effectively 25% compounded annual growth rate for the next 5 years. That's just stunning for any business, by the way. They say it will be supported by an increasingly diversified business mix. Guys, there is also a talk of some corporate action around the corner for Sona BLW. So multiple reasons. We will talk to Kush Bora and a technical expert about this, because I think the stock has done really well. Look at the last 5-7 days. I think the stock has had a bit of an uptick. Maybe there could be more in store on the back of the UBS note.
UBS note, yeah.
Certainly. All right. So there's lots to discuss. We will get you the trading strategy of the day. We'll be joined on the other side of the break by Parag Thakkar, Kush Bora, and a lot more guests to take you through market open and beyond. Stay tuned.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
The stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leadership Awards 2026. 26 July. Only on NDTV. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important
Back with India Market Open right here on NDTV Profit. Let's pull up the implied open and show you what that is doing. Remember, oil prices are steady at high levels, and that is not, I repeat, that is not a recipe for upsides. No matter how other cues may look, till the time oil is higher, upsides are capped. How much of a downside opens up is a separate picture. But the good part is for our markets, and good morning to Kush Bora and Parag Thakkar. The good part for our markets, Parag Bhai, seems to be, I'll start with you today, is that unlike Q1, where oil prices were higher and there was fear that results will be bad, right now there is a bit of a shoring of the results looking okay. So therefore the market is not so worried that oil prices are high and results are bad. The market is now saying oil prices are high, and we know that results are at least not looking as bad as feared. Would that be a
so for example, if you see the results of my favorite ICICI Bank, which is my largest trade, ICICI Bank, if you see the result of JSW,
6,000 stock है, वो सब 6,000. It's like Parag bhai, वो सब ठीक है, but have you seen ICICI Bank?
So I am saying excellent execution by some of the companies like ICICI Bank in banking just stood out, right, completely. Like JSW Steel, for example, like Ultratech reported yesterday. I am saying all these companies are doing brilliantly irrespective of the situation. So that actually gives you a good feeling that at least companies are trying their level best and companies are performing. Macro, it is not in their control, right?
That's true.
So, you know, with Ultratech, we were just discussing what would the numbers that Ultratech has posted mean for the entire cement pack within that region?
See, I'll tell you.
Because yesterday we did see a spike on the entire pack.
Sure. So that is to be seen. I'll tell you. See, cement volume growth is 7% in the industry, right? Ultratech showed volume growth of 12.5%. So they're clearly outperforming industry, right? EBITDA per ton was about 1,200. In spite of whatever happened, as Neeraj mentioned, and due to war crisis, right? They have said that another 130 to 150 rupees per ton cost headwind can come in Q2. But I think the prices have held up in monsoon. So I would say that, see, Ultratech is a stock which will compound its EBITDA at 16%, and it is available at 16 times FY20. It is very easy to remember. 16% compounding in EBITDA and 16 times at FY28 EBITDA.
This is at current price, by the way.
At current
If the price moves up, then it will change.
Sure. So basically, I'm sure it will move up. So I'm saying that unless of course oil goes above 100, or because some of the experts are saying this after this is how these have blocked a level Saudi Arabia.
Before we get to that, on the cement issue, and of course we have to get into the technical levels and all that, so quick answer here. It was suggested by someone we were speaking to in the afternoon yesterday when the numbers came out that for the cement pack you have to look at it in terms of which regions have outperformed, right? West and North have been incredible, and so therefore Ultratech looks incredible this quarter. It could well be no.
I don't agree.
You don't agree?
Ultratech will look incredible all the quarters. It will outperform the industry all the quarters. ICICI Bank, Ultratech, this kind of companies will outperform every time. JSW Steel, these are stars of India. This will continue to outperform. You see Ultratech's last quarter result also. Last quarter, Q3.
The quarter before that, Q4.
Again, if you exclude for the lower EBITDA of India Cement, their EBITDA per ton was 1,296 per ton, which was again highest in the industry. And their volume growth is also highest because they have acquired India Cement and the other company also. The other company, I forgot the name. But the point is that because of that acquired capacities, their volume growth is always higher, and they are turning around those acquired capacities.
Okay. All right. So you're convinced. Of course, I could not argue against that, and I cannot as well. But let me go straight to Kush Bora to talk about what the cues are on the technical levels, because yesterday it moved according to what we anticipated. We're looking at another downtick today. In fact, yesterday there was very strong breadth. There was very sharp moves by a couple of companies, or banks rather, that pulled the benchmark lower. But then we ended with a lot of green on the screen.
Yes, completely agree, and I'll come to that in just a second. First of all, very good morning, guys. And how about a friendly bet, right? See, my wallpaper on my phone is my kids, my family, right? I am willing to lay a bet that Parag Bhai's wallpaper is Sandeep Bakshi ji. Of course, he's spoken so much about ICICI Bank and off the camera as well. You know, he's spoken so highly about the gentleman. I think he's in the awe of Sandeep Bakshi ji. Parag bhai, chhe ke nahi? Batao. It's not. I'm kidding. No, but he's been spot on in that regard. And he's said it so many times over. कि एक बार result आएगा ना, फिर ICICI Bank वो men amongst boys वाला differentiation हो जाएगा. And we're getting to see that. So kudos to you absolutely on that. Now, see what's happening in the market. We've spoken multiple times about, you know, thoda dur raho, thoda ye consolidation hai. But you know what is starting to look like now? It's starting to look like base formation. Yeah, exactly. That's the thing. Breakdown nahi hai. This is starting to look like base formation for the next leg of up move for Nifty for 25,000, 26,000 higher levels. Bank Nifty above 65,000, SMIDs coming back. It's a matter of when and not if in my books, right? And as Neeraj hit the nail right on its head, and you know, as he does more often than not, we're still testing the the upper end of that range, 23,800, 24,300. बोल के थक गए पिछले 2 हफ्ते से. But अभी भी हम उसी upper end के पास हैं. We're not testing the lower end. So as long as that support level is intact and we don't break down from here on, I think this is just going to act as base formation. We've digested a lot of bad news. एक बात बताओ. 5% HDFC बैंक नीचे है, बैंक निफ्टी 1% नीचे बंद होता है. On what day, what scenario would you have imagined that, right? So of course you've got a lot of other banks, PSUs and ICICI balancing each other out. So that's the beauty of the market right now, right? So for me, while I remain a little cautious because there is a lot of selling off that I'm seeing in the SMID space, I think this is base formation. Right now, I wouldn't go long either on Nifty or on Bank Nifty. I still want to give it a day or two to see how this plays out. But Bank Nifty, by the way, not even tested the 200-day moving average near 57,300, 57,400, right? So I'm taking all of this as positive. Give it a day or two. We might still get an opportunity to go long positionally, once this settles.
Yeah, 200 points accounted for yesterday on the benchmark Nifty 50 by 2 entities. Exactly. 150 nearly points by HDFC Bank and a further close to 50 points by Axis Bank, and we ended with cuts of just about 0.4%. But those banks are going to be in focus today as well, and that's because of the clarification or rather update that was sent out by the Reserve Bank of India yesterday about how much has been mopped up or mobilized by banks on FCNR. And UBS has weighed in on this. They've said that banks have also, beyond the $17+ billion that they've mopped up on FCNR, mobilized $1.97 billion and $1.34 billion under the ECB and OFCB swap facility. Remember, these were facilities that were also announced. They got less of attention because of the big headline numbers for FCNR and the expectation of how much would be mobilized. The numbers appear ahead of indication from management commentary and results so far, according to UBS. They say that large private sector banks have hinted towards a pickup in coming weeks, which should support the overall growth. Macquarie has weighed in as well. They said that the FCNR flows spring a positive surprise. Foreign banks likely stepped up, aiding flows, view the disclosure as positive for the banking system. Strong foreign currency mobilization should ease domestic liquidity conditions, and it should improve funding visibility and reduce near-term pressure on banks' balance sheets as well. And finally, Jefferies on FCNR, they said that the mobilization through FCNRB is off to a good start. Conversations with banks indicate that this is mostly fresh money from UAE, Singapore, Hong Kong via internal and partner banks clients. Mobilization of $50 to $70 billion will be positive, especially if current IRRs or the internal rate of returns suffice, and best ways to play will be NBFCs and smaller private banks. Very interesting, right? Because what they're suggesting, and that last bit in case you did not understand, is that there was a worry just a short while back that banks are not able to mobilize as much as previously thought, and so they would have to adjust the rate that they offer. If they've mopped up as much as $17+ billion at this moment in the span of just about 10 days in July, then chances are that they will hit that $40 to $50 billion mark quite comfortably. View?
Yeah, so my view is that in fact $17 billion is a good number to start with, because a lot of time must have taken in the entire process also. So I would say that 50 billion looks now achievable. And last time also, when in 2014 we did this, the big money came in last 1 month. So I would say that the real, inflows should begin from August. And so August and September, I think, I think $50 billion looks achievable, that it will cross it in my view.
How do you play it though?
So basically, see, it is very positive for high CD ratio banks. Right, because those are the banks who are struggling for deposits.
HDFC Bank.
Like HDFC Bank, Axis Banks of the world. ICICI Bank is at 89%, of course, in CD ratio, and Kotak is also at around 89%. But I would say that generally it is good for the deposit-starved banks. Yeah. So that see, this fear that interest rates were supposed to rise and now it will not rise because of the FCNRB deposits coming into the markets. I feel that all depends on inflation and how crude oil plays out and how monsoon plays out. But so I was not too much. So I will not be very bullish on NBFCs just due to the FCNRB thing. Yeah.
But banks.
Yeah, banks. Yeah.
And ICICI Bank. It's the
But so now the pledge is that from 8:40 to 9:20 we will not bring up ICICI because it is discovered. But the others which fell yesterday, Parag Bhai, you have mentioned that, though yesterday you were clear that you would not rush in, but you mentioned that you would use large dips to buy, but because there is a macro concern, you may not rush in. But the 5% fall on HDFC Bank, is this the opportunity to start nibbling?
Yeah, opportunity to start nibbling in a staggered manner, yes. Because valuations are in your favor, and in all probability, margins might have bottomed out. And for example, in my portfolio, I have left enough space for HDFC Bank and Axis Bank to buy. I'm full. Like here we are talking. I have maxed out in ICICI Bank, but HDFC and Axis, I have space to buy.
Yeah. Okay. Fine. Perfect. No. But as Kush said, Parag Bhai, kudos to you, and for people who heard you and agreed with the fundamental logic. Some people may agree, some people may not agree. By the way, guys, it's completely fine. Parag Bhai may go wrong as well. So that's completely fine. But I think on ICICI Bank, he's been spot on. Kush Bora, you've been spot on a number of things. I would want to know what is it that you're picking up as a trade this morning in specific stocks.
Speaking of being spot on, 2 हफ्ते बाद बोलने मिल रहा है. The weekly picks have finally gone on and hit target too. There was this weekly pick that we mentioned, JG Chemicals, consolidated. By the way, missed stop loss by about a point or two. So yeah, saved by the bell. But yesterday, that stellar move on JG Chemicals, yeah, exactly, went on and hit a high of 505. Guess what that number is? That is the T2 that we had discussed on JG Chemicals weekly pick given 2 weeks ago, right? So that one, if you're still holding, book partially, hold the rest with initiation price as your trailing stop loss. And Gujarat Fluoro, the other stock that we discussed, which was the weekly pick yesterday. 43.30, that was the T1. Yesterday's high 43.29 and some change, right? So the T1's been hit on that for all practical purposes. Here to hold, but with trailing stop losses as your buying price. So that's those are the 2 updates. Feels so good. After 2 weeks, I get to say something like this on the weekly picks now. As far as the stocks for today go, I'm still going with just 2 picks, but both of them on the long side. Anantraj and PG Electroplast. We've seen good moves on both of these. There's a golden crossover on Anantraj, ended near the high point of the day. Resistance near the 590, 595 mark, that also being taken out. Volumes also very healthy. So for targets of 630, 660 and a stop loss at 575, Anantraj is along. And PG Electroplast, remember this one we've been discussing for a while now. First target of 615 being hit. I think you can continue holding this up the targets to 640 and 665. Also bump up the stop loss to 600. PG Electroplast is also a buy.
Okay, so a buy on a PG Electroplast, that's going to be an interesting one to continue to watch out for. A bunch of other counters are also in focus on the back of their earnings that have been reported. Parth joins us with that list that one should be watching out for just before markets open. Parth, what do you have for us? Good morning.
Good morning, Hiral. So yes, the earnings season is going on in full force, and these are some of the earnings that you should definitely have a look on. The first one is Canara HSBC Life, where the business momentum has remained strong with their distribution-led strategy continuing to gain traction for the company. Their protection segment has remained the key focus area for the company, and the healthy growth in VNB was actually supported by the better product mix during the quarter. If we have a look at the numbers as well, then APE growth came in at 19% year-on-year to reach 585 crores. VNB saw a growth of 29% to reach 124 crores, while VNB margins also saw a growth of 150 basis points to reach 21.1%. The next one is transformers and rectifiers, or TARL, which has seen a weaker execution in the first quarter of FY27. Order inflows were up 218%. Order backlog also saw a growth of 26% year-on-year. But despite those orders, the revenue only saw a growth of just 8% year-on-year. This means that order wins are strong, but those are failing to convert into actual revenue figures for the company. And this is something they need to work on. Management has said that this was due to the lower utilization of one of their facilities, whose expansion is expected to be completed by August 2026. Currently, the company still maintains a healthy pipeline of 23,000 crore. And the last one is Advait Jewels. This was a recent listing, and they have reported not the Q1 results, but actually Q4 results of FY26. If we have a look at the numbers, and they are on the weaker side. Revenue was down 28% year-on-year. Net profit also saw a downtick of 46% year-on-year. EBITDA came in at just 13 crores, down 42% year-on-year, while margins also saw a downtick of 690 basis points. So a weaker set, but overall FY26 they have delivered a good set of strong growth, but the Q4 was seasonally strong for the company. So these are the three stocks that you should have on your radar on the back of earnings.
Right, Advait Jewels, of course, is the recent listing posting its Q4 numbers. Let's head across now to Soumit Sarkar, who is joining in to tell you about everything that he's hearing in the dealing rooms. Soumit, quite a few interesting stocks that are making the news, but I'm wondering what's on your list.
Firstly, it's Indian Hotels and Oriental Hotels. Now, there are buy flows in Oriental Hotels in the HNI desk specifically, and dealers indicate that Indian Hotels will acquire the other promoters a stake in Oriental Hotel. And dealers are also expecting this acquisition will lead to an open offer, which could be, and the price for that could be at a premium as well. For NTPC, dealers indicate selling pressure is largely over and the stock could bounce from the current level. So keep an eye out for NTPC as well. And a host of other counters like Shirley Engineering, Newland Labs and Inox Wind. There are buy flows on the institutional desk on all these three names, and delivery volumes are also seen on the higher side. And given that it is earnings season, stocks like Infosys, AU Small Finance Bank and Delivery see selling pressure in the large HNI and the PMS desk. Dealers are expecting weak Q1 numbers from all the three names. And on the flip side, there is Colgate and Navin Fluorine, where dealers are expecting strong Q1 earnings to come in, and hence there are buy flows that they are seeing on the HNI and the PMS desk. And one stock that we did indicate earlier was Sona BLW on July 16th, where we did indicate that there would be a positive note that would come out from a broking firm. And today UBS has initiated coverage with a buy rating and a target price of around 830 odd.
Okay, so those are the ones that you're watching out for in terms of HOS as well. But I think the hotel pack is looking very interesting right now because, you've just come out of the holiday season as well to some extent. So there is that uptick coming in there. On the charts, Kush, if you have to look at any of the hotels, I mean, Oriental Indian hotels, yes, there are, good flows coming in there. But anything that you like?
I'm so glad that you mentioned this and Soumit picked this up, because in the last 2 weeks, I think I've mentioned 2, maybe 3 hotel stocks, and I said that keep an eye on this space. EIH, Chalet, Indian Hotels. In fact, the first 2 have been our calls as well, did fairly well. So there was definitely some buzz, some activity, at least on the charts and on the price movement for some of these names. So I remain constructive. Indian Hotels right now consolidating, was off the low points of the day. So I would take this as a positive. Not enough momentum to go long on this from these levels, from an immediate trade perspective. But yeah, if you want to take a positional bet, then with a stop loss around the 700, 695 mark, you could remain constructive. I remain more constructive on EIH and Chalet, both of them.
Okay, so EIH and Chalet is what you're looking at. Parag bhai, Paytm is what I want to talk to you about as well. Now, numbers are looking very good in terms of what has been reported. However, they've not really gone ahead with the bonus issue. Do you think that the street will read that negatively, or do you think that's something which the investors are going to ignore?
Bonus actually changes nothing except for making shareholders happy in AGM.
Unless it's a dividend paying policy. Right?
No, I'm saying you are giving bonus, right? You are increasing equity, your EPS goes half, so there is no increase in the intrinsic value of the business.
But dividend paying companies?
No, dividend is a real payout, right? Bonus is
no. What I meant is, so okay, just viewers, the reason I brought this distinction because I've been forever a proponent that why do people get excited about stock split and bonus?
Yes.
But the difference between those two is that in stock split there is virtually nothing. At least for a dividend paying company, because your dividend also halves if there's a stock split. In bonus, at least if there are 2 shares, everything else remaining the same because your value etc. doesn't go up. But the bonus paying this thing of the company, if there is a policy that up 10% doge, so that number stays the same. Yes, it does.
The only my point is that
it does. Trust me.
In illiquid stocks, you give bonus and split so that liquidity improves and so the retail participation improves. That is the only tangible advantage. In a very highly liquid stock, in my view, there is no, except for pleasing shareholders in the AGM, it does nothing, in my view. Because it doesn't increase profits, it doesn't increase EPS.
In order to issue those bonuses, you take from the equity of the company, right? You take from the equity of the company to issue more shares, right? So therefore, hypothetically, the ability of the company to distribute cash as dividend goes down, right? When you make.
Which I'm saying, so if there is a company which has got a steady policy that we will pay X percentage of our this thing every year as dividend, if there is a bonus share and if you have 2 shares, then because everything else remains same, the quantum of dividend that you get increases, which doesn't happen if there is a stock split.
Sure.
So I'm just differentiating between a stock split and a bonus. For a dividend paying company, the bonus is better than a stock split. That's what
I think what is best is this is my favorite topic. So I think what is best is a buyback like what Bajaj Auto has done. 12,000 rupees buyback where promoters are not
participating. So
that is real conviction. That is real conviction.
बाकी सब ठीक है, लेकिन Bajaj Auto है.
So I think every sector, I think Parag Bhai has his favorites and everything works well there.
So my clear view is, as a fund manager, what we have in control, right? We cannot control anybody's statements.
Correct.
We cannot control Strait of Hormuz. Only what we can do is we can buy good companies at reasonable prices.
Yes. One more stock I want to talk about is the MTAR Tech. Last time where we saw that downtick that did come in terms of MTAR because of something happening with the Bloom Energy, there is a potential that you could see selling pressure today as well. In fact, yesterday that stock was locked in lower circuit. Now, Bloom Energy fell 8% yesterday. They're expecting some execution delays as well. And there is a regulatory hurdle for client Oracle's data center. Now, why MTAR will be in focus is because 55 to 65% of the revenues of MTAR come in from Bloom Energy, whose client, that is Oracle data center, that has faced a regulatory hurdle. In the last 1 month as well, MTAR is down nearly 30%. And there is an overhang of promoters selling stake as well. So there could be pressure that could continue in terms of MTAR Tech. Kush, again, on the charts, anything that you would advise investors to do on an MTAR?
Bhai Saab, what's selling? Of course, I mean, I can always argue low volume, but when a share is locked in lower circuit, of course, you don't expect, heavy volumes on this one. Had a good run up, was consolidating, but this is breakdown. I wouldn't panic just yet. Don't panic. If you have, if you have shares, of course, you'll not be able to sell when it's locked in lower circuit.
Correct.
But wait up for some time. See if it does hold around the 5,500, 5,450 kind of zones, and then consolidates from there on. Because the accumulation prior to this fall has been very healthy in this one. So I wouldn't panic. But yeah, I mean, wait up. Don't act in panic. That's the only thing. Watch for 5,450, 5,500 zone to be protected in days to come.
Okay, all right. Beyond earnings we've been bringing you all of the latest with regard to earnings, but there are several stocks that are grabbing the attention and news flow related, right? Varsha joining you to tell you about stocks in focus on account of being in the news. Varsha?
I'll be talking, 5 stocks. Let me start with India Glycols, wherein NCLT has approved or sanctioned companies' demerger for biopharma and spirits undertakings. You have MCare Pharma also, which will be in focus on the back of company receiving approval for one of their drug which treats liver disease. You have Ashiana Housing, wherein their project Ashiana Oma has converted 224 units, and this has resulted into a sales value of around, or booking of around 372 odd crores. So keep that this stock in your watch list. You have Acme Solar Holdings, wherein a company's wholly owned subsidiary has commissioned 160 megawatt hour capacity of battery energy storage system project, and the commercial operation will start from July 22nd, 2026. Lastly, you have RIDES, wherein they've signed MOU to explore business avenue. This is nothing but to collaborate in identifying business opportunities and jointly pursuing projects. And the MOU has been done with Mecon. So overall, these are 5 stocks which, apart from earning, which should be on your radar.
Interesting names that could be in focus as well on the back of we're not talking about earnings, but I think Emcure Pharma comes to my list. They've received the CDSCO approval for Poviztra, and this is used to treat liver disease. That stock was up nearly 4.5% in trade. In fact, Motilal Oswal also had an initiation on this counter yesterday. Parag, by any view in terms of Emcure Pharma?
Yeah, it's a good company, great company. I have tracked them since their closing. They have been reporting very good numbers. I think they are very less communicating, so we don't see them in conferences and all. And trailing P is also 37, very comfortable. Return ratios are very good. Products are excellent. I think it's a decent company.
Okay. We didn't check with you, Kush, based on the moves that you saw in the large private sector banks yesterday, right? What would your strategy be at the start today?
So, Alex, the reason I said wait and don't go long on indices just yet, 2 reasons, right? Let me also club the Nifty in this. Nifty PCR was at 1.4 on Friday. Yesterday, though it cooled off, it still remained at 1.25 thereabouts. So it's still elevated, and hence you don't want to go long. You might want to see this cool off a little bit. And the second thing is for the banks, right? The big banks, Axis, HDFCs, they saw a sharp drawdown yesterday. There could be some overhang that remains, and you could see them fall, even today, or maybe if not fall, at least consolidate sideways. So like I said, you want to perhaps wait for a day or two, see if this dust settles, and where it settles, more importantly, there will be an opportunity to go long on some of these names. Maybe not just yet, give it a day or two more, and from here on it will become attractive. At least Axis, by the way, before the fall, ICICI and Axis amongst the big names were the 2 banks that had momentum play, so that could return on Axis. HDFC has always been buy and hold kind of a story, right? So you might get attractive levels on that as well. But from a momentum play perspective, Axis might make a comeback.
On the earnings front, Parag bhai, I'm not sure if you track this company, CMPDIL. This is Central Mine Planning, which is a subsidiary of Coal India, right? And I know that there are some analysts or market veterans out there that have said that in the current scenario, globally, companies that pull resources from the ground should be looked at very closely. Simple point,
Hard
right?
assets.
Hard assets, right? And from that perspective, this is a company that facilitates that. It's seen a 62% EBITDA improvement.
Yeah. So it's a company worth evaluating. I don't have a view right now.
You don't have
but I'll share the view in next 2 days.
Okay. We'll check back with you. In the meanwhile, Kush, I don't know if you have enough data. But based on what you can see?
Yeah, from a very near-term perspective and from with the limited data that I have, this fall that you're seeing in the last 15 sessions or so on very low volumes, I wouldn't be concerned. So if you did buy it, in the IPO, or if you have it from much lower levels, I don't see a reason why you should sell. There's a support zone around the 225, 230 zone, positional one. So keep that as your stop loss and continue to hold. Not the structure's not disturbed by whatever's happened in the last 5 to 10 sessions.
Did you have a chance to look at Paytm numbers?
Yeah, so I saw the numbers are looking very robust. Very robust, yeah. EBITDA of around 220 crores, if I'm not wrong. Market cap is 86,000 crores, but I would say that the numbers YOY, so all metrics
EBITDA
are moving.
203 crores.
203 crores, yeah. So I think the metrics are moving in right direction. So the people who track this metrics and finally they say that okay, now the earnings will look better, for them this is I think a good stock to hold. So like Nyka's of the world and various.
Among those metrics, would you say that the gross merchandise value is something to track? The growth in
that you don't ask me, because I track only profits.
Oh, okay.
And cash flows.
Okay.
But so one, two factors. One technical in nature, of course, but the first one, as the Goldman notes that margins for Paytm could double versus the Q1 levels by FY28. So they are on a right footing, part one. And part two, after being sluggish in that 1100 to 1200 band for a really long time, I think the last month and a half, or maybe something like that, it's kind of broken out of that wedge that it was in. At some point of time, the Nifty will do that, but for now, we stick to Paytm, and Paytm has done that, and and that is why there's also a bit of a momentum behind it, if you will. That maybe charters like Push might actually find favor with that argument. Maybe, I don't know, but maybe they do. So keep an eye out for that as well. Actually, while we're at that, and markets are starting, so make it quick, Kush. But Paytm on the charts, does it look attractive?
5 weeks of positive closing, the momentum still with it. My concern is 1350 because it took a very long time last year towards the end to break that level. So 1350 closing. If it does sustain above that, then you have that another leg of up move that takes it towards these levels, which may not be sustainable at open.
They won't be. They certainly won't be. But yeah, Paytm could well turn out to be a good stock. By the way, the markets have started, and Ruchit Jain joining in. Just go to Ruchit in a moment. But the pre-open rates, very quickly, just mark what the Nifty and the Sensex are doing, what some of those banking names could be doing as well, what Ultra Tech could be doing, what Paytm could be doing, what Rallis could be doing. I think those are a few names top of the mind that come to me based on the stocks that Hiral, Alex and I chose. Maybe I'm sure there will be others too. But Rallis may be a bit of a positive move.
Paytm I'm curious about.
You do watch out for Bluestone and Ultra Tech.
Yeah, Bluestone, pull that up. Paytm is looking like it's going to have a strong start. Bluestone was decent as well. Let me pull up a few more names, right? Canara, HSBC Life, healthy growth in VNB. You had Soba that reported its best quarterly pre-sales from the real estate pack. We've been failing to find a comprehensive trend for this pack because there have been a few names that have disappointed. Action Construction had a pretty decent set of numbers, 20+% growth in PAT. ACE, Action Construction is up about 1.4%. Rallis India, strong numbers. CMPDIL, which we spoke about, or Central Mine Planning, EBITDA increase of as much as 60+%, so it looks good. On the weekend, a couple of names stand out. One, the recent listing Advit Jewels. The PAT is down as much as 46% in the fourth quarter. The stock is losing ground. And Tarrell, which is transformers and rectifiers, which is probably losing ground as well. Ruchit Jain with us this morning. Ruchit, very good morning to you. And seemingly the banks are going to be taking a front row seat today based on the FCNR deposits update that came through yesterday and the kind of selling that a few of these names have witnessed. So what is the strategy that you will employ both for the benchmark and the Bank Nifty?
Yeah, hi. Very good morning to everyone. The thing is that although we have seen that 1 days of correction yesterday, but overall trend for the markets is not yet negative. We have seen a consolidation in last couple of weeks session, but the good thing is that on the Nifty front, the 24,000 important support is being intact in spite of all the news flows that we have seen on the global geopolitical or the crude oil going up from $70 to $90. But still, in Nifty is not breaking the 24,000 mark. So I think till that is intact, there's nothing too much to worry about on the negative side. So any kind of decline if you get, then keep a stop loss below 24,000 and remain constructive on the markets for a possible up move towards 24,500 in the near future. Bank Nifty index to overall structure does not look negative. 57,000, 56,800 has acted as a good support. Even the 50-day support is placed over there. So over here also, I think the momentum would continue on the positive side, even if we get some minor declines. So we are positive on both Nifty as well as Bank Nifty. More from a bit near-term future. For next 1 or 2 trading sessions, we may see a continuation of that consolidation. But positional traders should use these declines, small declines, which we are getting as a good buying opportunity.
That's with regards to levels to watch out for. Ruchit, what would your top picks be at this hour?
Yeah, so a couple of names from the broader markets which are doing well. One is Lloyd's Metals, where a good consolidation breakout has been seen yesterday, just hinting at a resumption of its broader uptrend. The volumes are good along with the price up move. So traders can go long on Lloyd's Metals with stop loss below 1855 for potential up move towards 2000. And within the sectoral performance, I think chemicals as a space has started doing quite well. You look at stocks like Navin Fluorine, we have a consolidation breakout over there. Gujarat Fluorochem has seen a good price volume action. SRF has given a breakout from its consolidation. So I think the sector as a whole is hinting at a good volumes picking up over there. So this is one space to watch out for. We like Gujarat Fluorochem from there, which has got good breakout with volumes yesterday. So Gujarat Fluorochem still good potential is there on the high side because it has already gone through about years of consolidation phase. So Gujarat Fluoro can be bought with stock below 4,200 for potential targets around 4,500.
Okay, so you have interesting picks that you're talking about as well at this hour, but it is 9:05 and it is time to focus on the brokerage call of the day. You have a Goldman Sachs who's bullish on a Jindal Stainless, and Sharad Dubey standing by to tell us more. That stock, at least in pre-open, is indicating a 2.5% up move. Sharad, good morning. And that initiation call in terms of this company's Jindal Stainless, I would say, by Goldman Sachs is interesting. What are the key highlights that they're pointing out?
Good morning, Hiral, and you are right. There's a significant upside potential coming in from this report by Goldman Sachs on Jindal Stainless. They have initiated a buy, but the target price is at 1,000 rupees per share. Now, of course, that's a significant upside potential. It's a major beneficiary of the rising domestic consumption at play. Also, the capacity expansion, that is where a global boost is expected in the leadership, and it's best placed to gain from the rising domestic stainless steel consumption, especially the value-added segment. That is where the street is factoring in some bullish sentiment, and the sufficient balance sheet headroom is also there to increase the capacity by almost 2 times. And lastly, Goldman Sachs have stated that there is a reasonable valuations at play in the expectations of the ROE going forward, and that is why we are seeing a big upside potential from the current levels.
That's a Jindal Stainless, 1,000 rupees target price. Parag bhai, any view, because they're talking about a domestic consumption play right now for a Jindal as well.
Yes. I think this is a good company. I have been.
Would you buy at current levels?
So yeah, it seems okay. I don't have it right now in the portfolio, but I had it actually. It's a decent company, and as this report has highlighted, the use of stainless steel is actually increasing in the day-to-day infrastructure, like metros and elevators, and construction of buildings are also now. So I would say in defense, I would say that use of this particular commodity is increasing, and this company has done very well in terms of execution.
Okay, so from an execution perspective, again, you're
and valuations are not outrageous.
Okay. You have a Bharti Hexacom also, but HSBC has initiated a buy. They have a target price of 2,050. What they're saying is that the growth is robust and the focus is on shareholder returns. And Hexacom has a superior growth outlook to its parent, Airtel. I will take a question with Parag bhai on this one, but apart from that, you have a UBS on Sona BLW as well, who has a target price of 830, where they've initiated a buy, and they're saying it's supported by an increasingly diversified business mix, and there are multiple growth engines in place. So Sona BLW, Bharti Hexacom. Ruchit, on the charts.
Sona BLW looks quite interesting. We have consistently seen outperformance for this stock. The price of moves have been supported by good volume, so I think that outperformance could continue. Positionally, if you look at some weekly or the monthly, a bit longer time frame chart, then the stock has potential to rally towards 750, which were its October 2024 high. So if one has positions can continue, even fresh buying can be done. For Bharti Hexacom, I would wait for a follow-up move. We did see some pullback move from 1450 to 1650 in last couple of weeks, but 1650, 1700 has been acting as a resistance since quite some time. So if there's a follow-up move or good volume see, then one can look out for Bharti Hexacom.
That's Bharti Hexacom. Parag bhai, that you're positive with regards to Bharti Airtel. How are you looking at a Bharti Hexacom as well?
No, I'm positive only because as this report says, it has a higher growth, and that's why valuations are also a bit expensive actually. It is 5% cash flow yield versus Bharti's cash flow yield, which is higher. So I would say that and it is also same management, right? You are betting on Sunil Mittal and Mr. Gopal Vittal and those. So it's a great opportunity.
So between Bharti Hexacom,
but I don't know exactly
Airtel,
if there is any supply overhang in Bharti Hexacom or not.
Okay.
In Bharti Airtel, we are hearing, right, that some sale from Singtel can happen.
But in a lot of these names, for example, Polycab has been beaten down simply because there's a talk of a block coming. A lot of these might get actually done in a block window and get absorbed and will not be done on the market. So therefore, the supply hitting the secondary market and causing a price disruption may actually not happen because of the event. Yes. In anticipation of the event, that has happened. So be wary of that short trade in both Airtel as well as Polycab. In Polycab, that short trade possibly is worked out till now. It may not really necessarily. So please keep that at the back of your mind. Kush Bora, on the charts, Airtel and Polycab, two different sectors completely. But hey, charts don't differentiate between sectors, right?
No, they don't. You could give me India's population and its growth rate, and I'd still be able to give you a view. Yeah, sometime.
Right now, the charts are looking strong.
Indeed, indeed. No, so Polycab has a support near the 8800, 8850 mark. So you don't want to, as you rightly pointed out, go short right now. And like I said, I mean, there was selling. The stocks actually come off the highs of about 10,000 odd. But now it's not the time to sell. Perhaps you could see some consolidation, and I'll actually look for a positional long trade on Polycab from here, but wait for that trend to resume and this fall to settle. Bharti, yes, it's made an up move, but the 200-day moving average around 1950, oof, the stiff resistance, 5-7 sessions of attempts. Once it crosses that, maybe it becomes a momentum play up until that. If it's a positional play you want to hold it for 6 to 12 months, then you could very well get into it. Until 1950 is taken out convincingly, I wouldn't recommend a momentum trade on Bharti. For anyone who's holding, positional stop around the 1900 mark.
But I'll tell you an observation. I think our poos from middle class people like me and upper class people like all of you
really?
are going up, simply because I'm now realizing that we don't have a choice but if and when we go outside to take that plan for 10 days, which is at $4,000, etc. And if you just do 2 trips, right, and add 8,000 to the normal bill that you're doing, your ARPU at least has gone up. Now, of course, Airtel doesn't just cater to the people who are traveling abroad, but I think that segment and that cohort is picking up. So I wouldn't be surprised at some point of time if the actual average revenue per user numbers start.
That's an interesting observation on international travel and those packs that are taken. Yeah,
it's impossible to not take that pack because we all live on OTPs. And unless you have that pack, you don't get those.
That is true. That is very true. Yeah. That is very true. I do want to point out that the Ather QIP has closed. They've raised 1,300 crore rupees. Pull up those data points. The issue price, remember, was 1202. The stock is trading at 1302 as things stand right now. And a few allottees that have come through. It seems like HDFC MF has taken a bulk of it. Close behind is Aditya Birla MF, Axis MF. Soon after that, Edelweiss Mutual Fund has also taken some. It's mostly mutual funds that have lapped this up. But there's also Abu Dhabi Investment Authority that has grabbed about 5% of the pie. ADIA, that's what you see at the bottom of the list. It'll be interesting to see what the stock does now that the QIP is closed. But beyond that, there are a few stocks in the automotive pack that put in focus yesterday. If I remember correctly, Maruti Suzuki lost ground. So let me ask you a broad view. Actually, Ruchit, let me come across to you. Ather Energy is one. The other, of course, is the broader automotive pack. What are your picks?
Well, I think Ather Energy should stand out going ahead also. Overall, auto as a space has seen some consolidation over last 1.5 to 2 months. There are no signs of breakout yet. There could be some stocks which can relatively do well, like Eicher Motors within the entire auto space. But yes, if I have to compare it to Ather Energy, the trend seems to be quite strong over there. Although it has already rallied, but still no signs of trend reversal. So I would definitely advise to go with the stock which is trending higher.
Parag bhai, you have TVS Motors and Bajaj Auto that will be reporting numbers. What's the key expectation here? I mean, do you think ahead of the numbers there is some moat there?
Yeah, absolutely. Because Bajaj Auto, for example, I've seen 250,000 exports per month, and rupee at about 94, 95 at least. So I think the Bajaj Auto, in my view, should be the only auto OEM which will report YOY EBITDA margin increase. And my expectation is they should report about 30% EBITDA growth, YOY, and EBITDA margin of about 20.5%. That is my expectation. And plus, they'll be launching many new products in this Q2. Of course, TVS will.
Export mix is good, and so therefore margins could improve.
Absolutely.
That's a good point that you're raising. I wonder what the view, Ruchit, is on the charts for Bajaj Auto specifically.
It's looking positive. Recently, we did see some decline from 10,800 to 9,600, but the 200 EMA acted as a good support base, and the stock seems to have resumed its momentum again. So 10,000 is now the 50-day support for the stock. So till that is intact, one can trade with a positive bias.
Just about a minute left, and so therefore let me throw it open to Kush Bora to come up with one stock that we've not spoken about so far.
And I'll go with something that we have spoken about as an opening trade. Anantraj looks good, opening with a mild uptick. So just to reiterate those targets, 630, 660, stop loss at 575. Still looks good for a long trade.
Ruchit, just about 20 seconds to go. Any stock that you've seen in the pre-open session that you like, that we've not spoken about?
Yeah. Karur Vysya Bank seems interesting. Company has declared its results yesterday. So pre-opening prices are showing good strength. So if the follow-up move is there, keep stop loss below 300, go long for potential targets of 330.
Okay, Karur Vysya Bank, and I think the notes on KVB seem strong as well, so bear that in mind, Ruchit. Thank you for that. But as the markets get ready to kickstart trade, expect a bit of a stick maybe. The question only is, can we recover from that stick or and a little bit of a soft start, or do we stay sluggish with a downward bias? But here come the first trades. Actually not as bad as the pre-open was suggesting. So is there room for this to slide further is the key question. The market breadth is looking supportive. 1051 to 639 declines, which is actually a pretty strong market breadth. Banks are not cracking, unlike yesterday, which is a big thing. And IT, which was, well, actually thwarting some of that pressure yesterday, is in the green as well. Small cap index should come up on your screen next, because the mid caps, of course, are flattish. Small caps 0.33%. Not bad, really. Let's get the heat map up on the screen. Show you what's moving and what is not. Is it even, Stevens? No, a bit more green, little red. HDFC Bank still has pain, so it's still down about 1%. Eternal, Maruti, etc. Reliance, a bit of a pain as well. And actually not pain, really. It's very, very flat, Reliance, to be honest. So HDFC Bank, in some sense, is a lone ranger today in terms of heavyweights being down. Maruti too, little, but HDFC Bank. On the flip side, though, Eicher Motors, Shriram Finance, Tata Steel, ICICI Bank does well yet again. So, you know, the one large bank which showed NIM performance or net interest margin performance continues to do well. Kotak recovers a little bit of lost ground, but minor so, if at all. You know, Alex will have and Hiral will have better luck, because there is precious little on the index today to talk about. So I'm going to hand it over to Alex with this one note. Watch out for these two, HDFC Bank and Maruti, the two putting a little bit of strain on the indices this morning.
Yeah, absolutely. In fact, I'd be curious to pull up the contributors chart just to see how much of an impact they're having. Yesterday, remember, HDFC Bank alone contributed 146 points on the downside. Today, it's about 32 points. It's kind of balanced by the combination of ICICI Bank as well as State Bank of India. Bharti Airtel, at least for a second day in a row, is gaining ground. Let's see if that lasts through the session. Pull up the broader markets, and the mid-cap index and the small-cap index trading with gains of, I think, about 1/3% each. I'm talking about the intraday chart. If you can pull that up and see if you can. If not, then that's fine. It's up about 1/3%. The small-cap index should also be about 0.4% up. So holding at the high point of the day. Let's pull up the sectoral indices as well and see there's probably quite a bit of green on the screen. Indeed, there is. On the low end of the spectrum, these two indices were actually up and about in trade yesterday. They were among the top performers, losing ground today, but PSU banks are looking okay. Metals are up about 0.6%, and then you have the Nifty Bank that is trading with gains of about 0.4%, despite the fact that HDFC Bank is an underperformer in trade today. Let's talk about individual counters, and earnings reactions are front and center. Pull up something like a Paytm, where you've had an improvement in the EBITDA number, 202 crore or thereabouts, but it's not really reflecting in the stock price. It's just about 0.2% lower at this stage. Canada HSBC Life, there is strong growth in the VNB, value of new business. That's what you look at for an insurance company. It's up about 5% or so. Sobha should be positive, should be gaining over 3%, in fact 5%. Record pre-sales in the latest quarter. Action Construction has had a very good set of numbers as well. It's up about 5%, 20+% growth in the PAT number, and improvement in the margins as well. Bluestone Jewelry had a pretty good quarter. It maintained its PAT performance, or actually stayed in the black, but it's reported a very strong same-store sales growth as well, which is positive. Rallis India, arguably, I thought would be the stock of the day. It's not moving as much because it had a fantastic quarter. Let's see if it builds momentum through the day. For now, though, it's just about flat. CMPDIL, which is a central mine planning, is gaining about 1.5%, pretty muted if you consider that 60+% EBITDA growth. And then on the other end of the spectrum, you have a weak performance by Transformers and Rectifiers Limited. It should be losing ground. It's down about 5.4%. And this is on account of weak execution during the quarter. And the new kid on the block, Advait Jewels has posted a profit slump of over 40%, if I remember correctly. It's down about 3%. A few other updates for you. India Glycols, there's a demerger that has been sanctioned by the NCLT. Emcure Pharma has gotten a approval for one of its drugs. It's up about 0.9% that treats liver disease. Ashiana Housing, the project Ashiana Oma has converted 224 units. Oh wow, it's up about 9% with sales of over 300 crore rupees, 370 crore rupees. Acme Solar, an arm is commissioned 160 megawatt per hour capacity of BESS project. You have Rights, which has signed an MOU to explore business avenue with a company called Mecon. It's not doing too much in trade, but I think I've covered quite a few of the newsmakers, Hiral. I'm wondering in the broader markets whether there's anything more that you're spotting.
Thanks, Alex, for that. You know, Wanbury is another one. That's a pharma company. The Tanuka facility has received 6 US FDA GMP inspection observations, and that stock is under pressure, 5.5% downturn coming in there. MTAR is another one that we've been talking about as well on the back of the Bloom Energy downtick. Let's pull up that one again, locked in lower circuit in today's session as well. Apart from that, Karur Vysya Bank is an interesting one, 7% up move. Jaiprakash Power is seeing some smart moves. JK Cement today is seeing a recovery after that slump in yesterday's session. Chennai Petro, MRPL, a few of the other names from the oil and gas pack. Data Patterns, Dixon Tech, Kalyan Jewelers has now started to see some bit of profit booking, and the pharma pack as a whole, which was really up in yesterday's session, is seeing some cooling off effect in today's day of trade as well. But Karur Vysya on the charts, Ruchit, 7.5% up move coming in today, and again it is an earnings reaction that we are seeing for a second day, but is there further momentum on this one?
Yes, I think we should see a continuation of the uptrend. We just discussed before the market opened that the pre-opening rates were showing a positive tick post the numbers, and the stock has even surpassed its entire consolidation of 2.5 months. So 330 is the initial level that we would be watching out for. If the stock managed to surpass 330, then the previous highs were around 342, which were in the end of Feb. So 342 is also quite possible in the near term.
Okay. 7%, what a pick, Ruchit. So really strong show. Thanks for that. Ruchit, just one very quick view. I don't know if we spoke to you about Bajaj Auto or no, but if we haven't, is that a trade that you would take, Bajaj Auto, ahead of the numbers?
So Neeraj, I think 50 DEMA support is still intact, which is around 10,000. So I think just instead of trading just for the results, I think if one has a positional view, then it's still a good buy at current levels, but stop loss would be below 10,000 levels. So it should be somewhat around 4.5-5%. So if one can manage that, then definitely one can create fresh longs here as well.
Parag bhai, now you are of course constructive Bajaj Auto, and I'm guessing the idea is not from a perspective of just this quarterly results.
No.
What's your rationale?
So my rationale is very simple. See, it is one of the reasonably valued stocks. First of all, 21 times or 22 times, because when we started discussing, it was around 9,700, 800. Now it is 10,500. So it is 22 times, let's say, 22 times FY28 earnings. So first of all, reasonable valuation. A company had 20,000 crore net cash in March 26. They have a distribution policy that anything above 15,000 crores, they'll distribute as dividend, right? Or buyback. So last time they did a buyback of 5,630 crores at 12,000, where promoters have not participated, which is one of my key reasons to be bullish. And on the business side, exports are booming, right? For example, Latin America, they are now selling 50,000 vehicles per month, Latin America, and these are very high margin business. So about 20% margin with the company on an average makes, right? So, and they're also sending 5,000 three-wheelers to Latin America. Nigeria, which was the key market for them, fell from 60,000 to 0, and now it has recovered to 30,000. So it has also a good room to grow. So exports, in my view, 250,000 is still a lower number, although it contributes meaningfully to the profits because rupee is at 95, 96 now. I think for next 2 months, according to what Mr. Rakesh Sharma has said, if the logistic issues are not there, then they can export 3 lakh vehicles a month. Plus, they have also said, Mr. Rakesh Sharma has said that July, August, September will see number of new launches in India itself, so which will address the main problem of the market, which is domestic market share, right? So if everything comes together, this quarter's results, booming exports, electric three-wheeler volumes rising. In electric three-wheeler, they have 40% market share. In ICE engine three-wheeler, they have 70% market share. And Mr. Raju Bajaj has clearly said we want to get there in electric three-wheelers also. And as I said, absolute EBITDA, what they make in electric three-wheeler is more than ICE engine, because electric three-wheeler is valued at 310,000. Right? So I'm saying it's a clean, profitable company, so excellent corporate governance.
KTM has turned around.
KTM has turned around. So whatever they touch, they turn it around. So I think it's a cash-generating machine which gives you a lot of cash also as a shareholder and still continues to grow. Right. So I think, and plus, see, market always focuses on very near term also. So this quarter is also looking good because of the export number and the margins which they make on exports. The only thing is that in long run, EV, because EV is also growing significantly, and EV Chetak, they have just broken even. So that might pull down the overall margins a bit. So for that, I want to publicly give suggestion to a company that EV business, they can actually demerge, give shareholders, Bajaj Auto shareholders the shares of EV and then list it separately. Because if Ether, for example, is a great company.
Like you will come and sell it off, no?
No, but
they don't want that.
No. The EV business of Ether, for example, gets market cap of 50,000 crores, and still it is not EBITDA break even. Right?
So Bajaj Auto will get.
So Bajaj Auto's market cap is 2,88,000.
But what is the market share with Chetak?
23%. Last month they had 23% market share in EV, which is number 2 after TVS.
Interesting. Wow,
Thank you, Parag Bhai. That's, well, so if people needed to know why Bajaj Auto could be a good idea, as per Parag Thakkar, now you know the reason why. And fabulous work with the graphics production team, so thank you for that as well. Kuch Bada, we've discussed Bajaj Auto at length. Everything else notwithstanding. If you had to take a fresh bet right now, what would that be?
So from a very near-term perspective, you know, my policy is very clear, never trade on the day of the result. Aaj hai result, correct? Yeah, so you never trade.
I'm also adding caution to it. Don't buy it today now wait it out for results only.
Yeah, absolutely.
Because it is just one day now. So.
True. But from a very near-term perspective, medium-term perspective also, trend is very bullish. That 9,500 level, from there that rally started, hasn't really seen a meaningful pause. Volumes also very healthy. Major breakout, by the way, will come above 10,800. But like I said, if you're holding, continue to hold. Bajaj Auto positional stop near 10,000 or maybe just under that. 2 stocks I just want to quickly highlight. Again, they're the weekly pace that we discussed. The reason I'm highlighting is because they are continuing from where they left off yesterday. JG Chemicals, bring that up. In fact, if you can bring up the last 2 days chart, 10% move yesterday on that one, and today again about 7% or so. So agar aapke paas hai, so you should continue holding with trailing stop loss, book some profit, about 50% or so, but then keep trailing your stop losses higher. And the other one is Gujarat Fluoro. Now officially the first target has been hit. Continuing from yesterday's move, you could very well continue to hold this one and bump up your stop losses close to the 4,300 mark. So JG Chemicals, Gujarat Fluoro weekly picks doing well. Continue hold, keep your trailing stop losses. Keep trailing your stop losses.
I know that you went back to Ruchit. Ruchit, I know you've weighed in on Karur Vysya Bank, but I do want to give you an opportunity to revise your levels once again, because the stock is at the high point of the day, as much as 9% higher. Would you take money off the table now?
Not really. 330, I know it was the target that we gave before the opening. It has tested at 330 mark, but the kind of follow-up buying is there. I believe that could be surpassed, and 342 would be the levels where I would take advise to take some money off the table, because those were the previous swing highs. So one can wait for levels around 342.
Ask you about Action Construction Equipment as well. Among the earnings reactions, this one actually stands out. 20+% bottom line growth in the quarter gone by, and expansion in margins taking place as well. Pretty strong and robust top line growth as well. But on the charts, we're at a 6% uptick as things stand right now. What is the potential for upside from here?
So it has a potential to rally towards 1100 kind of level. So this looks positive, because last 10-12 days the stock has already consolidated around its 20-day EMA, and now it's showing a follow-up move. So 1100 could be seen. Only thing is that for fresh buying, the stop losses are also equally lower. So 1:1 risk reward issue is there. So I would advise, if anyone already has long positions, continue to hold on. If we get any dip, then use declines as buying opportunities.
Interesting to spot in the cement pack that JK Cement is making a little bit of a comeback. Remember, that it didn't post the best numbers. Its margin performance left something to be desired, and maybe it's catching on to the ultra tech effect, which is what saw the stock go up. In fact, over 2% yesterday and a further 1% in trade today. The question is, for this cement pack as a whole, are you seeing any options to buy? Would you stay clear for now, wait for the dust to settle? What is your approach?
Yeah, so for me, the cement pack is not, aankh band karke kuch bhi buy kar lo types move right now. There are 2-3 names that very clearly stand out. Ultratech is obviously one of them. Ramco had seen quite a bit of accumulation over the last couple of weeks. Right now, it's consolidating, so maybe you could give that a miss. Shree Cement, this is the one that's actually had positive crossovers, has a very decent volume accumulation, price action also very healthy. So yeah, this is something that you can consider. I mean, I know it's a big ticket item, so might not have too many takers again, but 27,800, about 29,000, these are the levels very much likely. Stop loss close to 26,200, 26,000 marks, risk reward ratio favorable. So Shree Cement for a fresh trade also looks very interesting.
Okay. Anything on a Tina Rubber on the charts? Because very strong set of numbers. That stock is also seeing some smart moves today. Kush.
Very interesting name that you bring up. I mean, doesn't usually come into discussions. Has had a steady run up over the last months, but yesterday and today, whatever trades or whatever gains were to be had are done. So I think now you should book profit partially, maybe 50 to 75%, hold the rest with 1150 as your trailing stop loss, but obviously no trade initiation now on Tina Rubber.
Yeah, again, a company which has given guidance of 25% CAGR for the next 3 years, or something like that, and therefore maybe
43%.
Yeah, pretty good going in the last 1 month. Recycling. I wonder if Gravita has had a similar move to just as we mark some of these recycling names. Gravita India should come up on your screen as well, just to see if that has also had a good move over the last 1 month, please, if we can. Since Tina Rubber is up 60%, Gravita India 5%. 1 month.
5% or so.
5% or thereabouts, not too much. Okay, Jamin, Ruchit, Kush, Parag Bhai, thank you so much for joining us today and giving us your thoughts. Really appreciate your time this morning. Okay, shift focus as SBI MF gets ready to get listed, and then we have the 4 or 5 large asset managers listed, alternatives about to start getting listed. We have one in the anvil, and we already have REITs out there. So the money managers are now getting listed, and people who don't have the ability to necessarily own or deploy large pools of capital into AIFs, PMSs, etc., now have the choice of buying the stocks of some of these asset managers, because this industry could be entering a next major growth phase driven by domestic capital, deeper financialization, and rising interest in alternative assets. Now, the idea of doing this conversation with 2 eminent experts is to just try and figure out what is it that both of these guys who run asset managers, both on the mutual fund side as well as on the alternative side, think of the growth prospects over the next 5 to 10 years. And let's kickstart this conversation with Vishal Kapoor, CEO of Bandhan AMC. In a bit, we'll get in Gopal Jain of Gaja Capital Partners as well. Vishal, great having you. Thanks so much for taking the time out and being with us. As a lot of your peer sets get listed and people get a slice of buying into the stocks of those or shares of those companies, one would love to understand from you, as somebody who's running this business actively, how do you see the growth path for an asset management firm over the course of the next 5 to 10 years?
Firstly, for having us, but on the question, we are slightly conflicted because we are in the asset management business, but we do believe it is a fabulous business to be in. It's not just 1 or 2 or 3, but many levers that are helping us. Firstly, of course, there is nominal GDP, which is growing quite well, and that has its own income and savings effect on a large demographic, which is beginning to come into the middle class. In addition, we have a larger financialization theme. So as people save more, more proportion of that assets is coming into financial assets. And within that financial assets, over the last decade or so, we've seen that mutual funds have been beneficiaries and clearly getting established as the primary savings vehicle and investment pool for retail savers. So these 3 factors combined is, I think, giving us a runway, which is really, I think, still in the early phases of its growth. We've done very well, as you know, as an industry. The industry has grown assets at significant high double digits. But as I look ahead, I think there is still so much room to grow. Like I said, it's still in the early innings of growth. Clearly, over the next 5 years, I would expect this to continue growing at significant double digits. Doubling from here would not be surprising at all.
Interesting. Okay. Gopal Jain of Gaja Capital also joins in, and Gaja, I believe, is slated to come out and get listed sometime later this year too, in the alternative space. So not in the retail mutual fund, or not in the mutual fund space, but in the asset management space firmly. Gopal, good having you. Thanks for joining in.
Good morning. Good morning.
We kickstarted this conversation with Vishal talking about how while there has been some road to growth already established over the last 5, 10, 15 years for the mutual fund industry, for asset management as a space, there is, according to Vishal, a lot of room to grow for the next 10 years at the very least, maybe even longer. What is your sense, Gopal? How do you see the next 5, 10 years for the space?
No, absolutely. If you just look at the numbers speak for themselves. I think Vishal was being very modest when he was talking about the growth in the mutual fund industry. If you look at the last 10 years, mutual fund industry has grown 6.3x. And, the tailwind for asset management, for the tailwind for savings in general, and equity in particular, is longevity. So, India is broadly, in terms of its social indicators, in terms of median age, in terms of life expectancy, where the US was 40 years ago. And you see how far the US has come in terms of allocation to both mutual funds and funds in general, and alternatives. So alternatives in the US were less than 1% about 40 years ago, and they are 3 to 5% now. Similarly for equity. So the drivers are longevity. The tailwind is longevity. The drivers for the two businesses are a little different. The growth for mutual funds has been 6.3x. The growth for alternatives in the same phase has been 43x. This is just the base effect. So mutual funds were growing off a larger effect. Both the industries are compounding, and Vishal would have a better estimate as to how does he see the industry growing forward. But you can expect, as the bases become larger, both for mutual funds and AIFs to keep growing, but maybe not grow at the same rate that they've grown in the last 10 years.
Which is fair also. So Vishal, let me take that question to you. MFs have a larger base. The next vectors of higher than average growth, do they come by deeper penetration and use of technology, or do asset management firms like yourselves, which are powerhouses in the mutual fund space, also adopt alternative products as a way of growth? Because that space, you can argue, relative to the world or even in absolute terms, is still in its nascency, if you will.
Question, Neeraj, and I think at least for Bandhan AMC, I can say that we look to grow on the alternate side as well. So we do have a Vidarth alternates platform. We are in the SIF space as well. So that's the new emerging product, as we all know, in the middle with our Aruda SIF. So a full service asset management company offering mutual funds, SIFs, alternates, etc., can definitely be one format for driving growth across the various segments that are emerging. And I think, like Gopal mentioned, the growth ahead is just many fold. Just looking at our penetration, AUM to GDP is a simple measure that is used globally to look at how much more headroom we may have. We've done very well, but we are still in the 20% odd mark. Keep in mind that most developed markets are more than 100% AUM to GDP. The global average is close to 70%. So even if we look at the next 10 years of doubling from here, we are still looking at about 30-35% AUM to grow. So from there, you can still double and still come to average. So you can get an estimate of how much more room we have. Certainly from a larger base, mutual funds, and really this depends on which products deliver how, but the growth rate on a smaller base for alternatives is faster. It's also reflecting what investors are choosing. So as investors mature, maybe looking at more sophisticated strategies, taking on more risk, and looking at nuances in their portfolio is becoming the next phase of growth. And certainly both alternate managers as well as mutual funds or AMCs such as us, which also have an alternates platform, can be both growth engines for us.
Now, Gopal, because of the base effect and the fact that we're still in the nascency, the growth mark of alternatives can't be questioned. The question will literally come is that what mutual funds have done beautifully is democratize investments, single stock investments, which could have been large and not as safe, into something which is safe and available for the small ticket investor as well. Obviously, alternatives can't go down that far at 250 or 500 rupees, but as you look far, right, and you know, I mean, there is a need to connect domestic savings more effectively to private markets. How can alternative managers do that while maintaining investor protection?
So that's a great question, and we see this happening in 3 steps. First is democratize institutional access. So there are many institutions today who cannot participate in alternatives, leave retail investors. What does that mean? When tomorrow EPFO, NPS, etc., start investing in alternatives, then in one stroke, crores of investors, underlying investors, get access to alternatives. The second step is regulated intermediation. So SEBI has just come up with the SIF category, which lowers the threshold from 1 crore to 10 lakh, and it has worked very well. And I think in 1 year it has raised close to 18,000 crores. And the third step is accreditation. This is a beautiful step that has been initiated by SEBI, which is accreditation moves away from minimum ticket size of 1 crore to income and wealth as a criteria. And I think this will further broaden access for investors. And then, of course, there are listed products. There are REITs, InvITs, and down the road, there'll be listed managers. These also democratize and mainstream alternatives, furthering access for alternatives to those investors who either do not want to commit 10 to 15 years or who cannot invest, like vast sections of retail investors who will neither qualify to be accredited nor meet the 1 crore minimum.
Okay. Now, Gopal, this question goes to you. Since Vishal runs a retail mutual fund pocket, I won't ask him to analyze his peers, but you can definitely look at the space which is available for investors right now to invest in as right now, right? What would determine which of the asset managers will come up trumps over the next 10 years? Is it ones which combine traditional investing and alternative investing the best? Is it the technological edge? Who determines that amongst the, who determines, or what will determine who's the first amongst equals, or 1, 2, 3 amongst equals?
So I'll take a step back, and my way of looking at this question is very different. I don't think it's just about technology. I don't think it's just about products. I think it is about performance and hygiene. I think managers that continue to deliver on performance consistently, whether it is public markets or private markets, will win. And similarly, investors that continue to deliver on trust and transparency will win. See, 10 years ago, the mutual fund industry started institutionalizing. And today is a major milestone. I think with SBI mutual funds listing, now 50% of the AUM is listed. So first we institutionalized savings, then the managers themselves got institutionalized. In private equity, this playbook in India is yet to play through. Institutionalization of managers is just about to begin. And in a few years, you will see greater institutionalization. And what does institutionalization bring? It brings transparency, it brings succession, it brings greater equity ownership within teams, greater alignment, so on and so forth, and inspires more investors to come forward. So my framework for this is performance and hygiene. Some managers already have it. Those who manage to keep it, those who manage to excel on these 2 parameters of performance and hygiene will continue to succeed or will overtake others. I think selection of products, public plus private, public alone, private alone, technology, these are all enablers.
And Vishal, to you, therefore, while we've determined that there are great growth opportunities for this space, what are the risks? Is it an attempt to grow too fast? Because Gopal made a pertinent point that it's not about just the other edges, but the fact that performance, which is a no-brainer. But what are the risks really to the growth of the space and the growth of a particular asset management firm vis-a-vis the others? What should people keep in mind when choosing where to invest within the alternative space or within the companies which are in this, within this asset management space?
Let me take the second one first, which is the risk for a particular asset manager before we look at the space, because the risks are slightly different. For a single asset manager, clearly, like Gopal mentioned, that performance consistency is a key driver, trust is a key driver. So therefore, sustaining that, especially performance, becomes a key growth enabler. And I think as we all understand that everyone goes through cycles, fund managers go through cycles, and also in the urge of trying to beat a very competitive peer set, how much risk do you pile on, and can you actually execute to that risk becomes itself, one of the challenges to manage. So performance consistency, and as an asset manager, how much risk are you adding becomes one of the things to watch out for. Now, that risk could be in terms of how individual schemes are performing, or distribution, technology, etc. So where have you invested? So those are things I would watch out for. Just using the anchor that performance consistency, trust, governance, and all the enablers that are required by the ecosystem is something that you've got to offer. Keep in mind, it is a very competitive space, and customer behavior evolves all the time. So you certainly can't sit on your laurels. So that would be, I would think, things to look out for in the individual asset manager. For the ecosystem, I would be sort of more bullish, because I think the risk fade away a bit, because the ecosystem, despite the individual performance cycles that asset managers go through, still has a lot of room to sort of allow some of these edges to actually be blunted, if I can call it that. There, I think it's really about the core trust and the behavior that savings or investors are showing. So the SIP growth story, the resilience that is seen in the investor of not getting scared at every dip, I think those are the more fundamental drivers. So I would call the core trust in the vehicle as the primary driver. Expectations of investors. In the past, as we all know, markets have delivered fabulous returns. Now we expect that to keep compounding, despite the fact that nominal GDP or real GDP may come off a bit, given the fact that inflation has been more moderate. So getting your expectation retagged from maybe a high teens to a low teens, or maybe just about double digit, those are, you're not getting disappointed, because that will still probably be the best asset class, but not maybe getting disappointed in taking on too much risk by doing more exotic things. So those are things I would say which would impact the industry over the longer term.
Great. Gentlemen, both of you, thank you so much for taking the time out and being with us today and giving us this glimpse of what the AMC space could look like, and all the best with your respective businesses as well. I really appreciate your time. And in fact, a large asset manager is getting listed today. CS Sethi of SBI is speaking on the eve of SBIMF getting listed. Let's cut in.
Education, a young professional building long-term wealth, an entrepreneur securing retirement, or a senior citizen investing with confidence. Ultimately, our business is not only about managing assets, but more about managing aspirations and helping millions of Indians participate in the nation's growth story. Today's listing represents another defining chapter in our journey. I would like to express my heartfelt gratitude to investors across every category for the overwhelming confidence they have reposed in SBI Funds Management. The IPO witnessed, as mentioned by the MD and CEO, exceptional response, being subscribed nearly 42 times, with the QIB portion subscribed approximately 140 times. The issue attracted bids worth nearly 2.98 trillion. The participation of leading domestic and global institutional investors, retail investors, shareholders, and employees reflects confidence not only in SBI Funds Management, but also in India's long-term economic future. As the largest IPO...
Okay, all right. We'll bring you those rates as they settle, and of course, it's just minutes away. For now, let's turn to another corporate conversation. And Rallis India stands out among the list of companies that have done particularly well in the first quarter. We'll talk about whether or not this is replicable in the rest of the financial year. We'll be speaking with Mr. Gyanendra Shukla, who's the Managing Director and Chief Executive Officer of Rallis India. But before we come to you, Mr. Shukla, allow us to set the context. My colleague and research analyst Varsha is joining in to tell us about the key numbers that we should focus on. Varsha?
Well, overall the numbers did beat estimates, I would say. There was the aggressive product replacement led to the push in volumes. Strong campaign activities, led to domestic formulation growth. Overall, if you see the volume growth in crop protection business, aided profit for the company. Fixed cost optimization, improve operating leverage. Overall, if you see, there's a spike in EBITDA margin. The gross margin improved due to good product mix and price hike, but the EBITDA margin improvement is due to the manpower reversal that you are seeing the spike in the margin. June was driest in 12 years, delaying kharif sowing. Heat wave, crop shift impacted farm demand for the company. Lastly, on the domestic crop production, well, B2C revenue, if you see, surged 19%. Overall, yes, a good set of numbers, but yes, EBITDA margin improvement that you're seeing is, of course, on the back of reversal in manpower cost.
Right, Mr. Shukla is with us. Thank you so much, Varsha, for that. Mr. Shukla, just your thoughts on what led to this significant outperformance in the first quarter, and whether this is something that is replicable in the remainder of this financial year as well.
Good morning. So it's a very tough question to answer. All of us know that weather has not been very cooperative. There is delays in sowing, but not that everything is bad in the market. I think the things which are falling in place at this point of time, it looks like planting is delayed, but if rainfall recovers, farmer will plant something, and what kind of choices they will make, it will depend on the crop situation and moisture situation. As far as Rallis is concerned, we did have a good domestic season, both for seed relatively, less relatively for seed, more for crop care. And part of it has also happened, and that is some of it is reflected in profitability as well, is that when war started, we worked proactively on securing inventories. And as a result, sometimes you get advantage by getting early in the market and procure the inventory. The other thing we did well was when export became a big uncertainty because of the war, we prioritized stock allocation to domestic markets, and that helps us. It's always when you're exporting catalog product to the export market, margins are lower. Uncertainty of things getting stuck in the high sea was very high, so we said, okay, prioritize domestic first. We're an Indian company based in India. We have to help Indian farmers first.
Okay, just a continuation to that, as you mentioned, see the B2C crop care business, a 19% growth, B2B segment, a 19% decline. And I think it is the export and the institutional side of it that you're talking about. Do you think this will be cyclical or structural in terms of the weakness that you're seeing? And when do you expect that recovery to come in?
So it's very, very difficult to say, because like India, global crop protection demand is also driven by their crop cycles, right? So, for example, North India, if you go to Northern America, most of the demand is over for the current year. Now we have to focus on Southern American markets. So, and then again, you come back in October, November, North American markets start. At this point of time, it's very, very difficult. Nobody has a crystal ball to say what will happen. What we control is really be very active in the marketplace, understand the dynamics, where farmer demand is there, keep a high tab on the inventory, where product is moving, where not is moving, run special campaigns in the targeted area so that we can optimize sale. One thing is very important, that as planting is getting delayed, we have also seen hardening of the commodity prices. And as commodity prices harden, for farmers, those who have a already good standing crop, they will try to protect it with the intention to make more money at a later stage. So those farmers tend to use as well a crop protection product. And other thing is that we should not always equate low or delayed rainfall to businesses. Last year, there was a heavy rainfall. Rainfall, in fact, was too much. and that led to missing of a spray. So it's always a balance. I mean, I keep saying a spatial distribution of the rain and crop planting that will decide what will happen. Sometimes intermittent rain are better because then farmers get opportunity to go to the field and do the operations and use the product to maximize their yield and income.
I'm just wondering, Mr. Shukla, this 19% growth that you've delivered, how much of it was volume expansion compared with dealers' pre-positioning of inventory?
So it's a combination of volume and price both. Having said that, we are trying to really pass on all the cost increases to the customer, but a lot of it is volume driven. I think last couple of years we have been talking about introducing new product, getting more active in the herbicide category and all. So a lot of that is also a result of that new product introduction, being more focused and targeted in the marketplace, completing our portfolio wherever there were gaps. So it's combination of things, it's just not one factor.
The other question I have for you is in terms of where the margins are concerned. Now, the recovery that has happened with regards to, or the reversal that has happened with regards to manpower costs, that is something which has aided margins this time around as well. So what is your expectation for FY27 as a whole, number one? And in terms of the product mix as well, how are you expecting that to pan out to aid margins?
So as far as product categories are concerned, for pre-emergence herbicide and post-emergence herbicide market, for Kharif is almost over and we had a high double-digit growth. Now the time has come from non-selective herbicide as well as, as far as herbicide is concerned, we are preparing for the Rabi season. But insecticide and fungicides in this kind of environment, wherever crop is good, will be in high demand. Now, as far as margins are concerned, I think I would prioritize selling the volume because we have taken an inventory position. Our priority would be to be competitive in the marketplace. Do not worry about, be competitive and go and actively promote, work with the farmers.
So, Mr. Shukla, you're saying volume growth is what you're going to look at. Margins is not something which you're going to really focus on. So, is the number that you've achieved?
We will not focus on margin, but at the end of the day, you have to be competitive in the marketplace.
Okay. So is the current first quarter margin something that you will be able to sustain in FY27, or should investors actually watch out for something lower wherein your volume growth will be much higher?
So, I mean, we do not give any forward-looking forecast, but what I can tell you is that a lot will depend on how crop situation evolves, right? If crop situation is healthy, farmers show intention to protect their crop, obviously we'll be able to sell the product first. Idea is to sell the product, be competitive in the market. That's our objective. I think margins get protected anyway if you do right things in the marketplace.
Okay, so volumes, key priority, and then margins will follow. Thank you, Mr. Shukla, so much for joining, and always a pleasure to speak to you as well. And I think that's what the street is probably worried about, Alex and Neeraj, because if you see the stock, optically the numbers are looking very strong, but the stock is nearly at the day's lowest levels. But moving on, shift focus to the listing of SBI Funds Management, which is set to debut in the bourses in a few minutes from now. We are joined by our colleague Nimit from the NSE headquarters. Nimit, what's the mood like there ahead of the listing?
Absolutely. Mr. C.S. Shetty, the chairman of SBI, just spoke, and he said that he's not talking about managing assets but managing aspirations, and he said this is really the start of the story and not the conclusion of something, and that really sums up the mood here. In a few minutes we're going to see the listing. 9,813 crores, 42x subscribed, and this is the biggest IPO of the year so far, with the biggest fund manager in the country right now. Let's talk a little bit about those numbers before we see the listing in just a few minutes. 140% of the oversubscription came from QIBs. It's been driven lightly by them, the strong demand. Also, the non-institutional investors have oversubscribed by 22%. Again, huge demand from the retail space as well, which has seen high subscription rates. Apart from this, the IPO is going to be no fresh issue. It's going to be, like we've always reported, an offer for sale between SBI and Amundi. SBI will still remain the key shareholder and the majority shareholder in the company even after the partial exit here. A few numbers to put out there just to understand how important this IPO is. SBI's funds is India's largest mutual funds manager by QAAM, and it has done 12.51 lakh crore in average assets FY 2026. FBI funds holds a 15.3% share in the mutual fund industry at the end of the last financial. And the important factors that Mrs. Shetty also laid out just a few minutes ago for us is that it's going to increase its penetration in tier 2 and tier 3 cities, expand digital investing ecosystem, grow the SIP-led retail inflows, which have been driving SIP growth over the last few years and keeping the market strong, scale ETFs, passive funds, alternate investment products, and leverage SBI's banking network to deepen distribution. We're just going to see the bell ring in a few minutes now, and we'll keep you posted on that. But the largest IPO of the country is off to a good start, heavily subscribed, grey market premium between 15 and 18%. We're going to look at a strong listing here.
All of us are just waiting for the countdown to see what the listing looks like. But thank you, Nimit, for that. We'll come back to you as well. But MK has initiated a buy. They have a target price of 750, and they're saying it's a play on brand, distribution, and under penetration. And there are multiple levers to ensure healthy AUM, revenue, and profitability growth as well. You have Equirus as well, which has initiated along, and they have a target price of 675 on the counter. They're saying it's powered by reach and built to compound. There is a distribution moat which is powered by the parent company, and they're seeing multiple optionality beyond mutual funds. They're expecting equity and passive assets to drive almost 16% of the CAGR growth as well. And there you see the rates. It has just listed in terms of where SBI funds is concerned. You're talking about a 7.5% up move. 616.65 is what you're tracking in terms of SBI funds that has listed on the bourses. Any comments, Alex Neeraj?
And there's a little bit of room that was left for investors. It seems to be building at this stage, and this was expected to take place. This is, remember, India's largest mutual fund by assets under management, and just a few of their schemes that stand out, right? You have the SBI Equity Hybrid Fund, where they're managing over 80,000 crore of AUM. They have a large cap fund where they're investing, or rather they're managing as much as 55,000 crore rupees. Their contra fund is actually a leader. Not too many contra funds in the market. You either have a value fund or you have a contra fund, and they have one that is quite highly regarded, where they're managing quite a considerable amount of money, close to 50,000 crore rupees in that scheme as well. So a well-regarded mutual fund house listing, and now it kind of completes the pack. And I think the one that is missing is Kotak from that list. If you're talking about the top 5 or top 6, right? You have Nippon, you have SBI, you have HDFC, AMC, ICICI Pru, and now SBI.
Of course, let this bell ceremony ring. But I was also going through, while Alex and Hiral were talking, of what some of these asset management firms have done in terms of returns.
Yeah.
From Feb 2023, Nippon Life India Asset Management Firm was at 200, it is at 1200. Yeah. That is, of course, the best performing one. But HDFC AMC also has doubled in the last 3 years. So if we can just pull up these 3-year charts or 5-year charts of these names, you will see that they've all created wealth. And therefore, no reason why SBIMF over the course of the next 3-5 years may not be able to do so. This is 5-year chart for HDFC AMC. Look at that from the bottom. Nearly double. Nippon is even better, like I said, from a 200 price in 2023 to 1184 currently. That has done well, and ICICI Pru hasn't done badly.
Limited point, right? Neeraj, we've been speaking about the flows through SIPs that have come through, and particularly for this institution, State Bank of India, SBI Mutual Fund, it's been a bit of a trend, particularly over the last 1 year, that the growth from below 30 cities, as they designate it, right? Simply put, below the largest 30 cities, the growth of SIPs from those cities are actually more than the top 30 cities, which just indicates that the depth that they have of coverage and the network that they have is being utilized effectively, and they're deploying those assets.
Yeah, great going. Okay, let's move on. Ashok Leyland has unveiled India's first air suspension truck range, marking another milestone in its commercial vehicle journey. My colleague Danish caught up with Sanjeev Kumar, President MHCV Ashok Leyland, Listen into what he had to say.
We have launched a new range of air suspension trucks. Could you tell us more about it, and how do you believe that these will be able to help you to expand your market share?
See, if you look at Ashok Leyland, we are known for innovation. And I'm happy to share that today we have launched India's first air suspension multi-axle vehicle. The advantage of this vehicle is it offers a 4-ton extra payload. And when you convert that 4-ton extra payload into economics, it is equal to almost 5 lakh worth of savings for customer. And let's say in 6 years, it's a huge advantage for customers. So we have launched today these trucks in 3 configuration. One on 12-tire vehicle, a 14-tire vehicle, and 14-tire with the dual-tire vehicles. So we believe that these vehicles are going to enhance the market, multi-axle market in India, and offer customers many options which they were looking for, and flexibility also. So these vehicles will do very well for the applications like tankers, cement, polymer, etc. And we feel that this is going to help us in improving our multi-axle market share in India.
Sir, are you also targeting exports after the launch of this particular range, and what will be your target, and which will be those markets where you will be exporting these?
Right now, I would say that we are going to sell these products in India. We'll kind of ensure that these vehicles settle in India, and then probably we'll look at export markets. Right now, focus would be domestic Indian markets.
And so by till how long you're going to focus only on the domestic market for this?
See, generally a product takes at least 3 to 4 years in stabilizing. So of course, in these 3-4 years, we would like to create sufficient volumes of these products in Indian market, and then we'll take it forward.
If we talk about the industry performance in Q1 FY27, the commercial market industry rose in high double digits. But if we look at it carefully, we are seeing that within the M&HCV segment, we are seeing that it is a mixed bag. While the goods carrier has increased by 20%, but the passenger carriers have declined. So what is the reason why the industry is seeing this?
If you look at, I agree with you. The trucks are growing very well, while bus, there we saw some decline in TIV, but to me it's not. It's a temporary blip. My expectation is we are doing very well as an industry. We are doing very well in ICV segment, which is mainly school buses and staff. However, there were few challenges on MDB buses where bodybuilders were not able to get the required approvals, which are now in place. I would say that next 2 quarters should be good for the buses also. So overall, yes, we are optimistic about the overall CV industry, and we expect industry to grow this year also, despite showing growth for last few years.
So the first quarter of FY27 was very strong for Ashok Leyland, while the domestic market growth was there, but we are seeing that the exports, they dropped down by almost 18 to 19%. Is this because of the Middle East war that we are seeing, or there are certain reasons which are beyond that?
I think we are doing very well in international markets also. However, as you rightly said, our plant in Middle East actually was shut, and of course we were not able to produce any vehicles over there. Slowly things will move. Demand is strong over there also.
So what sort of demand are you seeing in the Middle East market, and by when do you expect to see the momentum falling back to the earlier levels?
I think demand is there. It's only a question of when normalcy returns. So keeping finger crossed, I would say.
So over the past few weeks, we have seen that there have been several hikes in terms of petrol and diesel prices. So are you seeing some kind of an impact on the overall demand?
See, I think when you look at our customers, what they need is certainty of the rates rather than volatility of the rates. I think government has already increased the prices. So what I understand, they increased the prices based on certain crude prices, and then crude prices came down. Of course, in last few days it has gone up also. But overall, I think there is a stability in crude diesel prices now, which augurs well for the industry. I mean, basis my interaction with the customer, I
look right. Wow. Okay. All right. Let's go across to Puneet now to find out what the outlook for the sector, for the automotive sector is looking like. In fact, we're going to kickstart the earnings season for the automotive pack, Puneet, with Bajaj Auto today. What's expected from the numbers?
Well, thank you for that, Alex. There are 4 key takeaways that we are actually seeing for the sector as a whole as well, and that's relevant to Bajaj Auto at this point of time too, because you've seen the domestic volume growth largely remaining robust despite what we've seen across key segments as well as the current volatility. That's point number 1. The second point being that there has been steep margin pressure that we're expecting in this quarter. So almost all players will be reporting a degrowth in terms of margins compared to quarter one of FY26. You have to watch out for some commentary on recovery. That'll be point number two. EV plays are giving more comfort at this point of time, both in terms of growth aspects as well as in terms of near-term demand. So TVS, Ather, M&M are some of the key top picks for all brokerages. And the fourth point being that the price hikes haven't been yet uniform across players, so they haven't all been passed down, because Mahindra has taken a 5% price hike while Maruti has just taken a 0.4%. So that will have a margin play too. But when you look at the numbers for the two-wheeler makers, specifically TVS as well as Bajaj, both come out with earnings today. You're expecting a 34 to 35% revenue growth on a decent base for quarter one. That will also translate to profitability growth. But then for Hero as well as Eicher, you're seeing a lower profitability growth compared to the revenue aspect because of the margin progression. So watch out for that. For passenger vehicles specifically, you're seeing Mahindra as well as Maruti both showing almost a 23 to 35% growth in terms of revenues. They are the best placed in terms of margins at this point of time, because both for Tata as well as Hyundai, it's expected to be a weak quarter for margin progression. They're expecting a 32% fall in profits for Hyundai because there was a fire also in the month of June, so that impact as well. And for Ashok Leyland, there's been a 13% revenue growth. We just spoke to the management, of course, at a key event. And for Escorts, you're expecting a good revenue growth of almost 27%, led again by volumes. But there are three things that you have to watch out for from this quarter. Price hikes, as I mentioned, hasn't been universal, and the quantum too. Cafe 3 norms have now come in just in the last few weeks. So a lot of commentary, if any, which changes the product launch pipeline for automakers will be something to watch. And finally, the volume growth recovery. From H2, you see the GST rate cut base effect come in. So is quarter two also coming through in that sense will be something to watch.
Okay, so lots to watch out for. Thank you, Puneet, for that. Yash Agarwal, research analyst at Nirmal Bang Institutional Equities, joins in. Yash, welcome to the show, and this is Hiral on this side. You have two-wheeler companies, that's TVS Motors and Bajaj Auto, that will be reporting numbers today. But overall, I would say which segment that you would be watching out for in terms of the first quarter, and what's your expectation?
Thank you for having me, Hiral, and good morning. Basically, what we have seen in Q1 is, interestingly, the volume growth has been strong across the sectors, and strong double-digit growth across two-wheelers, three-wheelers, passenger vehicles, CV. But margins we are seeing with pressure mainly because of the inflated raw material cost and basically the calibrated price hikes that OEMs have taken across the categories that are not enough to compensate for the raw material inflation. And also because of the heightening of the crisis in the Middle East has resulted in higher freight costs, and the supply issues are also there. So few of the players like in PV and two-wheeler had a strong export performance. So basically their results would be positively impacted because of the strong product mix, while CV players struggle a bit in terms of the export. Overall, I think that most of the players will report a strong revenue, but margins we are seeing contraction across the categories, while players who are able to take higher price hikes are able to manage their margins through cost initiatives, would be able to perform better and may have less moderation in the margins, while I think players who have higher exposure to lower end may not be able to pass on the price, like the pricing power that the premium players have.
Okay.
So they may struggle a bit.
Okay, so that's a fair point. Yash, let me ask you this though. Are there exceptions to that rule? Because Bajaj Auto posts numbers today, and seemingly based on its overall volume mix, you have a significant chunk that is going towards exports, and that therefore contributes positively. The mix improves positively. So to that end, they're expected to shore up the margin. So apart from Bajaj Auto, are there any other exceptions that you're looking at?
Basically, apart from the Bajaj Auto, even TVS Motors, because of the higher share of export, would have a positive product mix. But players who have relatively higher exposure to entry-level segment like Hero Motors and all may struggle a bit in terms of margins. But overall, two-wheeler, I think, will relatively do better than the PV and the CV space, and they may be able to manage their margins better this quarter.
So Yash, if you have to look at giving out your top picks ahead of the auto sector reporting numbers, in terms of the first quarter, what would they be?
Basically, like I will prefer right now auto components over OEMs. Basically, although we remain constructive on the OEMs, when we expect healthy earning growth, we believe ancillaries have entering a structural purple patch where like they are not only the single product suppliers, they have diversified into precision engineering companies and the premiumization, EV transition and large export opportunities helping to drive the top line growth. So we prefer in OEM, we prefer players which have higher exposure to premium segment and who have relatively good mix in export versus players who are more concentrated in the domestic segment and at the lower end of the volume spectrum.
Okay, so it's the OEMs versus the components players. But thank you so much, Yash, for joining in. Always a pleasure to speak to you. We'll quickly slip into a short break. On the other side, we'll be in conversation with Nimish Chandan of Bajaj Asset Management. Please stay tuned in terms of what this volatility should mean for investors.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे लाइफ में स्क्रैचेस तो आएंगे गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा आप अपना देख लो
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
A stage that has captured the pulse of leadership since 2006.
NDTV Profit Most Inspiring Leader of the Year Award goes to Mr. Anand Mahindra.
Celebrating visionary trailblazers and industry mega stars who redefine leadership every day. An unmatched legacy, unwavering trust, enduring credibility. NDTV Profit Business Leader.
Welcome back. You're watching India Market Open, and it is my pleasure to introduce you to Nimish Chandan, the CIO of Bajaj Asset Management. Nimish, very good morning, and thanks so much for joining us on this subsection of the India Market Open show, which is Talking Point, and it is my pleasure to speak with you as always. Let me ask you about what you've made of the initial trends that you're seeing this earnings season, particularly at a time when, just as we thought that the external front pressures would dissipate, they've once again seared upwards, right? So crude oil price back at close to $90 per barrel, but it seems like the print on the earnings is better than a lot of people had anticipated. What's your thought?
Hi, Alex. Always nice talking to you. If I were to summarize our view on so far the result season, I would say positive surprise. We were expecting, after all the geopolitical issues, the issues 2 months back, we were worried about oil supplies, gas supplies, inflation rising, super El Nino. Now, compared to all that, and now the result updates which have come in, or the quarterly updates that some of the companies have given at the beginning of the quarter, they look much better than expected, whether it is credit growth, whether it is consumption growth. So actually, we are positively surprised. Certain sectors were expected to be under pressure, like, for example, IT, where we were expecting slower growth, and that has impacted their valuations also. So that has gone as per expectation. So net, while we don't see a very sharp increase in earnings for the Nifty so far, but with the results that have come, the trends are definitely positive.
Nimesh, good morning. Hiral, yeah, the trends are positive. Now, if you have to correlate that to what's happening in the markets, down what, less than 10% at least from the last highs as well in terms of Nifty 50. But what is concerning is that we've always remained range bound in the recent past right now. And that's what investors are concerned about. In that kind of a scenario, are you seeing any green shoots where, investors should start looking at in terms of sectors then?
That's a very interesting question. Internally with the team, we've been debating whether we should give a market outlook only based on Nifty, or should we actually give a separate outlook for mid caps and small caps? Look what has happened in the market. Small caps have had a fantastic rally since March. And I mean, the index is up more than 25%. Similarly, mid cap index is at a new high. I think small cap also intraday it went to a new high. So it's a Nifty which is under pressure. Nifty is seeing some of the sectors, some of the companies having some specific issues because of which the overall earnings growth is looking a little muted, and it is also affecting the valuations. So while Nifty, we are still bullish, we still think that the intrinsic value of Nifty is around 27,000, which means we are hoping for a new high soon. But the momentum in earnings and in stock prices of mid caps and small caps is fantastic. Even in terms of sectors, we see green shoots or we see positive commentaries from most of the sectors. IT is the only sector where we see some kind of pressure. In banking also, though the stocks have reacted very sharply, but if you see the numbers are not that bad. And many of the large companies are seeing a turnaround in their credit growth numbers, in their NIMs. So that will continue for the year. So, and valuations are very attractive. It takes a little bit of patience. So I don't know which one will move first, but there is a good amount of companies to select from. If you're looking at the broader market, say in BSE 500, there you can create a fantastic portfolio today which has quality, growth, and value.
The fact that you're relatively new in the asset management space, you've managed to accumulate quite a bit of a corpus nonetheless. But having said that, you're more nimble than some of your peers. You're able to take slightly larger positions at the broader end of the spectrum. And I know that you have this overarching framework of mega trends. So are you fishing in deeper waters, so to speak, to find those opportunities of significant growth? And to the point where the Nifty 50 has underperformed, it's underperformed because the large caps are not showing that kind of growth in earnings, right?
So there's a very interesting piece I had written some time back about mega trends that somehow markets have become a little impatient, or they are disturbed by the short-term noises so much that they are putting a lot of time in predicting the direction of the next tick. Whereas ideally, you should be focused on the direction of the businesses. And frankly, from January 2025, since we've seen rate cuts in India, we've seen income tax rate cut, we've seen GST cut, we've seen the effect of wealth effect because of gold, things have slowly but surely improved. And we actually try using these mega trends to create a portfolio of winners over a longer term. And in the short term, because of the noise, we are actually getting the burger we like at the price we want. So it is frankly a fantastic time to go fishing.
Okay, so it's a fantastic time to go fishing. Having said that, why don't you, for the people that don't understand or have not heard yet your description of some of the mega trends that are at play and the opportunities that they present, could you briefly take us through your top 3 trends right now?
Alex, I'm passionate about this topic, so I'll try to concise it with the time we have.
We don't have too much time.
So AI is a mega trend we identified very early, but we were, because of the constraints that we have, that we are investing in India with a certain set of companies, we actually picked up all the AI adjacent plays, which is mainly say in the power sector or the EMS, electronic manufacturing services. These are fast growing segments. There is a sudden need for more power. There is sudden need for more gadgets, and people are upgrading there. So we actually picked up these trends very early, and we were able to capitalize on those. The valuations have also moved up, as well as the profits of these companies. The second area was financialization of savings, and that is a continued trend for the past few years, where we benefited from certain NBFCs, financial institutions, which are using AI and UPI payments to reduce their costs, and capital marketplace, the entire capital market infrastructure, whether it is exchanges, RTAs, brokers, so those benefited, wealth managers, so those benefited us immensely. And consumption discretionary. Here, it's been a kind of a volatile ride. This sector has not been in favor for the last 2 years, but which is why getting the right valuation is, I mean, at this point of time, we have many choices there. So we have companies that are everything from a quick commerce to real estate, where companies are doing well, profits are growing, ROEs are good, profits are growing faster, and we are getting good valuations for them. So we have picked up consumer discretionary big. Pharma, this has been a fantastic story in the last 3 years. If you see, this has been quietly outperforming the market, especially the segment of CDMO or CRAMS, that is custom drug development or contract manufacturing. This has done extremely well. Companies have increased in terms of order books. They have launched new molecules and are getting good prices for that. Rupee depreciation has helped actually create a new manufacturing renaissance. So many export-oriented companies, and I was listening to some of the experts who had come on your channel earlier about, say, the auto ancillaries, and one of them mentioned that they are entering a purple patch where they are actually, the exporters there are actually getting good domestic demand plus export demand and getting benefit of the rupee. So there is a lot to play for. One of the mega trends we've added recently is a commodity super cycle. Because of spending on defense, because of people moving from just in time to just in case kind of having higher inventories, we are seeing benefits to the commodity sector also. And every technology change is seeing our commodity guzzling. So that's another trend that we have recently added, and we are very, very bullish on. So this is a glimpse of all the things that we are bullish about.
You know, one point I want to pick up from what you're saying right now is in terms of pharma. I was just reading an article where someone's talking about the patent cliff that is going to be coming as well in the pharma space. And when a patent cliff comes, usually it's your generic companies that stand to benefit. And obviously it is the Indian companies to some extent. Are you anticipating a gain on the back of the patent cliff as well, which was looked at between 2025 to 2030? Because a whole host of innovators' patents that will be expiring between these 5 years.
Again, an interesting question. See, it is very tempting to generalize on pharma based the domestic growth rate, on the patent cliff in the generic side, on the regulatory changes in biosecure and the CDMO side. It's very tempting to take all that in, but that just gives you an overall underlying bullishness about the companies. The product portfolios, the research facilities, the clearance of plants, the kind of therapeutic that companies are attacking or launching new products in are varied across this whole segment. So yes, there is a buoyancy in the entire sector. From here on, however, choosing the winner will require a thorough understanding of the many aspects that I spoke about of a company and the valuation, whether it has been already captured or no. So overall, we still believe pharmaceuticals and healthcare is a beautiful sector to be in, and it is not impacted by these short-term issues on the war or on any geopolitical issue. However, the winners from here, if you want to create superior returns from here, it will be a more bottom-up approach that you need to take. And it is difficult to do that in pharma. It requires a lot of in-depth research, but that's where the wealth is.
All right. Nimesh, always a pleasure speaking with you. Thanks so much for taking the time. And we enjoy when you get passionate about subjects, because we get to hear Some very good answers. Thanks so much for taking the time as always.
Thank you so much, Alex. Always.
All right, now after a pause of 13 years, one of the most prestigious honors in Indian business is back. On the 26th of July, NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies and entrepreneurs who have not just built successful businesses, but helped shape India's economic journey. This award recognizes excellence that stands the test of scrutiny. Months of research, analysis and evaluation have gone into identifying the nominees across sectors. And you can find who wins, of course, live. We'll be live through the day on Sunday. And the who's who of the markets as well as business, and also the finance minister is going to be there.
Absolutely.
Hira is going to be there, so it's going to be fun.
Alex is going to be there, and
I'm going to be hosting.
The net worth that is going to be under the same roof is going to be very interesting.
Yeah, I mean, how many 1,000?
I have not calculated that. I think that's going to be the trivia.
Lakhs of thousands of crores. We'll have to look at that. But
this is going to be very interesting because you're talking about, you know, a celebration of leadership, and just to be noted, this is a heavy-duty exercise that has gone through to get you the winners, and this is not a marketing exercise. This is not an advertising exercise. It's an absolute exercise where we have done the homework. The jury has been very strong. PwC has been a partner, and the names that have come in is, I mean, you're going to actually be celebrating a great company, a leader who has made great calls as well during the course of his or her journey.
Yeah, absolutely, absolutely. So we have all of that lined up for you this weekend. Make sure you keep your plans aligned with that, and we'll be live through the day. We'll get you those updates. In the meanwhile, it brings us to the end of this particular edition of India Market Open from the NDTV Profit Suzlon studio. From Hiral, myself, Neeraj and the team that put the show together, thank you so much for watching. Stay tuned and keep your questions ready. Ask Profit comes up next. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise and excellence meet. In the presence of the Finance Minister, Nirmala Sitharaman. NDTV Profit Business Leadership Awards, 26 July on the NDTV network. India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors?
Hello and welcome to NDTV Profit. You are tuned into Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Now let's take a look at the top headlines. Bitcoin reclaims the $65,000 mark on positive regulatory sentiment. US spot Bitcoin ETFs notch second week of $273 million worth of inflows. Europe gets Bitcoin-backed preferred stock. South Korea eyes September launch for the second phase of CBDC pilot. The Bitcoin has reclaimed the $65,000 mark, and remember, it has been driven by positive sentiment around the US Regulatory Clarity Act. Now, the anticipation of this, remember the full form is the Digital Asset Market Clarity Act. Clarity, that's the passage is getting approved. Now, the institutional liquidity inflows and a technical rebound from the oversold conditions is aiding the overall Bitcoin sentiment. Well, looking at the 13 US spot Bitcoin ETFs, they have driven in roughly $273 million of net inflows over the last 2 weeks. Now, breaking this roughly 2 months of outflows. Now, this shows that there is an institutional demand returning, and the commentators do note that the flows appear to be sensitive to two things. First is, of course, the US macro data, and the second being Fed expectations. Bitcoin Treasury Capital AB has launched a Bitcoin-backed preferred stock in Sweden, adding another example of how corporate Bitcoin Treasury strategies are moving beyond the United States of America. The product, which is listed as a Bitcoin Pref, is designed to give eligible investors exposure to preferred equity instruments which are actually connected to a Bitcoin Treasury model. And the last deep dive is that the Bank of Korea may launch a second phase of Project Hangang, which is its wholesale central bank digital currency, which is a CBDC pilot project, as early as September. Now, the next stage expands participation to 9 banks from 7, introducing new payment features and tests government subsidy disbursements through tokenized bank deposits. And before we wrap, here's a quick check to the changes to the crypto prices over the last 24 hours. And a good momentum is coming across most of the crypto classes, and Bitcoin going up 1%, but Ethereum, that is where follow-on buying is happening much more. And the overall support resistance band ranges between $64,000 to $66,000 when it comes to Bitcoin. Time now to take a look at the crypto strategy for the day. Here's what's there to keep in mind. The market outlook is slowly turning cautiously optimistic. Now, of course, this uptick is fueled by the regulatory hope. We discussed about the Clarity Act earlier, and also some concrete liquidity injections are happening. But Ethereum and regulatory sensitive tokens are leading the pack right now. And if these volumes sustain going ahead in spot markets, we can see further up move happening in across the crypto space. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
Hello and welcome back to NDTV Profit. You're watching Ask Profit. My name is Puneet Zaveri. With me is Som Sarkar, and over the next hour or so, we'll try and solve all those stock-related queries. Before we do that, quick check of how the markets are doing, because just in the last half an hour, we have lost about 50 points on the Nifty 50, so trading around the 24,190 mark and continuing to be slightly under pressure. So we'll watch out for those moves. Today, of course, is the weekly expiry for the Nifty, so you have to watch out for some volatility coming through. Let's also look at the Bank Nifty as well. Yesterday was largely consistently under pressure led by the banking earnings reaction, and you saw that across the board. Today, largely flat yet again. So you saw some buying at the start of the trading session, and then you've seen some deceleration yet again. If you look at the heat map for the Nifty 50 though, yesterday of course was a clear move on the banking side towards negatives. Today, you're seeing some good moves coming in on Shriram Finance as well as Bajaj Finserv. Those are the top two gainers for the Nifty 50 today. While HDFC Bank is seeing second consecutive day of being under pressure, the biggest loser for the Nifty 50. Infosys also is under pressure, so is TCS. And Eternal before earnings tomorrow is also down around 1%. Amongst others, you saw Trent having a good day yesterday, is almost flattish right now with a 0.18% downtick. But also, when you look at the sectoral heat map, yesterday, as I mentioned, was a clear day where the Nifty IT was doing well. You also had the Nifty PSU Bank Index do well today on the sectoral heat map. But today, when you look at those moves as well, you are seeing some on the Nifty Media, but very marginally, just a 0.4% uptick. Nifty Realty a 0.2%, and in terms of the declines too, it's not too pronounced. So you're seeing a sideways kind of momentum today. Of course, majority of the sectoral heat map showing you largely in the red, but they are continuing to be not as pronounced today. Also, the advanced decline ratio, before we start taking your stock related queries as well, you've seen, of course, in terms of the advances slightly inching up versus declines yesterday. Today though, it's very neck and neck right now. So almost 1300 stocks, 1400 stocks that are declining right now, and that continues to be a very important trend that we are looking out as well. But that largely seems to be the broader market trend. If you can pull up the BSE 500 too for these individual movers right now and get that perspective too. You're seeing some on Biocrop, UBL, Nuvoco Vistas yet again buying seen after what we have seen a very strong set of numbers in terms of Relaxo and Kempla Sanmar. That are some of the other ones. Rallis on the back of results also down right now. But let me welcome in our guest for today, Ajit Mishra, SVP Research at Religare Broking, and Asta Jain, Senior Research Analyst at Hem Security, is now joining in. Both of you, thanks so much for joining in today. Let me go across, take the first stock-related queries, and this one is between a couple of names, Gland Pharma or Neogen Chemicals. What's a better pick for the next 2 years is the question. Asta, good morning. Welcome to the show. Anything between those two that you like right now for the longer term?
Hi, good morning to everyone out there. So out of Gland Pharma and Neogen Chemical, I suppose Gland Pharma is a better choice to go on, and hence recommend buy on this counter. Now, if I talk about the Gland Pharma counter, first of all, there are certain expectations because we are already into the result season. So there are certain expectations from the Q1 perspective, and those expectations, if Gland Pharma able to fulfill properly, then definitely markets will give a thumbs up to that. In that, we are expecting a strong revenue growth with the margin improvement. And we will also be watching how their US business growth is likely to be pan out, along with the recovery in their product mix, etc. So right now we are just watching about the results to be coming in. But if I have to choose in between these two, then definitely I would like to go with the Glen Pharma. The only advice is that enter into this counter if possible after result declaration, and just closely watch the EBITDA also along with the revenue growth and the kind of product mix this company is showing, and what is the guidance they are posting for FY27.
Right, the next query is coming in from Anil Nair from Abu Dhabi. He is holding 800 shares of Jubilant Ingravia, bought at a price of 783. He wants to know whether should he continue to hold this counter or sell. Ajit, any view on Jubilant Ingravia?
Hi, good morning, Sumit. So, Sumit, I believe that he has been holding this from almost a year now, and finally he's seeing his price coming back. So maybe he might be interested in knowing the short-term outlook. So near term, it looks like that we are close to the hurdle area. Means 780 is buying price close to around this area. We have immediate resistance and major around 840 mark. So the ideal approach is to now maintain at least a trailing stop loss at 730 mark, which is the recent base before we saw this, up move in today's session. And gradually he can trail his stop losses on every rise. The moment, let's say we inch toward 820, 840 mark, he can trail his stop loss to 800 and keep on holding his position.
Got the view, Ajit, and welcome to the show. The next question, and this one's been on everyone's mind today, SBI funds. Let's look at what it's doing right now. Almost a 7% uptick in terms of listing gains today on the IPO. A big one that we were tracking today, of course, all day today, down up almost 8% now. And we have viewer queries coming in. A few of them, like Shiv Kumar as well as Ishwar, are asking us about this IPO. Now, Ishwar specifically mentioned that he had applied but did not get any allotment. Wanted to know about the overall AMC sector, if it's a good bet right now, because he's also invested in ICICI AMC. Astaf, so two-part question here. What was the recommendation, of course, for SBI funds? Is it still a good time to buy after that 8% listing gains? And for Ishwar specifically, since he's holding ICICI AMC too, can he add SBI funds to that portfolio?
So first of all, on the AMC sector, we are quite bullish because we find this sector to be a high growth sector, and with the growth in the Indian economy, definitely AMC sector will going to have a boost. Now, talking about SBI Fund Management IPO, yes, we did cover that IPO and given a subscribe rating to it for the listing gain as well as long-term perspective, and hence we believe that some of the investors have really, are happy. Although the listing gains are not very whopping, but still 7 to 8% looking after the size of the issue looks to be a decent return. So now my idea here is SBI Fund Management is looking good to us because there are various points. First of all, strong parentage, which this company is holding, along with the kind of asset under management they are having. They have got the largest asset under management. And this is a very, the business model is very attractive because it is asset light business model. So kind of margins these companies are earning are really very, very strong. Now, if I have to choose any one between the ICICI and SBI fund, then definitely I would like to go with ICICI. So ICICI Prudential is also looking good to us, and hence our investor has already that stock in their portfolio. So I think there is no need to invest in the SBI fund management, at least at this point of a time when we are seeing 8% premium listing. Just wait for some more time to settle the price and then make any sort of entry if he want to expand his portfolio with another AMC stock. Otherwise, ICICI AMC is also looking good to us.
Okay, the next is the next query is coming in from Malika, and it's on Park MediWorld. She has invested at Park MediWorld at a price of around 290. She wants to know whether should she add more at current levels or avoid. Astha, any view?
So 290 is the price. So my idea here is just stay invested in this counter because what we believe that the financial performance this company has posted was very strong. In fact, the kind of capacity expansion, in fact, they are doing in their beds is very, very strong, because what I believe that company has added around 610 beds during FY26, if I'm right with my memory. So, I mean, the bed addition is very strong. Acquisition-led growth is what this company is doing right now. So, yes, the fundamental seems to be very strong for this counter. But rather than adding at this point of a time, I believe just let the results come in and then make any sort of entry or averaging out or make further additions into this counter. So, just stay invested in this counter at this point of a time because cost price is 290. So, we are not very far behind that cost price.
Got it. Well, let's go across to Hyderabad now. We have a first call for today. Kiran joining in for a stock-related query. Kiran, good morning. Welcome to the show. What's your query?
Hi, good morning to everyone. I'm a regular viewer of NDTV, and from last 3 months, I'm regularly noting down all the points what your panelists say also. So just recently, on 9th July, I bought Titan shares of 220 numbers with 4659. So that day, it was a little bit growing, and your panelist before day, she told that her name I don't remember, but she's from Motilal Oswal. So I heard and I took those shares on that day. From that day, it's coming down, but it's not at all going up. And I want to know whether I can keep for some days, or I should, what should I do? I want to know regarding this.
Got it. And Kiran, firstly, thanks so much for being a regular viewer, staying with us as well. So because this was a fundamental view that you taken, or was it a technical one from an analyst at that time?
I was checking fundamental derivatives, everything I was checking, and meanwhile I was on that day I came to your channel and I spoke to her. She told it's a very good share and it can go up.
Got it. So let me actually then go to Astha then, because this the amount of allocation that you've done also of almost 220 shares on Titan is a big one. Astha, we've seen, of course, a good quarterly update come through for the company. Would you recommend Kiran to continue holding? How are you looking at the valuations?
So here I would like to mention that, sir, see, there are various points which are really working well for the company. First of all, good quarterly updates in which 41% growth they have mentioned about their revenue. In fact, they have done very strong addition of these stores. Around 77 stores they have added, which they have given in their, quarterly update. Now, what the problem is? The problem is with the valuation, because right now it is trading at a high valuation of 75 to 85 price to earning multiple. So what happened when markets are not in a good shape, as we all know, due to these, poor global factors, the markets are really in a volatile mood. So in such mood, and when valuations are high, definitely those stocks are not able to show their performance. So that might be one of the reason that the stock is not working. There is no other reason. Fundamentals are very strong, but the valuations are high and markets are not in a good shape. So what you should do, you should just wait for this counter. Maybe it will test your patience. Maybe it will, let you wait for some more time, because I think after results declaration, let's see how they declare their results, how the valuations pan out after the result declaration, and then make any sort of move. But this is a counter which is a good long-term story to bet upon. Maybe in the short term, due to the high valuation as well as market condition, we are seeing a downturn in these stock prices. But don't worry, in the long term, it will definitely show some sort of positive move. So just wait and watch and just give more time to this counter.
The next query is coming in from Christopher from Chandigarh. He is holding 700 shares of Vatek Wabag, bought at a price of 1,539. He wants to know whether should he buy more at current price. Ajit, any view on this?
So Samit, very strong directional move is something that the stock has experienced. We are at the record highs. It's been almost like 2 weeks now that we are consolidating in a tight band, but maintaining the positive bias means we are still holding over the 20 EMA mark. So in case if the view is short term also, he can consider accumulating the stock further. Now 1950, that is the area basically where we have the immediate base. So with that as a stop loss, he can definitely consider adding more to his position. Above 2150, we will see the next leg of the up move. Upside is open since we are at the record high, so he should consider trailing stop losses on rise. So as of now, 1950 with the stop at 1950, you can definitely consider adding more to his position.
Got it. Also, Ajit, on RR Kabel as well, viewers holding shares at 2,000 odd rupees. He's holding 200 shares, and this is Nandagopal. Asking if it's a good to hold for the next 6 months. Would you recommend that?
Puneet, we have seen a very strong, move in some of these cable-related counters, and RR Cable also has almost doubled in last 3-4 months. So now we are seeing more of time-wise consolidation since he has bought it at lower level, and stock is still consolidating after this recent move. You can definitely continue to stay put with the 3 to 6 month of time horizon. The recent swing low close around 2150. That's the support area, that's the stop loss area we should consider, considering that we are in the middle of the earnings season and we may see volatile swings post the earning announcement. Upside, once let's say the stock surpasses 2500 mark, we are set for 3000 plus levels. So it's a hold with 2150 at present. For the upside potential of 2500 is the immediate target, and then 3000 plus.
Got it. Well, it's now time for the rapid fire round. Ajit, as well as asking, the drill. Keep your answers as short as possible so that we can take as many queries now. Next, first one's coming from Keshav, who's from Chennai on delivery. He's holding shares at 495. Can he hold for the next 3 years, Astha? Astha, I think you're on mute.
I'm sorry. Yes, hold this counter from next 3 year perspective. Initial price target can be set at around 520 to 530.
The next query is on SJVN. It's for you, Abhijit. 1,000 shares is the viewer holding, bought at a price of 85. Should he continue to hold? The stock has been seeing selling pressure.
Use recovery to reduce overall trend is down.
Next one, Ajit, on Blue Dart as well. Muthu from Chennai is holding shares at 6502. So he's down almost 20-25% from those levels. Should he still continue to hold?
Hold, but maintain the stop at 4600 and use recovery to reduce because the overall trend is still down.
The next query is on Vedanta Aluminium. It's for you, Astha. Balwant Modi from Rajkot wants to know whether should he enter Vedanta Aluminium for long term at current levels.
Not at the current price, at a lower price of around 420 to 450.
Next one is from Prem from Kuwait. He's been holding on to Lupin for the last 2 years at 2389. Astha, should he still continue to hold or should he switch it up?
Continue to hold with the price target of 2550.
The next query is for you, Astha. It's on MTAR Tech. Lakshmi from Hyderabad wants to know at what price should he start buying MTAR Tech for long term.
For long term, maybe at a price level of around 5300 is a good entry point.
The next one coming from Shankar on Tata Capital. He's been holding shares at 351. Ajit wants a 3-month view on the stock. We've not seen too many wild moves on this counter, barring that one day. But would you recommend that?
So recent listing, Puneet, and as you rightly mentioned, after this recent up move, we are seeing volatile swings. 340 is the stop loss area with immediate target at 375.
Next query is for you, Abhijit. It's on it's on Gravita. Ajit wants to. The viewer wants to know. It's for you, Ajit, and the viewer wants to know at what level should he enter Gravita.
So you can buy at current levels. 1670 is now the support area. Upside potential 2200 mark.
Next one's on Piramar Finance. Shriram is holding shares at 1386. Should he continue to hold Astha?
Piramar Finance is a hold from our side, and price target can be set at around 2250.
Next query is for you, Ajit. It's on Blue Dart. Muthu from Chennai is holding 10 shares, bought at a price of 6500. The stock is down 25%. Should he hold, buy or sell?
We have already discussed, Sumit. With 4600, he can continue to hold and use recovery to reduce.
Next one's on IDFC. Navendu has bought these shares at 80 and has been holding on for a while. Astha, in Q1, what can he expect? Because, post that regulatory update, we've seen a sideways momentum. So, should he wait for Q1 results and then take a call?
I think yes. Wait for Q1 is a better choice at this point of the time. So, just hold this counter.
Next query is for you, Ajit. It's on Eternal. Nagaraj from Bangalore is holding few shares of Eternal, bought at a price of 289. Can he hold or should he sell?
Hold with stop at 278. Upside potential 305.
Next one's on Vinity Organics actually. Dilip from Kolkata is holding shares at 1332. Should he still hold on to this one, Astha?
1332, yes, definitely a hold for this counter. Price target can be set at around 1380 to 1390.
The next query is for you, Astha. It's on ITC. Padmanabhan wants to know whether should he enter ITC at current levels for long term.
No, maybe at the lower level of around 275 to 270.
Got it. And the last query for the rapid fire, this one's on Force Motor. Ajit from Kolkata wants to enter this counter. Ajit, what are some of the key levels to watch out for? Has been volatile. What's your view?
Yes, and in fact, it's gradually drifting lower. So close to around 16,500 is a good area to look for fresh accumulation.
Got it. Well, that was the last question as mentioned. But Ajit, we'll let you go on that note. Thanks so much for joining in today, giving us your view on a lot of stock-related queries. Astha, stay on. We'll be right back after this very short break to answer all your stock-related queries.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
From a PwC standpoint, we actually set up criterion for each of the categories that we discussed with NDTV. A criterion was set up. Different KPIs were adopted for different categories. These are of course discussed, internally. We challenged ourselves, etc., and we made sure that the data sources are all very robust, so that the trust could be built in. So I think that's what defined, and of course, we eventually went through the jury process, and I'm glad the KPIs, if I may call it so, for the winners.
Welcome back. You're watching Ask Profit right here on NDTV Profit. If you haven't already done so, do send in your stock-related queries and we'll take that up with our guest. The WhatsApp number is flashing on the top of your screen. The landline number too is, and you can call us on that number to speak to our guest as well. But let's continue with those stock-related queries as well. The first one and this one's. But as we go through with those, let's also cut into the SBI Funds press conference.
I will request everyone to ask one question each. We'll first start with preferably with the print and online media, and then we'll move on to the television. Shah will give the guidance on the questions.
You can start with CNBC first question.
And we have 20 minutes.
Sir, first of all, thank you so much for having us here, and congratulations to all three winners, I would say, SBI Funds, and of course Amundi. One question to each of you, sir. As far as the bank itself is concerned, I want to ask, of course, we've had the listing of SBI Funds Management today. There are just two subsidiaries now which remain unlisted, large ones, the general one and the pensions. Which one is next, and would it be this financial year or next financial year? The next one is for SBI Funds. I want to understand as far as, certain things. First one, the impact of TER specifically on the margins, the recent changes which were made, and the road ahead for TER. Do you see further tightening in any form? Second thing, mutual fund being allowed as collateral for MTF, how do you see that working for the industry? And finally, as far as for Amundi is concerned, we've seen this trend that once AMCs get listed on exchanges, the foreign partner there tends to sort of value unlock after listing. We've seen that in HDFC, we've seen that in ICICI Prudential. What is Amundi's stance here? 2 years, 3 years down the line, would we have you holding the same amount of conviction in terms of your holding in the company going ahead? Thank you so much.
So let me start thanking all the stakeholders for the wonderful response what we have got for the IPO of SBI Funds Management Limited. And I probably would not be able to answer his question to me for two reasons. One is we are in silent period. It will be seen as forward-looking statement. But more importantly, I think it is SBI funds moment. I think let us enjoy that. But having said that, there are definitely financial institutions. State Bank of India has helped to grow through our subsidiaries route. And now currently with SBI Funds Management, we have 3 subsidiaries listed. And we would definitely look for opportunities of listing of, as they evolve and mature and reach a stage where, the listing makes sense. Thank you very much.
On the fund side, sir, I have 2 questions for you. I'm sorry.
Thank you, media, and thank you for support today. Sir, as already mentioned, we are also in silent period, so difficult making any statement. But what is done before? The TER is now BER.
Yes.
So we have already. And it is now revenue neutral on that. We already mentioned road shows. So our accounting system already taken care of that. And going ahead, you said collaterals. It is a industry-related scenario which will request AMPI and others to look at it very carefully.
Okay, sir, final question.
Maybe on Amundi, SBI FM is a translation of a very strong partnership between SBI and Amundi. It has been a long journey for us. This partnership has lasted for 20 years, but I want to say it's only the beginning. And we are a very happy shareholder of SBI FM. We will continue to build this partnership, to grow together, and we will continue to be there alongside SBI for a very long time.
Thank you so much and congratulations again.
Anurag from ET Now.
Anurag Joshi, ET Now. Congratulations, Seti sir, on the successful completion of.
My question to you is that it's been a 15-year partnership with Amundi. You have successfully completed an IPO. Now, going forward, how is SBI planning to take the partnership with Amundi forward? And to Mr. Nicolas Calcon, my question to you is that is Amundi looking at boosting your investments to India? What is your outlook to India currently? And in terms of even the riskometer, how do you see India in terms of risk?
I'll go first. This is a long-term relationship. As Nicolas said, I think this divestment, I think a lot of people asked us that why this listing now? SBI FM doesn't require capital, is a capital light industry. And similarly, SBI and Amundi did not look for any capital raising. But I think we believe, both of us believe that such a large AMC not being listed, I think is not systemically good, and we wanted to bring a large AMC to the market. So having said that, this listing does not change anything on our relationship and partnership. Very interestingly, Amundi, in several roadshows has publicly mentioned that while Amundi is best of international practices used to be brought to India, now SBI FM best practices and India's best practices of mutual fund are taken internationally. I think this relationship would continue for a long time. Nikolai, over to you.
I can only confirm what the chairman said. We will continue to develop and together to make sure that the SBI FM is developing in India, and we'll continue to bring what we want to bring. Of course, I would say our international expertise in asset management, but more and more indeed to translate to and to transmit to SBI FM the interest, the growing interest we see from international investors for Indian assets. India is, of course, a very rapidly expanding economy. There's more and more interest from international investors, and we will continue to bring this interest into the expertise of SBI FM.
NDTV Profit.
Thank you, sir. I have 2 questions. First, Mr. Sethi. Mr. Sethi, of course, SBI's parentage was very important to the listing here and pushing this forward. How strong, how did SBI approach this listing? In that sense, how did that brand name sort of build out the reputation and the premium that this listing has brought through? If you could take us through that a little bit. Similar question to you, Mr. Calgon, with Amundi's role here, what sort of role did you play in getting this IPO forward and building this out in the way it did?
So coming to SBI, I think it's not only the largest distributor of the mutual fund products. As I mentioned in my speech also, that we wanted to bring this investment opportunity to a large number of retail customers what we have. So probably the value creation is not only in terms of what SBI FM has been delivering on their schemes, it is also a fact that they have the backing of the largest parent company. And what we would like to assure all the stakeholders is that even before listing, this company was having the best governance practices of both SBI and Amundi. I think that's a value which we have created over a period of time to all the subsidiaries what we have. We almost have 18 subsidiaries, and the value creation, what you mentioned, I take pride in mentioning that our investment in these subsidiaries is about 6,000 crores as we speak today. Hopefully, maybe a month later, the number will change. We are valued at 4 lakh crores. I think that's a value creation for all the stakeholders we have done. And in the process, we also have created institutions of enduring value in the financial services. You would like to take the rest of the question? Or Olivia, you would like to join?
Only part of the question, maybe.
As for Amundi, we try to bring a little bit of our experience. As you know, we are a listed company. We have lived through this process a bit more than 10 years ago, being listed in Paris. So we had this experience and we tried to share it and to advise SBI FM in the process. And I think a second dimension we brought is probably during the roadshows, the contact with international investors. Of course, SBA and SBI FM has a lot of contact with international investors, but we could also help in that regard. And Olivier has been participating in roadshows alongside Chairman Sethi in that regard.
Good morning, sir.
Well, of course, that was the management of SBI funds, and our colleague Nimit also asking an important key question on value creation from both those partners as we continue to monitor the price for today as well. But let's continue with your stock-related queries now as well. We of course have Astha on the fundamental side of things. Let me welcome in Lakshmikant Shukla, Senior Technical Research Analyst at Yes Securities. Thanks so much for joining in, Lakshmikant. Let me go across and take the next query. And this one comes on Eternal. Asma from Bengaluru is holding 40 shares at 266 odd. Wants to know what she should do with this counter. Lakshmikant, good morning. What would you recommend on Eternal? Is it a good hold?
Yeah, Eternal has seen a decent upside move after crossing above its 200 DMA and is still holding these levels since last few days. I think till it hold above the levels of 265 to 268 zone, we will remain positive and we will see further upside move. I think fresh buying will occur once it crosses the levels of 295 to 300 zone. Crossing of the same, it could continue this upside move toward the levels of 325 to 330 kind of range. So from my end, I would say to keep hold with this stop loss of 265 on the downside.
Next query is coming in from Sai Karthik from Dallas. He wants to know whether is it a good time to add HDFC Bank. Astha, any view on this?
So talking about HDFC Bank, I think we all know that fundamentals are good because they have got a best-in-class asset quality along with the strong franchisee of deposit the company is having. But the problem is with the kind of fall we are seeing in the prices. And my idea here is that this merger-related synergy, how it will be going to work out, markets are really wanting to see that. So right now, don't enter into this counter. Let it fall more and then make any sort of entry.
Got that view, Astha. But the next question, and this one's coming on MCX. Vedanshi is asking us this question. She's holding shares at 2874, so close to the current market price, asking what she should do with the 400 shares. Would you recommend that, Lakshmikant, if she should continue to hold, or is it a good time to exit?
I think she should hold because last few sessions it has seen a pullback move. Even in today's sessions, we have seen some sort of positive momentum in this stock. Till it hold the levels of 2,720, I think we will see further sideways kind of momentum.
Got it. I think Lakshmikant, we'll probably come back to you for that stop because we couldn't get your response, but probably come back to you once your audio is fixed. But Astha, just a quick view if you can on MCX. Would you recommend to continue holding this counter at this point of time?
I think yes, one can hold this counter because first of all, they have got a very strong market position. It's a monopoly kind of a market they are having, along with the asset light model, and we all know the rapid movement or a strong movement in the precious metal prices definitely impact MCX stock prices as well. So just remain invested in this counter.
The next query is on. Okay. Next query is on Patanjali. Hemant Jethwa from Pune is holding around 100 shares, bought at a price of 350. He wants to know whether should he hold or add more shares here. Lakshmika, Astha, any view on this?
So talking about Patanjali, my idea here is that yes, they have got a very strong distribution network, we all know, and they have got a very strong FMCG mix. If we talk about the variety, it is their edible oil or the personal care, etc. And my idea here is that the kind of growth they are showing, it is also good. But the problem is with the margins because margins are showing some sort of a pressure. So that is major problem with the counter along with the valuation which are looking on the higher side. So my idea here is that this counter may fall more on the back of a high valuation. So don't enter into this counter, just remain invested if someone have this counter in the portfolio.
Got it. The next one's on Divi's, and your viewers, you can also call us on the landline number that is flashing on the top of your screen. Speak to our guest for those stock-related queries. Ram from Chennai is holding on to Divi's. He's bought it at 4,300 odd. Asking if it's a good time to accumulate more for the long term. Asta is definitely sitting on good gains, but is this a price level to add more, or should he just continue to hold his 40 shares right now?
So I think just remain invested in the counter because right now this counter can see some sort of more price pressure and hence we'll get the opportunity to buy at a lower level. So idea here is just hold this counter. Now, if I talk about the fundamentals also, balance sheet is in a very good shape. The kind of business model this company is having, it is also very strong. And this company is getting advantage on the back of China plus one strategy. So overall, Divi's Lab is looking strong to us. The only problem is that regulatory risk which these companies are facing. And I believe that some sort of a valuation, correction can also be seen. So don't enter into this counter at this point of time. Maybe at a lower price of around 7,000 also.
Okay, the next query is coming in from Nadilla, and he's holding ICICI Lombard since the time of IPO. He wants to know whether should he book profits and move to any other financial or pharma name, Astha?
ICICI Lombard is looking good to us, so there is no need to shift to any other counter. I think one can remain invested in this. The only problem is that right now what we are seeing is the kind of the result which this company has posted in their Q1 number, because profit after tax has declined around 40%, if I'm not wrong with my figures. So 40 to 45% is what we have seen the decline in the profit. So that is the major reason the counter is not able to show a strong move in the upside move in the stock prices. But long-term story, if anyone believe in the long-term insurance story, then it is a good counter to stay invested in. And the balance sheet is also in a very good shape. So just invested in this for the long term. Maybe in the short term, we can see some sort of pressure in the stock prices due to the decline in the results which they have mentioned in Q1 FY27.
Most certainly. And you rightly mentioned, Astha, the quarter one profitability was down by 46%. Definitely took the sheen out of all the move that we are seeing on ICICI Lombard. But Satyan from Palakkad is holding on to 85 shares of Marico, bought at 564. So very, very attractive levels. Astha, he wants to add more. Valuations definitely are something to watch. The fundamental performance has been good, but would you recommend him to buy more at the current price?
The lower price because I believe they've got a very strong financial profile along with the good balance sheet this company is having, and the premiumization as opportunity which this company is getting is very very strong. Yes, the valuation is one of the concern for this counter, and hence would like to wait for the numbers to come in. So just hold on any pricing. I mean any purchasing if interest is there till the results arrive.
He is from Sayan from Kolkata. He wants to know whether it's a good idea to invest in BLS International. The stock has corrected from its high point. What would be a recommendation here, Asta?
So here talking about BLS International right now, it is quoting 235. And my idea here is that the company which is into the visa and the consular services, they've got a very strong business model. Along with not only the business model, their performance, financial performance is also very strong. And this in this sort of a business, we have seen the margin is also very, very strong. So they earn strong margin, but there are certain risk also. The first risk is that government contract risk which this company is having, and in case of like geopolitical tensions which we are seeing right now, so there is a slowdown in the global travel, and that can impact businesses of these companies. So it is I mean there are certain risks also associated with this company, and hence don't enter into this counter at this point of a time at a lower level, and just hold if anyone has this stock in their portfolio, but no fresh entry is recommended at this point of time.
Got that view. But the next question, and this one's on BHEL. Kamlesh, who's from Muzaffarpur, asking about his 500 shares. We can still continue to hold on in the short term. Now, we've seen, if you can pull up the 1 week chart of the counter, 1 month chart as well, because he's bought it at 420 odd, has been in focus. And you saw that big spike, I think, during the results, I think, at that time, which had come through. But Lakshmikant at 420, he's bought shares of BHEL. Should he still continue to hold? What's the short-term view?
The short-term view has tilted on the bearish side since it has made top near the levels of 446, and then it has also formed their dark cloud cover. From there, we have seen lower tops and lower bottom. I think next support upcoming, or we can say upcoming support, is seen around the levels of 400. If he can take the risk till these levels, so he can continue to hold. I think 400 is the firm support from where we could see some sort of reversal pattern, and we will see a pullback move. So if he want to hold, then he can keep the stop loss of 400 and wait for this pullback move on the upside.
The next query is from Venu from Hyderabad. He wants to know whether is it a good time to buy Coforge fresh for short term. Lakshmikant, any view on Coforge?
See, Coforge has played well after surpassing its long-term moving averages on the daily chart, and from last few days, it is also witnessing some sort of consolidation. So I'm expecting that till it hold above the levels of 1,460 to 1,470, we will remain positive. Fresh trigger could be seen once it surpasses the levels of 1,560 on the upside. Surpassing of the same, it will continue this upside move and could push it and move higher toward the levels of 1,680 to 1,700 zone.
Got it. Well, it's now time for the rapid fire round in this edition of the show. Astha as well as Lakshmikant, keep your answers as short as possible so that we can take as many queries in the next 4 minutes. The first question, it's coming on, from Gaurav from Delhi on Sterlite Tech. Wants to know if he can still buy it at the current price. Astha, would you recommend that?
Out at the current price, at a lower price of around 480 to 490.
On RVNL, it's for you, Lakshmikant. Arni Agnihotri from Pune wants to buy RVNL at current level for the next 6 months. Should?
I think we should not buy these RVNL because since last few sessions it will be trending lower. So I'm expecting bearish kind of move toward the levels of 200. So right. I would say no.
Got it. Kitex Garments is the other one. So Sundaresh has bought these shares at 185 Astha. So currently he's sitting on a loss. Should he continue to hold?
Yes, hold this counter. Maybe he'll able to achieve break even.
The next query is for you, Astha. It's on UTI AMC. Ashish from Delhi wants to know whether should he buy UTI AMC at current levels or not.
No, I think UTI AMC is not looking that strong in this space. Maybe ICICI is a better choice.
The next one's, from Padmanabhan. He wants to enter and if he wants to buy actually Hero MotoCorp, would you recommend that Asta or just probably wait for the first quarter? We are seeing some margin impact on all auto players.
Yes, I would like to wait for the numbers to come in. So just hold. Yeah.
The next query is for you, Lakshmikant. It's on Swiggy. The viewer has bought around 200 shares of Swiggy at a price of 455. Should he buy more, hold or sell?
He can hold this Swiggy with the stop loss of 255 on the downside and can expect the breakout of the levels of 285, and from there it could move higher toward the levels of 300.
Next one's on Hitachi Energy. Vijayan from Chennai wants to know if it's a good time to buy this counter. Lakshmikant, would you recommend that on the charts?
So Hitachi has seen a decent kind of up move, so I think till it hold up the levels of 32,000, we could anticipate upside move in this stock.
The next query is for you, Astha. It's on Sanofi India. Venkatraman is holding 66 shares, bought at a price of 4,081 rupees. Currently sitting on a loss. Should he continue to hold this counter for the next 1 year?
Yes, for 1 year, definitely a hold.
Lavanya from Chennai wants to enter and buy a semicon player between CG Power and Keynes Tech. Astha, do you like either?
Yes, I like CG Power.
Next query is for you, Lakshmikant. It's on MTAR Tech. Uma from Bangalore is holding MTAR Tech. The stock has been hitting lower circuit for the last 3 trading sessions. Should she buy or should she exit?
I think she should exit.
On Synoris as well, Lakshmikant, Vijay has bought shares at 844. He's looking at a target in the near to medium term of almost 1500. Is that a good one? 1800. Should he still wait for that target?
So I think he can wait for the target. Since last few sessions we have seen upside move, so he can continue to hold and wait for this target.
The next query is for you, Astha. It's on HDFC Life. Anuj from Delhi is holding 1,000 shares, bought a price of 621. Should he add more at current levels?
No, not more at the current level. Maybe at the lower level of 535 to 540.
Venkatramani wants to add an auto ancillary player, Astha, between Uno Minda, Sona BLW, JBM Auto or Motherson. Which is a better pick?
Sona BLW at this point of time.
The next query is for you, Lakshmikant. It's on Paytm. Shrikant from Hyderabad wants to know whether should he hold Paytm. He's holding 100 shares at a price of 1,376. Should he continue to hold or exit from short-term perspective?
I think he can continue to hold with the stop loss of 1,250 on the downside.
Got it. And the last one for today is on Equitas Small Finance Bank. Our viewers holding shares at the current market price. Astha, should he continue to hold? I think we seem to have lost Astha, but a view, Lakshmikant, if we can, on Equitas Small Finance Bank. It's seen a good run up going into earnings. What's your view?
I think he can continue to hold with the stop loss of 77 on the downside and can expect upside move toward the levels of 90.
Got it. Well, that was the last question. Astha as well as Lakshmikant, thanks so much for helping us solve all those stock-related queries. But viewers, before we wrap, after a pause of almost 13 years, one of the most prestigious honors in Indian business is back on July 26th. NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies and entrepreneurs who have helped shape India's economic journey. Now, and nominees for the Financial Powerhouse of the Year in the non-PSU categories are Shriram Finance, built on a deep customer understanding and an unmatched presence beyond India's metros. The second one is BSC, the institution that helped create India's equity culture. ICICI Bank, a big pioneer in the modern banking, combining innovation, digital leadership, and financial performance to stay ahead of the curve. Fourth one's Axis Bank strengthens its position as one of India's most dynamic and customer-focused financial institutions. Cholamandalam Investment and Finance is the other company built on India's most respected NBFC franchises. Bajaj Finance, redefining consumer finance through innovation, execution and scale. HDFC Bank, a benchmark for excellence in Indian banking. is the last nominee in the financial powerhouse of the year on the non-PSU category. But stay with us. Only 5 days to go for the Business Leadership Awards on NDTV Profit. We'll see you on July 26th. But right now, it's a good time to wrap this show. Thanks so much for watching. We'll see you at 2 p.m. for Ask Profit, the afternoon edition.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
That are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is a show where I get you the hottest companies, interesting stories, and yes, will there be any alpha made to your portfolio or not? Let's start with the company today, but try to guess it first. And I'm sure with the names which I'll start taking on their acquisitions, you will be guessing it by the end. Surat-based specialty chemical player, right? A lot of them are there. Let's go to another hint to make it more easier for you. The stock has doubled from 2025 lows as well, giving good returns to the investors. Which stock is it? Another hint I would like to give you is this company will be acquiring Bliss GVS Pharma. Now I'm sure you must be guessing it by now. And one more hint I'll give you. The company is the promoter of Tanfac Industries. Lot of integrations are happening, right? And I'm sure by now you must have understood the company which I'm talking about, and the company which will be featured in KYC today is Anupam Rasayan. This is the company which we'll talk about, but why are we calling this company? Any announcements are coming in? If yes, what's the big story about it? The first key question we'll try to understand from the management is this important tie-up. This is a European Union tie-up. How big is this? How long this contract will go? Also, a very new entry the company has made in this segment. We'll try to understand how important this is and what will be the suggestive timelines or the capex amounts. We'll understand the integration and timelines, especially for Bliss GVS Pharma. Of course, the management has spoken about it, but we'll get into more details, if anything incremental, and the capex plans ahead and the capacity utilization. What does the overall plant numbers stand? Apart from this, if you look at it, the promoter pledge, is that coming down or is it over? That's a key question. A lot of investors have been talking about it. The raw material pricing trends in Q1, is there any inventory adjustment at play? We'll get that information for you. And also looking at the expansion in the new product category, in the niche segment, that is where the focus is happening. These are high margin products and Street is quite bullish on this. And to decode that, we'll have Vishal Thakkar, the Deputy CFO at Anupam Rasayan, giving all the queries, coming in. But let's try to understand what does the company actually do. I know the company is having almost 4 decades of exposure. This was incorporated in the year 1984. Also, interestingly, there is important detail about it, and that is the specialty chemical is having 2 verticals. I'm going to give you those 2 verticals, which are those. The first vertical, let's get in that to show you what's there. If you could just show this first vertical, this is the life science related specialty chemicals. This includes agrochem and of course the personal care products. So personal care is definitely on the higher margin. The pharma performance materials, that's comprising electronic, EV, chemicals and polymers. So this is a little bit of futuristic. They have manufacturing products for over 75 domestic and international customers, and a good MNC exposure also is there in terms of clients. I'll get you those names also, but you have to hang out with us. They operate via 8 manufacturing facilities. Of course, they have major of them in Gujarat, there is Tamil Nadu, and from the acquisition, they have a plant in Kansas, which is in US as well. Already this is the total capacity, and almost 25 plus complex products are there, and 90 of them are in pipeline or giving that R&D. So that definitely shows a good momentum. But they will be acquiring Bliss GVS Pharma. That's a recent announcement which we have all discussed, and the company is also promoter of Tanfac Industry. So there are listed companies, a lot of them are there. So there is a little bit of value at play as well. Almost 14,646 crore worth of order book, and that is where the strength lies, especially on the medium-term visibility for revenues. Also, they deal with, in recent news is the Basque Vault deal, long-term supply contract. It's a specialty chemical product. This is a $300 million. So that's a very important news coming in. Second important news is, of course, this company is a European technology company. So there is important, momentum here. But let's look at the second important news as well. They're focused on the next-gen solid-state lithium metal batteries. And that is the entire story coming in for Basque World. Also, they have introduced something very important. The first in the world to commercialize ETFA using fluorochemistry. That is something pretty big. So we'll try to understand these 2 major announcements, of course, after the acquisitions and the integrations at play. What are the benefits? First is Jayhawk. They have strengthened their presence in the specialty polymers. So this is one of the recent acquisitions and why it's important for the company. Now, this gives you access to semiconductor, aerospace and defense. These are the segments where the growth is happening. Remember, this is a US company, and that's why the plant which I discussed earlier was from Kansas. Tanfac, this supports the backward integration. Earlier was the forward integration, and this, especially in the fluorination segment. So overall, we are seeing a proper integration is at play coming in for Anupam Rasayan, and also the entry into the multiple high growth therapy segments. This is where the momentum comes in for Bliss GVS. So a lot of mergers, acquisition activities are happening, and that's why we'll understand much more rationale from the management. But how does the revenue breakup look like? It's still heavily skewed towards that 82% mark in the life science segment. If you understand it, only just 18% comes from the performance material segment. So this is the total revenue breakup coming in for Anupam Rasayan. But also, let's move on and see the other important data. What is important is the global clients. They have a bigger name. They are properly getting integrated. So when you have an MNC clientele and integration, you get in large institutional global orders. Also, what may work for the company? Strong MNC collaborations and an order book. That is what the street is liking it. Second important reason is the focusing in the niche segments. They're pushing for pharma, polymer and also electronic chemicals. So this is something to watch out for. Thirdly, the expansion which is happening, the revenue potential just for the company can range between $220 to $260 million. So you can see a good runway is there. Also, this acquisition is a strategic move from a CRAMS player to the formulations player. So of course, this becomes quite value accretive going ahead. Apart from this, improvement in the working capital ratios, they were stretched from FY25 to 26. I've seen there's a good momentum happening, and this might augur well for the company. And company is doing a lot of expansion, so a little bit of return ratios pressure could be there, and this is the first reason what may not work for the company. Second reason, let's pull out what can happen. There's the execution, the delay risk in the integration. There's so many things happening, and by nature, by default, at times, 1 or 2 quarters plus minus, or even 2-3 quarters, it can happen. mixed views coming in from analysts. 3 out of 6 analysts still have a sell rating in the stock, while the other 3 have a buy rating. So there is a conflict. Promoter pledge, the March shareholding, that's a little bit of concern in this counter as well. So I have given you both sides picture of how things are going, and of course a little bit of sell-off happening, but not so much. So this is the entire picture for Anupam Rasayan from both the sides, what is good, what's not, and what's lying ahead. But our KYC ratings is very much important, where you judge the company, income statement, balance sheet, cash flow, everything we get in for you. And return ratio, I'll get you both ROC and ROE analysis. Apart from this, the shareholding street kid, whether the money has been made or not, especially in the long-term investors, or is it testing the patience, and of course the valuations and the outlook as well. But without further ado, let's start the income statement. That's the first rating criteria. The top line numbers have been good, but kind of a dismal performance in the operational profit and the PAT segment. So that's quite normal in a chemical setup, because there are a lot of business cycles when you judge a company, and slight dip coming in the margins as well. Top line was a good growth, so that is why I'm trying to balance it out in my analysis, and I'm going to give this a neutral rating as of now. Remember, Q1 numbers are not out. Most of the managements are in the silent period for their outlook. Let's talk about balance sheet and see what's happening here. Balance sheet also, it looks decently spaced out the way they're managing the ratios. The working capital ratios have improved, so that's little stress comes down. But nevertheless, the borrowings have gone up a bit. But on the other hand, the cash number has also gone up. Why this is important is because the company is doing major acquisitions. So you will have a little bit of strain in the balance sheet. And this is looking at the business model of how the company is functioning right now. So it's a neutral rating here as well. Cash flow, let's see what's happening here. Is there any lumpiness? Remember, the MNC parentage is there, so they might not have a lot of cash flows issues. But yes, investing and financing activities is where the action might change around. But look at the cash flow from operations. This has been really good. So for a moment, let's remove the investing and the financing, because it's of course a business and seasonal. The cash flow for operations has done well. FY24 was just 59 crore. There was a dip coming in, but look at this amount here. That is where it's showing that improvement in capital ratios is there. So I'm going to give this a thumbs up when it comes to my cash flow analysis. The next parameter, of course, are the ROCs and the ROE numbers. So of course, this is the ROE number first, just to get it. And if you could just show the ROE number also, you'll understand, this is a little bit of pressure coming in. What we saw in FY25, now that is of course coming down, and it's coming at around this 5.5% mark. So yes, there are some changes, but net there is a pressure. और जब धंधा बढ़ता है, acquisition होता है, तो return ratios में pressure आता है. Just to put it in a simplified manner, but it might increase also. A little bit of increase is expected on the expectation. So I've made it a neutral rating. Also, let's move apart from the return ratios to the shareholding, how things have moved, and largely little bit of sell-off is there, not so much also from FIs, from 8% to 7%, and DIs a little bit to 1%. But now, of course, channel checks are suggesting some accumulation is at play, but the June numbers are not out yet, so we cannot get that picture. So as of now, it's a neutral rating. But let's talk about shareholding. Has the stock actually made money? Of course, for a medium-term, short-term investor or even a trader, yes, the stock has made money. Of course, from 2025 lows, the stock is up 2 times. So that is something showing a good momentum. Minor correction coming in the recent times in the consolidation zone for the technicals. But last 5 years, just 62%. So of course, investors, the long-term investors definitely wanted more returns in this. And if they're holding the stock, definitely there will be a bit impatience. And that is the human sentiment which we have in the stock markets. Overall, let's keep it neutral right now, because it has given a sizable returns from 2025 lows. The stock is up 2 times when it comes to street cred. But valuations, is it the cheapness here? And I feel yes, valuations are quite cheap. Why? The current 12-month forward P ratio is 35 times. The 5-year peak almost hitting the 80 mark. And even just to balance things out, the 5-year average is also 43 times. So technically, 20 to 25% discount पे तो चल रहा है 5-year average P पे. So that's why the valuations look decent, and that's why I've given this a strong thumbs up. But apart from the valuations, let's talk about the outlook. What is the numbers? What's the future? This is very much important. the strong capex plans to expand capacity into newer molecules or chemistries. That is where the niche segment is coming in. The integration of TANFAC, which is the backward, and Jayhawk, which is the forward integration, is something which the street is quite bullish on. But let's wait for the timelines. That's something to look at for expansion in the US market. That is where important acquisitions are playing out, and new regulated market is something which they are targeting. LOI based revenue that's expected to reach 1,000 crore by FY28. LOI is nothing but your order base which is there, which I had explained to you. Also, the ample land availability at Jhagadia for future expansion. This is in Gujarat. So in case of new capacities come in, so they can add in very fast. The turnaround will be faster, and that's why I really like about the outlook. So I've given this a thumbs up. Let's give you the entire picture for Anupam Rasayan. What are the KYC ratings looking like? And largely, the income statement balance sheet has been neutral, but cash flows, the operating ones, has improved significantly for the company. Return ratios, they are mixed. Shareholding street cred, neutral rating I've given in, but valuations are quite cheap, and so is the outlook, which is good. So overall, we could say an average number which we give slightly on the positive side. Higher positive is 5.5 out of 8 for Anupam Rasayan. But what else is the story? Everybody wants to know about it, and for that we'll be joined by Vishal Thakkar, the Deputy CFO of Anupam Rasayan, and interesting tidbits about him I would like to share. He has more than 2 decades of experience, and look at that, merger and acquisition. This is where the speciality comes, and we have seen so much of that happening for this company. Of course, business development as well, and work experience includes Hazira LNG Port, SR Investments, G Capital, and CRISIL as well. So a very interesting conversation we'll have with Vishal Thakkar, but shortly after a break.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
I got blooded in the stock market in the early 90s when Narayan Murthy and Infosys went public, and forever after that we've been spoiled. We look for businesses run by entrepreneurs like Narayan Murthy who have boldness, who have vision, and who
Welcome back to Know Your Company, and we are joined in by Vishal Thakkar, the Deputy CFO of Anupam Rasayan. Vishalji, good afternoon. It's always a pleasure to have you with us at NDTV Profit. And so many announcements are coming in from your company. But before those merger acquisition question, I want to start with the recent flow of news, especially with the Basque Volt $300 million deal coming in, especially for the European Union segment. I want to understand what are the key benefits for the company and by when can that start coming in?
Hi, good afternoon, and thank you for taking us on your channel. See, this is very interesting one for us because this is one where we are focusing on new age technology, which is basically in the solid state side, solid state battery. So we are making electrolytes. We'll be making electrolytes for them, and it's to our Spanish client. And to that extent, we believe that this is very, very landmark because this is where the new technology innovation is happening. New products are coming into picture. Compared to the older technology, which is there, which is more on the liquid electrolyte side. So this is more on the solid electrolyte side, which will improve the safety of the batteries, which will improve the longevity of the charged cycle charge time, and also the energy density. So to that extent, it is going to be very interesting for us.
That's a pretty interesting take coming in. But Vishalji, ETFA, correct me if I'm wrong because I'm not very good at chemistry. Ethyl trifluoroacetate. This is the commercialization announcement which has come in, and apparently this is the world's first plant which is being done. How is it different, first of all, and what kind of capex is earmarked for this and the incremental benefits when it can start coming in? Just could explain us where this product is also used.
So this was a product that we had commercialized in the earlier announcement that we had made. And this is basically where we had said that this product is made by us first time in the flow chemistry is what we had said. So we are the first one to commercialize this product in flow chemistry, which is an application across pharma, across polymer and other end markets as well, including other businesses. And this is one of the very strong, starting chemical for a lot of other applications that it can be eventually used for over and above in its state as well. So we believe there is a very large market that we can see from here, and we are very, very proud that we could do it in flow, because when you do it in flow, you are improving the safety standards, you are improving the efficiency of the production, you are reducing the environmental footprints because there is lesser solvents used, lesser other energy and other aspects used, and hence that's where you do a good job with manufacturing in a greener way.
That's of course one of the futuristic views coming in. But Vishalji, I want to understand this process, this integration which is happening of Bliss GVS Pharma. How is it happening? And there, of course, there is a forward integration announcements backward also coming in. So 3 names, and you're a man of mergers and acquisitions with that experience which you have, and you have been able to do that. Wanted to understand by when these timelines can go, and is there any timeline risk to it, because so many things are happening and things take time, right? So wanted to understand for the viewers any suggestive timelines for all this.
So Tanfac, I think, is fairly integrated. It has been 4 years that we have been now in the control of this company, and we have a management control of this company, and I think that's well integrated to my mind. Jayhawk, we concluded the transaction in the end of February. And that integration is right now underway, and initial level of the integrations have been achieved in terms of HR, in terms of financial reportings, and others are fairly in place now. And even from a go-to-market point of view, both the teams of marketing teams from both the organizations are working together and going to the customers together to offer a broader portfolio of solutions, and that's continuing to happen, and we will start seeing a lot of benefits out of it coming in from the end market side, also from a process integration side in terms of sharing of knowledge and technologies and manufacturing capabilities. So that will continue to happen at Jayhawk. And on a Bliss side, the question is we should be able to conclude this transaction, as we can see today, should be anything between end of August to first half of September is what we are targeting. SEBI approvals have come in, and we've started doing the process of open offer, and let's see, that's where it is, and then we can talk about the integration here. But if you look at it, the whole idea and the method, the madness of these 3 acquisitions was If you look at the EgChem portfolio, we had clearly built it on our organic basis, and we created a whole value chain. See, today the world is not looking for a product or a chemistry. The product is looking for a full supply chain or a value chain solutions that we
My
are.
question, next question comes, Vishalji, is on that integration play. You already are having important global clients. So it becomes a no-brainer that you start getting larger orders from large institutions across the segment which you are playing in. So I wanted to just understand that if you're doing so much, isn't it the balance sheet hurting a little bit? Do you think there's a fundraise at play happening or expected to happen? Just wanted to get a flavor of that.
So see, I'll tell you, I don't see. I'm in a silent period, so I would limit. I would be refrain to make too many statements. But if you look at it, the way we have funded this balance sheet, also, if you look at it, we've kept it fairly respectful in terms of debt to EBITDA levels. If you were to look at it, and also my FY26 numbers are not reflective of the EBITDA, because I have got only 1 month of Jayhawk's performance in terms of P&L, but in terms of balance sheet, I have integrated the full balance sheet. And to that extent, my numbers will look very different. If I look at pro forma only on Jayhawk added to this, I think I should be doing a 3,000 crore of revenue with around about 640 odd crores of 625 odd crores of EBITDA. And when you look at that number, which is pure pro forma, I'm not even talking about any growth or otherwise, but just pro forma, then the numbers will look far more meaningful and comfortable. And my sense is that we are looking in a comfortable positions. If I look at debt to EBITDA, if I look at my leverage ratios, we should be very comfortable.
The working capital ratio is also improving in my analysis, and that was there in your FY26 cash flows also. But I want to understand a little bit, since you are a chemical company, raw material pricing, short-term trends are also there. And this is the quarter where there will be some impact, at least on the rising crude price. Somewhere or the other, ancillary impact is also there. So we do not want any numbers from you, but we want to understand, how overall sentiment is looking on the raw material pricing side. Will it be elevated in the first quarter? Just like that much we want to know.
So I would tell you that, see, the point is that the way we build our business model is that we would pass on all the costs that we have of manufacturing to our customers, and to that extent it will be there. Also, there is a bit of a as you know, that we hold a reasonable level of working capital and inventory, and to that extent, this is the specific reason why we hold this kind of inventory, that the supply shocks to our customers are not there. For us, anyways, it is passed through, but even for my customer, there is no supply shock really coming in of month to month or quarter to quarter, and that's where this working capital acts as an absorbent to that movements and levelizes the cost structure for them.
That's pretty interesting. I also want to understand a little bit about the capex plans and the capacity utilization. What we had shared earlier. Just a ballpark, a number or a range.
Yeah. So see, today I think we've fairly done our capex program, especially in Anupam. Tenfac will do its own plans, but at Anupam we have fairly done our capex, and we believe that current capacity should support a revenue of anything between 3,500 to 4,000 crores of revenue. Broadly, that's where, depending upon the product mix, but at the current product mix plan, I think we should be doing that kind of thing.
Right. I was just checking the March shareholding. There is a little bit of promoter pledge also. Is this over, or will this be getting over? If you could give us a little bit of light on that.
So if I were to say March the pledge that Anupam's shareholder promoters have is largely to support the company's performance, and that was basically largely it was for the reason of their preference participation that was there largely. But yeah, nothing really otherwise should you see that.
All right. So, of course, this is business as usual. That's a clarity which we all wanted at KYC. But we are actually out of time. And so it was always a pleasure to have you with us. You gave the entire picture of Anupam Rasayan, where they stand. And of course, talking in a silent period is something which is very difficult for management. But you have actually carried it off nicely. Thank you very much, sir, for the business outlook going ahead. And best of luck for the Q1 numbers.
Thank you. Thank you, and a good day.
Thank you. So that's the management of Anupam Rasayan, and of course they are talking about the integrations which is happening, and the MNC clientele which they have, that's where the interest is rising. And the R1 numbers, especially the Q1 RM numbers, there might be an impact, but there is a pass-through also. So we'll try to understand how the numbers come, and for interesting stories like this, stay tuned to NDTV Profit and keep watching KYC.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार. अंबा शक्ति SDTMT.
This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise and excellence meet. In the presence of the Finance Minister, Nirmala Sitharaman. NDTV Profit Business Leadership Awards, 26 July on the NDTV network. India's unshakable news habit. NDTV.com is India's #1 English news website.
Access to capital, faster regulatory pathways, and market acceptance to create value. And if we get the pieces right, I think we can move from being the pharmacy of the world to being the most innovative lab of the world.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Benchmark slipped to the day's lows. Nifty 50 hovers near 24,100 level. Sensex sheds more than 200 points. PSU banks, FMCG top the sectoral laggards, while real estate and metals are resilient. Slew of companies buzzing after reporting the earnings, while Canara HSBC Life delivered healthy numbers. Weak quarter weighs on transformers and rectifiers, and Bajaj Health. Paytm edges lower despite the earnings beat. Karur Vysya Bank shares jump after the lender posted a robust June quarter performance. Net profit surged 45% year-on-year. Robust earnings growth supported by strong interest income and sharply lower provisions. SBI Funds Management extends gains after strong stock market debut, listing nearly 7% above its IPO price. With the listing, the company has become India's second largest asset manager by market capitalization. Hello and welcome. You tuned into Markets at 12. I'm Nisha Poddar, and yes, the color is red today as Nifty 50 at the low point of the trading session when we talk about the midday market. So there you go, a huge amount of pressure really building on Nifty 50 at 0.3 odd % down in trade at the current moment. And a large part of that is being shaved off by HDFC Bank. Remember, it has been a dragger on 2 days straight after the results came out, but also remember that the banking pack, the large cap banks are also a quasi investment into the economy. So therefore, HDFC Bank shaving off a large part, but ICICI Bank on the flip side is also the gainer. Let's also take a look at some of the other internals from the IT pack. Again, it's a mixed bag today with HCL Tech really gaining in trade and Infosys as well as TCS on the downward side. Reliance Industries also after its results on Friday, where it showed a huge amount of momentum, also with promoter buying more stake into the company in the quarter gone by. After that, this particular heavyweight is really causing erosion on the benchmark indices. So that's about the benchmark index, but in the overall market setup also that we see in terms of the pockets which are doing well and the ones which are on the downward trajectory, it's a larger number of sectors on the downward side feeling the heat and the pressure, especially of the global cues also coming in. So only real estate as well as high beta metal, these are the sectors which are doing well, auto also to some extent. But apart from that, banks are really taking a drubbing today and also down, but still better than the key index Nifty 50. So outperformance by banking index, but HDFC Bank a key dragger. Let's take it straight across to Vikas Gupta, who's the CEO of Omniscience Capital, joining in now. Vikas, pleasure speaking to you on NDTV Profit. What do you make of the current volatility that we have been seeing and also pressure building as crude oil prices really mount?
Pleasure here to be here. See, mostly I would attribute all this majority to the global, the war situation. So the near term, everyone is reacting to that, and that's why we are seeing a little bit of negativity. Otherwise, to us, banks look one of the best placed from a midterm perspective. But near term, yes, there is a impact of the largest bank here. But otherwise, from a longer term perspective, we are quite optimistic about this.
Right. When we look at the mid-cap universe, and let's train our focus on that as well, that is showing quite a bit of outperformance compared to the key indices, Vikas, today. And there is still momentum and some gains seen in the mid-cap universe as well as the small-cap universe. Looking at this particular picture, there is definitely value buying despite the macro picture and the overall economic concerns coming in because of the global scenario. How do you pick in an environment like this the pockets which are going to create value? What is on your radar?
Yeah, so first of all, we have to list down the factors, the global macro geopolitical factors, which could impact earnings or revenues. So on the specific fundamentals. And those specific sectors you have to weed out because you can't predict what's going to happen with them in the near term. So just keep away from those. Focus on the ones which do not have a macroeconomic impact as much. So more domestically focused, less oil dependent kind of sectors. And there, of course, you go back to the scientific investing process. I mean, look at bottom up, fundamental, strong balance sheets, strong competitive advantages, and available at significant discount to intrinsic value. That's the most important part. I mean, most of the time we are focused on growth and strong balance sheets, but people forget to take account of the valuations. So there are enough pockets, I think, still.
When we talk about pockets, any critical themes on your radar, Vikas, and also putting into perspective the margin play because of the crude prices being still at elevated levels now, and also the monsoon impact. The delayed monsoon has had its lasting impact on this particular season of also could be showing in the rural economic consumption and on the other hand on the agri sector. Looking at all these developments in the recent past, do you think that the market has really baked in the concerns coming in on that one, on the margins as well as the monsoon concern? Or do you think that from here on it could really lift up if things get better on West Asia?
Yeah, so West Asia and monsoon, if monsoon also turns out to be better, then some things, but West Asia is like a pendulum. It will keep doing this as we have seen for last 2-3 months. It's highly unlikely that you have a clear answer, right? They will keep talking, doing ceasefire, then starting the attacks again. And so it's very difficult to say when this is going to end. The only point is the amount of impact, except for the directly impacted sectors, people have started not looking at or reacting to the war rhetoric or actual actions as well. So, of course, the sectors which get impacted, you have to be very careful. But other than that, I mean, for example, housing finance. Okay, so today real estate is going up. But a proxy for that would be housing finance, and that would be very little impacted by this directly. So that's an example, or the a power situation could in fact benefit every time this happens, right?
Right. And in terms of which sectors would be on your radar for new investments at these current levels, Vikas?
Yeah, so domestic infrastructure companies, power, railways, housing finance, and banks. I mean, banks are one of our favorites for quite some time and likely to remain favorites given the balance sheet strength and that they are a proxy for the economy.
Vikas Gupta, thank you so much for joining in with your expert take on the markets and also catching the momentum for making the returns. Now, Dr. Bondada Raghavendra Rao, the chairman and managing director of Bondada Engineering, now joins in. Actually, there's a news development for the company and there could be a stock impact. There is an order win of first grid scale VRFB BESS project. VRFB is the vanadium redox flow battery. BESS is something of interest. Now, talking about the company and what it brings, Dr. Bondada Raghavendra Rao, how does this really benefit the company? Give us a sense on what this particular order win really means and the financial impact.
Yeah, good afternoon, Nisha. This is vanadium redox flow battery order from NTPC Renewable Energy. We have to set up this plant, this storage facility at Kavada Solar Park in NTPC's solar park. And this is the first of its kind in India and one of the largest capacity. So far, we all our battery energy storage systems are with LFP technology, that is lithium phosphate iron phosphate technology. But this is lithium ion cells, and then these container solutions are mostly 100%, almost 100% dependency on China. So because of this land border issues, geopolitical issues, we are this market, this battery energy storage market is badly impacting on prices and then supply chain issues. Hence, actually, we thought that actually there's an alternative solution is required. Then we discussed among ourselves and then made this vanadium redox flow batteries a very new technology, first of its kind in India. And NTPC has seen one POC, small POC project. Our technical partner is Delectric Systems from Delhi. And Delectric Systems and Bondada partnered together and participated in this tender with NTPC. And this is one of the highest capacity, largest capacity of 100 megawatt hour to be set up. in NTPC's solar park.
Dr. Rao, I want to understand the timeline for this particular order and also some financial impact. Of course, it's a prestigious order with NDPC, and it makes a big deal for this particular space where many companies are really vying for such large tenders and important work to be done in this battery storage space. But when we talk about your company's timeline as well as the financial impact coming in, and also how does it open the pathway for new capabilities in future?
Yeah, absolutely, Nisha. This is new technology.
Yes.
As I rightly said, that actually it is alternative to the lithium-ion technology. So we can be independent of China if this is proves, and actually this is coming in big way. Vanadium redox flow battery technology is entirely new technology as of now. And we have to complete this project as a sample basis. We have to complete this project is in 16 months time. NTPC has given us in 16 months time. Thereafter, we have to maintain this plant, this storage facility for next 10 years time. And with this order, our total BESS order book has rose to 1.2 gigawatt, that is 1200 megawatt hour. This is 100 megawatt hour VRFB, but 1100 megawatt is LFP, that is lithium ion technology. That is also which we are working with TNGCL, Tamil Nadu, and AP Transco in Andhra Pradesh, and another project of NTPC in Sitapur, UP. All put together is 1200 megawatt hour that we have to install, which is timelines are ranging from anything between 15 months to 18 months time. With this, actually, our battery energy storage systems order book is, as of now, it is reached to the around 1900 crore. Out of 1900 crore, around 500 crore is EPC, and around 1400 crore is build, operate, and own and operate systems.
Dr. Rao, many of those takeaways from the answer that you gave, my first and most important thing is that your entire portfolio is now in two segments, in the LFP as well as VRFB also is now inching up. You also said that our lithium dependence on China will reduce if the VRFB technology really works out well. Can you give us a comparison when we talk about also the price dynamics and the margins that are the differentiating factor between these two? And when we talk about VRFB, how self-sustaining is India in that? Can we do away with lithium is my question.
Yeah, this vanadium is actually the long life battery storage capacity. For example, if lithium ion comes with cells, anything between 12 to 15 years life of the project is there. But this vanadium is one of the longest long life storage plant, which goes up to the 25 to 30 years. Normally, if you see that actually our solar plants are life cycle is around 25 to 30 years, but whereas your lithium ion storage facility lasts up to only 12 years. Okay, if at all you want to have this 25 years of the storage facility, two times you have to, one time you have to upgrade that lithium ion. So with that upgradation and one time installation of this vanadium redox flow battery, costing at this point of time is coming out to the almost cheaper, almost same or little cheaper by VRFB. But once this is coming to the big scale and big quantities are coming, definitely VRFB is going to be the much cheaper than lithium ion technology. Not only that, actually cost point of view, there are so many other advantages are there with VRFB, because so thermal management is very easy. Safety point of view, it is a very safe. Once you are installed as a plant VRFB, it's a very safe plant. Other than that, actually LFP as a thermal management is a critical issue, and there's a hardly any degradation there. You can see degradation in VRFB, but where there in LFP, there's a lot of degradation from 7th year onwards, 8th year onwards, up to 12 years, it will almost go dead. So many other advantages are there. Hence, this is the most important for India to actually encourage this vanadium redox flow battery, because actually we have plenty vanadium raw materials available along with our iron mines and even manganese mines. Going forward, if this technology been acceptable, I think India is going to be self-sustained as a Atmanirbhar Bharat, and we are independent of any other Chinese technologies.
So, Dr. Rao, the electrification of India and the path towards that has only one big challenge, which is the lithium and the dependence overseas on the imports and not having the full capability in that. And we have to see if our VRFB can be that right answer and if its usage can be widespread. But my final question to you, you said that in about 18 months, this particular, timeline for this particular order will be commissioned. In terms of which particular quarter and the next financial year will you see benefit of this really coming in, and how much could be the financial impact because of this order? That is my specific question as the last question.
Yeah, Anisha, this, as you know, that actually our India needs a lot of storage capacity, battery energy storage capacity. I think we have to install almost 236 gigawatt hour by 2030. Hardly anything installed as of now. Hence, that actually we need to we should not be depending on other Chinese technologies. We have to depend on our own technology. And if this comes into the picture, if this comes into the proven track record, I think anything second quarter of next financial year onwards, we will see the advantage of this VRFP. And I am sure that actually I'm very much pretty sure that actually this technology is going to prove and it is going to give very good results in energy storage sector.
Right. All right. Thank you so much, Dr. Rao, for joining in with all the details. And of course, it's a big one in a new technology when we talk about battery storage. All the best to you on this particular order. Thank you so much for joining in. All right, moving on, there is a new listing on the horizon today, and it was a good listing also coming in from a strong parentage of SBI. Now let's listen in to what SBI Chairman C.S. Shetty said after the listing ceremony of SBI Funds Management as the company makes its debut on the bourses with good returns.
Shetty, of course, SBI's parentage was very important to the listing here and pushing this forward. How strong, how did SBI approach this listing? In that sense, how did that brand name sort of build out the reputation and the premium that this listing has brought through? If you could take us through that a little bit. Similar question to you, Mr. Calgon, with Amundi's role here. What sort of role did you play in getting this IPO forward and building this out in the way it did?
So coming to SBI, I think it's not only the largest distributor of the mutual fund products. As I mentioned in my speech also, that we wanted to bring this investment opportunity to a large number of retail customers what we have. So probably the value creation is not only in terms of what SBI FM has been delivering on their schemes, it is also a fact that they have the backing of the largest parent company. And what we would like to assure all the stakeholders is that even before listing, this company was having the best governance practices of both SBI and Amundi. I think that's a value which we have created over a period of time to all the subsidiaries what we have. We almost have 18 subsidiaries, and the value creation what you mentioned, I take pride in mentioning that our investment in these subsidiaries is about 6,000 crores as we speak today. Hopefully maybe a month later the number will change. We are valued at 4 lakh crores. I think that's a value creation for all the stakeholders we have done. And in the process we also have created institutions of enduring value in the financial services. you would like to take the rest of the question? Or Olivier, you would like to join?
As for Amundi, we try to bring a little bit of our experience. As you know, we are a listed company. We have lived through this process a bit more than 10 years ago, being listed in Paris. So we had the experience and we tried to share it and to advise SBIFM in the process. And I think a second dimension we brought is probably during the roadshow, the contact with international investors. Of course, SBA and SBIFM has a lot of contact with international investors, but we could also help in that regard. And Olivier has been participating in roadshows alongside Chairman Sethi in that regard.
All right, over 1.2 lakh crore rupees of market cap of SBI Funds Management, largest by assets under management when we talk about the AMCs in the country, coming from the parentage of SBI. So that's a great listing with 8% uptake really maintained even in the middle of the trading session. All right, keep an eye on that. A bunch of other counters are also in focus today. On the back of their earnings, there are losers and there are buzzers. And both my colleagues, Parth as well as Jasmeet, are right here to take us through both of them. So thank you so much, Parth as well as Jasmeet. First, let's take it to Parth. What's on your list of buzzers today? Which ones are really getting a much better treatment by the market?
Yeah, there were a lot of earnings, but these three are standing out in particular in today's trade. The first one is Karur Vyasa Bank. The stock has, on the back of earnings, touched the highest level in the last 5 months, and also today saw its biggest intraday gain since January 2026. If we look at the Q1 numbers, then the company crossed the advances level of 1 lakh crore for the first time. Advances saw a growth of 6% quarter on quarter. The bank also recorded the highest ever profit of 756 crores. Net interest income saw a growth of 32%, while NIM also grew by 48 basis points year on year. The second one is Canara HSBC Life, which has seen a very good business momentum in the first quarter of FY27, and that remains favorable with the distribution-led strategy that the company is focusing on right now to gain traction across the segments. The protection segment has been a key focus area for the company, and a healthy growth in VNB was supported by a better product mix. If we look at the numbers, then APE saw a growth of 19% year on year, and VNB was up by 29% as well. Also, VNB margin grew by 160 basis points to reach 21.1%. The last one is Action Construction Equipment, which has registered a very strong growth across all of the key metrics. The company achieved best ever Q1 revenues and margins, and this margin improvement is what has helped grow the company's bottom line during the quarter as well. If we check out the numbers, then revenue saw a growth of 20.5% year on year. EBITDA was up 27%. EBITDA margins also grew by 120 basis points. And lastly, PAT also saw a growth of 22.3% year on year. So these are the top three earnings that have been performing well today.
So that was the winners list. Jasmeet is here with the losers list. What's getting punished because of earnings, Jasmeet, today?
Well, Nisha, thank you for that. Here are top three earnings that have been tanking in today's trade on the back of that weak numbers. The first one is transformers and rectifiers. We do see that the overall execution for this particular counter was weak in the Q1. When we look at the order book, that has been growing in a healthy format. The overall order inflows were up nearly 218% on YY basis, while the order backlog also saw an uptick of 26%, but the execution remains the key for this particular counter. Well, apart from that, if you look at the utilization, even that was low in this quarter on the back of the low utilization and lower growth which we saw at the Changodar facilities. While the Changodar facility expansion is expected in the month of August 2026, further the company maintains a healthy pipeline of roughly 23,000 odd crores. While the second counter is Advait Jewelries, while this stock is also tanking on the back of its weak numbers. Now, what we are seeing is the company has reported its Q4 numbers as recently listed company. When we look at the company for a financial year for FY26, the numbers have seen a good uptake. We have seen double-digit growth of revenue and EBITDA as well. But in terms of the Q4 performance, solely we see a weak performance. We see the overall revenue is down about 27%, while the EBITDA also tanked nearly 41% in this particular quarter, and that's why the stock is in pressure in today's trade. While the last one is Rallies India, while the company does note it has a strong numbers and good momentum and good growth, but the street's not liking the overall business mix for this particular counter. We are making us note that the overall B2B segment has declined by nearly 19% for this particular counter, though the B2C has supported the B2B decline in this quarter, but again, the B2B share has reduced, and even the margins is slight pressure in this particular counter as well.
All right, thank you so much, Jasmeet, as well as Parth, for giving us the winners and losers of the trading day. All right, thank you so much for joining in. Now let's take it straight across to, after a pause of 13 years, one of the most prestigious honors in Indian business is really back. On July 26th, NDTV Profit brings back the Business Leadership Award, celebrating the leaders, companies and entrepreneurs who have helped shape India's economic journey. And the nominees for Wealth Creator of the Year are: BSC enables capital formation to create wealth for generation of investors. Transformers and Rectifiers India transformed engineering expertise into one of the market's most compelling growth stories. MCX India transformed market participation while delivering exceptional value creation. Himadri Specialty Chemicals, leveraging innovation in specialty chemicals and advanced materials. Also on our list, Gallant Ispat, a story of manufacturing scale and disciplined execution, transforming industrial capability into sustained growth. Garden Reach Shipbuilders, combining strategic national importance with operational excellence. Newland Laboratories built a differentiated pharmaceutical business, creating lasting investor value. Business Leadership Awards, that's something you don't want to miss. Only on NDTV Profit on 26th of July, but let's also take a look at the earnings that are really flashing on our screens. In fact, Arvind is the one which is really Arvind Fashion, and there you go, the stock is down 2%, EBITDA is up 19.9%, EBITDA margin 12.5%. On a YOY basis, it's an uptick of 0.5%. When we talk about the profitability meters, but Arvind Fashion stock is the one which is under pressure, 23.8% downtick when we talk about the net profit figure, and the revenue figure is up 15.5% at 1279 crore rupees. EBITDA figure 19.9% up at 160 odd crore rupees versus 133 crore rupees on a YOY basis. We have to see the internals of the number on what is it that the market is really not liking, because on a YOY basis, when we look at the profitability figure, that's where the margins have really seen an uptick. But of course, the net profit figure is a downtick on a YOY basis. Arvind Fashion on your radar. Of course, it's out of time on this edition of Markets at 12, but keep it with NDTV Profit. Lots of market action, news, views and earnings on the other side. Thank you so much.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क.
इस बार तो माँ से भी बेहतर बना.
P Mark, the mustard specialist since 1933. बरसों से सरसों. कुछ तो बात है इस दिल में.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance. Be part of jury and vote on the people, the men.
Hello and welcome to NDTV Profit Suzlon Studio. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, who's standing at the Profit Market Pit. Sharad, good afternoon. I mean, we're nearly at the day's lowest levels. A mild recovery that's coming in there in terms of where markets are concerned. There is this consolidation phase that you're looking at, and the moment you reach a certain high, you're seeing profit booking and some bit of buying interest at lower levels as well. That's been the trend over the last couple of trading days.
Right, you are exactly correct. Right point out. Good afternoon, Hiral. Largely, the markets are in a very narrow range, and Hiral had mentioned a little bit of momentum earlier, then sell-off, and then consolidation at play. But it's a very tight range. Just look at it, 50 to 60 points. That's where the reactions are happening. Nifty Bank, let's pull up what's happening there. It might be much more tighter range there. Full flat right now. So literally there is no trend happening, no major direction coming for the benchmark indices. That means the action is there in the small cap and the mid cap space, especially with the earnings. Remember, it's a Nifty expiry, but no major action is happening. So that's a little bit of, you could say, not a concern, but definitely the action has shifted from the benchmark indices. That's what I'm talking about. Let's move ahead and understand what are the key other factors to watch out for. And this is where the trades are happening. That's where the volumes are also present, and the mid cap, small cap are in the green as well. That means the broader markets are doing good. Stock specific trade with the Q1 numbers if you have to play positions on this. And moving on, another important factor will be the NBFC. Strong buying coming in, and we have seen RBI's dollar push. So there's a sentimentally positive reaction happening in most of the NBFCs and gold financiers. But the global asset classes, they have turned steady. Most of them. Oil, gold. Is there a ceasefire hope, or is there something building up here? That's the question. Ruby has stabilized on the RBI intervention as well. So that is showing a good momentum here. The neutral to muted D Street debut coming in. SBI funds up 8%. Grey market premium was as high as 15-20% yesterday. Alpine Techs muted. You could say it's in a lower circuit right now. So decent kind of earnings is something which we are looking at. Bajaj Auto, TVS Motor, these are the two Nifty earnings we'll be tracking, and of course Adani Energy as well. Other group of Q1 earnings also I'd like to point out: Adani Total Gas, Indian Hotels, important corporate development might happen here, and Bandhan Bank as well. So these are the 6 important earnings which we are tracking. But yes, no major moves is happening, at least in the benchmark indices. Stock specific approach.
Okay, so stock specific approach is what you're looking at, but let's quickly look at the watch list. CMPDI, that is the subsidiary of Coal India, strong Q1 double-digit revenue and EBITDA growth, on the back of which the stock is up 6.5%. Advait Jewels will be joined by the management as well. It's a weak Q4 and the revenues are down 28%. Apart from that, Action Construction is seeing some smart moves again on the back of a double-digit revenue growth and strong numbers as well. Canara HSBC, the VNB margins have come in at 21.1% versus a 19.5% on a year-on-year basis, and hence that stock is reacting positively. A strong Q1 reported by Sobha Realty as well, and a strong uptick in margins is what is keeping that stock afloat with gains of 1%. What is under pressure? Tyrrell. A weak set of numbers Margins have dipped to some extent. That stock is down 4.5% as we speak. JP Power is also in focus on the back of a strong quarter. Bluestone Jewelry again at 10.5% up move. The company has actually turned profitable on a year-on-year basis, and hence you're seeing that 10% kind of a move coming in on that counter. Rallis India is very interesting because the numbers optically look very strong. However, the stock is under pressure because no one is convinced that the company will be able to sustain the margins because this time it's only on the back of manpower cost reversal that the margins are looking good, and the management is not really confirmed about maintaining margins. What they've come out and said is that volume will be of utmost priority, and then they will be looking at the margins as a second priority to some extent. So that's Rallis India. Bajaj Healthcare has reported a mixed quarter, a 4% downtick coming in there. MTAR Technologies, the worries with regards to a key client with Bloom Energy is what is posting concerns around MTAR. In fact, that stock is really under pressure in the last 1 month. Karur Vysya, strong moves coming in there. Advances have crossed the 1 lakh crore mark, a very good set of numbers. United Breweries is at a 2-month high, strong volumes there. SBI Funds listed at almost a 7 to 8% premium. Bajaj Auto will be reporting numbers today, so that stock is in focus along with TVS Motors. Bharti Hexacom, where HSBC has initiated a buy and they have a target price of 2050. You have Paytm. The margins, the contribution margins have dipped this time around for a Paytm, and they've not really gone ahead with the bonus issue as well. Jindal Stainless is again reacting on the back of the Goldman Sachs report. And you have Vonbury. The US FDA has concluded the GNP inspection with some observations, and that's what has put the stock under pressure. Cuts of 3% coming in there. So Sharad, we have an interesting list, but over to you to actually take the rapid fire.
Thanks a lot, Hiral, for that. We are joined in by Somil Mehta. Good afternoon, Somil. Always a pleasure to have you. We'll start a rapid fire round, and the first stock is CMDL, Central Mining Planning, if you have to take the full form. And of course, the numbers have been pretty strong. Do you think there'll be more follow-on buying in this counter? Of course, the history is on the lower side, but I wanted to just see the charts right now, whatever available data we have.
Absolutely positive on the stock, trading about the short-term averages. I'll keep a stop loss around 248 and hold on to the stock, and probably even buy more from here.
Right, good numbers coming in from Action Construction Equipment, Ace Constructions, and of course this is a quarter where we could say that largely infra work has not happened. A good surprise or a turnaround in the numbers. Do you think this will sustain, or will it need some more power?
Absolutely positive on the Action Construction as well. My targets would be above 1180, and my next target probably above that would be 1250. So positive on that. Probably you can add more from here.
Right, even the losses have come down in the Q1 numbers of Bluestone. A good momentum play as well. Anything on the weekly charts here?
Bluestone positive. However, keep a very strict stop loss around 590. Hold on to it. I would be expecting a target above 750.
Right. Another stock is Karur Vysya Bank. Good quarterly numbers. Of course, valuation seems stretched, but nevertheless, a good follow-up buying happening in today's trade. Good time to book a little bit of profits in this counter.
I think you can hold on to it. I'm still expecting the stock to continue the uptrend. So hold on to it.
Next stock is United Breweries. Wanted to get those important levels on the chart, and if there is any good risk reward, then is there a trade at play?
UBL definitely, I think in the very short term, I'm very positive. Not in the medium term, but in the very short term, keep a stop loss around 350, 345 levels, and I'll be expecting a target of around 1500. So positive in the short term, but no confirmation in the medium term.
Will you be buying the dip in Paytm? The numbers were good, but of course there was, they clawed back the bonus announcement, and the street is a little bit concerned on the flows. So good time to buy the dip for Paytm?
Not yet. I'll be positive on the stock, but the stock can slip down till 1250. So keep it on the watch list. Buy on decline should be the strategy.
Buy on decline for Paytm, but right now keep it on watch list. That's the view coming in. But that's the end of rapid fire round. Over to you, Hiral. What are the Google trending stocks?
Guess what, Sharad? There's only one which is trending on Google today, and that is SBI Funds. on the back of the listing. Let's pull up that one on the screens and see what's happening. It listed at a premium of nearly 7%, but it's interesting. You have a SBI which is trending on the back of the listing, I'm assuming. But that stock is down nearly 0.6 to 0.7% as we speak. Somil, any view when it comes to SBI?
SBI absolutely positive. The PSU banks are really doing good. SBI is a large cap, so probably a slow mover at this point of time, but still positive. I'll be expecting this trend to continue. PSU bank, the smaller PSU banks are looking really good, like Union Bank, Bank of India, Bank of Baroda. So these stocks are really doing good. So positive on PSU banks.
Okay, so positive with regards to where PSU banks go as well. Thank you so much, Somil, for joining in. It's always a pleasure to speak to you. Now, Advait Jewels, let's pull up that one on the screens and see what that counter is doing in trade. They've reported numbers and it has been a weak show with a sharp fall across revenue, profits and margins. What's really gone wrong this quarter? Nitin Gilara, Chairman and Managing Director at Advait Jewels, joins in. Welcome to the show, Nitin. Always a pleasure to speak to you. This is Hiral on this side. My question coming to you is, I think the street is really concerned with the way the first quarter of FY27 has panned out with downtick across parameters right now. How would you rate the quarter as per your internal expectations?
So I think now as the war has settled down, as we said, and now people are habitual of it, I feel so. So it's going on well now. People are taking it well. Bridal jewelry collections are being appreciated a lot. We are getting good demands. And coming up festive season, I think we will be looking for great business ahead. I think so. We also have some new collections coming up. So I think it will be fabulous next few months because the season is going to start by August.
Hi Nitinji, this is Sharad here. Wanted to understand, of course the Q2 sentiment is generally for a jewelry company is kind of a muted, but wanted to understand, the studded mix, that is something which everybody talks about. What is that studded mix of yours? And if you could just explain us our business model, because your company is relatively new, it was recently listed, so that will be important for our viewers.
So basically, let me tell you about the company. We are into luxury jewelry manufacturing. We are not into that generic jewelry production which goes on in the market normally. So this luxury bridal and design-centered jewelry, usually it has trends. And basic trend starts from when this August season comes, when it's a festival season we call. From here till Diwali, it's a festival season. After that, it's a bridal season. So they are very strong on that. In fact, being organized in the sector now, we are making different strategies on making more of jewelry which is acceptable in particular season. So this August till Diwali will be a festival season where we are working on more of lighter jewelry, which will be worn in daily and festival days, and later it will be for the bridal.
Nitin, just to understand now, you mentioned about that the war is over, things should settle down. But a 28% downtick in terms of revenue, or 46% downtick in terms of profits. EBITDA margins have also fallen from nearly 36% to 29%. The rest of the FY26 overall has been very strong. This downtick has happened only in the fourth quarter is what I understand right now. So what has caused this downtick? Is it demand related? Is there any inventory correction that you've seen by retailers, or is it volatility in gold prices?
No, basically the war was at its peak at that time. Luxury jewelry business was affected a bit because if we check in January till March, a lot of effect was there. We were just getting this particular bridal jewelry. It always is being bought with that comfort. That time people were not very sure about what is going to happen. But I think by end of March, things settled down a bit. As I told you that now this quarter which we have just passed on. In fact, this was a good quarter for us. We just came back, and I think now I think so by January and March, if whatever is left, which we could not do, I think it will be coming up in the coming next quarter more. as the demands were there, and I think we will be getting more businesses.
Right. Thank you so much, Nitin, for joining in. Always a pleasure to speak to you. We'll have to cut this conversation slightly short because we have Bajaj Auto numbers that have just come in right now. The revenue number, let me just pull up that. The profit number is coming at 2,983 odd crores, and the expectation was around 2,762 crores, so marginally above what the street was estimating. However, the stock is correcting sharply after seeing that uptick. Let's see what has caused that, because the profit number is pretty much slightly above what the street was estimating. Let me look at the margin number as well. The revenues have come in at 17,244 versus 16,959. So even the top line number is above what the street was estimating with regards to where Bajaj Auto goes. Let's look at the margin. The expectation was 20.1%. The margins have come in at 20.9%. So across the three parameters, the numbers are looking slightly better than what the street was estimating. But the stock now is starting to find its way up. Let's pull up the intraday chart, because at least on the face of it, the three parameters that I'm looking at right now in terms of revenue, margins and profitability, all the three are above, slightly above the street estimates. In fact, let me head across to my colleague Puneet, who's standing by with Sharad to tell us more in terms of what the first cut so far is indicating. Sharad, Puneet, over to you.
Thanks a lot, Hiral. Puneet, the numbers are out for Bajaj Auto. What are the key first cut takeaways?
I think the biggest surprise is actually coming on margins, because we were expecting roughly around 20.3 to 20.4% in terms of margin profile. It's coming at 20.9, and that's largely led by what they have seen higher realizations in the export market. So I think that margin has flown through in terms of the performance visible in the EBITDA numbers. Also in terms of profitability, also that has given a big boost in terms of the numbers as well, because of the higher margin profiles of the export side. So that continues to be one of the key positives. It's also the first quarter for Rakesh Sharma as the joint managing director of the company. So we'll be hearing from the company in terms of what the strategy changes going forward. We'll also have to note on the KTM impact, because this is the first full quarter that KTM is getting integrated after Bajaj acquired it, and now that you already saw the numbers from KTM, which were also strong for this quarter. So all of those factors seem to have worked for Bajaj in this particular quarter. The profitability number at 2,900 odd crore is also higher than the estimates of almost roughly around 2,700 crores that we were working with. So it's definitely a good number in terms of both the EBITDA margins as well as in the profitability metric. Revenue was somewhat also similar, because we already had the volume number for the company, but overall a good set of numbers for the company.
Thanks a lot, Puneet, for that, and we'll get you the details and the internals also for Bajaj Auto. And as of now, the stock volatility is there coming in the counter. But now we are joined in by Avinash Gorashkar also. Good afternoon, Avinash. Always a pleasure to have you. Now just see the Bajaj Auto numbers. Largely, Puneet spoke that the numbers were beating the street estimates. But remember, there's a caveat. KTM integration is also at play. The initial first cut, how do you see it planning out for Bajaj Auto?
I think Sharad, numbers definitely are in line with expectations. I think on the margin front, I think the company has delivered. But yes, I think in terms of the KTM integration, one would like to get the management commentary and what kind of growth the company is penciling in for the current financial year. I think hopefully the first quarter has been reasonably good. I think going forward, if the motorcycle business and the electric scooter business does well, and volumes growth are much better than what the street expects, then I think you should expect a decent uptick on the stock. I think these numbers are definitely not bad. They are in line with market expectations. But probably I think the stock had run up significantly, so some profit booking after the results was anticipated.
So that's definitely we'll watch out for. But another counter, MTA Tech, and we had actually warned you earlier, around 2 months ago, especially on the valuations front. And now we see continuous lower circuits are happening in this counter. Today also the stock is down. One of its important partners, where almost 55 to 65% of revenue comes. That's Bloom Energy I'm talking about. Regulatory issues are coming in. Stock is correcting there. It's also corrected here as well. Remember, the stock is in the trade-to-trade segment right now. Avinash, your views on MTA Tech? We had raised earlier at NDTV Profit on the valuations, and now we are seeing the overall corrections happening.
No, I think, Sharad, this company still continues to be valued at expensive valuations. And I think considering the regulatory issues which you pointed out, I think unless the market gets a little bit clarity on how the numbers are going to be guided, for the current financial year, I would not be surprised that some further selling can be expected. I think since it's T to T, I think there is genuine selling, from investors, and I think the stock will stabilize only when the management gives some clarity on the Bloom Energy deal and how they want to proceed at. So I think clearly avoidable even at these valuations.
Avoidable at these valuations is what you're seeing. But moving on, Bharti Hexacom, that's another one to focus on. And HSBC has initiated a buy. They have a target price of 2050. They're saying it's robust growth and the focus is on shareholder returns. The stock with growth tailwinds amidst a favorable market structure and pure play India exposure and disciplined capital allocation. In fact, Hexacom has a superior growth outlook to its parents, which is Bharti Airtel. And they're expecting FY27 to 29 dividend estimates at around 22 to 48% above consensus. That stock at the day's highest levels. A quick view, Avinash, in terms of Bharti Hexacom?
No, I think this is a good compounder stock, Hiral. My sense is, they've been doing pretty well. And most importantly, ever since it went public, they've been always delivering on the numbers. So my sense is it's a good portfolio stock if somebody takes a 12 to 18 month view. Even at the current levels, if one were to take a fresh position, I would say that the risk reward would be reasonably good considering the fact that, the growth potential still continues to be quite solid. So I think one should add on declines, but yes, from a slightly medium to long term angle.
But another counter is Canara HSBC Life Insurance. Strong set of quarterly numbers coming in, and if you're tracking the sector, the value of new business that has done really well. A healthy growth coming in the product mix also, and the non-ULIP segment is something where the momentum was there in the product mix. Avinash, just wanted to get your initial views on this. Surprisingly good set of numbers operationally for Canara HSBC Life.
Yeah, I think, Sharad, as you rightly pointed out, the VNB has increased significantly. And I think that is one critical, parameter which we see in insurance companies. So I think, this is the startup quarter. Typically, the April to June quarter is the startup season for insurance companies. I think the third and the fourth quarter is typically the strongest. So I think we'll like to, take a call on how the company performs in the next, say, 2 to 3 quarters. But definitely at these levels, good long-term value can be possible.
Stock which was our brokerage call at 9:05, and that is Jindal Stainless. And now look at the stock reaction. The stock is seeing a good buying momentum. Goldman Sachs coming out with a report, and the upside potential significant, almost 20% from the current market prices, and a big beneficiary of the rising domestic consumption. And also the balance sheet is strong enough to support a 2x capacity addition. Avinash, your final views coming in for the stock. Of course, stock is fundamentally doing well as well. How do you see this going ahead?
I think, stainless steel, Sharad, is a value-added kind of product and very few players in the market. So I think clearly, somebody who wants to take a slightly longer-term call can definitely think of adding this in a staggered way. Definitely good numbers, good fundamentals. And I think the next, 2 to 3 quarters should be equally good. So definitely the bias is positive.
With regards to Jindal Stainless as we speak. Now, transformers and rectifiers, Tarol, that's another stock to focus on in today's day of trade. Let's pull up that one on the screens. Stock slightly under pressure as we speak. It's weak execution. The order inflow is though up 218%. The backlog is up around 26%. Revenues, a marginal uptick of around 8% coming in there. The low growth is due to low utilization at the Changodar facility, and the expansion is expected by August 2026. So there could be pressure that could continue in the second half as well from an execution perspective. The company has maintained a healthy pipeline of close to 23,000 odd crores. So the order book is very strong. Backlog is going to be an issue because execution is going to be an issue as well. And only by August 2026 is when you will know whether they're able to come in on stream on that front. Avinash, quick view with regards to Tarol?
I think it continues to be a hold from our side. I think order book and order inflows have been good, but as you mentioned, execution has been weak. So I think until the market gets a sense on how confident the market is, the management is in delivering the execution side, I think the stock will remain in a small range. So we continue to maintain a hold. No fresh buying suggested.
No fresh buying suggested, but continue to hold a Tarol if you have one. But thank you, Avinash, so much for joining in. Always a pleasure to speak to you and get your views as well. But moving on. After a pause of 13 years, one of the most prestigious honors in Indian business is back. On the 26th of July, NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies, and entrepreneurs who have helped shape India's economic journey. And the nominees for AI Champion of the Year. Sarvam AI, building India's answer to global AI giants. NESA, creating the critical GPU infrastructure powering the nation's next generation of AI innovation. Fractal Analytics helps place Indian AI expertise on the global map through innovation-led problem solving. Cure AI, using AI to detect diseases before the symptoms become fatal. Karya, built an ethical model that empowers underserved communities while creating high-quality AI training datasets. Emergent, redefining how applications are built in the era of autonomous AI. This is something that everyone is going to look forward to. Lots of categories that are there, and trust me, you are going to enjoy to understand who's the winner and why on the 26th of July. Only on NDTV Profit we will be streaming live. So please stay tuned and keep yourself free. So Sharad, I think
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P-Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing the committee of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time. Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website. They built, they led, they redefined the business conversation. Now, India Inc.'s finest takes center stage. Who will win the NDTV Profit Business Leadership Awards? 26 July on the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Benchmark slipped to the day's low. Nifty 50 hovers near 24,160. Sensex meanwhile sheds more than 270 odd points. PSU Bank as well as IT top sectoral laggards, realty and metal on the flip side remain resilient. And slew of companies buzzing after reporting earnings as well, while Canara HSBC Life delivers a healthy set of numbers coming in. Weak quarter weighs on transformers and rectifiers, and Bajaj Health Paytm edges lower despite earnings beat. And the latest addition, Bajaj Auto as well, that reports a strong set of numbers in the first quarter. Stock reaction awaited. Karur Vysya Bank shares jump after the lender posted a robust June quarter performance. Net profit surges 45% on a year-on-year basis. Robust earnings growth supported by strong interest income and sharply lower provisions. SBI Funds Management extends gains after strong stock market debut, listing nearly 7% above its IPO price. With the listing, the company has become India's second largest asset manager by market capitalization. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's also talk about everything that is happening with the markets also right now, and it's a little bit of pressure that you're seeing coming in. Look at Nifty 50 at almost at its day's lowest point as well, about a 90 odd point cut coming in. When you talk about Sensex as well, about 270 odd points lower as well. Let's take a look at now. It's actually deepened with that 340 point cut also coming in very close to the day's lowest points as well, and hovering very close to that as well. When you talk about the entire list of gainers and losers in terms of sectors, let's also take a look at that as well, because it's actually IT that's in focus. There's of course PSU banks that are definitely in focus as well in terms of the sectoral performance right now. PSU Bank as well as IT are the top sectoral laggards that you're looking at. That's the kind of sectoral picture that you have at hand. So a little bit of a mixed negative bias that you're really seeing coming in terms of some of the sectors right now. And when you talk about the list of gainers and losers from within the Nifty 50 pack, it's actually the earnings buzzers that make it to that list. So PSU Bank, FMCG, IT, in terms of sectors on the back foot, what's doing quite well is metals, realty, pharma, as well as auto. So that largely seems to be the sectoral flavor right now, very sharply tilted in the favor of red as well. But when you talk about the list of gainers and losers, let's quickly take a glance at that as well from within the Nifty 50 as well. You do have a bunch of earnings counters that are going to be remaining in focus as well. So something like a transformers and rectifiers after a weak set of numbers from within the broader universe, that one's in focus. When you talk about some of the other companies as well, something like an Aegis Logistics with that 3.5% odd cut also coming in. And when you talk about the entire Nifty 50 pack as well, it's actually HDFC Bank, Infosys, Power Grid, Trent, TCS, some of those names. Even heavyweight Reliance also not doing any heavy lifting at this point in time with that 1% cut also coming in. When you talk about the list of top gainers as well, something like a Shriram Finance remaining resilient, some of your IT counters, and some counters on the back of their earnings and specifically the brokerage upgrades as well, the likes of Ultratech Cement. Some of those counters also holding quite resilient right now from the entire Nifty 50 pack as well. But it's actually the entire auto space that's also a little bit in focus on the back of the numbers that have just come out. When you talk about Bajaj Auto just a short while ago as well. And that stock is in focus on the back of a strong set of numbers in the first quarter, and it's actually the profit that's risen about 42.3 odd % as well, and that stock is in focus. When you talk about the entire Nifty Auto pack as well, as you can see, some of the counters like Exide are remaining quite resilient. And when you talk about Bajaj Auto as well, that's in focus on the back of the revenue uptick as well as the profit and EBITDA uptick. So across the board, decent numbers, and on the back of that, that stock is in focus. But what else is in focus is, of course, oil prices that are remaining a little bit steady right now. In terms of the kind of move that you have coming in, it's actually a couple of factors that you're looking at in terms of oil as well. When you talk about Brent, you're seeing a little bit of weakness coming in. WTI, some bit of strength as well. And a couple of factors that are very important to watch out for here. On the one side, you do have the ceasefire efforts that are really keeping the market on edge. and you do have those hopes really cooling crude's rally. On the flip side, there's actually shipping risks that could be oil's key wild card as well. And on the back of that, oil price is something to watch out for. Same can be said about gold, where there's actually a lot of catalysts right now at play. In fact, NS Ramaswamy, head commodity desk and CRM at Ventura, joins us right now to get us a check going in terms of all of those catalysts that we're going to be talking about as well. Thank you so much for taking time out and joining us, and a very good afternoon to you.
Good afternoon.
First things first, just wanted to try and understand what you think about the sort of movements that you're seeing coming in terms of the double-edged sword for oil prices right now. On one hand, you do have, it's a tale of two triggers really. On one side, you do have the shipping disruptions. On the other side, there seems to be a little bit of optimism building when it comes to peace as well. How are you looking at that entire picture, and what kind of levels are you pricing for the rest of the week?
Yeah, it's a mixed scenario, as you rightly pointed out. But if you also were to check the inventory levels of crude oil, if you were to see the US strategic reserves, that's remaining at a very, very historical low levels, and the global inventories are also continuing to shrink. So these are one of the triggers that is again giving, besides the fact that the geopolitical tensions are still between the US and the Iran continuing to escalate and not giving a very clear direction. And these high energy costs are in fact for the US and the Federal Reserve, it's reigniting the inflation tensions, and that could actually keep the interest rates elevated for a longer period. So basically, whether it's going to then support the US dollar, it's going to support the treasury yield, and these are the impact of the crude oil, which is going to actually, and we need to actually wait and watch. As an economic data, if you were to see, the Federal Reserve is coming out on 27th and 28th of July with the FOMC meeting. We need to see how they are going to work out. Crude oil inventory report is coming up tomorrow, the day after, Thursday, 23rd July, and that's also going to give us a very clear stand about how ECB is going to work out on their interest rate decisions. So basically, the macro picture, it is a mixed feelings as regards the geopolitical tensions as well as the fundamental driven factors which are seeing in the oil.
Absolutely, and when you talk about US pump prices as well, they crossed about $4 again on some of those renewed tensions and some of those higher energy prices across the board that we've been seeing. When you talk about oil as well, it's been definitely in focus, but in terms of how high oil can go also, what kind of levels are you looking at on the upside if there is this significant escalation? And on the flip side, if there's a de-escalation of sorts, what do you then expected by the way of prices?
It all depends on how technically the traders would take up the bull rally beyond these levels. The tensions have to, the escalation has to ease out. If the escalation continues, even if you were to see the latest Goldman Sachs report, which is talking of even $120, which is slightly very unimaginable that would the crude oil prices shoot up to those levels. But the way the trend is going on, if the geopolitical tensions continues the way it is, it would still range in that $85 to $90. So I don't see that crossing those levels, but definitely in that 85 to 90 level with the present technical move that we saw right from $69, $70, we are seeing this because of also the factor which I said, the inventory levels. We need to wait and watch on 23rd how the inventory levels are being talked about and the geopolitical tensions are going to get escalated or not. So 85, 90 are the range which are likely to be the spike that could happen.
Absolutely, and we'll talk about that report as well in just a bit. Just quickly wanted to get a sense of what you think about gold prices as well. It's been a little bit steady, but it's actually the $4,000 announced level that's quite important to watch out for as well. Do you see that level also being maintained this week?
Yeah, it's very, very good performance by gold. It's been a very much a pause. It's not shown any bearish indication by breaking those supports of 4,000. Yes, briefly it came down to 3,980 levels. Basically, it is under
tremendous pressure fundamentally as well as technical, because factors continuing to favor the US dollar and also the persistent expectations that a very hawkish Fed Reserve trend should come up. That is combining with the geopolitical tensions which I just now mentioned about the oil. So those are the triggers that can take up the inflation and the Fed. So gold is slightly remaining under pressure. If we were to see a decisive cross beyond $4,080 per ounce, and if it crosses the 4,150 level, and that is the thing where we can say the consolidation phase is broken and could start changing the trend. Reversal could start beyond $4,150 per ounce.
And what do you think about the higher yields also remaining gold's biggest headwind? Because that is something that we've been seeing as a little bit of a key concern as well when it comes to gold.
Basically, if you were to see the yield, we need to see not only the 10-year yield, we have to see the way the 2-year yield has been surging. The 2-year yield is almost close to 4.20. So it's actually peaked somewhere. So during July 14th, if you were to see, it was around 4.29 or 4.30. So this 2-year yield and the 10-year yield has to tame down. And as we said about the geopolitical things, and this yield is one factor which can turn around the situation. The way the ECB is very crucial, because dollar index almost 41% contribution is from the European Central Bank. So we need to wait and watch how the currency impacts and the dollar index, and that could also drive the yield. So yield is very much favoring towards the dollar index, and it is a pressure building on the gold.
And when you talk about the report that we were talking about earlier as well, you do have Goldman Sachs really talking about how some of the escalation in the Middle East and the decline in the estimated Persian Gulf flows to below 45% of pre-war levels. That's something that seems to have pushed prices back up according to them. But when you talk about that base case, it's actually quite lower in terms of that average at $80 a barrel. Are you then penciling in that similar kind of level if there's a de-escalation? Of course, there's no sort of outlook that we have at this point, unless that really happens. But that's something that you would be looking at as well in terms of prices.
Basically, we need to go to the economics of demand and supply part of it. The demand is because even now from the Hormuz, the shipments aren't moving around. So that there can be a pressure on the crude oil as regards the demand part of it also. So let's not forget that aspect of it. If the crude has to really come down, but then if there are scope that $120 is whatever estimation which he has talked about, they are predicting. We see those levels even only at around maybe 85, 90, which are very crucial resistance level. We do not see that crossing those levels at this point in time. The inventory, which I repeatedly would like to mention, how that is coming out and giving an indication whether the dependence on the crude oil inventory is giving a situation as regards the supply side of the crude oil also.
No, absolutely. That supply side is definitely in focus, and it's all back to demand-supply fundamentals, especially in the face of all of the supply concerns that seem to have been mounting on the back of the escalation as well. Thank you so much for taking time out and joining us this afternoon. So there you go. That's the entire outlook coming in terms of oil prices, and also Goldman Sachs saying that $120 a barrel is also not very far away if the Hormuz conflict really persists as well. But let's also move on and talk about a key conversation in terms of Nimesh Chandan, CIO at Bajaj Asset Management, also talking about the ongoing earnings season and why he also believes that crude oil remains the biggest macro wildcard coming in for the markets. Let's go across and listen in to that bit of conversation.
It is my pleasure to introduce you to Nimesh Chandan, the CIO of Bajaj Asset Management. Nimesh, it is my pleasure to speak with you as always. Let me ask you about what you've made of the initial trends that you're seeing this earnings season, particularly at a time when just as we thought that the external front pressures would dissipate, they've once again seared upwards, right? So crude oil price back at close to $90 per barrel, but it seems like the print on the earnings is better than a lot of people had anticipated. What's your thought?
Hi, Alex. Always nice talking to you. If I were to summarize our view on so far the result season, I would say positive surprise. We were expecting after all the geopolitical issues, the issues 2 months back, we were worried about oil supplies, gas supplies, inflation rising, super El Nino. Now, compared to all that, and now the result updates which have come in, or the quarterly updates that some of the companies have given at the beginning of the quarter, they look much better than expected, whether it is credit growth, whether it is consumption growth. So actually, we are positively surprised. Certain sectors are expected to be under pressure, like, for example, IT, where we were expecting slower growth. And that has impacted their valuations also. So that has gone as per expectation. So net, while we don't see a very sharp increase in earnings for the Nifty so far, but with the results that have come, the trends are definitely positive.
Nimesh, Hiralia, the trends are positive. Now, if you have to correlate that to what's happening in the markets, down what, less than 10% at least from the last highs as well in terms of Nifty 50. But what is concerning is that we've always remained range bound in the recent past right now, and that's what investors are concerned about. In that kind of a scenario, are you seeing any green shoots where investors should start looking at in terms of sectors then?
That's a very interesting question. Internally with the team, we've been debating whether we should give a market outlook only based on Nifty, or should we actually give a separate outlook for mid caps and small caps. Look what has happened in the market. Small caps have had a fantastic rally since March. And the index is up more than 25%. Similarly, mid cap index is at a new high. I think small cap also intraday it went to a new high. So it's a Nifty which is under pressure. Nifty is seeing some of the sectors, some of the companies having some specific issues because of which the overall earnings growth is looking a little muted, and it is also affecting the valuations. So while Nifty, we are still bullish, we still think that the intrinsic value of Nifty is around 27,000, which means we are hoping for a new high soon. But the momentum in earnings and in stock prices of mid caps and small caps is fantastic. Even in terms of sectors, we see green shoots, or we see positive commentaries from most of the sectors. IT is the only sector where we see some kind of pressure. In banking also, though the stocks have reacted very sharply, but if you see, the numbers are not that bad. And many of the large companies are seeing a turnaround in their credit growth numbers, in their NIMs. So that will continue for the year. So, and valuations are very attractive. It takes a little bit of patience. So I don't know which one will move first, but there is a good amount of companies to select from. If you're looking at the broader market, say in BSE 500, you can create a fantastic portfolio today which has quality, growth, and value.
And there you go. So that's Nimesh Chandan talking about the earnings growth and outlook that we've seen coming in, crude prices. But one thing that's interesting that he's mentioned is also that sharp reaction coming in for some of those banking counters as well. When you talk about something like a Bank of Baroda down about 2.5%, HDFC Bank down about 1.5%. Some of those stocks are also in focus from within the Nifty Bank constituents as well. And when you talk about HDFC Bank, there's actually a very interesting other update that we also have coming in when you talk about this particular counter. Reports are suggesting that HDFC Bank has delayed recommending the reappointment of MD and CEO Sashidhar Jagdishan also to the RBI. In fact, Sharad is standing by with all of those important details as well. That stock is almost at the day's lowest points right now. Sharad, let's talk about this latest development.
Well, there is a concern coming in for HDFC Bank, and media reports are suggesting that the HDFC Bank CEO's reappointment has been delayed. Now, if looking at a little bit of details from these media reports, it's suggesting that there will be a board review, but it's actually delayed right now, and the independent directors have taken this extra review before recommending the CEO's appointment to RBI. Also, the board aims to finish the review at least in the first week of August. That means there is a delay at play, and bank is yet to recommend the reappointment appointment of the MD and CEO Shashidhar Jagdishan. But I'll just give you a little bit of background also. The CEO Shashidhar Jagdishan's current tenure ends in the month of October, and earlier the external legal review team had given a clean sheet on the governance of the bank, and there was no substance coming in from the ex-chairman's claim as well. As he was Atanu Chakrabarti, who had resigned abruptly in the month of March. So yes, there is overhang in the stock, and that's what we are seeing in the street right now.
Absolutely, and thank you so much for getting us all of those details. Let's talk about the newest kid on the block. Let's also talk about SBI Funds Management and try and pull that counter up for you as well. You're looking at somewhere close to 8% gains also coming in on that particular counter. And when you talk about the listing, it was somewhere close to a 7% premium as well. Right now, when you talk about some of the key commentary also coming in from the management, they're talking about how SBI is backing in terms of, it's a key driver coming in for SBI funds as well. Let's go across and listen in to that bit of commentary from the management as well.
The SETI, of course, SBI's parentage was very important to the listing here and pushing this forward. How strong, how did SBI approach this listing? In that sense, how did that brand name sort of build out the reputation and the premium that this listing has brought through? If you could take us through that a little bit. Similar question to you, Mr. Calgon, with Amundi's role here, what sort of role did you play in getting this IPO forward and building this out in the way it did?
So coming to SBI, I think it's not only the largest distributor of the mutual fund products. As I mentioned in my speech also, that we wanted to bring this investment opportunity to a large number of retail customers what we have. So probably the value creation is not only in terms of what SBI FM has been delivering on their schemes, it is also a fact that they have the backing of the largest parent company. And what we would like to assure all the stakeholders is that even before listing, this company was having the best governance practices of both SBI and Amundi. I think that's a value which we have created over a period of time to all the subsidiaries what we have. We almost have 18 subsidiaries, and the value creation what you mentioned, I take pride in mentioning that our investment in these subsidiaries is about 6,000 crores as we speak today. Hopefully maybe a month later the number will change. We are valued at 4 lakh crores. I think that's a value creation for all the stakeholders we have done. And in the process we also have created institutions of enduring value in the financial services. You would like to take the rest of the question? Or Olivia, you would like to join?
As for Amundi, we try to bring a little bit of our experience. As you know, we are a listed company. We have lived through this process a bit more than 10 years ago, being listed in Paris. So we had the experience and we tried to share it and to advise SBIFM in the process. And I think a second dimension we brought is probably during the roadshow, the contact with international investors. Of course, SBI and SBIFM has a lot of contact with international investors, but we could also help in that regard. And Olivier has been participating in roadshows alongside Chairman SETI in that regard.
All right, then there you go. So that's the key commentary coming in from the management of SBI Funds Management as well in terms of what the growth roadmap really looks like as well. But let's also move on and talk about Shadowfax that is facing a major lock-in expiry tomorrow. While investor selling remains a key risk as well, the stock trades at a discount to delivery and also retains analyst upside potential. It's quite the unlock test that you're looking at when it comes to this one.
Exactly. And will the Shadowfax actually come out of the shadow from the lock-in expiry? That's the key question to be asked, and we'll try to understand. But what's the value unlocking test for Shadowfax? And that's going to happen in tomorrow's trading session because that lock-in expiry opens up. Of course, a lot of bullishness is there. But let's just do a revision of the important numbers. It listed at an 8% discount, but the stock has doubled from its listing pricing. Also, it's 10% down from 52-week high. So, little bit of profit booking is definitely at play. But what happens tomorrow? 49% of this total shareholding unlocks and shares worth almost 6,300 crore rupees tradable. More volumes coming in. Will there be a follow-on buying or more sell-offs? Almost 37% is held by PE/VC investors. A big monetization risk in this counter, and further 22% stake, which is locked in, will be also coming in for the the expiry. Looking at the numbers, how they stand, and I have done a comparison, a very interesting one with delivery. The EV sales, the 12-month forward numbers, if you look at it, Shadowfax versus delivery, that's still on the cheaper side. The non-promoter investors, just keep these numbers here. We see largely Flipkart is there, and Mirai Asset, Nokia, all of them having stakes. So there might be unlocked value shares coming in and profit booking might come. So this is the numbers you should be tracking. These are the non-promoter investors. So this is the entire picture when we compare Shadowfax with delivery, and value unlocking might be there at play as well. Of course, the valuations also slightly on the higher side. So that is why there might be a sell-off, but that's what we are trying to show you. And the return potential also, largely stock has run up. It's around 11%, but see, the analysts are less, and delivery analyst coverage is more, and 17% retention. So a little bit of attractiveness coming in, especially for delivery. And this is the entire picture of Shadowfax, and let's see whether it will pass the unlock test or not tomorrow.
No, absolutely, and thank you so much, Sharath, for joining us with that update as well. So that is one unlock test that you're really watching out for, whether Shadowfax really comes out of the shadows as well. But let's also move on and talk about the RBI saying that banks have mobilized over $17.4 billion under the FCNRB deposit scheme since June 8 till July 17th as well, and highlighting some of the strong investor response to measures aimed at boosting foreign exchange inflows. In fact, banks have also raised $1.97 billion through the OFCBs and $1.34 billion via the ECB facility. You do have Nimit Dixit joining in with some more details when it comes to this one.
Absolutely. So since this special swap scheme launched on June 8th, the banks have raised $20.72 billion. Now, this is between June 8th and July 17th and can be broadly divided into three categories. First, the big category, the FCNRB deposits, have contributed $17.40 billion under this. After that, like you already said, banks have raised $1.97 billion via overseas foreign currency, and the ECB route has contributed $1.34 billion. Remember, the RBI had launched this scheme to attract dollar inflows and a stabilized balance of payment. Apart from this, the RBI swap scheme has also offered full hedging cost support to banks, and it's covering 3 to 5 year FCNRB deposits that are raised by banks. The big bottom line here is that the RBI expects that the special swap measures, sorry, that's a tongue twister, to attract about 60 to 70 billion by September.
And thank you so much, Nimit, for getting us all of those details as well. Let's also wrap the show on that note, but as we do that, after a pause of 13 years, one of the most prestigious honors in Indian businesses is back now on July 26th. NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies and entrepreneurs who helped shape India's economic journey. And the nominees for the IPO of the year are Meesho, a listing that showcased the strength of India's digital consumption story and the growing maturity of its startup ecosystem. Next up on the list, Grow, bringing one of India's most recognized fintech brands to public markets. This nominee captured the imagination of a new generation of investors. ICICI Prudential AMC up next, a landmark listing that highlighted the rapid evolution and growing importance of India's asset management industry. Let's also talk about the next nominee, LG Electronics India, one of the year's most anticipated public offerings, combining global brand strength with deep consumer trust in the country. And Lenskart is also on the list, a category creator that successfully translated consumer leadership and innovation into a compelling public market debut.
Superstar Stocks of the Day, presented by Tata Azura, हर रास्ते का सुपरस्टार।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com.
Welcome. You're watching Small Cap Buzzers with me, Varsha, and my co-anchor Somit Sarkar. Well, let's see what we're going to cover on the Small Cap Buzzers today. Firstly, we're going to speak to the management of CSM Technologies. Well, the talking points or why we are speaking is on the back of strong numbers that they've posted, Q4 FY26 numbers, because they are recently listed company. So we've seen a sharp rise in Q4 margins. Is this sustainable is one thing that we want to know from the management. Order book, if you see, started around 1.5x of FY26 revenue. What's the execution timeline of the order book? We'll get the details from the management. Moving on, the next stock which we are going to discuss is Ashiana Housing. They have actually, the stock is buzzing because they've converted 224 units into booking of sales value of around 372 crore. In fact, the stock has seen highest level in 24 months. It's the biggest single day gain since Feb 2026. We're going to speak to our fundamental guest on Ashiana Housing. Next stock which is in focus is Nelka. So if you see a snap 2-day losing streak, the stock has gained 60% since Feb 2026. Then we'll also talk about Tarsan Products. If you see, the stock is buzzing. It's set to hit a 10-month high, gains over 55% in 25 sessions. What can be the key trigger and what's the outlook? We'll also speak to our fundamental guest. Lastly, we're going to speak about iFinance. The stock has seen new all-time high on a 3-day gaining streak and biggest intraday gain since April 2026. So this is all the stocks and the management that we are going to discuss on Small Cap Buzzers. Now, moving to the market, let's see what Nifty 50 is doing. It's down almost 65 points, hovering between the 64 to 67 points. I would say it's trading at almost 24,175 levels. Let's pull up a sectorial heat map. Let's see which are the sectors in focus. Well, metal, realty and pharma, if you see, are in green, but over here Nifty IT is down almost 0.6%. Nifty energy is down, but pharma, maybe being a defensive one, is up. Nifty realty is also gaining. Nifty auto is up almost 0.22%. Let's see what mid cap 150 is doing. In a green today, yeah, it's almost up 0.26%, up almost 60 points. Let's see small cap 250, well, up almost 70 points, 0.39%. So I mean, okayish day when it comes to mid cap and small cap. But Somit, which are the small cap stocks which are buzzing on the back of maybe volumes or Q1 numbers?
Well, a host of stocks. In fact, as you were mentioning, that the small cap index has been outperforming the benchmark here. It's up around 0.5% in trade. But which are the key stocks? It's Jindal Worldwide, which is up 19%, Vimta Labs, iFinance, Darson Products, Supreme Infra up anywhere between 10 to 13% in trade. In fact, Nelcast is also up 10% in trade. Now on the flip side, if you look at stocks like Panacea Bio, Amal Limited, Commercial Sync, Turtlemint Fintech. Now Turtlemint Fintech yesterday was up, but today it's down around 5%. Citipulse, Schneider Electric, President, National Standard, all these stocks are down close to around 5%. Sumit Industries, that stock has also locked into a lower circuit of 5%. Now do remember that the rights issue is ongoing for Sumit Industries, so that could be the one of the reason why the stock is down in trade. On the volume side, Ashiana Housing, very strong volume numbers that we are seeing, followed by Tina Rubber, Meghmani Organic, Rajratan Global and Nelcast. The volumes are quite strong in all these counters that we are seeing in trade today. Well, apart from that, it's SH Kelkar, Vishnu Chemical and Lords Mark Industries that has also been buzzing in trade. But let's move on to our management on the show today. That's Priya Darshani, Managing Director and CEO of CSM Technologies. Sir, welcome to the show. Firstly, to start off with, sir, if you could take us through the government and... Okay. Firstly, I would want to check with you on your order book. For FY27, where does your order book stand right now, and how much of the order book growth is something that you're expecting for this financial year?
Hi, good afternoon, and thank you for the invite to this show. So March ending, we ended somewhere around 360 odd crores, 358 odd crores. And ours is a multi-year contract, 2 to 3 years it takes to execute. So while we had a very strong order booking starting this fiscal, we are also very excited to sign new deals in the current fiscal.
Understood. Hi sir, Varsha this side, pleasure to have you. You know, the 358 crore order book that you have, I just wanted to understand, you know, before I go to financials, I want to understand how much of this is how much of this will you execute in FY27 and in FY28?
So typically, you know, as I just mentioned, you know, our contracts are to be executed in multi-years. It takes 2-3 years, very less 5 years contract. Typically, an order that may have been signed last year, you know, 40% of the revenue comes from 25 to 30% of the revenue, or sometimes 40% of the revenue that comes from the existing orders. From the new orders, we expect roughly around 25% of revenue. And of course, there are, since we manage long-term customers, there are a lot of support and maintenance that goes on, change requests that keeps on coming. So roughly around 25% comes from there.
Revenue grew 14%, but there was a good spike when it comes to your EBITDA, which rose almost 57%. Just wanted to understand what are the key drivers behind this sharp margin expansion, and are these margin sustainable for FY27 as well? And I mean, what kind of guidance would you give when it comes to margins?
So margins are going to be sustainable in this fiscal. And last year, for improved efficiency, that the organization invested into a lot of R&D, a lot of investment into platforms that went, that has helped in increase the profit margins.
I wanted to understand, what's the guidance that you would want to give to investors for FY27? What's the revenue growth that you are expecting in this financial year?
See, revenue, we would be growing at a steady rate, how it has been in the last year. And our profits also are going to remain in the same double digits as we go forward.
Right, sir. So 70% was the growth that you reported in FY26. You are expecting similar growth rate, or this would come down given the high base now?
See, we should, as I explained, typically, we are a factor every year. It depends on the amount of order books that we have and the new deals that we sign, because it takes 2 to 3 years to execute projects. So we are having a very healthy order book, and we are expecting some good deals to be signed this year. So we will be growing more aggressively. And what we need to look out at the order bookings that we are going to have in the current year.
Also, if you could just tell me, given the fact that you deal with a lot of government clients as well, any delays in payments, any working capital issues that you're facing?
Delays in payment, see, government works, I mean, there are time that it takes to get approvals. And money is secured, but yes, sometimes we do face some delays in getting the realization, which is a part of our business because we've been doing this for good 28 years. So we know, how do we safeguard ourselves from liquidity point of view.
Okay. Also, you are looking to expand into international markets as well. Could you just take us through what is your current presence here? Say 2 years down the line, how much would international markets contribute to your order book, to your revenue, and which are these markets?
See, Africa, like we have been growing geographically and expanding geographically in India and in international markets. Africa remains as one of our largest bet for us. Our delivery center from Nairobi has been doing pretty good. Recently, we just picked up an order from the government of Malawi in the eastern part of Africa. We work in countries like Kenya, Mozambique, Malawi, Ethiopia, and on the western part, we work in Gabon, Gambia. So these are, we see a lot of potential in African countries because the spend in digital modernization is very high. They look up to India, of course, for the good work that has been done by our central ministry and the state governments. And there is a high replicability that we see. As a company, since we have invested, we had the first mover advantage long years back to focus on GovTech. We see similar opportunities coming out of African countries.
Sir, if you could also provide us the order book split between, government and private sector orders?
So typically, as we say that we are a GovTech focused company. So most of our orders will be from the governments, which is the state government, central ministry, authorities, or agencies, even in Africa also. So whether they are departments or ministries, the central governments or the state governments, we can say 90 to 10% split between the orders from the governments and to the public sector, private sectors.
Do you have any target to, change this percentage to where you want to take the private sector contribution to your revenue, maybe in, next 2 years?
See, we realize, and that's what we've been saying, the digital public infrastructure spend is going to increase year on year. Post-COVID, it has leapfrogged many years, and the governments will stay to remain to keep on modernizing, to keep on adapting IT for welfare of the citizens and the industries. So we tend to grow in this sector in different geographies.
Right, understood. Well, thank you so much, sir, for joining in and having a conversation with us. Pleasure to have you at our show. Thank you so much.
Thank you.
Well, this was CSM Tech, a recently listed company outlining the growth outlook for the next 2 to 3 years. But with that, let's also invite our fundamental guest for the show, Girish Sodani, who's the Vice President at Choice India. Girish, what's your view when it comes to CSM Tech, a recently listed one, into the government sector, more into the government sector, I would say. What's your take on this counter?
So again, come to when we talk about the IT segments, because these particular sectors heavy pressures from the obviously geographical tensions. But if we talk about the small cap now, the small cap and the mid cap companies are doing a very fantastic position in the terms of margins. Look at out the GSM also. So GSM is basically a very strong numbers in the terms of margins as well as the PAT. But against there's a very red flag we talk about for the client perspectives right now, and almost 90% come from the government based, and especially the 10%. But the companies are performing in the terms of overall numbers as well as the margin propositions. The companies have a strong order book terms in the valuations also. So the earning perspectives is very strong. But if investor have the view of approximately 2 to 5 years down the lines, I think this stocks can be run out very good portfolio margins funds. And the long-term perspectives looks a 15 to 18% CAGR, what we are looking out for the small cap companies, especially CSM Technologies.
Right, got that view. Well, viewers, time for a quick break. Stay tuned to NDTV Profit.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क.
इस बार तो माँ से भी बेहतर बना.
P Mark, the mustard specialist since 1933. बरसों से सरसों. कुछ तो बात है इस दिल में.
This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise and excellence meet. In the presence of the Finance Minister, Nirmala Sitharaman. NDTV Profit Business Leadership Awards, 26 July on the NDTV network.
Welcome back. You're watching Small Cap Buzzers. Well, let's see what Tarsan Products is doing. Let's pull up that chart. The stock is up almost 10% in trade. Now, so several key factors or key triggers working for this company. First is, of course, the massive capex cycle is ending. Now, utilization cycle, I would say, is beginning. Near-term PAT may remain weak due to the high depreciation and interest cost, but FY27 is likely to be a transition year for the company. Bioprocess, cell culture are the key drivers when it comes to FY28. Now, talking about the bioprocess opportunity, well, the ramp up over here is progressing well. Production has already started. Cell culture opportunity, well, company has been speaking about this since last 2 to 3 years, and finally we are seeing this to be played out in favor of the company. They've launched products recently. Customers are currently conducting validation and trials. Significant demand ramp up expected around FY28. This cell culture will actually be the growth driver for Tarsan Products, if not. Capex story, 4-year expansion program is in final phase. Most facilities are already commissioned and operational, and the remaining facilities should be commissioned in H1 FY27. FY27 will be a peak year when it comes to depreciation. You might see some kind of pressure in earnings because of the high depreciation. Focus will be on utilization, cash generation and debt reduction overall. But stock is up on the back of strong volumes, but these are some of the key triggers that might work for the company. Girish, any view on Tarsan Products?
So obviously the fresh allocation is not advisable. Already a sharp momentum rally have already seen almost a 50% off from the low itself. In the terms of fundamentals, the companies are already remained a growth. Basically, a top line remains a steady, almost a 121 to 124 crores in the quarter 4. So overall the steady business numbers we are talking about, but for the next propositions, at least if anyone or particularly any investor particularly hold this counter, then hold for the 350 to 380 levels for the 18 to 24 months, but not fresh allocations are advisable. Let's wait and watch for the 275 to 280 levels. If you got the opportunity, you can easily enter on that particular counter.
Well, the next stock in focus is Ashiana Housing. The stock is trading, I believe, at its highest level in the last couple of years and its biggest single-day move since Feb 2026. Even on a YTD, or even in the last 6 months, the stock has moved up 35%. What could be the potential reason behind this outperformance? Let's try and understand that with Parth.
Yeah, that's right. Ashiana has seen incredible momentum in trade today, and this is mainly because of two reasons. The first one is that the company has converted 224 units of booking of sale value of 372 crores, and second, they had a really good FY26 overall. If we look at FY26, then it was one of the strongest years for the company. They achieved a record level of bookings, collections, cash flows, and profit. So in all of the frontiers, it was a really good year for the company. The bookings were up over 25% year on year. The senior living segment that the company is focusing on continues to be the biggest driver for them. In fact, in FY26, that surged 55% to reach 570 crores. The collections as well touched over 1700 crores, while operating cash flow also saw an uptick of 34% to reach 577 crores. The construction on the execution front as well, the company is delivering well. Their execution saw a growth of 30% year on year. That actually makes their deliveries faster. So that is also a trigger that is giving us this kind of move. If we look at the Q4 performance, revenue was up 46% year on year, while PAT was flat at 21 crores. However, bookings jumped 124% year on year, and average realization also saw a growth of 70% year on year. Now, going forward, the management wants to carry this momentum into FY27 as well. They have already added 3 senior living land parcels in Maharashtra, which have a combined sales potential of over 3,200 crores. Now, they plan to add 5 more of these senior living launches over the next 2 years, which have a pipeline of 6,500 crores. These senior living packages are expected to cross 700 crores in FY27, and the key monitorable that the management has said going forward is that in FY27 they are targeting a pre-sales value of 2,200 crores. Now their execution and margin expansion will be also something that we need to monitor, because this senior living segment is a very high margin for the company, so it actually gives them quality earnings. So this is the overall outlook of Ashiana Housing, and we need to track that senior living segment, as I said, because it is something that will be their future earnings driver.
Right, Girish, how are you looking at this counter, Ashiana Housing, as Parth was mentioning that the senior living segment is something that could lead the outperformance in the counter?
So all the Ashiana's fundamentals looks very, very strong. So if we talk about the pre-sales numbers, total revenues, profit, PAT, amazing performance in the financial year 2026. In the terms, what the major reason behind it? It's more into they are working on the asset light model, joint development model, basically a collaborations model, we can say that. Apart from that, they are just shifted from the tier 2 cities to tier 1 cities now. So particularly this expansion is going to be improvised in the next few quarters numbers, but more looking out for the at least 2 to 3 years, because the whole developments and the pre-sales numbers should be reflected in the financial year 28 and 29 itself. So overall, the senior living proposition status, the Ashiana's looks very, very strongly built up, but for the long-term perspective of at least 2 to 3 years.
Thank you, Girish. Thank you for joining us and giving us your perspectives on the stocks that we discussed. Moving on to our next stock, that is Nelcas. The stock has snapped its 2-day losing streak, but the interesting part here is that the stock has moved nearly 60% in the last 4 months. What could be the potential reason? Let's get in Jasmeet to understand more.
Samir, thank you for that. We do see that the overall stock momentum for this particular counter has been seeing a positive up moves over last 6 months to 8 months. But over last 1 year, the stock is down about 8% and still seeing that pressure. Now, in terms about the company operates into the business of manufacturing iron cast for various segments across off-highway and on-highway items. Now, if you look at the Q4 was a good quarter for the company, as we have seen the overall growth in terms of the revenue and EBIT margins as well. Further, we also note that the overall volumes also grew by nearly to nearly 25,900 tons versus 23,100 tons on YY basis. Further, if you look at the raw material, the overall input costs had increased in the quarter on the back of the tariff, which was impacted in the month of Jan and Feb. And so far, the company expects that to ease off and cool off in the coming quarter as well. Now, if you look at the other key highlights, the overall PIDA Priya, the particular plant of the particular counter, or this particular counter has hit the highest capacity utilization of nearly 35% in so far in FY26. Now, if you look at the management, they expect the overall increase of this utilization to go up to 40 to 45%. If you look at the key outlook, they remain pretty bullish on the particular counter. Management also expects that the overall revenue growth will be 10% CAGR over the next 4 years from FY26 to up until FY29. Further, they also expect the EBITDA per ton of realization to reach 18 rupees per ton versus the current price of 13.5 odd rupees. So we do see the overall management commentary being bullish, and that's the reason why the stock has been buzzing in trend at about 60 odd %.
Right. Well, thank you so much, Jasmeet, for all the details. So moving on, iFinance is one stock which is actually buzzing. If you see, has seen a new all-time high on a 3-day gaining streak. But let's bring in Shivam to give us some more details.
Yes, the stock is witnessing a strong uptake as the company has released its business and strategy overview, in which the company has mentioned its guidance and outlook, starting with the first key metric, which are related to cost. So cost to assets ratio has been guided at around 8.25 to 8.75% for FY27, and going forward in next 3 years, it is expected to improve to 7 to 7.5%. In terms of cost to income ratio also, that has been continuously declining in last 4 years, and borrowing cost has also reduced below 11% to around 10.9%, and that has been also lowest in last 4 years. And also the company's main focus is on reducing the operational expenditure, which will further improve these metrics. In terms of branches, the AUM per branch has reached its highest level in last 4 years. Also, the company is planning to open 40 new branches in FY27, and also with their extensions. In terms of asset quality, the credit cost has been guided at 3.5 to 4% in FY27, which was 4.76% in FY26. So here also we are seeing a substantial improve in the guidance, and also in terms of asset quality, that has remained stable over the years, which was supported by diversifications and data-led collections. In terms of growth outlook, the company has said that the AUM guidance will be around 25 to 30% for FY27, and it will reach around 24,000 crores within next 5 years. In terms of operation costs that are set to fall sharply, and return on asset guidance has also improved to 4 to 6% versus 3 to 5% earlier.
Well, thank you so much, Shivam, for all the details. Well, viewers, after a pause of 13 years, one of the most prestigious honors in Indian business is back. On July 26, NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, companies and entrepreneurs who have helped shape India's economic journey. And the nominees for Green Champion of the Year are: first, Lupin, demonstrating that healthcare leadership and environmental responsibility can advance together through measurable sustainability outcomes. You have Tech Mahindra, when the company is embedding sustainability into every layer of its business while driving responsible growth across global technology markets. Godrej Consumer Products, combining purpose with performance. This nominee has emerged as a leader in responsible consumer goods manufacturing. Godrej Properties, setting new benchmarks for sustainable urban development while reshaping India's real estate landscape. First Source Solutions, integrating ESG principles into business strategy and proving that responsible growth can also drive long-term value creation. Lastly, Mahindra Group, a pioneer in sustainable business practices. This nominee continues to lead through innovation, climate action and measurable impact. Well, viewers, this is all the time that we have in this edition of Small Cap Buzzers. Stay tuned for Ask Profit Afternoon Edition coming up next.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में। P-Mark, the mustard specialist since 1933.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc. We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide. We need leaders in India that can help take India being a global superpower.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour, we'll try and get to all your stock-related queries. Before that, just a quick check of how the markets are doing, because yet again, we've gone through the day for the Nifty 50 where we've seen some bouts of coming back and some reversal, but that hasn't panned out through the day. So we are now yet again below that 24,200 mark and continuing to monitor a day that's largely in terms of the Nifty expiry and continuing to find trends at this point of time, because while yesterday was a day where banking continued to be in focus, if you look at the heat map for the Nifty 50 today, you're seeing some moves, not too many and not too profound at this point of time to have a particular trend, to say the least. And within sectors also, while continuing from yesterday, HDFC Bank continues to be the biggest loser for today. You're seeing some buying on Shriram Finance, Bajaj Finserv as well as Indigo, and that has been as the case throughout the day. Ultratech on the back of good results, buzzing again at the up 1.2% as well. And we also saw some earnings come through over the day. Those like Bajaj Auto, numbers were good. It was higher than the estimates too, but still down about 1.21% odd. Now there could be some more speculation that you're watching out for in terms of the company as well as the brand new launch that the company has, but that'll be something to watch too. In terms of the sectoral heat map though, that is the other key factor. Now we've seen that banking as a name was in focus yesterday. Today though, the Nifty IT is now slipped to being the top loser in terms of the biggest sectors, and Nifty Metal also up almost just 0.7%. Advanced decline ratio also is the other key factor. Has been a very crisscross kind of a pattern over the last few days. Today as well, it's a similar one. Advance is just a bit inched up at this point of time as well. And finally, in terms of the BSE 500, those individual movers that we continue to track in the broader markets, seeing some moves on Jindal, which is up almost 18% now. Gujarat Fluoro up 6.5%, Arkin Chemicals up 4.7%, while seeing some losses on AB, Aditya Birla Sun Life Insurance, Avanti Feeds as well. Let's also pull up SBI Funds, the big IPO that got listed on the exchanges today. That was the other ones, opened at 7 to 8% kind of an upside, and has been there through the day as well. But let me welcome in our guest now for the show, Kunal Shah, AVP Alternate Research at Mirae Asset Sher Khan, and Tapan Doshi, Research Analyst at CATapan.in. Gentlemen, both of you, very good afternoon. Thank you for joining in. First question on Ashok Leyland. Shankar from Bengaluru is holding shares at 159. Kunal, he wants to add more of this counter for a short term, for the next 2 to 3 months. We are seeing some volatility back again on the crude side, and that has a direct impact on the CV space. But on the charts, is that visible?
Yeah, I think overall the setup is positive. Just needs to break about 157, 158 on the upside. Then the momentum will be back. So he has bought it at the right price. Continue to hold. No need to average at the current levels. Probably once the stock surpasses 158, 159, he can double down, and then the stock could go towards 165, 70 on the upside.
Right, got it. The other one that's in focus, and viewers, you can also call us for your stock related queries. The landline number for that is flashing on the top of your screen right now. Birla Soft is the other ones. Sundaresh is holding shares at the 325 and currently is sitting in losses. He wants to know if he should still continue to hold this counter or probably book out. Tapan, good afternoon. What would you recommend on Birla Soft? In the IT space, of course, been a rank underperformer. Should Sundaresh wait for the Q1 earnings, then take a final call as to what to do?
Well, see, if you see for Birlasoft, no, the growth is much below compared to other competitors also, no, and the margin pressure is there. Again, the European demand is quite soft and client spending is quite cautious, and we know what type of margin pressure will be there in the future because of AI. So I'm not too much optimistic about Birlasoft. Then also he can wait for the quarterly result, but once it comes up, I think he should move out from the stock.
Got it. The next one, and this one's on Ken Plus Sanmar. Ajay Kapoor wants a fundamental view on this counter. Wants to know if he can buy into this as well. Tapan, would you recommend that?
Well, if you see this stock, no, this stock has been there for a time, but I think for a next guidance is not so great. Again, the chemical cycle is improving, but it will take some time. My take is no margin recovery will be slowly and gradually, and the global oversupply risk is there. So not to enter at this level at least.
Not to enter at the current levels. Got that view, but the next question, and this one is coming on. Power Mech, our viewer Aditya Kiran is actually holding these shares at 2962. Wants to know if it's a good stock to hold as well. Kunal, what are you seeing on the counter? He's currently sitting on losses. Any chance of a pullback to his buying price?
I think overall the setup is still strong. 2400 has been the demand zone for the stock. Whenever it has come towards those levels, we have seen buying interest. So continue to hold with a stop loss of 2400 on a closing basis. The real momentum will start coming up once the stock surpasses 2700 on the upside.
2700, got that view. The other question coming through, and this one's on Gabriel. Our viewer has bought these shares roughly at about 1098. So currently sitting on good gains. And stocks up almost 5.5–6%. We also have the earnings for the company today as well. But a view, Tapan, should he continue to hold? We also, I think, have a QIP announcement that could be expected in terms of fundraise. All of those bode well for the company, according to you?
This stock is good. You can hold it now. If you see the EV opportunity is rising, again, the export growth of the company is going up. Capacity expansion is on the way. Of course, some customer concentration is there, but if you see the balance is completely debt free and good OEM relationships also. So I think, yes, please hold this stock. I think things is better. We'll see the result, but yes, currently hold.
Currently hold. Okay, got that view, Tapan. But the next one, and this one's on SBI funds. We discussed the stock right now, continuing to trade at the 6 to 7% mark. Uma from Bengaluru did not get allotment in the IPO. Tapan, how are you viewing the listing as well? Because I think post the ICICI AMC listing, I think there were just a lot of expectations from the listing as well. So it could be looked at, slightly more disappointing, right? Such a big name coming to the market. You would have expected a much more cheer. But would you recommend that if at these levels, someone who did not get the IPO should go out and buy?
So if it is a long term, she can maybe 5–10% down at the IPO price level only, because see, the stock is good overall. Of course, the valuation was little bit on a premium side, but I think things will be better from here also. And you can see the capital market result also coming okay. So I'm quite positive on the stock. Maybe around 5–10% down, she can start accumulating for the long term. I think retail participation is rising and operating leverage is also improving. So yes, she can.
She can, got it. The next one's on Bector Foods. Prashant, who's a regular viewer of the show, has 550 shares of the company, bought at 192. Kunal, he has a very short term. For the next 3 days, he wants this target. Firstly, would you recommend the stock? And secondly, the time duration also. Would you recommend him to increase it for a bit? What's your view?
So since his time duration is very small, my suggestion would be to book some profits at the current levels here, because now again 190 has become the new support for the stock. It would come to its buy price, and probably if it comes there again, he can add again that 50% what he has booked at the level of 190.
Got it. Well, the big numbers that we were expecting, TVS Motors have come out with Q1 earnings, and you're seeing a very sharp spike on the stock as we speak, because it's a good set of numbers as well. We were estimating the net profit to be around 990 to 1,000 crores. It's coming at 1,174 crores in this quarter. We've just seen an hour ago good numbers from Bajaj. This has been followed through by TVS as well. Revenues at 13,896 crores is again a big beat as well compared to the same time last year too. And they have managed to maintain margins as well at that 12.8% mark. It's a strong number that they have been able to maintain, because you did have a lot of crude price volatility, you had a lot of raw material price volatility, all of those, the shipping costs had increased, but TVS Motors able to maintain their margins at 12.8%, and that stock continues to climb at this point of time, and hence the EBITDA at 1780 crores is definitely a big beat from the company too. So overall the volumes were up almost 28% on the same time last year, and that has resulted in good realizations, good revenue, but the margin number was very important for TVS, and at 12.8%, definitely it's a big beat. You're seeing that stock react as well. Tapan, let me just get in one quick view on the margins as well, because this is definitely a big surprise, right? You were estimating some margin downtake, and we'll compare that number with the last year, but I think it was around 12.5 to 12.6% on a YOY basis. But how are you looking at the margins, Tapan? The street clearly likes it.
No, of course, a very good set of numbers. It always surprises. TVS Motor over the quarters also has been doing good numbers, and you see the margin is increasing. Currently it was a competition, more than competition. The challenging was many challenges was there. Even the supply bottlenecks was there. So yes, good numbers. I think if someone is having the stock, please hold it. And I think export recovery is going to be soon from here onwards once everything is normalized. So yes, hold on to the stock.
Got it. Just a quick view as well, Kunal, if we can, on the stock, because we've seen correct to almost 3,000 odd rupees, and then yet again seeing a good buy at the current level. Despite the run up, would you recommend a buy? How are you looking at it? Because of course currently it's reacting to big numbers here, but on the charts, a medium to long term view.
Yeah, I think overall the view continues to be on the positive side. On the weekly chart, what we have seen that the stock has been taking support at the 20 weekly moving average, which is placed at 3,500, and from there onwards we are seeing the bounce into the stock. I think here the momentum will continue on the upside. Positionally, I think it is now getting ready to make a new high as well. So one can continue to go long even at the current levels. 3,500 should be a stop loss on the downside. Upside targets could be 3,900 to 4,000 on the upside.
Got it, Kunal. But the other expenses too, they have inched up a little bit, 1,327 crores versus 1,063 crores on a YY basis. But still, despite that 200 to 300 point uptake in the other expenses, and it's something that we saw on Bajaj Auto as well. Now stocks almost up 5.2% now, and reacting to those positive numbers. We'll try and get you more perspective. But definitely these are good, very strong numbers coming in from TVS. It's not a cheap stock, by the way. The valuations are also comparatively expensive to its peers. But one of the bigger aspects in this quarter, and despite those, you are seeing a very strong reaction to TVS Motor. Let's pull up Bajaj Auto as well, because the number was good. We are waiting for more commentary on the new launch in the 125cc space, but you are not seeing too much of a reaction here on Bajaj Auto. So it's largely led by TVS, a very strong set in terms of earnings too, and definitely continues to be a very, very strong reaction coming through on this stock. And we'll revisit it once we get more perspective on this counter. But for now, definitely a big beat for the company as well in terms of the earnings as well as in EBITDA as well. But sticking with the space, we have the next query coming in from Murli. This one's on bell rise. He's holding shares at 99, so bought it at very attractive levels, probably close to the IPO. He wants to know, Tapan, if he should still continue to hold. We've seen a good QIP come through as well. What would you recommend?
Yeah, put a good stock. If you see that OEM demand is quite good, again, no, auto demand is supportive, and you can see the results also coming good overall. Other auto companies, aerospace export is also growing. I think that capacity expansion is underway, so we have to see how the execution will be. Premium valuation is there, no doubt about it. But I think one can hold this stock. I think quarter to quarter they are giving good results. So yes, please hold on to the stock, and we can buy once if there is a substantial dip, maybe 10-50%. He can add on also.
Got that view, Tapan. But the next question, and this one's coming in on from Savita from Hyderabad on Anant Raj. Wants to know a view on the stock for the short to medium term. Kunal, how do the charts look right now?
I think overall what we have seen that the stock has seen buying interest from the lower levels. Now the new support is at 563. So till the time it is holding the support, continue to be bullish. The immediate hurdle for the stock on the upside is 610. 605 is where it is trading, and once we break above that swing high of 610, you can expect this move to extend towards 640 on the upside.
Also, Kunal, a very quick view on Indus Tower as well. Shrikant from Chennai actually wanted to know, because he's currently sitting on a 7% loss, but he wants a 6-month view. We've seen whenever there's some news flow around for an idea, the stock comes back into focus. How do they look on the charts now?
So I think on the larger term time frame, they still has been able to hold the higher lows, and we have been seeing a rising trend line support here. So now the support what it had recently made around 375, 376, that becomes very important. So if you are holding long, continue to hold long with that support on the downside. Once we break above this immediate resistance of 415, I can expect the stock to go towards 445 on the upside.
Got that view, Kunal. But the next question, this one's coming in on Brainbees. Anuj, who's from Saket, wants to know if he can buy into this counter. Tapan, how are you looking at this one? Because we've seen since listing, not too much action that has come through. Still, the company is in the red. Should Anuj buy into this counter now?
No, I think losses is continuing. You can see the premium valuation is already there, and the competition in this segment is intensified. Again, if you say store expansion is continuing, but I think baby care demand is strong, but somehow the results are not coming great. I'll not go into this stock currently at this level.
Okay, got that view, Tapan. Also on JK Tire as well. That's the other counter. Prajwal, who's from Prajwal, who's writing to us, has been holding the share at 420 odd, and he's written his location as India. So Prajwal, we got that, but we generally try to get some perspective of where you are from India. But no worries in that. But he's holding shares at 420, bought at 215, and asking, Kunal, yet again a 6-month view, bought it at 420. Stocks just slipped a tad below 400 right now. What would you recommend here, Kunal? Should he still continue to hold?
I think continue to hold. I think there will be volatility because of the crude prices. But overall, the setup looks positive. I think 420 is what has now become 420-25 zone has become the hurdle for the stock. Once it breaks above that, then probably one can see the momentum coming back. 375 is now the support on the downside for the stock. So I'm expecting the stock to consolidate in this zone. And if it is able to hold at 375, he can probably average on the downside as well.
And Kunal, is this are there better picks in the tire space compared to JK Tire, because it has been consolidating in that range for a very long time, right? We've also seen reactions come now on CEAT in terms of weaker numbers. So if someone really wants to pick a tire stock, which one's a better one if not JK Tires?
See, I think it is JK Tire, because looking at the charts, even I feel even if you get this dip because of the crude volatility, I think JK Tire would be one of the preferred picks on the technical front as well, because the long-term structure still remains bullish. 375 is what if there's a downside that comes because of the volatility towards 375, it will be a buying opportunity. I'm expecting again the stock can go back towards the mark of at least 500 on the upside.
Got it. Well, let's go across and take our caller now from Gujarat. Sanjay is dialing in for a stock-related query. Sanjay, good afternoon. What's your query?
Good afternoon, sir. I have Suncrag Iron.
Okay.
At the rate of 76.
Okay, 76. Okay.
Yeah. April 21, I holding.
Wow, Sanjay, you made good gains as well. Congratulations. Did you look at the fundamentals when you bought this in 2021?
Yes, I have predicted fundamental. The Lloyd Steel, 11% stake of this company in the Lloyd Steel and Iron at
Correct.
that time. And now it's a company that Lloyd Steel and Iron and Energy. That's why I bought that share at that time, 11%.
Well, Sanjay, good pick, good spot, and good holding it as well. Tapan, he's bought it at 76. Would you recommend him to continue holding up almost 5x right now?
First of all, congratulations to him. Now, if you see the quarter one result was okay overall, and if you see the outlook for this company is good, steel demand is strong for them, and auto engineering demand is good for this company. Of course, commodity cycle risk is there. EBITDA margin is comparatively improving, and gas generation is also good. So currently hold this stock, but now you have to see quarter to quarter, then take a decision. But at this level, you can hold this stock.
Well, let's now start the rapid fire round. Kunal as well as Tapan, you know the drill. First question on Petronet. Our viewer Veram has bought these shares at 254. Would you recommend him to continue holding Tapan right now on Petronet LNG?
No, sell on rise.
Sell on rise, correct. The other one that's coming in, and you know this one's on Jindal World. Yet again a stock we've not discussed too much, Kunal. But is it a good time to buy into this? Is what Prakash is asking.
Yeah, already there's a breakout into the stock. One can add on to the current levels. The short-term target over here on the upside would be 40.
40, got it. Also on Himadri Specialty Chemical, Kunal, you know Ravi from Hyderabad wants to accumulate this counter. Is this a good level?
Yes, I think the stock has already been trading in a strong uptrend. Already is in the last 4 to 5 trading sessions, we have seen the up move. So utilize dips as a buying opportunity. I'm expecting the stock to be a 4-figure.
Other one coming in from Pratap from Andhra Pradesh on Acuitas Chemicals. It has a dream run. Tapan up almost 6x, I think, from the IPO price. But is this still a good buy?
No, not at this level. No, not.
Next one coming in from Sriram Raghuraman on. He wants to know about Autumn Investment and Infrastructure at 540. He's bought it. Tapan, should he continue to hold?
Yeah, please hold.
From Murthy, okay, we've taken in Anant Raj as a query, but and Kunal, come in here on MTAR Tech, right? I think it's a query that we've asked you multiple times, but what is the level, if any, that you would suggest as an entry, and should someone enter this counter right now? It's a question from Sanjay.
I think if you look at the entry point for MTAR Tech, the stock has already breached the swing low, that is 6,200, which was the last support zone for the stock from a short-term perspective. So you might see some further correction coming in. Now the demand zone, the next support zone on the downside is placed at around 5,100, 5,200 zone. So I think that would be a good entry point to go on the long side.
Got it. Well, Raja is holding on to KNR Construction at 234. Should he still hold on? Tapan average down because earnings are weak. What do you recommend?
No, don't average, just hold.
Hold, got it. Well, that was the last question of the rapid fire as well as this edition of the show. Thanks so much, Tapan and Kunal, for helping us solve all stock-related queries, also helping us with TVS Motor earnings. But, we'll wrap it at this time. India Market Close comes up next.
Superstar Stocks of the Day, presented by Tata Azura. हर रास्ते का सुपरस्टार.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ.
हर पल मनाओ केसरी त्योहार. विमल, बोलो जुबान केसरी.
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे. गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा. आप अपना देख लो.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing the committee of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing the committee of such distinguished fellow businessmen, bankers. It's lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us. Hi, welcome. Thanks so much for joining in. You're watching India Market Close and you're tuned in live from the NDTV Profit Suzlon studio. My name is Alex Matthew. With me is Hiral Daria. And it's another day of trade that is similar to yesterday, right? So pull up the Nifty 50 intraday chart and we're down about 0.33%, and there in fact is quite a bit of green on the screen. It is HDFC Bank and Infosys as well as Reliance Industries that's playing spoilsport today.
Absolutely, like yesterday. I mean, they're if you see Nifty 50, it's trying to make that recovery but not sustaining there as well. Let's just look at the Nifty 50 heat map and then we'll look at the sectoral trend as well, because it's very interesting to see that. Look at that, Shriram Finance, a high beta stock, 2.5% up move there. Bajaj Finserv, you have Kotak Mahindra Bank. Again, these are the ones which are seeing some smart moves. However, as Alex was pointing out, HDFC, Infosys, RIL, ITC as well, playing spoilsport along with an SBI which is down nearly 1% in trade in today's session. So I think these are the heavyweights which are putting that pressure. Bajaj Auto is very interesting because the numbers at the face of it look pretty okay, but still the stock is down 1%. What is it that the market is not reading? What is the market reading is basically the domestic business, which probably is slightly slower as compared to what the street was estimating.
On the other hand, TVS Motors had had an incredible run after the numbers. We'll talk about that in more detail. But I'm curious to find out what the contributors chart showcases, because in trade yesterday, remember at the end of trade, you had 145, 146 points on the downside that was
Only with
contributed by
HDFC.
HDFC Bank, and Reliance Industries and HDFC Bank today contributing about 80 points or thereabouts. On the downside, State Bank of India another 9 points or thereabouts. What is contributing on this side is not too much, right? ICICI Bank once again in the top list, but only 5 points and not able to outweigh the impact of HDFC Bank. So there you go. I think the story today is similar to yesterday in that a couple of heavyweights are really swinging the index into the negative.
Absolutely. With this, let's just look at the sectoral heat map and then we'll look at the broader markets as well. If you see in terms of sectors, auto, real estate, metals, it's very interesting. In fact, real estate, what's caught my radar is, the tokenization that Maharashtra government is considering, and that is something that will benefit a lot of real estate players. Nothing is formal yet. It was just a report that did come in, but 0.6% higher in terms of real estate. Auto, again, it's mainly TVS Motors, which is probably keeping that stock of sector afloat. Metals is doing pretty well in trade. Yeah. Defense is playing catch up, but there you go. It's, I think, SBI which is pulling the PSU bank index lower to the tune of almost 0.6%. IT, yes, down and about. Oil and gas, the volatility has continued in terms of oil and gas since the crisis now, because what's happening is oil itself is not staying firm, right? Sometimes you're at 80, you're coming off those $80 per barrel mark. So it's a tipsy-turvy ride in terms of the oil and gas sector.
At this moment, upwards of $85 to the barrel. But having said that, you're absolutely right. Speaking of volatility, I would like to have a look at the India VIX. So by the way, this is crude. $88 to the barrel is where we are at. We've moved a little lower from the $90 that was hit earlier in the week. But pull up the India VIX, the intraday chart for the India VIX, and we're still very lackluster, right? At below 13. So, and that's kind of giving you a sense of what the market mood is. Of course, we've
consolidation.
Not looked,
that's what I'm looking
at the broader markets, but let's very quickly pull up those intraday charts. 1/3% higher for the mid-cap index. And similar move, I think, for the small cap index, up about 4%.
But look at the recovery from the lowest levels, you know. I mean, you're seeing that buying interest coming back in terms of SMIDs at lower levels, and that's the kind of mood check that we have in the last couple of days. And I think that's what we should talk about with our guests as well in today's session. In fact, let's get in both our guests as well. We have Akshay Bhagwat and Sunny Agarwal who are joining in. Welcome to the show, gentlemen. Always a pleasure to speak to you. Akshay, with the way markets are, there is consolidation right now, slightly lackluster, I would say. However, we are not breaking below that 24,100 mark, which is a positive on Nifty 50. The bank index, it's volatile because some days you're seeing the PSU bank basket which is playing out. Sometimes you have the private banking basket which is playing out. And HDFC is playing spoilsport over the last 2 days. What are the levels that you would be tracking in terms of Nifty and Bank Nifty?
Good afternoon, Hiral. See, an important development on the technical front on the Nifty index was this Monday opening, where on Friday we did see a positive breakout about 24,300, but unfortunately the carry forward momentum which we normally see after a breakout was absent on Monday's opening. And today also we have a lackluster day of trading on the weekly expiry day till now. Just signals that 24,300 resistance is there to stay. The breakout, it seems, is a failed attempt. It's a trap for the buyers, and in all the technical setup as it goes, the chances of a revisit of the lower end of 24,000 looks likely in the coming week.
Got it. Okay, what about individual stocks though, Akshay? And a few stand out despite the fact that you have the heavyweights that are playing spoil sport, as we pointed out at the start. And good afternoon to both you and Sunny. But individual stocks that you're finding attractive, probably from the broader markets?
Good afternoon. See, I think pharma is one sector which is continuing to see the positive momentum flow on the buying side. And here I would specifically highlight Divi's Lab, which has seen a technical breakout last week at the levels of 7,000 with strong price and volume action, which confirms that it's a very strong technical chart for short-term momentum traders. We're looking forward for short-term upside targets till 7,500 to 7,550 on the daily charts. And you can maintain a stop loss below 7,200 on this buying position. The second trade I would like to recommend here is Grasim, which again is more into a short-term range bound consolidation, but good buying is present in the last 3 days. The technical setup possibly is hinting for an upside till 3,300 in short term, and you can maintain a stop loss below 3,075.
Okay, Sunny, before we get into individual stocks, just a sense of what you've taken from the earnings season so far, and a few stocks we'll get into details of. For example, the likes of Bajaj Auto and TVS, we will discuss in a bit, so don't get into that. But something like in HDFC Bank and Axis, of course, you can't talk about particular public sector banks, so I'm not going to ask you about that. Anyway, those numbers are yet to come. But a PNB posted earlier in the week. You had Kotak as well. So what do you make of the banking pack?
Yeah, good afternoon, Alex, and thanks for having me on the show. I think what we have witnessed from the banking result is that the pace of growth on core income, that is NII, has been a tad slower as compared to the balance sheet growth. So what we have seen that advances growing in the range of 12 to 15% for most of the private sector banks, whereas the NII growth has been 7 to 9%. That clearly signifies that net interest margins has been under pressure. Again, that has been due to 2-3 reasons. One is obviously the impact of 125 bips repo rate cut by an RBI during the last year. So that has played out, and as we go forward, the impact because of this should reduce going forward. Second, most of the banks pivoted towards a corporate loan book, which is slightly on a lower yield side. So that too has impacted the NIM during this quarter. Having said that, all the three banks, HDFC, Axis, Kotak, we believe that gradually on a sequential basis, we will see a gradual improvement on net interest margin, and that should help the bank report a better earning growth going forward. ICICI Bank, no doubt, has been an outstanding numbers across all the parameters, and that is the reason we have seen a clear outperformance by an ICICI Bank. What we feel among the banking pack, the mid-sized private sector banks are reporting better set of numbers. So Karur Vysya Bank yesterday reported very good set of number. Federal Bank again reported very good set of number, but again their valuations have catch up significantly. So maybe buy on dip is the right strategy as far as private sector mid-sized banks are concerned.
Got it. Okay. Let's jump straight to the stock of the day though. And this is a stock that had a bit of a slow start, but boy, has it caught up, and it's trading with gains of 17%. Wondering what we're talking about? There you go. Bluestone Jewelry. It's reacting to numbers, and it has stayed in the positive with regard to its PAT number. Of course, in the year ago quarter, it posted a loss. So another good quarter and very strong same-store sales growth at a time when a company is actually ramping up on its expansion plan. Let's head across to Varsha to talk about what has worked and why the street is so excited about this company. Varsha?
Well, absolutely. A good set of numbers that the company has posted. But, I want to actually highlight how how the stock has given return. So if you see in the last 1 month, the stock is up almost 31%. In the last 6 months, it's up almost 61%, and year to date returns have been 43%. And today, if you see, the stock is up almost 17 to 18%. Let's see what has worked when it comes to Q1. First is, of course, they've seen a strong same-store sales growth of 39% year on year, which is ahead of what they did in last year. And also, this is despite, increase of custom duty. Then you have repeat ratio, which stood at around 60%, which is also a fantastic number. And the customer continued to drive, higher average order volumes. There was an inventory gain, though, of 25 crore in Q1, and there was a good spike in EBITDA margin, which was led by the operating leverage. Even if you see, the number of customers have grown almost 21%, average order value is up almost 41%, and also, so overall, if you see, we are seeing a strong set of numbers, I would say. If I were to talk about the 4 numbers, revenue was up almost 50%, a very good number. Even there was a good spike when it comes to EBITDA as well. EBITDA was up almost 94%. Margins have improved sharply year on year. If you see, it's at 14.6% versus 11% last year, and there was a good spike in net profit as well. In fact, in the last 3 quarters, we are seeing company, giving a positive, or rather being a PAT positive year on year. Well, lastly, if I were to talk about the store positioning over here, they've done 12 stores in Q1, additions in Q1. Total store count, if you see, stands around 352 crore in 139 cities. So overall, a very good set of numbers. On the valuation side, of course, this is not a cheap stock. If you see, Bluestone is trading at around 186 times versus Titan and Kalyan, which is at a cheaper value. But of course, the market is giving a premium considering the huge growth and the profits company being into a profitable area in the last 3 quarters. So overall, a strong set of numbers, and hence we're seeing a good spike and good buzz in stock.
That's interesting. Thank you so much. It's interesting to see what a Bluestone has done, whereas you look at another company which has reported numbers from the same field, Advait Jewels. We did speak to the management as well, and that stock is under pressure where the fourth quarter has been a downer. So literally,
PAT number dropped over 40%. Right?
Yeah. So your same quarter, but different performance in terms of.
Yesterday we were talking about a newly listed company.
I think it was Advait only.
No, it was Turtle Mint. So
Turtle Mint, yeah, but Turtle Mint, if you go to see, it's reversed.
That's
right?
what I'm saying.
They've reported a profit number in terms of the first quarter, in terms of this
pretty
quarter.
strong number.
Exactly. Here I'm talking about again the same industry, two different companies. Very different kind of growth profiles that you're seeing out.
But the reason I was pointing it out is yesterday you made the statement to say that usually you have a company that lists and then has a bit of a disappointment in the first quarter that it reports.
And that's what you've seen over here, though the Advait management indicated that it's the water crisis which has impacted the quarter. Sunny, look at Advait Jewels, look at Bluestone. What do you make of the earnings of both of these companies and what's happening with them?
Yeah, coming to Bluestone, no doubt, very very set of numbers, especially on SSSG front, and seeing that the omni-channel strategy which the company has adopted is working for them, and gradually there is a further scope of margin expansion, because as the new store matures, they start adding to their profitability. So no doubt Bluestone seems on track to further expand the margin. Coming to Advait, I think maybe since they are more into bridal jewelry, very niche kind of customized kind of business, and since a wedding season is kind of off season for quarter 1, so that would have been one of the reasons where we would have seen a muted performance on the Advait side. So I believe that second half, which is the post Diwali, which is the wedding season, should be a better as far as Advait is concerned, since 80% of their business comes from B2B channel. So I think retail doing well at a current juncture. B2B, which is focused on a very niche bridal kind of segment, will always tend to do during the wedding season.
That's with regards to where all the jewelers are concerned. Both of these counters, which are seeing a very opposite reaction in trade today. Another stock I want to talk about is Gujarat Fluorochemicals. Let's just pull up that one on the screens because the charts are very strong. The management recently met a lot of brokerages as well. Today the stock is up 6.5%. Let's just pull up a 5-day chart, a 1-week chart, or even a 1-month chart to see the kind of performance that the company has given out. And everyone's betting on the EV segment, which will be profitable or will be contributing in FY27. In the last 1 week, 18% is the kind of up move that has come in on this counter. Akshay, what are charts indicating? Any further momentum, or you would say book profits after this 1-week surge that has come in already?
Yeah, I think it's better from a short-term trading perspective that one looks to book profit around the current levels. Roughly around 46.20 is where the resistance lies. If you're almost near those levels, so I think is pretty prudent to book out your profits for short-term.
Another stock that has gained about that same level in a month, and why don't we pull up the longer-term charts of it as well, Nilkamal. And we were speaking about this just a short while back, I think post the numbers, which looked incredible, I think, in the first quarter. The stock is up 5.5% in trade today, but over the last 1 month, it's up as much as 20%. So Akshay, quick question to you. Would you take money off the table, or is the momentum good here?
Yeah, I would suggest to take money off the table. The momentum has been good, but it's now a bit overstretched on the short-term trading parameters. I think 1600, 1620 is a bit overdone. So I think I would take the money off the table at the current levels.
Do you have enough coverage on the stock, or have you looked at the numbers for Nilkamal? How much is in the price at this moment? On the fundamentals, is there still an opportunity for you to get in, or if you managed to get in earlier this month, should you hold on?
I think again, one has to keep in mind that Nilkamal, we have seen a kind of very negligible profit growth during the last 2-3 years. So profit has been in the range of 110 to 120 crore number. One thing which is in favor of Nilkamal is definitely a valuation at which it is trading. So the top line is closer to 3700, 3800 crore. And as we speak, the market cap is 2300 crore. So trading at less than 1 price to sales. So I think it's a clear-cut value buy for a purely basis valuation. Growth is something which is missing in the counter. So would like to track how the company is going to progress going forward. But purely on a price to sales basis, trading at less than 1 time price to sales multiple, and with such a strong brand franchise, definitely it calls for a buy at a lower level.
Okay, so that's with regards to where Nilkamal is concerned. You know, another stock from Nifty 50 that I want to talk about is Shriram Finance. Let's just pull up that one on the screens and see what a Shriram Finance is doing in trade, because smart moves coming in there. Probably Sunny, any view when it comes to a Shriram Finance 2.5% up move today?
Yeah, again, we continue to remain constructive on Shriram Finance, as we have seen that post fund infusion from one large investor. We believe that ultimately the cost of fund is likely to reduce by 150 bits over the period of next 2-3 years, and that should aid the profitability. Coming to the core businesses, commercial vehicle, although that portfolio at an industry level was under stress for the period of next 2-3 years, and that should aid the profitability. Coming to the core businesses, commercial vehicle, although that portfolio at an industry level was under stress because of the Middle East crisis, but again they are diversifying from a used vehicle to a newly owned vehicle segment also. I think in a longer run should deliver a healthy growth. 18 to 20% kind of advances growth is something which one can expect from Shriram Finance. So I think continue to remain constructive. I think fair value is closer to 1150 to 1200 if someone has got investment horizon of 12 to 15 months.
That's for Shriram Finance. But moving on, the earnings race is on. When you talk about the two-wheeler space, let's pull up a Bajaj Auto, let's pull up TVS Motors. Both of the companies have reported numbers, and that's having a rub-off effect on the other two-wheeler makers as well. Bajaj Auto is down 0.9%, and I think it's the domestic business that the street is not really happy with. But TVS Motors is at the day's highest levels, 6% up move coming in there. So who delivered the stronger quarter? I don't think so. We need an answer to that, seeing the stock performance. But Puneet tells us with a comparison as to what's happened between both of them. Puneet, what have you picked up so far?
Thank you for that. One is, of course, the margin story, because for both the makers, at a time where you were expecting to see raw material price volatility to have some impact, both TVS and Bajaj have actually reported, stellar margin growth. So Bajaj at 20.9% is actually up 110 basis points in terms of margins. It was 19.7%. For TVS, the margins have actually improved by 30 basis points to 12.8%. And, the higher export sales have also helped in, managing the rupee depreciation impact. So that would have been one of the bigger impacts in terms of positive margins. Operating leverage, of course, continues to be through as the second key reason. And the third one is on price hikes, because they have increased prices to almost 1.9 to 2.4% for both these automakers. So those are some other factors. But it is also important that Q4, before the Middle East crisis broke out, they had a very low cost inventory of that, which has now come into Q1. So the margins, while good in Q1, you will have to watch out for that impact in Q2, because now the raw material that they get will be of the higher price, the more expensive one. So that's point number one. Second one has been the very strong revenue growth, almost a 30% for Bajaj Auto, 37% for TVS, and that's led by volumes. There have been a 30% growth for Bajaj, 28% for TVS, and for TVS specifically, the EV sales is up 86% on a YY basis. So that continues to be another key, very strong trigger for them. The scooter sales has been another positive for TVS at 36%. So while the motorcycle growth has slowed down, you've seen that impact that Bajaj is not reacting too much, because the domestic side of things still need to be addressed. There is a model on the anvil in the 125cc space for Bajaj, but still that will be one of the major announcements, if any, to be spoken about in the conference call today as well. But finally, on the other expenses too, all of that has been controlled in this quarter. So almost 100 basis point reduction for TVS as well as Bajaj. So marketing as well as the other expenses have been controlled in a volatile time. But that is the analysis between both those companies. It is similar in terms of margins getting improved for both, volumes being strong. But the reaction on TVS, despite richer valuations, continues to be stronger, led by their expanded portfolio as well as the exports and the scooter mix, something that is missing in Bajaj's armor right now.
analysis. Thank you, Puneet, for that. We have Parag Thakkar, Head Fund Manager at Fort Capital, joining in. Parag bhai, good afternoon. We've been talking about Bajaj Auto since quite some time. What has happened according to you, which the street has not really liked? Because if you see the stock down 1%, however, the numbers are pretty much in line. So if you have to read through the commentary and the fine print, what has not really worked according to you, or you think this is actually an opportunity to accumulate on the back of corrections?
First of all, I would like to say that there is nothing wrong in Bajaj Auto's numbers. As Puneet was highlighting, in spite of input cost pressures and after the war, and steel prices also going up and various other input prices going up, Bajaj Auto reported stellar margins, 20.9% margin, 45% EBITDA growth, 42% PAT growth, in a quarter where you are seeing a heightened volatility and in fact huge upsides in the input cost side. So there is nothing wrong in Bajaj Auto's numbers. It is just that stock has moved up from 9,700 to 10,400 or 500. It is showing some muted reaction. But I would like to say that in their press release also they have written that expect upgrades in 125cc to 160cc bikes along with refreshers. So that means, as Puneet also said, I am also expecting some comments on the earning call, which will address this domestic market share issue of Bajaj Auto. And once that is addressed, it will get a huge re-rating. Remember, I keep saying this, and this company has 21,000 crore cash. Okay, and by the way, Bajaj Auto's margins were 20.9 and TVS margins were 12.8. Both have beaten estimates for sure by 70-80 bits, but the base is 20, right, here in Bajaj Auto. And I would say that promoters not participating at 12,000 rupees, it gives me at least a clear signal, and it's a great buy in my view.
I'm sure you've also looked at the numbers for TVS Motors, Parag bhai. I know that you like the company, but you don't necessarily like the valuations, particularly after the reaction to the numbers. It's up over 5%. So what did you make of the numbers, and what do you think about the stock?
The TVS is a great company by all means, and they are, as Puneet was also saying, they are present across the segments, across the price points. EV also, they are the leaders. So I have a huge respect for that company, but right now, because of the valuation gap between the two, and because of the conviction showed by Bajaj Auto promoters, I prefer Bajaj Auto at this price.
Incidentally,
so Bajaj Auto versus TVS is what is on the radar. But thank you, Parag bhai, so much for joining in. It's always a pleasure to speak to you. On the charts, if you have to look at the auto majors as well, let's pull up the chart of Eicher Motors, because I think I did see a spike that did come in on this counter as well. If you have to look at the entire two-wheeler pack, there you go. Eicher Motors is also at the day's highest level, so taking some bit of cues from a TVS Motors and a Bajaj Auto. Let me take this question with Akshay. Akshay, on the charts, you're seeing some muted moves on the Bajaj Auto, whereas the other two are flying really high. What should the strategy be there?
Bajaj Auto has a muted reaction, and clearly TVS Motors is the choice, because here you find the strong momentum on intraday price charts, and that also after a good stellar results. Technically, the stock mostly is heading for 3,900. That's the target zone which the current chart setup promises. And if you are doing a BTST trade or a short-term momentum trade, you need to maintain a stop loss below 3,625. As far as Eicher Motors, the other stock you asked for, it is nearing an important resistance zone. 7,700 is the zone I'm speaking of. If it takes off that zone, we can expect some fireworks from short term in Eicher Motors, after which you can look forward for targets of 8,000.
Got it. Sunny, quick view on the automotive, on these two-wheeler companies specifically, right? Because one would argue that both TVS and Bajaj in particular, has the export footprint that allows it to shift its mix and then protect against input costs, right? So that margin pressure is not there to the extent that some of the other players that, like for example, a Hero MotoCorp that operates in the mass market segment, will have to face. So will you have to draw a distinction between these two-wheeler makers, because the entire pack is up today?
Yeah, again, our favorite continue to be TVS Motor despite of expensive valuation, but what we have seen is that across the board growth, across all the segment, we have seen the growth, whether it is ICE, whether it is three-wheeler, two-wheeler. Within two-wheeler, we have seen a very excellent growth on EV side. So I think, and at the same time, we believe that the scope of margin expansion, the levers over there are still with the TVS Motor. So gradually, we have seen over the period from margin has shifted from the trajectory of 5-6% to now closer to 10 to 12%. And we believe that over the period of next 2-3 years, again, margin can shift towards the 15% kind of band. So that should lead to an accelerated acceleration in the earnings growth going forward. So TVS, no doubt, continue to remain favorite despite of an expensive valuation. Bajaj Auto, one positive factor which we believe can play out for Bajaj Auto is the revival on a KTM portfolio. So the premium portfolio, both KTM and Triumph has started contributing, although the overall contribution is slightly on a lower end. Maybe any positive commentary on that aspect can lead to a slight re-rating as far as Bajaj Auto is concerned. The top pick TVS Motor followed by an Bajaj Auto. What we feel even Eicher, although there was a concern of recently change in regulation wherein in Delhi we have seen that gradually two-wheeler petrol ICE two-wheeler will be phased out, and since majority of the market for this off-riding comes from a northern belt, so that can that led to some negative sentiment for Eicher. But again, Eicher, we have seen that despite of challenges of changing GST on 350cc and above segment, the volumes have recouped significantly. So in case in case there is no pressure on margins, I think Eicher Motor can also deliver an healthy set of earning growth. So TVS followed by Bajaj and third Eicher.
You know, that policy that you were just referring to has to do with registrations in New Delhi. And well, the tendency is to think that it's a large market. Yes, obviously it seems like that, but a lot of registrations do take place in Uttar Pradesh and Haryana. And so if somebody wants to buy a Bolt, as they call it, right, they're going to step across the border and buy it in Haryana.
Yeah. So that's
how it looks. But anyway, it's now time to go across to Soumit Sarkar, who's joining in to tell you about the stocks that he's found out from in his conversations with people in the dealing room. Soumit, good afternoon.
Good afternoon, Alex. Given the fact that it's earnings season, a lot of stocks in focus on the back of that. Now, dealers have indicated when it comes to IndusInd Bank, Bajaj Finance and Manappuram Finance, there are buy flows on the large HNI and the PMS desk. Dealers indicate strong Q1 numbers to come in from all the three names. In fact, Manappuram Finance is one counter which has been gaining in trade for the last couple of trading sessions. On the flip side, there is Bandhan Bank. There are sell flows on the large HNI and PMS desk. Dealers expect weak Q1 numbers to come in from this space. And when it comes to Paytm, despite the strong set of numbers, we are seeing sell flows on the PMS desk, and there's a buzz of a potential block deal that could come in. And hence, despite the strong numbers, the stock was down at one point of time as much as 3%. And lastly, when it comes to Thermax, there are buy flows on institutional desk. Dealers are expecting a positive note from a broking firm to come in very soon when it comes to Thermax.
Okay, so interesting names coming in there from Soumit Sarkar. In fact, IndusInd Bank will be reporting numbers tomorrow, so it's going to be interesting to watch out for. Manappuram Finance, all your gold loan companies are also in focus in today's day of trade, seeing some smart moves as we speak. So we will look at all of them with our market guest later on. But CMPDI, or Central Mine Planning and Design Limited, a strong growth is what they've reported in the first quarter, and the stock has surged nearly 8% in intraday trade, has cooled off. Now the stock is up nearly 4%. Let's discuss the quarter gone by and the outlook ahead. To discuss the same, joining us is Mr. Chaudhary Shivraj Singh, Chairman and MD of the company. Mr. Singh, welcome to the show. Always a pleasure to speak to you as well. A good set of numbers that have been reported so far, at least in this quarter, and it's higher exploration and consultancy activity. Do you think this is something which you will be able to sustain in the coming quarters as well?
Good afternoon, Ira, and definitely we have been promising this, and we have been working to fulfill that promise, and that is why you see the results in Q1. And as we have already talking about 15% plus growth. This you have seen in Q1, and that will continue.
Mr. Singh, good afternoon. This is Alex, and you were just speaking to Hiral. A question for you: when on NTPC mining and the Mozambique projects, the question is, when does that come through, and what are the contributions likely to be in the remainder of the financial year?
So, Alex, this NTPC MOU is continuation, and some more things have been added to that. So that is continuing. The job with the NTPC is continuing, and Mozambique job we have already started. So both MOUs are already under implementation, and you will definitely see such kind of MOUs with the other organization outside Coal India as well in the coming future.
Mr. Singh, one factor, of course, I think that has gotten the street excited is the fact that your margins have come in at close to 35%, and that has contributed to the EBITDA gain of 62%. The question that I think a lot of people are wondering is this above 30% margin sustainable through FY27? What would the contributing factors be?
So this is, of course, sustainable because we already promised that we'll be maintaining the EBITDA and PAT margins at 40 and 30%. So this is this will continue. And if I take three important parameters for this Q1 result, which will continue during the year, is one of them is the growth in our drilling, which is for departmental drilling about in fact more than 15%, and overall growth in drilling has been more than 11%, which has resulted into 18% revenue from exploration itself. Again, in planning and design, there is a growth of 26%, mainly because of our PMC services that we were focusing on, especially related to renewable energy. For environment, there is a growth of 24%. We have, in fact, tested more than 54,000 of samples. So that volume is increasing, and that is why this kind of revenue growth is there. In geomatics, this number will increase as the end of the month surveys are yet to be reported. That will come into in next week. So this growth will be higher in geomatics as well.
Mr. Singh, an extension to this conversation that I want to talk to you about is, Alex just asked you about the margins as well. So is it the product mix or the project mix? Is it higher realizations? What has led to this margin expansion? Is it sustainable? And secondly, is there a possibility that there could be fluctuations in the profitability as well based on the project execution schedules?
So yes, this is mainly because of our project expansions and especially related to planning and design works and the expansion in exploration areas. The project expansions in environmental and geomatics areas also there. So mainly this is this performance you can see because of the expansion in projects. These expansion in projects include projects outside the coal as well. So as we have been promising that we are working on coal, continuing our work on coal, expanding at the same rate, at the same time taking up non-coal blocks as well. So that is why this kind of growth, and that is why it is sustainable.
Mr. Singh, I'm just looking for an understanding here and just trying to understand with regard to thorium, right? Because India has substantial thorium reserves, and I think the plan is also to use it increasingly where possible in nuclear energy production. I know that it's not rare earth, but as I understand it from a layman's perspective, it can be mined alongside rare earth. So would you have a role in trying to map these reserves, in trying to facilitate pulling this from the ground?
Yes, in fact, for beach sand blocks, we visited the Odisha government along with the Coal India team, and there have been fruitful talks with them. So we definitely foresee our role in mapping the beach sand blocks as well.
What is the commercial viability or opportunity here, Mr. Singh? Just trying to understand, because if India is going to create 100 gigawatts of nuclear energy, and if it is going to use something apart from uranium, then the natural expectation is that the massive reserves of thorium would be looked at.
So at this stage, exploration has been opened up, and of course, after the explorations, we will be able to tell more definitely on what kind of material is there and how it can be utilized for the kind of projections that are being made for the nuclear power. It will take some time to come up with the exact numbers for the use of thorium that we have in our country. But a lot of potential is there because of the availability, the volume that is there. And as it has been opened up for exploration, we foresee that there will be very soon some kind of projection on the kind of thorium.
We look forward to hearing from you, sir. Thank you so much for taking the time as always, and wish you all the best for the rest of FY27. Congratulations on a great set of numbers.
Thank you.
Okay, let's talk about something that I'm actually quite excited about. It's coming up this weekend, isn't it, Hiral?
What are you talking about?
I'm talking about the Business Leadership Awards. What did you think I was talking about?
I am looking at the winners. I thought you were just going to reveal some of the winners.
No
probably.
Chance. That happens.
Is that something that you know?
I might, because I'm hosting.
Interesting. So there is a secret in the box right now already.
But what are we talking about? What are we talking about here?
So, okay, this is going to be the Business Leadership Awards, which is actually coming back after 13 years.
Yeah.
And that's an honor, right? I mean, the who's who of town, the who's who of India are going to be at the Business Leadership Awards that will be hosted by NDTV Profit. Just 5 days to go, and the selection process is something that was guided by some of the most respected names from the world of business, finance and public policy. Now, leading the jury was Sunil Bharti Mittal, founder and chairman of Bharti Enterprises. Joining him, Noel Tata, chairman of Tata Trust, Cyril Shroff, managing partner at Cyril Amarchand Mangaldas, Kiran Majumdar Shaw, chairperson of Biocon Group, UK Sinha, former chairman of SEBI, Jayant Sinha, president of Everstone Group and former union minister, Ramesh Damani, noted value investor and BSE member, and CS Sethi, chairman of State Bank of India. You know, Alex, the jury was actually supported by Sanjeev Krishnan, who's the chairperson of PwC India, who also helped in the heavy lift as well in terms of actually getting everything together. And we had Rahul Kanwal, who's the CEO and editor-in-chief of NDTV Group, as the non-voting roles. And together, this distinguished panel has actually brought deep expertise, independent judgment, and rigorous scrutiny to identify the leaders and enterprises shaping India's economic future. So I think everyone, I'm sure you're excited to join us on the 26th of July as NDTV Profit brings back the Business Leadership Awards after a 13-year hiatus, celebrating the leaders, companies, and entrepreneurs who've not only built successful businesses, but have helped shape India's economic journey. And this is really going to be interesting.
Oh, absolutely. I can't wait for it, and I'm sure that everybody sitting at home is going to have good fun this Sunday. Well, we have to slip into a very quick break. We'll be back on the other side to talk about how closing trades are looking, and it's just about half an hour for the close of trade. Stay tuned for that.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
We are over, Jimmy.
हे लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
From a PwC standpoint, we actually set up criterion for each of the categories that we discussed with NDTV. A criterion was set up, different KPIs.
Welcome back to India Market Close on NDTV Profit. Let's just quickly pull up Nifty 50 on the screens as well, along with Bank Nifty, and see what the markets are doing. 24,187. So that mild recovery continues from where we started off India Market Close in today's session. Bank Nifty as well, near the day's lowest levels, 0.2% lower as we speak. Vinay Rajani from HDFC Securities and Sudeep Bandapadhyay, market expert, joining in. Welcome to the show, gentlemen. Always a pleasure to speak to both of you. Vinay, at this hour, with the way markets are, overall at Nifty level, there is a little bit of consolidation that we are seeing, no major moves coming in there, but a lot of stock-specific action that everyone is looking at. Instead of talking about levels to watch out for, what should your top picks be at this hour?
Yeah, so definitely, as you rightly said, nothing to comment on the Nifty right now because complete consolidation is going on. So sector-specific moves are there which can be captured. Some stocks have corrected from the 52-week high. One of the stock which I like is the L&T Finance, which is corrected, and the primary trend of the stock is bullish. So around 306, L&T Finance is looking good. For traders, I would recommend a stop loss at 300. On the upside, I'm expecting a target of 315. The another stock which is from the defense space. So after a good healthy correction, this defense as a sector has started doing well today. So I think HAL is one of the stock, Hindustan Aeronautics, which is looking strongest amongst the pack and looking good on the charts. So around 45801 can go long. Stop loss can be kept at 4500. On the upside, I'm expecting an immediate target at 4725.
Okay, news coming on HDFC Bank, and that's the reason why the stock is once again under a tad bit of pressure. Pull up the intraday chart for HDFC Bank, and it's one of the reasons why the benchmark is under pressure today as well. Trading at the low point of the day, down 2%. Reports are suggesting that HDFC Bank has delayed recommendations for the reappointment of Managing Director and Chief Executive Officer Shashidhar Jagdishan to the Reserve Bank of India. Sharad joining in to talk about more. In fact, Sharad, the stock is trading very close to 52-week lows, and valuations are not really the concern. It's just the bad news that doesn't seem to be going away.
Exactly, and the overhang is there for HDFC Bank, and we can see the stock is near the day's low itself, dragging Nifty Bank, and even Nifty is also in the red. Now the media reports are suggesting that HDFC Bank's CEO reappointment has been delayed. To put that in perspective, the independent directors are undertaking an extra review of the meeting before recommending the CEO's reappointment to RBI. Remember, board aims to finish this review in the first week of August, and this is coming in from the media reports right now, and that is why there is a kind of a selling pressure in the stock as well. HDFC Bank is yet to recommend the reappointment of the MD and CEO Shashidhar Jagdishan to RBI. Now remember, his tenure gets over in the month of October, and earlier the external legal teams had given a clean sheet on the governance issues which was raised earlier by the ex-chairman Atanu Chakravarti as well, where the resignation took place in the month of March. So yes, the developments are happening, but delays are coming in. We had seen that buzz of the delay last 2 weeks ago, and there was a selling pressure, and now again a fresh selling pressure comes in. But overall, looking at the stock itself, it has fallen 7% in last 2 sessions. The numbers also getting impacted. 25% the stock is down from the all-time high levels, and on the year-to-date basis also the stock is down 23%. So definitely a concern for the investors of HDFC Bank.
On a trailing basis, thanks so much, Sharad, for that. On a trailing basis, now trading at sub 2 times price to book. Sudeep Bandapadhyay, of course, you looked at this stock when it was at 4 times plus price to book. What would you say about it right now?
Well, definitely, Alex, if somebody is a little patient investor, it is a stock to pick up. Fundamentally, I don't see much of a problem with the bank. This FCNRB relaxation plus the external commercial borrowing approval, which the bank has now along with all other banks, I think should help them mobilize incremental deposit, which was an issue as far as HDFC Bank is concerned post its merger with HDFC Limited. Now that problem should go away, and the cost of funds will come down. So I'm very positive on the bank. Yes, these kind of bad news, which we were just hearing, definitely creates a pressure on the stock. But fundamentally, from a long-term perspective, it's a trying buy now.
So that's with regards to HDFC Bank, that stock down nearly over 2% as we speak. Apart from this, overall, let's look at some of the other names which are in focus in today's session, apart from the banking pack. Look at an SBI in consonance to this. That stock is also under pressure, which is putting some bit of having an impact at the day's lowest levels, 1.5% downtick there. Vinay, what are charts indicating in terms of SBI?
Yeah, so yesterday there was a bullish move but did not sustain. Nifty, SBI could cross yesterday's high but did not sustain above it. So we can say that it is completely into consolidation for last 5 consecutive weeks. As far as support is concerned, I see a strong support around 1020, 100 is the band, which is a strong support. The primary trend is definitely bullish. PSU Bank bounced back nicely yesterday. So I would suggest that instead of taking a trade here, one should wait for some proper direction, proper breakout. Right now, 1020 to 30 is a very strong band to see this particular stock, whether that level is holding or not. We need to review it. So as of now, there is no trade in the SBI as far as trading is concerned.
Regards to where SBI goes. Now moving on, Shadowfax is facing a major lock-in expiry tomorrow. That's what it's going to look at. While investors are selling, that remains a key risk. The stock is trading at a discount to delivery and I would say in terms of, the competitors, and it retains analyst upside potential as well. Jasmeet is here to tell us more. Jasmeet, stock is down 1% today. There probably will be pressure in terms of the lock-in expiry ending tomorrow. What are you picking up?
Well, Hiral, thank you for that. Before we look into and understand more about the lock-in details, let's quickly understand and do a quick stock check. When we look at this particular counter, it got listed at a discount of 8% at about 113 odd rupees versus the listing price of rupees 124. And since then, we are seeing a turnaround story for this particular counter. It has gained about 100% in trade and currently trades about 220 odd rupees. And from its 52-week high, it's down about 10%. So we do see a good recovery in the stock movement. But the real question comes about the lock-in. While the particular counter will experience an unlocking of its assets and major unlocking of stocks coming in at roughly 49% stakes, that roughly forms to 28 odd crore shares will be unlocking for Shadowfax tomorrow in trade. Now, while this would lead to create some kind of pressure on this particular counter, but also we have a lot of market investors, including the PE and the VC funds, who generally invest in a particular counter and try to have the high monetization. So that will be a key watch out. And given the release of roughly 49% of shares will become an overhang on this particular counter of how the investor might sell the shares eventually and create a risk on the stock price. If we look at the current scenario, we have roughly 36.8% of the overall investment held by the PE and the VC funds, which will look to monetize themselves. There's a quick check in terms of the overall investors, the top 5, top 6 investors of this particular counter. The holdings which they have based on the total shareholdings of this particular counter, we see the highest being with NewQuest at 11.6%. Then we also have number of shares unlocking for tomorrow, that's July 22nd. Out of the stakes they hold, roughly 11% for NewQuest will be unlocking roughly 5.9 odd crore shares. That's the highest what we are seeing unlocking across the peers. For Flipkart, they'll be unlocking roughly 3.4 crore shares, and for 8 rows, they'll be unlocking of 4.7 odd crore stakes. Now, in terms of this unlocking of shares, how much of pressure this might create on the stock is something to wait and watch. But let's quickly understand the value in terms of the unlocking. If you look at the Flipkart, it roughly holds 7.3 odd % in this particular counter, and out of that 7.3% stakes, 3.4 crores will be unlocking about roughly 748 odd crores of value of stocks will be unlocking with this particular counter. In terms of value, the highest unlocking will be coming from NewQuest at roughly 1298 odd crore. Now, lastly, let's quickly do a valuation check and try to understand where the Shadowfax sit compared to Delivery. Close peer competition in terms of the overall EV by sales for this particular counter. As of the current stats, we do see Delivery being slight expensive at 3.42 times versus Shadowfax at 2.9 odd times. In terms of 12-month forward, we do note that again Delivery is at an expensive side compared to Shadowfax at 2.75 versus 2.01 for this Shadowfax. Now, lastly, in terms of the ANI return potential, we do note that Shadowfax currently sits at a return potential of 11 odd %, and we have 5 analysts with a major buy call on this particular counter, while Delivery has 18 buy calls and a return potential of roughly 17 odd %. As of now, it's a wait and watch. Once the unlocking is done tomorrow in trade, how does the investors sell their stakes, and will that create a further pressure on this particular counter?
Okay, all right. Thanks so much for getting us those details. And that was a A quite interesting link, wasn't it? Piece of trivia though, Hiral, you know this now because we discussed this, but guess where the name Shadowfax comes from? Some of you may know. It's from a book that was written by J.R.R. Tolkien, The Lord of the Rings, and Shadowfax was the name of the horse that Gandalf the White
The fastest horse in Middle Earth.
The fastest horse in the world. So I don't know whether it's inspired by that. Probably is, but the stock certainly has gone up pretty fast.
No,
right?
but just look at the stock
year-to-date
today.
performance.
You see the year-to-date and look at the stock reaction right now on the back of the link that Jasmeet has just bought to us. The stock is actually cracking at the day's lowest levels as we speak, 0.8% lower, and I think that's probably opened eyes for people as to that the lock-in is expiring.
But the year-to-date, look at the year-to-date
booking
performance.
profits, right? It's doubled. It's doubled. But so there is a potential where even retail investors could actually book profits ahead of the expiry coming in. Vinay, on the charts, are you seeing any weakness because you're seeing that mild bit of pressure right now?
Yeah, so if I were to look at the weekly charts for 6 consecutive weeks, this stock has been forming the long leg doji candlestick pattern. So in technical analysis, we used to consider this kind of pattern as an indecision, a tug of war between bulls and bears, and that is what happening. It is going up and coming down, going up and coming down for last 6 consecutive weeks. I see strong support around 200. If it were to hold its primary uptrend, then it has to remain above 200. If it breaks 200 on the downside, then definitely we can call it a reversal after the indecision which is going on for the last 6 weeks. So 200 is the level we are keenly watching, and if that breaks, then one should reduce the long position from this particular counter.
So consensus view for analysts as well is that Shadowfax does not have a significant return potential as things stand right now at this current price, 220, upside potential about 11-12%. But the question to you, Sudeep, is whether this can be a lambi race ka ghoda.
Definitely it can be. In fact, we do like the logistics space. Of course, delivery is our preferred pick, and we have been positive on delivery for quite some time, and we maintain our view. But as far as Shadowfax is concerned, we have been liking the stock as well, and we have been kind of recommending it for the past couple of months. At this stage, I won't recommend a buy because, as you rightly pointed out, a lot of, that unlocking is going to happen and a lot of selling is expected to be there in the next few days. So let's wait and watch. But once this period gets over of exuberant selling by the locked-in investors, I think it will be worth looking at once again. Overall, we believe the logistics space has significant space for growth, both for delivery as well as Shadowfax.
That's interesting with the Shadowfax. Let's pull up a data patterns on the screens that stock is also buzzing in trade as we speak at the day's highest level, 7.5% coming in there. And this is on the back of an order win from a HAL. That's the reason why data patterns is buzzing in trade. Apart from that, M&M Financial is another one which is in focus as well on the back of earnings. That spike is pretty strong, 9.5% with regards to where M&M Financial goes. Sudeep, between these two names, data patterns on an order win and M&M Financial on the back of earnings, seeing some smart moves today. Have you looked at both of them? Your views?
Well, M&M Financial definitely has been our favorite. We like this NBFC space. Of course, Shriram Finance continues to be our preferred pick amongst the large NBFCs, but M&M Finance is also definitely worth looking at. As far as data patterns is concerned, I think there is nothing wrong, except the valuation is rich. And at this valuation, I think we will not recommend a buy.
By the way, so the numbers that stand out is a close to 18% improvement in the core income of the bank, which is the net interest income of the bank, of the NBFC rather, I should say, and the impairments have come down. So I think the issues or the concerns with regard to asset quality for some of these lenders has eased out just a tad bit, reflected in the numbers, but also now reflected in the stock price, which is up as much as 11%. What else is reacting to earnings? Let's bring in Shivam to round up the list, because quite a few late movers on the back of numbers. Shivam, what are you picking up?
The first stock on our list is the Granules India. The revenue of the company has gone up by 22%, and in terms of PAT also the company has registered a substantial growth of around 60%. Margins has also improved, and in terms of PAT we might see this increase in profit after tax on a lower base, because in Q1 of FY26 there has been a one-time loss of around 26 crores. In terms of prices too, the company is witnessing a cost pressure and has said that it will require more continuous management for next couple of quarters due to supply chain volatility. Next stock is Arvind Fashions. The revenue of the company has been up around 16%, and PAT has declined by around 24% on YY basis. And the company's outlook has they have stated that the West Asia conflict might lead to inflationary pressures, and that will result in shortage of capital expenditures, and also there can be a shortage of raw materials going forward for the production purpose. In terms of cost pressures too, the company has witnessed a higher minimum wages for the employees, and rising fuel cost also is one of the factors that we should look at. Third stock is the Atlanta Electricals. The revenue of the company has gone up by 48%, and which was led by the transmission and distribution segment. And in these two, the power transformers products have performed really well. In terms of margins, those were up around 100 basis points, and net profit has also gone up by 51%. In terms of product mix, the company is witnessing a shift in product mix, and higher capacity transformers are gaining share in higher order book and also in revenues. Lastly, there is Kirloskar Pneumatic, which has also posted a good set of numbers, and the revenue growth of the company has gone up by 7.4%, which is a modest growth. And in terms of primary driver, the compression business has remained a primary driver, and margins too has improved by around 15% to 15% on a YY basis. In terms of focus, the company is going to focus on the expanding product portfolio and also on improving the operating efficiency.
Okay, interesting names. You know, everywhere where the Chimam mentioned that the numbers are good, the stocks are trading under pressure. So it's just, you know, the reaction is reverse. Vinay, on the charts, anything that you like?
Which has fallen almost 20% from its recent peak of 2197, and even after the result, stock is down by 6% with a significant volume. The meaningful support for the stock is around 1540. The current level is 1620, so we can expect some extension of the correction. The primary trend is definitely bullish. Stock is placed above all key moving averages, but yes, we can wait further. And I think after 20-25% of correction, the stock will look attractive on the charts also, as well as fundamentally it may get cheaper. But yes, so none of the stocks, Aditya Birla Fashion also, I can see that there is no significant momentum building in. So rather, market is also very stock specific. Very few stocks are moving right now. So I don't find any trading specific ideas out of this particular list.
Okay. Yeah. Okay. All right. So not too much to speak of. Some of those stocks reacting sharply on the downside, though. News reports coming in. In fact, we've got a report from the NDTV network that a gas leak in the Samardang tunnel project in North Sikkim has resulted in 25 project personnel being trapped and a few casualties as well. Here's a ground report.
Tragedy has befallen in Samardung in South Sikkim since yesterday afternoon, where a part of the tunnel, this tunnel, it's also called Jholunge tunnel, or a part of the NHB Stage 6 tunnel that collapsed due to a methane gas expose around 3 p.m. Yesterday afternoon. Following which, we have so far learned that 10 dead bodies were recovered from the site where the explosion took place. What is being known so far is there was a suspected methane gas explosion. A large quantity of methane gas was exposed to the oxygen and resulting in the tragedy, which resulted in the landslide taking place inside the tunnel. What is also known is that so far of the 10 bodies that were recovered, one individual belongs to South Sikkim here in Namchi district. Apart from it, there are 3 individuals who are from Jalpaiguri, and more others are known to be from Pathankot in Punjab to Dehradun in Uttarakhand also. It is also known that I think there are more bodies to be recovered from this side. As you can see behind me, more and more officials are also joining as part of the rescue efforts here.
Okay, thank you for that. You know, it's unfortunate because at least 10 people have been killed, where several others have remained trapped after an under construction tunnel of this NHPC's Teesta State 6 hydroelectric project collapsed as well in Sikkim's Namchi district. And as well. So let's just pull up both the counters, Patel Engineering as well as NHPC as well, and see what's happening to both these counters. Patel Engineering is down nearly 1.5% in trade, as well as if you could just pull up a NHPC at the day's lowest levels with cuts of 0.9% coming in there. Maruti Suzuki, quick one. They've gone ahead and increased prices by 30,000 rupees. That's up to 30,000 rupees. That stock is also at the day's highest levels, 0.9% higher. And I think this is the second hike. The previous one that they took was around 0.8%, and this was between May and June. Sudeep, any view in terms of Maruti Suzuki? Because that stock was under pressure yesterday. Today, seeing some recovery.
We have been liking Maruti Suzuki for the last almost a year. And, there is definitely a traction as far as their small cars are concerned. And this, last Diwali, we saw a record number of bookings which came. And after a long period of time, the small car business has got significant traction. SUV business, of course, is doing great. But the small car volume pickup as well as export volume pickup has added wings. Of course, the price hikes which they are taking is going to aid the margins and the profitability. So fundamentally, we are bullish on Maruti Suzuki. It's not cheap. The stock is valued almost fully. So one investing now should be willing to wait for a 1 year plus period.
A quick last view on the technical charts for MTAR Tech. We've got maybe 30 seconds. It's come out of lower circuit. Any opportunities that you see?
So I won't go for it because today the first day follow-up should be seen. So I would rather ignore it for today.
All right, okay. The stock is climbing as we speak. All right, gentlemen, on that note, thanks so much for joining in and for speaking to us this afternoon. Our pleasure having you. Just about a minute and a half to go for the close of trade. Pull up the intraday chart for the benchmark Nifty 50. Chances are that we're not too far away from the low point of the day. We're just climbing a tad bit. I would suggest that maybe Maruti Suzuki's climbing is adding a little bit of a move towards the end, a heft towards the end. But pull up the heat map for the Nifty 50 and you'll likely see more or less the picture that you saw about an hour back. There you go. It's not really changed too much. On the bottom end of the spectrum, you have HDFC Bank as SBI as well as Infosys.
Reliance Industries. I think even the TCS will be contributing now.
Correct.
Dr. Reddy's is also down 1.5%, and I think probably this is a trade ahead of the numbers because Dr. Reddy's will be reporting numbers tomorrow. So I think that's the pressure point building up there. But what is interesting is that Shriram Finance, Bajaj Finserv have stayed there. Eicher Motors, M&M. Two from the auto pack at the top. Maruti also has climbed a little bit. Indigo has come off the highs, 1% up move coming in on that one.
And so has Bharti Airtel actually. And so has Bharti Airtel. I do want to look at the broader markets as well because that's where quite a bit of buying interest came through the trading day, and we're at the high point of the day or very close to it, up about 0.4% for the mid cap index. Pull up the small cap index again here, 0.4%. Pull up the advanced decline ratio and you will likely see a little bit of a widening of the gap. Just a tad bit, but very close.
But you can see the convergence throughout the day. You know, it's become a little bit evens and stevens between the advances and the declines. And there you go, 1390 versus 1235. So you know what the story is. You know, buying at lower levels and selling at higher levels. And it is weekly expiry as well. So you are expected to see these kind of gyrations as well. Let's just quickly look at the contributors chart in terms of Nifty 50, and then we look at the sectoral heat map at the end. There you go. I mean, HDFC 55, where it is, Reliance, SBI, Infosys. It's actually remained even Stevens from where we started off in terms of India market close. No major changes coming in terms of the contributors. Let's look at the sectoral heat map because it was real estate which stayed at the top. It's auto and defense which has taken over, but defense is only because of MTAR and HAL and Zen Technologies. These are the three counters which did see, and data patterns if I'm not mistaken. All the three saw some bit of moves in terms of the defense back, which has got you to 1% now. And auto is reflective of what you saw, the late run that you saw in Maruti Suzuki, and M&M gaining about 1% or so has benefited. On the bottom end, you have PSU banks that have underperformed, likely on account of State Bank of India, IT underperforming on account of both Infi as well as TCS and a couple of other frontline companies, and then you have oil and gas on account of Reliance Industries. It's really a few large stocks that have moved the needle today.
for the benchmark Nifty 50 as well. If you look at yesterday's move and you replicate that with a lower number of points contributed on the downside, then you will see exactly what we're talking about. We've ended off the low point of the day down about 0.2%. But that brings us to the end of this edition of India Market Close. From Hiran and myself and the team that put the show together from the NDTV Profit Suzlon studio, thanks so much for watching. Stay tuned, lots more coming up.
Co-powered by CoinSwitch.
Hello and welcome to NDTV Profit. You are tuned in to Crypto Minutes powered by CoinSwitch for your daily dose of news and updates from the crypto world with me, Sharad Dubey. Let's take a look at the top headlines. Bitcoin reclaims the $65,000 mark on positive regulatory sentiment. US spot Bitcoin ETFs notch second week of $273 million worth of inflows. Europe gets Bitcoin-backed preferred stock. And lastly, South Korea eyes September launch for second phase of CBDC pilot. Today, let's understand two terms often you hear in the world of crypto. First is proof of work, POW. Second is proof of stake, POS. They may sound technical, but the idea behind them is actually quite simple. So what do they mean? The easiest way to think about it is this. Imagine a blockchain is a digital notebook where every transaction is actually recorded. Now, before a new page is added, everyone on the network needs to agree that the information is genuine. Proof of work and proof of stake are simply two different ways of reaching that agreement. Proof of work is like a race to solve a very difficult puzzle. Thousands of computers compete to solve it, and the first one to succeed gets to validate the transactions and add the next page to the notebook. In return, they receive a reward. This system is extremely secure, but because so many computers are working at the same time, it also consumes a lot of electricity. On the other hand, proof of stake works differently. Instead of using computing power, participants lock up or stake some of their crypto as a commitment to act honestly. The network then chooses one of them to validate the next block of transactions. If they follow the rules, they earn the rewards. If they try to cheat, they risk losing part of the staked assets. So here's a simple analogy. Imagine a society choosing someone to maintain its record. In proof of work, everyone competes in a tough quiz and the winner gets the job. In proof of stake, members put down a security deposit and one person is actually selected to do the job. If they do it honestly, they get rewarded. If they don't, they lose their deposit. So while both systems have the same goal, keeping the blockchain secure and ensuring transactions are valid, the difference is simple. Proof of work relies on computing power, while proof of stake relies on economic commitment. Both play an important role in making blockchain networks secure and trustworthy. Now, as we wrap, remember you can reach out to CoinSwitch's dedicated helpline where anyone can connect with the in-house experts to get their queries resolved. Whether it's about crypto, regulations, taxation, or the broader industry, the team is available to provide guidance and help users make informed decisions. Well, that's all on this edition of Crypto Minutes powered by CoinSwitch. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबां केसरी.
Major economies in the world. Strong domestic demand, sustained infrastructure investments, improving rural sentiment, and accelerating digital adoption continue to reinforce our country's long-term growth trajectory. The financial services sector is also evolving rapidly. Regulatory expectations are becoming more rigorous. Technology is reshaping customer experiences, and risk management has become central to sustainable growth. In this environment, institutions with strong governance, innovation culture, and execution discipline will be best positioned to create enduring value. At Mahindra Finance, we have spent the last several years strengthening the core elements of our businesses, and fiscal 26 represents another important milestone in that journey. Through the year, we continued to focus on enterprise management, internal controls, and a compliance framework in addition to bringing in world-class risk processes. The results of these efforts are reflected in asset quality, which improved meaningfully with GS3 at 3.4%. Equally important was our investment in people. We developed leadership capabilities across the organization, nurturing frontline talent and building a culture anchored in accountability, customer centricity, and continuous learning. We believe this investment in our people and culture will be our competitive advantage as we lean into the future. Technology has been another important enabler in our journey. Through Project Udaan, we have established a stronger digital and operating backbone across the organization. Today, data analytics and artificial intelligence are helping us make better decisions, strengthening risk identification, enhancing productivity, and delivering superior customer experience. We are aware of some of the worries around vulnerabilities that technology might bring and are committed to adopting digital capabilities responsibly. With these strong foundational elements in place, your company is now entering a phase of responsible and sustained growth. Our efforts have translated into robust business performance. Our assets under management grew 12% to 1.34 lakh crore during the year. Profitability grew 27% on a consolidated base, despite a dynamic operating environment. In addition to the standalone businesses, the subsidiaries of Mahindra Finance also showed significantly improved results. Our leadership position in vehicle finance continues to remain at the core of our businesses. At the same time, we are steadily building a more diversified financial services franchise by deepening customer relationships, expanding relevant product offerings, and leveraging our distribution network. Our objective is not merely to grow faster, but to grow with discipline, consistency, and a balanced risk appetite while being guided by our purpose. I want to take a moment to reflect on purpose. Our purpose extends well beyond financial performance. For more than 3 decades, your company has worked to expand economic participation by bringing formal financial services to millions of customers across rural and semi-urban India. That mission continues to guide every decision we make. We firmly believe that long-term value creation is inseparable from responsible conduct, sustainability, community development, and financial, and will continue to guide the team. As we look ahead, we do so with confidence and humility. The opportunities before us are significant, so are the responsibilities that accompany them. Guided by a strong leadership team under the stewardship of Mr. Raul Rebello and supported by an experienced board, we're looking forward to this next phase with an institution that is strong, agile, and prepared for the future. On behalf of the board, I extend gratitude to you for your continued confidence and trust. I also thank our customers, business partners, regulators, and every member of the Mahindra Finance family for their commitment and contribution. Thank you.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा, आप अपना देख लो।
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
That are propelling India to what we call the Viksit Bharat stage. Those are demographics, democracy and digitization. These three things are instrumental in creating what we hope is a new India, a more bold India, a more braver India in the next few years.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have really fared today first. So viewers, markets have witnessed a subdued expiry session with Nifty slipping below the 24,200 mark amid a lack of fresh triggers. Now, while benchmark indices remain under pressure, broader markets have showed some sort of resilience and outperformed, indicating, they've outperformed the benchmarks, also indicating continued stock-specific buying despite weakness in the frontline names. Talking about the sectoral performance, so that has remained mixed at the close. Public sector banks and information technology stocks have ended under pressure, while buying interest in the realty and auto shares have helped those sectors outperform the broader market. Here's next counter that was buzzing away in trade was Karur Vysya Bank. The shares have jumped nearly 10% after the private lender has reported its highest ever quarterly profit. Net profit rose 45% annually to 756 crore rupees, and this has been driven by strong growth in the net interest income and healthy loan expansion. The bank has also crossed the 1 lakh crore rupee advances milestone for the first time, while also maintaining stable asset quality. Next counter to look at is Bajaj Auto, which has reported a strong first quarter performance with consolidated net profit rising 46% year-on-year to 3,226 crore rupees. And while revenue has jumped 65%, the company has also delivered record standalone revenue, EBITDA and profit, and this has been driven by robust growth across the domestic and export markets. Now, strong demand for both two-wheelers and three-wheelers along with rising electric vehicle sales and higher realizations, they have supported the performance of the company. US Paytm has reported its best ever quarterly operating performance with revenue rising 28% year-on-year to 2,448 crore rupees in the first quarter of FY27. So the fintech major has posted a record EBITDA of 203 crore rupees while net profit has surged 79% to 220 crore rupees. This is marking its fifth consecutive profitable quarter. So the strong performance was driven by growth in the payments, financial services and also merchant subscriptions. Now, despite the robust results, the company's board has decided not to proceed with the proposed bonus issue, choosing instead to focus on long-term shareholder value. Next counter to look at is Bluestone Jewelry. So the shares have surged 11%, putting the stock on track for its best single day gain since the listing and after the company has delivered a strong first quarter performance. So the jewelry retailer has swung to a net profit of nearly 6 crore rupees as compared with a loss a year ago, while revenue growth has also remained robust for the company. Next counter to look at is HDFC Bank. So the shares have fallen nearly 7% over the last two trading sessions, raising around 80,000 crore rupees in the market capitalization after its first quarter earnings disappointed the investors. So while the bank has reported steady profit growth, concerns over margin pressure and also softer near-term outlook has triggered the heavy selling. So despite the sharp correction there, most brokerages they remain positive on the stock, saying that its strong balance sheet and also long-term growth prospects remain intact. Next counter that was buzzing away in trade was TVS Motor. So the company has reported a strong first quarter performance with net profit rising 51% annually to 926 crore rupees. While revenue has increased 38%, the company has also recorded its highest ever quarterly sales, and this has been driven by robust demand across the domestic and export markets, along with continued momentum in its electric vehicle business. So strong volumes and improved operating leverage, they've helped boost the profitability, also reinforcing TVS Motor's position as one of the fastest growing players in the two-wheeler space. Next counter to look at is Oracle Financial Services Software, which has emerged as the standout performer in the Nifty IT index this year. So the stock has surged over 51%, making it the only Nifty IT constituent to deliver double-digit gains in 2026 so far. So in contrast, Tech Mahindra is almost flat, while every other IT stock in the index remains in the negative territory. Next counter that was buzzing away in trade was Arvind Fashions. It has reported a mixed set of first quarter earnings, with net profit falling 24% annually, even as revenue, it grew 15% to 1,279 crore rupees. The apparel retailer has said that higher operating costs and investments in the growth initiatives, they've weighed on the profitability despite healthy demand across its portfolio of brands. So the company, however, maintained that the consumption trends remain encouraging and expects momentum to improve as the festive season approaches. And viewers, the Reserve Bank of India's drive to attract foreign capital is gathering pace, providing a strong boost to the country's balance of payments. Now, according to reports, the RBI has already mobilized over $20 billion through special measures introduced last month, with the bulk coming from the FCNR deposits by non-resident Indians. So economists believe that the inflows could really help offset the pressure from the higher oil prices and even support the rupee, while also strengthening India's external position if the momentum continues. And India's core infrastructure sector has expanded 5% in June, marking its fastest growth in 5 months. The improvement was driven by higher output in cement, steel, electricity and refinery products, signaling strong industrial activity. The 8 core sectors account for over 40% of the index of industrial production, making them a key indicator of the economic momentum, and the rebound is expected to provide support to manufacturing growth and even strengthen the expectations of a healthy industrial recovery in the months ahead. Whereas Meesho has rejected allegations made by InGovern Research Services over its GST treatment, saying that it has not received any communication from any regulatory authority on the matter. And the e-commerce platform has said that it complies with all the applicable tax laws and even dismissed the claims as factually incorrect and misleading. So Meesho has also said that the report appears intended to create unnecessary confusion ahead of its planned market debut, and also reiterated its commitment to maintaining the highest standards of governance and compliance. Here's TSMC chip, the largest, world's largest contract chip maker, is reportedly planning to raise the chip prices by between 5% and 10% from 2027 to offset the rising cost of materials, advanced manufacturing equipment, and even overseas expansion. Now, according to Nikkei Asia, mature node chips could really see the steepest increases, with pricing negotiations already concluded. So while TSMC has declined to comment on the pricing front, the move could have implications for semiconductor customers and even the broader electronic supply chain. And viewers, Nissan is recalling more than 168,000 vehicles in the United States after regulators have identified the incorrect gross axle weight rating labels that could allow vehicles to be overloaded. So the recall covers select Nissan Armada and Infiniti QX56 and QX80 models. Now, according to the US National Highway Traffic Safety Administration, the issue could increase safety risk if vehicles exceed their intended load limits. Looking at some national news now, viewers, the flood situation in Assam remains critical, with 580 villages submerged and more than 10,000 hectares of crop has been damaged by the rising waters. Chief Minister Himanta Biswa Sarma has deployed 4 ministers to the affected districts to oversee the rescue and relief operations on the ground. Meanwhile, heavy rain has also battered neighbouring Nagaland, where the death toll from flash floods and landslides in Mon district has climbed to 4, with 5 people still reported missing. And the Indian Army has stepped up flood relief efforts in Upper Assam under Operation Jal Rahat, rescuing over 200 stranded civilians so far. And flood relief columns have been deployed across Sivasagar and also Jorhat districts in coordination with the civil administration. Equipped with rescue boats, medical teams and relief supplies, army personnel are evacuating families from inundated areas while also providing emergency medical assistance and even essential relief to affected communities. And viewers, the Lok Sabha has witnessed repeated disruption as opposition members have demanded an immediate discussion on key national issues, forcing multiple adjournments during the day's proceedings. So the protests centered on allegations surrounding the NEET UG paper leak, with opposition leaders seeking accountability for affected students and raising concerns over the recent police action against demonstrators. Now, despite repeated appeals from the chair to restore order, the continued protests prevented the House from conducting its scheduled business. And hundreds of farmers from Punjab were stopped at the Shambhu border while marching towards Delhi to participate in Kisan Mahapanchayat opposing the proposed India-US trade deal. Now, Haryana police has erected heavy barricades at the border, reviving scenes from the 2024 Delhi Chalo protest. And after being denied entry, the farmers have staged a protest at the border itself, accusing both the Haryana and Punjab governments of restricting their democratic right to assemble in the national capital. And the Delhi High Court has allowed activist Sonam Wangchuk to be shifted from Safdarjung Hospital to a private hospital of his choice after concerns were raised over his medical care. And Wangchuk, who remains on a hunger strike during protest linked to the NEET paper leak issue, has said that he will continue his fast until protesters are allowed to meet the members of the parliament. Now, the court's formal order is expected later today. Viewers, looking at some international news now. The Middle East conflict has intensified further, with the US carrying out a 10th consecutive night of strikes on Iran, as Washington has signaled operations will continue. So Iran has claimed fresh attacks on US military assets, while also a tanker was reportedly struck near the Strait of Hormuz, renewing concerns over the maritime security. Now, adding to the tensions, Yemen's Houthis have announced a blockade targeting Saudi shipping, raising fears of wider disruption to regional energy flows and even global trade. And the Middle East conflict has taken another dangerous turn after Yemen's Iran-backed Houthi rebels announced plans to impose a naval blockade on Saudi Arabia, raising fresh concerns over global energy supplies and also the shipping routes. Now, the escalation comes as the United States have confirmed more military casualties following Iranian attacks in the region. With tensions spreading beyond the Gulf, markets are closely watching the risk to oil's exports, maritime trade, and even regional stability. Yes, France is set to vote on a landmark proposal that would ban children under the age of 15 from accessing social media platforms. Now, if approved, the country would really follow Australia in introducing strict age-based restrictions amid growing concerns over the impact of social media on young users' mental health, safety, and even well-being. So while the move has support from many parents and teachers, it remains unpopular among teenagers and is also likely to spark a wider debate on online regulation. And viewers, before we wrap up this show, earlier today we spoke with Nimesh Chandan, CIO at Bajaj Asset Management, about the ongoing earnings season and why he believes that crude oil remains the biggest macro wildcard for the markets. Let's listen in to a snippet of that conversation.
It is my pleasure to introduce you to Nimesh Chandan, the CIO of Bajaj Asset Management. Nimesh, it is my pleasure to speak with you as always. Let me ask you about what you've made of the initial trends that you're seeing this earnings season, particularly at a time when, just as we thought that the external front pressures would dissipate, they've once again seared upwards, right? So crude oil price back at close to $90 per barrel, but it seems like the print on the earnings is better than a lot of people had anticipated. What's your thought?
Hi, Alex. Always nice talking to you. If I were to summarize our view on so far the result season, I would say positive surprise. We were expecting, after all the geopolitical issues, the issues 2 months back, we were worried about oil supplies, gas supplies, inflation rising, super El Nino. Now, compared to all that, and now the result updates which have come in, or the quarterly updates that some of the companies have given at the beginning of the quarter, they look much better than expected, whether it is credit growth, whether it is consumption growth, So actually, we are positively surprised. Certain sectors are expected to be under pressure, like for example, IT, where we were expecting slower growth, and that has impacted their valuations also. So that has gone as per expectation. So net, while we don't see a very sharp increase in earnings for the Nifty so far, but with the results that have come, the trends are definitely positive.
Nimesh, Hiralia, the trends are positive. Now, if you have to correlate that to what's happening in the markets, down what? Less than 10% at least from the last highs as well in terms of Nifty 50. But what is concerning is that we've always remained range bound in the recent past right now. And that's what investors are concerned about. In that kind of a scenario, are you seeing any green shoots where, investors should start looking at in terms of sectors then?
That's a very interesting question. Internally with the team, we've been debating whether we should give a market outlook only based on Nifty, or should we actually give a separate outlook for mid caps and small caps? Look what has happened in the market. Small caps have had a fantastic rally since March. And the index is up more than 25%. Similarly, mid cap index is at a new high. I think small cap also intraday it went to a new high. So
We are over, Jimmy.
हे, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉलमार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों। कुछ तो बात है इस दिल में।
This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise and excellence meet. In the presence of the Finance Minister, Nirmala Sitharaman. NDTV Profit Business Leadership Awards, 26 July on the NDTV network.
I got blooded in the stock market in the early 90s when Narayan Murthy and Infosys went public, and forever after that we've been spoiled. We look for businesses run by entrepreneurs like Narayan Murthy who have boldness, who have vision and a great sense of corporate governance. So some of the qualities that we admired in the stocks we invested, we also look for those in the entrepreneurs that we invest in. So those are the best qualities to look for.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook?
Market ends in the red due to fresh developments in the Middle East. Nifty erases more than half of Friday's gains in the first two sessions of this week. SBI and HDFC Bank are top losers in Nifty today, and broader markets outperform the benchmarks. Brent back in the green after staying in the red all day as mediation hopes grow. With Brent near $89 a barrel, Houthis expand Saudi shipping blockade threat, warning issued to all the commercial vehicles.
SBI Funds Management extended gains after strong stock market debut today, listing nearly 7% above its IPO price. With the listing, the company has become India's second largest asset manager by market capitalization. Bajaj Auto's net profit jumps 42% on record exports and EV growth in Q1, while TVS Motors' net profit is up 51% YOY, highest ever quarterly sales recorded. Adani Energy's revenue rises 42.4%, while EBITDA is up 30% in Q1. On day 2 of the monsoon session, in response to the questions, the government highlighted strong FDI momentum with inflows rising 18% to $58.85 billion in FY26. And even as customs and DRI stay on alert, gold seizures jump to 161 kgs after the import duty hike. India summons Russian diplomat over death of 4 Indian seafarers in vessel attack off the Ukraine coast to convey an unequivocal condemnation of a Russian attack. Spain received a royal welcome in Madrid after defeating Argentina to win the FIFA World Cup in the US. Now thousands line up in Madrid for the victory parade. Hello and welcome. You've tuned into Profit 360. I'm Nisha Podar, and here's a roundup of all the action in the world of business for the day today. Let's begin with the equity markets first. And the markets really witnessed a subdued expiry session today, with the Nifty really slipping below the 24,200 mark amid a lack of fresh triggers for the market amidst the global uncertainty once again. Now, while the benchmark indices really remained under pressure, well, the broader markets, they showed resilience and outperformed the key indices, indicating the continued stock-specific buying despite the weakness in the frontline names. In fact, my colleague Varsha is right here to bring us the complete roundup of the market action in the trading day today. Varsha, over to you.
Well, overall, if you see Nifty closes in red today, which is down almost 0.2%. SBI and HDFC Bank are top losers when it comes to Nifty, both down over 1.5%. Broader markets outperform benchmark though. Nifty mid-cap 150 closes in grain, up almost 0.5%. M&M, Finserv and Gujarat Fluorochemical are top gainers when it comes to Nifty mid-cap 150. M&M Finserv is up over 7.5%. Gujarat Fluorochemical up over 7%. Nifty small cap 250 closes in green, up almost 0.5%. Karur Vyasa Bank and Data Patterns, if you see, are the top gainers in Nifty small cap 250. Karur Vyasa Bank up over 13%, Data Patterns India up over 7%. Sector closes in red today if I were to talk about, except Nifty Pharma, Nifty Metal, Nifty Auto and Nifty Realty. Nifty PSU Bank is a top losing sector today, down almost 1%. Bank of Baroda and State Bank of India are top losers when it comes to Nifty PSU Bank today. Bank of Baroda down almost 3%, State Bank of India down over 1.5%. Nifty Realty is the top gaining sector today, up over 1%. Prestige Estate Projects and Godrej Properties are top gainers in Nifty Realty today, both up over 2%. Nifty Metal, Nifty Pharma, if you see, up for the second consecutive day. Nifty FMCG snaps 3-day gaining streak. Nifty Oil and Gas snaps 4-day gaining streak, and Nifty PSU Bank snaps 2-day gaining streak.
All right, thanks Varsha for getting us all the details. We spoke to Nimesh Chandan, the CIO at Bajaj Asset Management, on the first quarterly earnings season, which he says has been better than what was expected despite the global headwinds. He also shares his views on the earnings trend across the sectors and what it signals for the markets going forward. Take a listen.
The quarterly updates that some of the companies have given at the beginning of the quarter, they look much better than expected, whether it is credit growth, whether it is consumption growth. So actually, we are positively surprised. Certain sectors are expected to be under pressure, like for example, IT, where we were expecting slower growth, and that has impacted their valuations also. So that has gone as per expectation. So net, while we don't see a very sharp increase in earnings for the Nifty so far, but with the results that have come, the trends are definitely positive.
All right, trends look positive, says the market expert, but let's focus on the oil prices. And crude oil prices rise with Brent and WTI really trading in the green now. Brent hovers close to $90 a barrel. Yemen's Iran-backed Houthi militant group has declared a naval blockade on Saudi Arabia, prompting worries that crude shipments could get impacted further. Back home, remember, the rupee strengthened slightly, closing at 96 rupees 24 paise against the US dollar. And remember that crude oil as well as rupee, as well as the Indian equity markets have been moving in tandem because of the huge impact that crude has on our economy. All right, moving on to the big debut coming in on the stock exchanges today. SBI Funds Management, India's largest asset manager by the assets under management, has really made a strong stock market debut, listing at a 7% premium over its issue price. Now, the 9,795 crore rupees IPO, entirely an offer for sale by SBI and Amundi, values the company at around 1.2 lakh crore rupees. Let's now listen into what the SBI chairman C.S. Shetty had to say after the listing ceremony. Remember, SBI is the parent company of this arm, AMC arm, which is now listed. Listen in.
Mr. Shetty, of course, SBI's parentage was very important to the listing here and pushing this forward. How did SBI approach this listing? In that sense, how did that brand name sort of build out the reputation and the premium that this listing has brought through? If you could take us through that a little bit. Similar question to you, Mr. Calgon, with Amundi's role here. What sort of role did you play in getting this IPO forward and building this out in the way it did?
So coming to SBI, I think it's not only the largest distributor of the mutual fund products. As I mentioned in my speech also, that we wanted to bring this investment opportunity to a large number of retail customers what we have. So probably the value creation is not only in terms of what SBI FM has been delivering on their schemes, it is also a fact that they have the backing of the largest parent company. And what we would like to assure all the stakeholders is that even before listing, this company was having the best governance practices of both SBI and Amundi. I think that's a value which we have created over a period of time to all the subsidiaries what we have. We almost have 18 subsidiaries, and the value creation what you mentioned, I take pride in mentioning that our investment in these subsidiaries is about 6,000 crores as we speak today. Hopefully maybe a month later the number will change. We are valued at 4 lakh crores. I think that's a value creation for all the stakeholders we have done. And in the process we also have created institutions of enduring value in the financial services. You would like to take the rest of the question? Olivia, you would like to join?
As for Amundi, we try to bring a little bit of our experience. As you know, we are a listed company. We have lived through this process a bit more than 10 years ago, being listed in Paris. So we had the experience and we tried to share it and to advise SBIFM in the process. And I think a second dimension we brought is probably during the roadshow, the contact with international investors. Of course, SBI and SBIFM has a lot of contact with international investors, but we could also help in that regard. And Olivier has been participating in roadshows alongside Chairman Sethi in that regard.
All right, so that was from the big listing that came in today. Now the earnings race is on in the two-wheeler space as well, and Bajaj Auto as well as TVS Motor have both announced their Q1 results today. So who delivered the stronger quarter? Puneet joins in with a detailed comparison on both these numbers. Puneet.
One is, of course, the margin story, because for both the makers, at a time where you were expecting to see raw material price volatility to have some impact, both TVS and Bajaj have actually reported, stellar margin growth. So Bajaj at 20.9% is actually up 110 basis points in terms of margins. It was 19.7%. For TVS, the margins have actually improved by 30 basis points to 12.8%. And, the export, higher export sales have also helped in, managing the rupee depreciation impact. So that would have been one of the bigger impacts in terms of positive margins. Operating leverage, of course, continues to be through as the second key reason. And the third one is on price hikes, because they have increased prices to almost 1.9 to 2.4% for both these automakers. So those are some other factors. But it is also important that Q4, before the Middle East crisis broke out, they had a very low cost inventory of that, which has now come into Q1. So the margins, while good in Q1, you will have to watch out for that impact in Q2, because now the raw material that they get will be of the higher price, the more expensive one. So that's point number one. Second one has been the very strong revenue growth, almost a 30% for Bajaj Auto, 37% for TVS, and that's led by volumes. There have been a 30% growth for Bajaj, 28% for TVS, and for TVS specifically, the EV sales is up 86% on a YY basis. So that continues to be another key, very strong trigger for them. The scooter sales has been another positive for TVS at 36%. So while the motorcycle growth has slowed down, you've seen that impact that Bajaj is not reacting too much, because the domestic side of things still need to be addressed. There is a model on the anvil in the 125cc space for Bajaj, but still that will be one of the major announcements, if any, to be spoken about in the conference call today as well. But finally, on the other expenses too, all of that has been controlled in this quarter. So almost 100 basis point reduction for TVS as well as Bajaj. So marketing as well as the other expenses have been controlled in a volatile time. But that is the analysis between both those companies. It is similar in terms of margins getting improved for both, volumes being strong. But the reaction on TVS, despite richer valuations, continues to be stronger, led by their expanded portfolio as well as the exports and the scooter mix, something that is missing in Bajaj's armor right now.
All right, so that's the comparison really coming in. Thanks, Puneet, for that. Now, moving on, reports to suggest that HDFC Bank has delayed recommending the reappointment of MD and CEO Shashidhar Jagdishan to the Reserve Bank of India. Sharad, my colleague, is here with the details on what we are gathering. Sharad.
Exactly, and the overhang is there for HDFC Bank, and we can see the stock is near the day's low itself, dragging Nifty Bank, and even Nifty is also in the red. Now, the media reports are suggesting that HDFC Bank's CEO reappointment has been delayed. To put that in perspective, the independent directors are undertaking an extra review of the meeting before recommending the CEO's reappointment to RBI. Remember, board aims to finish this review in the first week of August, and this is coming in from the media reports right now, and that is why there is a kind of a selling pressure in the stock as well. HDFC Bank is yet to recommend the reappointment of the MD and CEO Shashidhar Jagdishan to RBI. Now remember, his tenure gets over in the month of October, and earlier the external legal teams had given a clean sheet on the governance issues, which was raised earlier by the ex-chairman Atanu Chakravarti as well, where the resignation took place in the month of March. So yes, the developments are happening, but delays are coming in. We had seen that buzz of the delay last 2 weeks ago, and there was a selling pressure, and now again a fresh selling pressure comes in. But overall, looking at the stock itself, it has fallen 7% in last 2 sessions. The numbers also getting impacted. 25% the stock is down from the all-time high levels, and on the year-to-date basis also the stock is down 23%. So definitely a concern for the investors of HDFC Bank.
All right, so leadership overhang really is plaguing HDFC Bank stock for quite some time now. Thanks, Sharad, for pointing that out. Now, it's day 2 of monsoon session. In response to the questions, government said that the electric vehicle adoption in India has risen sharply over the past decade, with electric vehicles now accounting for more than 8% of the total vehicle sales. Now, the government says it is keeping a close watch on the availability as well as the prices of essential commodities across the country, while continuing to monitor the impact of the West Asia conflict on supplies. In fact, my colleague Sesa joins in with all the details on what really transpired and what are the answers and clarifications we get in the monsoon session. Sesa.
The government says electric vehicle adoption in India has witnessed a sharp rise over the past decade, with EVs now accounting for about 8.3% of vehicle sales in FY26, which is up from less than 1% in FY16. Now, in the Lok Sabha, the Ministry of Heavy Industries also said that the CERT in identified, cyber security risks in Bluetooth-enabled battery management systems, which are used in some low-cost e-rickshaws. However, the mobile apps capable of remotely powering off batteries were flagged and, reported immediately to METI for removal from the app stores. The government also pointed out that it has issued an advisory to industry bodies to address these security gaps. Moreover, the government added that India now has over 52,700 public EV charging stations, including more than 16,500 fast chargers. Meanwhile, in the Rajya Sabha, the Consumer Affairs Ministry said that prices of essential commodities, including cereals and pulses, remain stable despite the escalating West Asia conflict and global supply chain disruptions. Now, an empowered group, comprising officials from several ministries is closely monitoring the prices and supplies, as well as maintaining buffer stocks of pulses and onions in order to curb price volatility and ensure adequate availability in the market.
All right, thank you so much, Sesa, for giving us all the details on what the government has really stated, especially on our self-sustenance when it comes to food grains. Now, the government has responded to many queries in the parliament in response to the questions from gold to silver, smuggling crackdown to FDI inflows, as well as the investments under PLI scheme. Government gave details in Lok Sabha, and my colleague Rishabh shares details on these important aspects. Rishabh, tell us.
Absolutely. Yet another day of parliamentary replies here in the monsoon session. What we're seeing is the Commerce Ministry has come out with certain replies. One is, of course, on the customs seizures hikes that we've seen in gold and silver post the import duty hike that the government had took in on 13th. What we have seen, according to government, this data is showing that the seizures have risen to 161 kgs from 86 kgs. This is in the period between May 13th and June 30th, which is when the duty hike was active for. Silver seizures have seen a massive hike, about 536 kgs compared to roughly only about 50 kgs earlier. So that has seen some sort of a hike in the sort of seizures that have come in. So gold and silver smuggling might have heightened after the import duty hike, is what I'm meaning to say. Apart from that, the government provided data on PLI schemes. Roughly 2.4 lakh crore investment has been generated through those. Exports have jumped under these PLI schemes. 15.2 lakh crore rupees. That's a lot of exports being driven by these PLI-oriented schemes across 14 sectors. What we're seeing is a major chunk is being made by the mobile PLI. That is making up, you've seen mobile imports go down by roughly 77% since the PLI has come in. So that's a big win for the PLI sector as well. So that's what we're picking up when it comes to commerce parliament guys.
All right, thanks, Rishabh, for that. Moving on, India's outward investments into the United States have touched $4 billion in FY26, with financial services accounting for nearly $2.7 billion, followed by manufacturing at $691 million. And over the last 5 years, Indian companies have invested nearly $16 billion in the United States of America. While the government says it offers no incentives for overseas investments, meanwhile, the center has has really assured the fertilizer stocks remain comfortable for the ongoing Kharif season. It also says urea, DAP and NPKs inventories are really adequate with availability well above demand. Now, the government added that it is closely monitoring the supply disruptions in West Asia but sees no immediate concerns over the fertilizer supplies. Let's now shift our focus to the developments on the ground where the protests are intensifying around the national capital. Hundreds of farmers from Punjab were stopped by the Haryana police at the Sambhu border as they really marched towards Delhi to attend a Kisan Mahapanchayat against the proposed India-US trade deal. Meanwhile, in Delhi, the Cockroach Janata Party's protests at Jantar Mantar has entered its second day. Protesters returned to the site after police removed the stage and the tents following Monday's confrontation there. Heavy deployment of Delhi police and RAF personnel really continues as the demonstrations carry on. So with the storm in the parliament yesterday on the new monsoon session and with outside with so many protests. Now the Delhi High Court has proposed shifting activist Sonam Wangchuk from the Safdarganj Hospital to Medanta Hospital in Gurugram, where he can really continue to be monitored. The centre told the court it has no objection to the move, but said that Wangchuk should not seek discharge against the medical advice. And also Wangchuk has been on an indefinite fast since June 28th over alleged examination irregularities and was shifted to Safdarganj Hospital from Jantar Mantar by Delhi police over the weekend. Now, the High Court is expected to pass a formal order later today on this particular matter. All right, India has summoned the senior most Russian diplomat to convey an unequivocal condemnation of a Russian attack on a merchant vessel off the coast of Ukraine that killed 10 people, including 4 Indian crew members. Now, Russian charge d'affaires also was summoned also to the External Affairs Ministry today. So there have been many communications, and for more on this, I'm joined by my colleague Vishal Vivek, who's getting us the latest on this particular development and also the diplomatic as well as the political angle between India and Russia because of these developments. Tell us.
Well, it was really a rare incident, an unprecedented incident when that top Russian diplomat was called yesterday, last night, when this incident happened. And I mean, it's a very somber moment for a lot of these families that have been directly affected, because we've just spoken to some of the families, and they're all devastated as to what has exactly happened. They're demanding answers, and all of them have none at the moment. So we'll have to wait as to how much longer they'll have to, actually wait for these answers, because they are so far away from their families that for the information to trickle down to them, it takes a lot of time, and it's one of the most dangerous waterways on the planet. So it will take some time before they have the answers, and this situation doesn't seem to be ending at the moment, and it's actually getting worse as we speak, because not too long ago the ships were passing through, but now these attacks have become normal. So we'll have to see how this unfolds.
Right, Vishal Vivek, thank you so much for getting us the update. And of course, lots of developments there on the political front also, as he mentioned, needs to be watched out for closely. Now, the flood situation in Assam really remains critical, with the death toll really rising to 11, and more than 3.1 lakh people are affected across 11 districts, and several major rivers, including the Brahmaputra, Dekau, and also Dasang and Dansiri, continue to flow above the danger mark, also inundating large parts of the state of Assam. Meanwhile, the Indian Army has intensified the rescue operations under the Operation Jal Rahat, and 4 flood relief columns have been deployed across the Sivsagar and Karendio as well as the Jorhat regions, rescuing over 200 stranded people so far. Relief efforts are also being carried out by the NDRF, SDRF as well as the fire services, while train services in parts of Upper Assam really remain disrupted due to waterlogged tracks. So that's the situation in the state of Assam because of the inundation. Now, a major accident has been reported from the Samardang tunnel project in north of Sikkim, where a suspected methane gas leak inside the tunnel has really left 25 project personnel trapped. Rescue operations are underway and authorities are really monitoring the situation closely. Let's take a look at this ground report on the situation there.
A tragedy has befallen in Samardung in South Sikkim since yesterday afternoon, where a part of the tunnel, this tunnel, it's also called Jholunge tunnel, or a part of the NHB Stage 6 tunnel that collapsed due to a methane gas expose around 3 p.m. Yesterday afternoon. Following which, we have so far learned that 10 dead bodies were recovered from the site where the explosion took place. What is being known so far is there was a suspected methane gas explosion. A large quantity of methane gas was exposed to the oxygen and resulting in the tragedy, which resulted in the landslide taking place inside the tunnel. What is also known is that so far of the 10 bodies that were recovered, one individual belongs to South Sikkim here in Namji district. Apart from it, there are 3 individuals who are from Jalpaiguri, and more others are known to be from Pathankot in Punjab to Dehradun in Uttarakhand also. It is also known that I think there are more bodies to be recovered from this side. As you can see behind me, more and more officials are also joining as part of the rescue efforts here.
All right, so tragedy there and rescue effort is on. Now back to the earnings. Adani Total Gas has reported a steady set of earnings for the first quarter results, backed by the strong operational performance as well as healthy volume growth. The net profit came in at 142 crore rupees and revenues up 27% at 1,910 crore rupees versus 1,500 crore rupees annually. And the company also said that the volumes have risen 13% on a year-on-year basis, driven by the rising consumer preference for cleaner fuel. Also, Adani Total has continued to strengthen its EV infrastructure, expanding its footprint to 5,306 installed EV charging points across the 26 states and union territories and 226 cities across the country. So that's the news update coming in on the earnings, and completely out of time on this edition of Profit 360, but news views really continue on the other side. Keep it with NDTV Profit. Thank you so much.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों, कुछ तो बात है इस दिल में.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a meeting of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
I think it's also important that how they are reshaping the industries, commercial activities which they are into. And it's a very judicious mix of people to choose from. My compliments to the team.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey. This is the show where I get you the hottest companies, interesting stories, and yes, will there be any alpha made to your portfolio or not? Let's start with the company today, but try to guess it first. And I'm sure with the names which I'll start taking on their acquisitions, you will be guessing it by the end. Surat-based specialty chemical player, right? A lot of them are there. Let's go to another hint to make it more easier for you. The stock has doubled from 2025 lows as well, giving good returns to the investors. Which stock is it? Another hint I would like to give you is this company will be acquiring Bliss GVS Pharma. Now I'm sure you must be guessing it by now. And one more hint I'll give you. The company is the promoter of Tanfac Industries. Lot of integrations are happening, right? And I'm sure by now you must have understood the company which I'm talking about, and the company which will be featured in KYC today is Anupam Rasayan. This is the company which we'll talk about, but why are we calling this company? Any announcements are coming in? If yes, what's the big story about it? The first key question we'll try to understand from the management is this important tie-up. This is a European Union tie-up. How big is this? How long this contract will go? Also, a very new entry the company has made in this segment. We'll try to understand how important this is and what will be the suggestive timelines or the capex amounts. We'll understand the integration and timelines, especially for Bliss GVS Pharma. Of course, the management has spoken about it, but we'll get into more details, if anything incremental, and the capex plans ahead and the capacity utilization. What does the overall plant numbers stand? Apart from this, if you look at it, the promoter pledge, is that coming down or is it over? That's a key question. A lot of investors have been talking about it. The raw material pricing trends in Q1, is there any inventory adjustment at play? We'll get that information for you. And also looking at the expansion in the new product category, in the niche segment, that is where the focus is happening. These are high margin products and Street is quite bullish on this. And to decode that, we'll have Vishal Thakkar, the Deputy CFO at Anupam Rasayan, giving all the queries coming in. But let's try to understand what does the company actually do. I know the company is having almost 4 decades of exposure. This was incorporated in the year 1984. Also, interestingly, there is an important detail about it, and that is the specialty chemical is having 2 verticals. I'm going to give you those 2 verticals. Which are those? The first vertical, let's get in that to show you what's there. If you could just show this first vertical, that is the life science related specialty chemicals. This includes agrochem and of course the personal care products. So personal care is definitely on the higher margin. The pharma performance materials, that's comprising electronic, EV, chemicals and polymers. So this is a little bit of futuristic. They have manufacturing products for over 75 domestic and international customers, and a good MNC exposure also is there in terms of clients. I'll get you those names also, but you have to hang out with us. They operate via 8 manufacturing facilities. Of course, they have major of them in Gujarat, there is Tamil Nadu, and from their acquisition, they have a plant in Kansas, which is in US as well. Already, this is the total capacity, and almost 25 plus complex products are there, and 90 of them are in pipeline or giving that R&D. So that definitely shows a good momentum. But they will be acquiring Bliss GVS Pharma. That's a recent announcement which we have all discussed, and the company is also promoter of Tanfac Industries. So there is listed companies, a lot of them are there. So there is a little bit of value at play as well. Almost 14,646 crore worth of order book, and that is where the strength lies, especially on the medium term visibility for revenues. Also, they deal with in recent news is the Basque Vault deal, long-term supply contract. Is a specialty chemical product. This is a $300 million. So that's a very important news coming in. Second important news is, of course, this company is a European technology company. So there is important momentum here. But let's look at the second important news as well. They're focused on the next gen solid state lithium metal batteries, and that is the entire story coming in for Basque Vault. Also, they have introduced something very important. The first in the world to commercialize ETFA using fluorochemistry. That is something pretty big. So we'll try to understand these two major announcements, of course, after the acquisitions and the integrations at play. What are the benefits? First is Jayhawk. They have strengthened their presence in the specialty polymers. So this is one of the recent acquisitions and why it is important for the company. Now this gives you access to semiconductor, aerospace and defense. These are the segments where the growth is happening. Remember, this is a US company and that's why the plant which I discussed earlier was from Kansas. Stanfac, which supports the backward integration. Earlier was the forward integration and this especially in the fluorination segment. So overall we are seeing a proper integration is at play coming in for Anupam Rasayan and also the entry into the multiple high growth therapy segments. This is where the momentum comes in for Bliss GVA. So a lot of mergers, acquisition activities are happening and that's why we'll understand much more rationale from the management. But how does the revenue breakup look like? It's still heavily skewed towards that 82% mark in the life science segment. If you understand it, only just 18% comes from the performance material segment. So this is the total revenue breakup coming in for Anupam Rasayan. But also let's move on and see the other important data. You know what is important is the global clients. They have a bigger name. They are properly getting integrated. So when you have an MNC clientele and integration, you get in large institutional global orders. Also, what may work for the company? Strong MNC collaborations and an order book. That is what the street is liking it. Second important reason is the focusing in the niche segments. They're pushing for pharma, polymer and also electronic chemicals. So this is something to watch out for. Thirdly, the expansion which is happening. The revenue potential just for the company can range between $220 to $260 million. So you can see a good runway is there. Also, this acquisition is a strategic move from a CRAMS player to the formulations player. So of course, this becomes quite value accretive going ahead. Apart from this, improvement in the working capital ratios, they were stretched from FY25 to 26. I've seen there's a good momentum happening and this might augur well for the company. And company is doing a lot of expansion. So a little bit of return ratios pressure could be there and this is the first reason what may not work for the company. Second reason, let's pull out what can happen is the execution, the delay risk in the integration. There's so many things happening and by nature, by default at times, 1 or 2 quarters plus minus or even 2-3 quarters, it can happen. Mixed views coming in from analysts. 3 out of 6 analysts still have a sell rating in the stock while the other 3 have a buy rating. So there is a conflict. Promoter pledge, the March shareholding, that's a little bit of concern in this counter as well. So I have given you both sides picture of how things are going and of course a little bit of sell-off happening but not so much. So this is the entire picture for Anupam Rasayan from both the sides, what is good, what's not and what's lying ahead. But our KYC ratings is very much important where you judge the company, income statement, balance sheet, cash flow, everything we get in for you and return ratio. I'll get you both ROC and ROE analysis. Apart from this, the shareholding street kid, whether the money has been made or not, especially in the long-term investors, or is it testing the patience and of course the valuations and the outlook as well. But without further ado, let's start the income statement. That's the first rating criteria. The top line numbers have been good, but kind of a dismal performance in the operational profit and the PAT segment. So that's quite normal in a chemical setup because there are a lot of business cycles when you judge a company and slight dip coming in the margins as well. Top line was a good growth. So that is why I'm trying to balance it out in my analysis and I'm going to give this a neutral rating as of now. Remember, Q1 numbers are not out. Most of the managements are in the silent period for their outlook. Let's talk about balance sheet and see what's happening here. Balance sheet also, it looks decently spaced out the way they are managing the ratios. The working capital ratios have improved, so that's little stress comes down. But nevertheless, the borrowings have gone up a bit. But on the other hand, the cash number has also gone up. Why this is important is because the company is doing major acquisitions. So you will have a little bit of strain in the balance sheet. And this is looking at the business model of how the company is functioning right now. So it's a neutral rating here as well. Cash flow, let's see what's happening here. Is there any lumpiness? Remember, the MNC parentage is there, so they might not have a lot of cash flows issues. But yes, investing and financing activities is where the action might change around. But look at the cash flow from operations. This has been really good. So for a moment, let's remove the investing and the financing because it's of course a business and seasonal. The cash flow from operations has done well. FY24 was just 59 crore. There was a dip coming in, but look at this amount here. That is where it's showing that improvement in capital ratios is there. So I'm going to give this a thumbs up when it comes to my cash flow analysis. The next parameter of course, are the ROCs and the ROE numbers. So of course, this is the ROE number first, just to get it. And if you could just show the ROE number also, we'll understand, this is a little bit of pressure coming in what we saw in FY25. Now that is of course coming down, and it's coming at around this 5.5% mark. So yes, there are some changes, but net there is a pressure. और जब धंधा बढ़ता है, acquisition होता है, तो return ratios में pressure आता है. Just to put it in a simplified manner, but it might increase also. A little bit of increase is expected on the expectation. So I've made it a neutral rating. Also, let's move apart from the return ratios to the shareholding, how things have moved, and largely little bit of sell-off is there, not so much also from FIs, from 8% to 7%, and DIs a little bit to 1% But now, of course, channel checks are suggesting some accumulation is at play, but the June numbers are not out yet, so we cannot get that picture. So as of now, it's a neutral rating. But let's talk about shareholding. Has the stock actually made money? Of course, for a medium-term, short-term investor or even a trader, yes, the stock has made money. Of course, from 2025 lows, the stock is up 2 times. So that is something showing a good momentum. Minor correction coming in the recent times in the consolidation zone for the technicals. But last 5 years, just 62%. So of course, investors, the long-term investors definitely wanted more returns in this. And if they are holding the stock, definitely there will be a bit impatience, and that is the human sentiment which we have in the stock markets. Overall, let's keep it neutral right now because it has given a sizable returns from 2025 lows. The stock is up 2 times when it comes to street cred. But valuations, is it the cheapness here? And I feel yes, valuations are quite cheap. Why? The current 12-month forward P ratio is 35 times. The 5-year peak almost hitting the 80 mark. And even just to balance things out, the 5-year average is also 43 times. So technically, 20 to 25% discount पे तो चल रहा है 5-year average P पे. So that's why the valuations look decent, and that's why I've given this a strong thumbs up. But apart from the valuations, let's talk about the outlook. What is the numbers? What's the future? This is very much important. The strong capex plans to expand capacity into newer molecules or chemistries. That is where the niche segment is coming in. The integration of TANFAC, which is the backward, and Jayhawk, which is the forward integration, is something which the street is quite bullish on. But let's wait for the timelines. That's something to look at for expansion in the US market. That is where important acquisitions are playing out, and new regulated market is something which they are targeting. LOI based revenue, that's expected to reach 1,000 crore by FY28. LOI is nothing but your order base which is there, which I had explained you. Also, the ample land availability at Jhagadia for future expansion. This is in Gujarat. So in case of new capacities come in, so they can add in very fast. The turnaround will be faster, and that's why I really like about the outlook. So I've given this a thumbs up. Let's give you the entire picture for Anupam Rasayan. What are the KYC ratings looking like? And largely, the income statement balance sheet has been neutral, but cash flows, the operating ones, has improved significantly for the company. Return ratios, they are mixed. Shareholding street cred, neutral rating I've given in, but valuations are quite cheap, and so is the outlook, which is good. So overall, we could say an average number which we give slightly on the positive side. Higher positive is 5.5 out of 8 for Anupam Rasayan. But what else is the story? Everybody wants to know about it, and for that we'll be joined by Vishal Thakkar, the Deputy CFO of Anupam Rasayan, and interesting tidbits about him I would like to share. He has more than 2 decades of experience, and look at that, merger and acquisition. This is where the speciality comes, and we have seen so much of that happening for this company. Of course, business development as well, and work experience includes Hazira LNG Port, SR Investments, G Capital, and CRISIL as well. We are joined in by Vishal Thakkar, the Deputy CFO of Anupam Rasayan. Vishalji, good afternoon. It's always a pleasure to have you with us at NDTV Profit, and so many announcements are coming in from your company. But before those merger acquisition question, I want to start with the recent flow of news, especially with the Basque Volt $300 million deal coming in, especially for the European Union segment. I want to understand what are the key benefits for the company, and by when can that start coming in?
Hi, good afternoon, and thank you for taking us on your channel. See, this is very interesting one for us because this is one where we are focusing on new age technology, which is basically in the solid state side, solid state battery. So we are making electrolytes. We'll be making electrolytes for them, and it's to our Spanish client. And to that extent, we believe that this is very, very landmark because this is where the new technology innovation is happening. New products are coming into picture compared to the older technology, which is there, which is more on the liquid electrolyte side. So this is more on the solid electrode side, which will improve the safety of the batteries, which will improve the longevity of the charged cycle charge time, and also the energy density. So to that extent, it is going to be very interesting for us.
That's a pretty interesting take coming in. But Vishalji, ETFA, correct me if I'm wrong because I'm not very good at chemistry. Ethyl trifluoroacetate. This is the commercialization announcement which has come in, and apparently this is the world's first plant which is being done. How is it different, first of all, and what kind of capex is earmarked for this and the incremental benefits when it can start coming in? Just could explain us where this product is also used.
So this was a product that we had commercialized in the earlier announcement that we had made. And this is basically where we had said that this product is made by us first time in the flow chemistry is what we had said. So we are the first one to commercialize this product in flow chemistry, which is an application across pharma, across polymer and other end markets as well, including other businesses. And this is one of the very strong, starting chemical for a lot of other applications that it can be eventually used for over and above in its state as well. So we believe there is a very large market that we can see from here, and we are very, very proud that we could do it in flow, because when you do it in flow, you are improving the safety standards, you are improving the efficiency of the production, you are reducing the environmental footprints because there is lesser solvents used, lesser other energy and other aspects used, and hence that's where you do a good job with manufacturing in a greener way.
That's of course one of the futuristic views coming in. But Vishalji, I want to understand this process, this integration which is happening of Bliss GVS Pharma. How is it happening? And there, of course, there is a forward integration announcements backward also coming in. So 3 names, and you're a man of mergers and acquisitions with that experience which you have, and you have been able to do that. Wanted to understand by when these timelines can go, and is there any timeline risk to it, because so many things are happening and things take time, right? So wanted to understand for the viewers any suggestive timelines for all this.
So Tanfac, I think, is fairly integrated. It has been 4 years that we have been now in the control of this company, and we have a management control of this company, and I think that's well integrated to my mind. Jayhawk, we concluded the transaction in the end of February, and that integration is right now underway, and initial level of the integrations have been achieved in terms of HR, in terms of financial reportings, and others are fairly in place now. And even from a go-to-market point of view, both the teams of marketing teams from both the organizations are working together and going to the customers together to offer a broader portfolio of solutions, and that's continuing to happen, and we will start seeing a lot of benefits out of it coming in from the end market side, also from a process integration side in terms of sharing of knowledge and technologies and manufacturing capabilities. So that will continue to happen at Jayhawk. And on a Bliss side, the question is we should be able to conclude this transaction, as we can see today, should be anything between end of August to first half of September is what we are targeting. SEBI approvals have come in, and we've started doing the process of open offer, and let's see, that's where it is, and then we can talk about the integration here. But if you look at it, the whole idea and the method, the madness of these 3 acquisitions was, if you look at the AgChem portfolio, we had clearly built it on our organic basis, and we created a whole value chain. See, today the world is not looking for a product or a chemistry. The product is looking for a full supply chain or a value chain solutions that we are.
Next question comes, Vishalji, is on that integration play. You already are having important global clients. So it becomes a no-brainer that you start getting larger orders from large institutions across the segment which you are playing in. So I wanted to just understand that if you're doing so much, isn't it the balance sheet hurting a little bit? Do you think there's a fundraise at play happening or expected to happen? Just wanted to get a flavor of that.
So see, I'll tell you, I don't see. I'm in a silent period, so I would
Right.
limit. I would be refrain to make too many statements. But if you look at it, the way we have funded this balance sheet, also, if you look at it, uh, we've kept it fairly respectful in terms of debt to EBITDA levels. If you were to look at it, and also my FY26 numbers are not reflective of the EBITDA because I have got only 1 month of Jayhawk's performance in terms of P&L, but in terms of balance sheet, I have integrated the full balance sheet. And to that extent, my numbers will look very different. If I look at pro forma only on Jayhawk added to this, I think I should be doing a 3,000 crore of revenue with around about 640 odd crores of 625 odd crores of EBITDA. And when you look at that number, which is pure pro forma, I'm not even talking about any growth or otherwise, but just pro forma, then the numbers will look far more meaningful and comfortable. And my sense is that we should be we are looking in a comfortable positions. If I look at debt to EBITDA, if I look at my leverage ratios, we should be very comfortable.
The working capital ratio is also improving in my analysis, and that was there in your FY26 cash flows also. But I want to understand a little bit, since you are a chemical company, raw material pricing, short-term trends are also there, and this is the quarter where there will be some impact, at least on the rising crude price. Somewhere or the other, ancillary impact is also there. So we do not want any numbers from you, but we want to understand, how overall sentiment is looking on the raw material pricing side. Will it be elevated in the first quarter? Just like that much we want to know.
So I would tell you that, see, the point is that the way we build our business model is that we would pass on all the costs that we have of manufacturing to our customers, and to that extent it will be there. Also, there is a bit of a as you know that we hold a reasonable level of working capital and inventory, and to that extent this is the specific reason why we hold this kind of inventory, that the supply shocks to our customers are not there. For us, anyways, it is passed through, but even for my customer, there is no supply shock really coming in of month to month or quarter to quarter, and that's where this working capital acts as an absorber to that movements and levelizes the cost structure for them.
That's pretty interesting. I also want to understand a little bit about the capex plans and the capacity utilization. What we had shared earlier. Just a ballpark, a number or a range.
Yeah. So see, today I think we've fairly done our capex program, especially in Anupam. Tenfac will do its own plans, but at Anupam we have fairly done our capex, and we believe that current capacity should support a revenue of anything between 3,500 to 4,000 crores of revenue. Broadly, that's where, depending upon the product mix, but at the current product mix plan, I think we should be doing that kind of.
Right. I was just checking the March shareholding. There is a little bit of promoter pledge also. Is this over, or will this be getting over? If you could give us a little bit of light on that.
So if I were to say the pledge that Anupam's shareholder promoters have is largely to support the company's performance, and that was basically largely it was for the reason of their preference participation that was there largely. But yeah, nothing really otherwise should you see that.
All right. So, of course, this is business as usual. That's a clarity which we all wanted at KYC. But we are actually out of time. And so it was always a pleasure to have you with us. You gave the entire picture of Anupam Rasayan, where they stand. And of course, talking in a silent period is something which is very difficult for management. But you have actually carried it off nicely. Thank you very much, sir, for the business outlook going ahead. And best of luck for the Q1 numbers.
Thank you. Thank you, and have a good day.
Thank you. So that's the management of Anupam Rasayan, and of course they are talking about the integrations which is happening and the MNC clientele which they have. That's where the interest is rising, and the R1 numbers, especially the Q1 RM numbers, there might be an impact, but there is a pass through also. So we'll try to understand how the numbers come, and for interesting stories like this, stay tuned to NDTV Profit and keep watching KYC.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
The eminent juries who are here, and that itself speaks for the commitment towards highlighting the advantage which India is having. What I am looking for in this is that we should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com is India's #1 English news website.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first. Virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew.
If there's one financial product that a lot of people get stuck in, that they shouldn't be stuck in, it's money-back policies, and they're also called traditional policies, they're called endowment policies. They can be good products if you buy them for the right reasons and depending on who you are, if they fit the bill. But chances are that you've been sold a policy that you didn't really need. And we'll talk about how you should look at these products and what you should bear in mind. Joining me to talk about is Abhishek Kumar, SEBI registered investment advisor and founder of Sahaj Money. Abhishek, thanks so much for taking the time. Let's first define this, because a lot of people don't necessarily understand what this product is. It's loosely called a money back policy. It's also called an endowment policy. How does it work? What is it?
First of all, thanks for having me on the show, Alex. Glad to be back. So in essence, endowment policy is a life insurance policy that doubles up as a savings plan as well. So if something were to happen to the person who bought that policy during the term of the policy, their family gets a sum assured. And if they survive till the maturity, then they get a lump sum payout, which includes the sum assured as well as the bonuses that have been built over the years. So to put it either way, that you get the payout, I mean, either way, whether you live or you're no longer alive. And that guaranteed payout is exactly what has made it so appealing in India so far. But what it ends up doing is that someone pays a very high premium for a long period of time and then end up getting poor returns. So that is a downside of these kind of policies as well.
Yeah. So can you describe that? Ultimately, when you're talking about any investment product, and here it's, as you pointed out, a combination of investment as well as life insurance. So ultimately, you have to ask the amount of money that you pay on a monthly basis, on a yearly basis, depending on the period of payment that you've chosen. How much of that goes towards the life insurance? How much of that goes towards the investment?
So depends upon the kind of individual policy. So if it is a new policy, because the company is kind of trying to incentivize the this distribution channel, so they might give out higher, say, premium, a larger part of the premium as a commission. But over a period of time, that reduces during the term of the policy. So in that sense, I mean, the premium partly buys the life cover, and the rest is invested conservatively after the the payment to or commission to the agents are considered. So they end up mostly investing in government bonds like that. So for example, the LIC's most popular plans pay around say 40 to 50 rupees per thousand of sum assured as a kind of a final bonus till maturity. So
it's not very clear. So I'm going to ask you the question again, Abhishek. If we're talking about a premium that is set, and first of all, we're talking about a particular tenure that you pay this for, and then after that you get a payout, right? The question is, on a yearly basis, if you have a premium payout, you're saying that in the first year, as most life insurance products do in the traditional policy space, a large part of your premium goes towards the commission of the person who sells it to you, the distributor, right? It can even go so far as to give the full year's commission, full year's premium to the commission, right? Is that how it works?
Not to a larger extent now that, the regulator has kind of curbed it in. But but a significant portion, say 10-20%, depending on the kind of policy is being issued and kind of incentive being given to individual distributors. So that is a ballpark number. So what happens is, because let's say if you're paying 1 lakh rupees and 10% of that goes as kind of a commission. So you're starting
10%, Abhishek, but 10% is very low. I've heard it goes as far as 50-60%.
I'm talking in conservative terms. What I'm saying is that
no, but let's give people the truth. 50% of that 1 lakh goes towards, at least I would think, goes towards the commission and the first year premium. So effectively 50,000 of that is then split between your life insurance premium and the investment that you make. Is that not right?
That is correct. So what I'm trying to say is that even on a conservative basis, let's say you take a smaller, let's say commission payout, still someone has to make 10% of the returns to get to the original 1 lakh of investment, which they consider the kind of an investment in the policy. So when you, let's say, consider a policy which pays out 50%, then you have to make 100% of the money back to actually get the original investment back. So that is a kind of mind game. These policy end up playing on the people. So what I'm trying to say is that the quantum of payout to as a commission to the agents, that determines, how much of eventual return you will make over the policy during the entire tenure.
Okay, so that's one. The second is, what the original question was, Abhishek, is that, okay, once you've done with this commission, on an annual basis, there is a split. There is a portion that goes to cover the term insurance portion, which is the life insurance, the pure life insurance portion, that is the mortality benefit that you get, and the rest goes towards investment. Roughly, what is that split?
So the mortality rates are primarily fixed by and large. So, that could mean that, let's compare it to a term plan, right? So as the mortality charges are same, whether it is for a traditional policy or is a term policy. So by and large, let's say someone in an age group of 30 years for a 1 CR policy, they pay a same, premium around 10,000. So that is hardly 0.1%. So even in this case, let's say if you pay a 1 lakh premium, the mortality charges would be actually very minuscule of the overall, premium one is paying. And the other part of it goes towards first the commission and then the investment actually happens. So you can make your own calculation that way.
Yeah, so depending, if you're doing a like-to-like comparison, and ultimately they do offer you a much smaller mortality benefit, right? So I've seen something as low as 5 lakh or 10 lakh rupees that is paid out in the event of a mortality, right? So therefore, if you calculate that 0.1%, then out of that 1 lakh, it's a very small amount that is going towards, as you pointed out, the actual term component or the insurance component of this product. So it's primarily an investment product. Would you agree?
Yeah, indeed, totally. I totally get that. And by and large, a thumb rule is like 10 to 15 times the premium is what is, considered or given as a kind of a sum assured or the life cover. So you can, for a, let's say 1 lakh kind of premium for a 30-year-old, they might get something between 10 to, let's say 15 lakh kind of cover.
Sure. Okay, so then it comes to how much are you gaining over the course of this investment. And in the mutual fund space, and I'm drawing this comparison knowing full well that people in the insurance industry don't necessarily like that comparison, to say that you shouldn't be comparing. But ultimately, when new products are launched, they're launched as new fund offers. And so to that extent, there is a similar treatment when they're launching new products. So to that end, if you're doing a regular investment in a mutual fund, then there is a concept called internal rate of return, which is calculated, right? Which gives you how much each installment of the investment that you're making over a period of time is netting you cumulatively, right? So if you're doing a SIP, then every investment that you make, suppose it's 10,000 rupees per month, then each 10,000 rupees would have earned you something, and you end up with a 13 or 12 or 14% internal rate of return over a 10-year period, right? How much on an average do these traditional policies give you in terms of this metric?
So with similar metrics, so let's turn this question, ultimately where these premiums are getting invested in, right? So as I said before, they are primarily getting invested in government-backed kind of bonds, primarily. So with a repo rate of say 6%, you can make, that is the eventual return that these policies would make. And if you deduct the kind of commission being paid out and all, the eventual return could turn out to be 4 to 5% with that kind of, let's say, investment. Whereas the same amount, just to give a kind of a example, if the same amount for this, let's say, same 15-year period, someone invests in a PPF, they get 7.1% post-tax. So, if you actually have that kind of long tenure, probably you'll do better, even if you don't want to invest in something like an equity mutual fund, which comes with its own volatility. If you park that money for 15 years for 7.1% kind of return, you'll do more, you'll get more for your buck, and you can buy a term plan for a very low premium, and you can actually have something substantial for a family in case you're no longer alive.
That's a good point. And this amount that you receive from as a payout from this money back policy, what is the tax treatment on it, Abhishek?
So it is tax free in that sense. There is tax in that, so that's the benefit of that.
Up to certain limits, right?
Yeah, that is true.
So can you describe that limit? It depends on the premium that you pay, right? On multiple policies, if your annual premium in multiple policies crosses a certain threshold, then it becomes taxable, right?
Yeah, I believe that number is around 5 lakh. I mean, that's the kind of change which has been done. So if your total premium paid for all the policies is more than 5 lakh, then it doesn't, the policy which goes over and beyond that amount, I mean, that doesn't become tax-free.
Yeah, that is taxable then. All right. So what you're saying essentially is that a traditional policy, if you're going into it from the perspective of making a safe investment, is not really giving you what you are desiring. You might as well park it in a public provident fund at the very least if you're very risk averse. And it's also important, Abhishek, to consider that a 1 lakh policy is giving you practically nothing, right? So can you imagine the opportunity cost beyond that? You're actually eating up into a substantial portion of what you would normally have saved. You're probably cutting down on certain other expenses that you might have, and you're not really getting much from it. Can you give us a sense of what a term policy, if you were paying the same amount of money and you were getting 10 lakh rupees as mortality benefit, and you were instead trying to do a term policy, what would that calculation look like?
Probably, I mean, by that roundabout numbers, you would end up paying around $1,000 for getting a 10 lakh kind of policy. Although not every company might issue it in that sense, but that is what the, let's say, kind of cover ratio you get, right? For every 1 rupee of premium that you pay in a term plan, you get almost 1,000 times that cover. So with that logic, I mean, let's say a 1 CR policy would come for around 10,000 odd bucks. But of course, the mortality rate for different individuals, depending upon their health profile or their age band, would differ. But I'm giving it something for a, let's say, 30-year-old kind of.
Sure. Abhishek, and finally, therefore, now that we come to it, a lot of people end up buying not just one, but multiple traditional policies because they're missold this. And so it makes sense to stop making contributions to these policies, right? There is a surrender value that you get. And it might actually, even if you don't get a substantial amount in the surrender value, still make sense because there's an opportunity cost involved. Would you agree?
Yes and no. So it depends. Let's say what is the total tenure you spent in the policy. Yeah. So if you're towards the end of the tenure, it might make sense to probably continue for a while, or even to the extent make it a paid up policy so that you don't end up paying more premium, but you kind of freeze on the premium which have already been paid and you freeze on the benefit. And at the end of the maturity, you get the amount back. But if your initial, let's say, period of this policy, then probably it might make more sense to consider the opportunity cost of investment, as you rightly said, and then come out of this policy. For the benefit of your viewers, post 2024, people who have bought these kind of policy, the surrender value was also increased. But sadly, for the people who have bought, let's say, these policy before that time period, the surrender value is very minuscule as compared to what the premium they paid in the same period.
And you said, and just one final clarification, you said that after a certain threshold of making payments, it becomes paid up. What is the definition?
So paid up is essentially, in simple terms, you do not get the money back, as in like you ask for a surrender and get the whatever the embedded value there in the plan is. You say that, okay, this policy was for say 10 years. I've already paid 5 premiums, and then I don't want to pay any more premium, but I don't want to withdraw the money because I don't have any need for it. And I will wait for another 5 years. And as the policy matures, I will take out the value embedded till then at that point of time. So that is how it differs from what you get from a surrendered policy, which you might get a very low, let's say, value out of it because too much has gone into as commission. So you better wait it out in case you don't have immediate need of money and then wait till the maturity.
Just goes to show that there is a crying need, Abhishek, to review the commission structures that are paid out in the insurance industry. It has been done in other financial products, and this is something that needs to be looked at seriously. Abhishek, thanks so much for taking the time for joining me on this conversation.
Pleasure is all mine, and thanks for having me.
We have to slip into a very quick break. On the other side, we'll talk about a very interesting piece, which is a lot of people talk about emergency funds, but how do you define it? And how do you keep it separate from your regular savings? We'll talk about that after this very quick break.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूँ? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
They built, they led, they redefined the business conversation. Now, India Inc.'s finest takes center stage. Who will win the NDTV Profit Business Leadership Awards, 26 July on the NDTV network. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
Welcome back. We're here to talk about emergency funds. But wait, I know that you've heard this quite a bit. Oh, you should save 3 months of your expenses as an emergency fund. But the question is, how do you separate and distinguish between regular savings and an emergency fund? Why even do you need an emergency fund? And what will you use it for if you don't have an emergency? Dilshad Bilamoria, Managing Director and Chief Financial Planner of Dilshad Consultants, is joining me to talk about this. Dilshad, how do you distinguish, first of all? And first of all, thanks so much for joining me today.
Thank you so much for having me, Alex.
No, my pleasure. How do you distinguish between an emergency fund and any other regular savings?
Yeah, so basically an emergency fund takes care of very important requirements like medical emergency, loss of job, emergency for a rainy day, financial distress, etc. Right? So it's very important to have a separate fund dedicated for emergencies like this.
Okay. Now, I know that the traditional definition, Dilshad, is that you need to have at least, and depending on who you are and what your risk profile is. So I've heard things like if you are a single earning member of a family, then it's better to push your emergency fund to 9 to 12 months of your monthly expenses. And that should include your EMIs as well. This is a very large amount of money, right?
Yes. So it's what you said is right. Absolutely. If the spouse is not working, then it's important because there's only one breadwinner for the family. So typically 12 months is what we suggest. If the spouse is working, then we typically say 6 months of emergency expenses. Just to bring a point here, Alex, what is the emergency fund comprise of, right? So it should comprise of all your current living expenses, your lifestyle expenses, any EMIs or loan liabilities, any recurring investments, especially insurance payments, right? So because obviously if the policy has to be paid, you're not having a job, you still need to continue to pay these kind of standard payments. So I think that's what builds an emergency fund, and it's important to have this for either 6 or 12 months.
Okay. The question is, a lot of people starting out don't have that kind of money available to them, and in the waterfall of things that they need to save for or spend on, putting 6 months of expenses together seems like an almost impossible dream, right? Because you think of somebody who's living in Mumbai, you're talking about spending 30-40% of your monthly income just on rent. And then you have food and entertainment and various other things. And somebody says you should also save for your future, for your retirement, which is 40 years away. and you're like, what is left in your hand at the end of the day, and where do I build this emergency fund? How do you do it?
So I think the first thing that people need to look at is basics, right? Which is the emergency fund and which is insurances. So both your health insurance, your life insurance, depending on your kind of status, and your emergency fund. So I think, and if somebody doesn't have the funds right away, what we suggest is start building it slowly. So you can put aside something every month from your salary earnings towards building that emergency fund. But I think before looking at longer term goals, this is something that needs priority for sure.
Okay. In a sense, that makes complete sense, right? Because Dilshad, better than not having anything is having maybe a month worth of an emergency fund, worth of your expenses, and then you build it up to maybe a month and a half, and then 2 months, and then over a period of a couple of years, you've established about 4 or 5 months. That's the way to approach this, isn't it?
Yes, that's absolutely right.
Okay. Now, how do you park this money? A lot of people just leave it lying in their savings bank accounts, but then the tendency is, Dilshad, that the use of the word emergency is very loose to say that, I have a party this weekend and I need to host my friends. And so therefore I need to make sure that everything is in order. I need a new couch. And so therefore it's an emergency. I need to spend this.
Right. So I absolutely, agree, especially among the youngsters, what's emergency for them is not emergency for different kind of people, right? But I did mention earlier what an emergency fund should comprise of, and it should be typically your living expenses, etc., which are the, non-negotiables. So things like lifestyle, eating out, etc., should not typically, or maybe just about 10-20% of that should form the emergency. Coming to where you should be investing. So this is where smart investing actually helps. Rather than just leaving it in your bank at 2.5-3%, many banks don't specify that there is a quasi FD or a flexi FD option that people can use. So for example, if I have a bank balance of say ₹1 lakh, I can tell the bank that I'd like to keep aside about 50% or 60% of this in a quasi FD to ensure that I'm able to kind of earn a better return. And that would be as per the current, interest rates which FDs are offering. So, and it works very well because you can actually even withdraw from it like, a normal savings bank account. So that's one option, Alex. The other option is liquid funds. So liquid funds typically would give you between 5 to 6%, again, depending on, the very short-term liquid overnight rates. Higher the interest rates, you would get higher on liquid funds, and typically a 2 to 3 day kind of money that you can get back into your bank account. There are arbitrage funds. Here again, people must note that arbitrage has typically an exit load before 30 days, and therefore it's important to remember that and may not sometimes form an emergency fund. But some AMCs or mutual funds also offer the flexibility of ATM withdrawal options, right? So where you can kind of have the money parked in a liquid fund and just go across to the ATM and withdraw the amount. Until then, you're earning the interest what the liquid fund is giving you.
Okay. When it comes to actually paying in an emergency, it has been highlighted to me, and I often had the same conversation, Dilshad, to say that you shouldn't be putting money in your savings bank account. But then it was highlighted to me in the comment section of one of our social media videos that said that this individual himself had gone through a serious medical condition and his family was not able to access his funds quickly enough, and so that was a problem, right? To say that you need to have liquid assets and very quickly available assets in the event of an emergency. Can your credit card fill that role in this kind of a scenario? We're not using your credit card as an emergency fund, but as a stopgap measure so that you can then utilize those funds and get access to those funds.
Absolutely. And if it was a medical kind of ailment, one is I would recommend that person to actually start the claim process, after being hospitalized within day 1 or 2, because typically claim processing takes that long, in hospitals. And there are cashless facilities. So if it was a medical requirement, they could have requested for that. But like you said, the other best option is paying the amount immediately via the credit card and simultaneously requesting for either a redemption on the liquid fund or, an arbitrage to meet the exigencies.
In this kind of a scenario, Dilshad, on paper, the solutions seem very easy to follow. But I think in this very case, just to bring to your attention, and this becomes a great hypothetical example, right? Which is to say that in a medical scenario where you're not near a hospital of your choice and you have to be rushed to the nearest available hospital, it's not necessary that the policy that you have provides a cashless facility in that hospital. So you will then have to make a certain payment as a deposit, and then certain other things need to take place for you to be treated. This is just reality, isn't it?
There are outpatient coverages as well, which have started newly, which people can take the benefit of. They have certain terms and conditions, but typically say there is an emergency, like you said, like an accident, and somebody's rushed to the emergency room. The moment you inform the emergency desk that you have this outpatient policy and give them the policy number, I'm sure that they will admit you. In fact, it is their responsibility as the hospital to kind of immediately take you in and then further process the payments and registration fees, etc.
Important to note. All right, just to close out, Dilshad, at various points of time over the person's life cycle, and when they're starting out, I would assume that if they have the ability to lean on certain support structures, and here I'm talking about people depending on their parents and what they can give them in the event of an emergency. They don't necessarily need to put that 6 months together, but over a period of time you do build that up, right? So is it okay at the start of your career to not necessarily have that 6 to 8 months and to build out slowly?
No, I wouldn't agree with that.
No?
I think it's very important. Like I said, it's the first thing that someone needs to build upon. And especially those individuals or couples that have to take care both of children as well as their elderly parents. It becomes very taxing, Alex, because the responsibilities increase. But for youngsters, I would say at least look at 2 to 3 months to start with and, gradually build upon it, especially because some of the youngsters that we see are moving cities. They're moving to better opportunities in different cities, etc. So it's very important that if they don't have family backup, especially, that they do have something to fall back on when there is an emergency.
Yeah, it's a good point. All right. Well, on that note, Dilshad, thanks so much for joining me and for taking the time. Pleasure speaking with you as always.
Thank you so much. Thank you.
Well, there you have it. Starting something is better than not starting at all, particularly when it comes to investments. I hope this helped you out. If it did, let us know in the comment section. And if there's anything else that you'd like us to speak about, then tell us that as well. That brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in, and do stay tuned. This is NDTV Profit.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. India's unshakable news habit. NDTV.com. is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Niraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance,
Let's kickstart this conversation with Vishal Kapoor, CEO of Bandhan AMC. In a bit, we'll get in Gopal Jain of Gaja Capital Partners as well. Vishal, great having you. Thanks so much for taking the time out and being with us. As a lot of your peer sets get listed and people get a slice of buying into those, the stocks of those or shares of those companies, one would love to understand from you, as somebody who's running this business actively, how do you see the growth path for an asset management firm over the course of the next 5 to 10 years?
Thank you, firstly, for having us. But on the question, we are slightly conflicted because we are in the asset management business, but we do believe it is a fabulous business to be in. It's not just one or two or three, but many levers that are helping us. Firstly, of course, there is nominal GDP, which is growing quite well, and that has its own income and savings effect on, on a large demographic which is beginning to come into the middle class. In addition, we have a larger financialization theme. So as people save more, a lot of more proportion of that assets is coming into financial assets. And within that financial assets, over the last decade or so, we've seen that mutual funds have been beneficiaries and clearly getting established as the primary savings vehicle and investment pool for retail savers. So these three factors combined is, I think, giving us a runway, which is really, I think, still in the early phases of its growth. We've done very well, as you know, as an industry. The industry has grown assets at significant high double digits. But as I look ahead, I think there is still so much room to grow. Like I said, it's still in the early innings of growth. Clearly, over the next 5 years, I would expect this to continue growing at significant double digits. Doubling from here would not be surprising at all.
Interesting. Okay. Gopal Jain of Gaja Capital also joins in, and Gaja, I believe, is slated to come out and get listed sometime later this year too, in the alternative space. So not in the retail mutual fund or not in the mutual fund space, but in the asset management space firmly. Gopal, good having you. Thanks for joining in. Kickstart this conversation with Vishal talking about how, while there has been some road to growth already established over the last 5, 10, 15 years for the mutual fund industry, for asset management as a space, there is, according to Vishal, a lot of room to grow for the next 10 years at the very least, maybe even longer. What is your sense, Gopal? How do you see the next 5, 10 years for the space?
No, absolutely. If you just look at the numbers speak for themselves. I think Vishal was being very modest when he was talking about the growth in the mutual fund industry. If you look at the last 10 years, mutual fund industry has grown 6.3x. And, the tailwind for asset management, for the tailwind for savings in general, and equity in particular, is longevity. So, India is broadly, in terms of its social indicators, in terms of median age, in terms of life expectancy, where the US was 40 years ago. And you see how far the US has come in terms of allocation to both mutual funds and funds in general and alternatives. So alternatives in the US were less than 1% about 40 years ago, and they are 3 to 5% now. Similarly for equity. So the drivers are longevity. The tailwind is longevity. The drivers for the two businesses are a little different. The growth for mutual funds has been 6.3x. The growth for alternatives in the same phase has been 43x. This is just the base effect. So mutual funds were growing off a larger effect. Both the industries are compounding, and Vishal would have a better estimate as to how does he see the industry growing forward. But you can expect, as the bases become larger, both for mutual funds and AIFs to keep growing, but maybe not grow at the same rate that they've grown in the last 10 years.
Which is fair also. So Vishal, let me take that question to you. MFs have a larger base, the next vectors of higher than average growth, do they come by deeper penetration and use of technology, or do asset management firms like yourselves, which are powerhouses in the mutual fund space, also adopt alternative products as a way of growth? Because that space, you can argue, I mean, relative to the world or even in absolute terms, is still in its nascency, if you will.
Question, Neeraj, and I think at least for Bandhan AMC, I can say that we look to grow on the alternate side as well. So we do have a Vidarth alternates platform. We are in the SIF space as well. So that's the new emerging product, as we all know, in the middle with our Aruda SIF. So a full service asset management company offering mutual funds, SIFs, alternates, etc., can definitely be one format for driving growth across the various segments that are emerging. And I think, like Gopal mentioned, the growth ahead is just many fold. Just looking at a penetration, AUM to GDP is a simple measure that is used globally to look at how much more headroom we may have. We've done very well, but we are still in the 20% odd mark. Keep in mind that most developed markets are more than 100% AUM to GDP. The global average is close to 70%. So even if we look at the next 10 years of doubling from here, we are still looking at about 30-35% AUM to grow. So from there, you can still double and still come to average. So you can get an estimate of how much more room we have. Certainly from a larger base, mutual funds, and really this depends on which products deliver how, but the growth rate on a smaller base for alternatives is faster. It's also reflecting what investors are choosing. So as investors mature, maybe looking at more sophisticated strategies, taking on more risk, and looking at nuances in their portfolio is becoming the next phase of growth. And certainly both alternate managers as well as mutual funds or AMCs such as us, which also have an alternates platform, can be both growth engines for us.
Now, Gopal, because of the base effect and the fact that we're still in the nascency, the growth mark of alternatives can't be questioned. The question will literally come is that what mutual funds have done beautifully is democratize investments, single stock investments, which could have been large and not as safe, into something which is safe and available for the small ticket investor as well. Obviously, alternatives can't go down that far at 250 or 500 rupees. But as you look far, right, and I mean, there is a need to connect domestic savings more effectively to private markets. How can alternative managers do that while maintaining investor protection?
So that's a great question, and we see this happening in 3 steps. First is democratize institutional access. So there are many institutions today who cannot participate in alternatives, leave retail investors. What does that mean? When tomorrow EPFO, NPS, etc., start investing in alternatives, then in one stroke, crores of investors, underlying investors, get access to alternatives. The second step is regulated intermediation. So SEBI has just come up with the SIF category, which lowers the threshold from 1 crore to 10 lakh. And it has worked very well. And I think in 1 year, it has raised close to 18,000 crores. And the third step is accreditation. This is a beautiful step that has been initiated by SEBI, which is accreditation moves away from minimum ticket size of 1 crore to income and wealth as a criteria. And I think this will further broaden access for investors. And then, of course, there are listed products. There are REITs, InvITs, and down the road, there'll be listed managers. These also democratize and mainstream alternatives, furthering access for alternatives to those investors who either do not want to commit 10 to 15 years or who cannot invest, like vast sections of retail investors, who will neither qualify to be accredited nor meet the 1 crore minimum.
Okay. Now, Gopal, this question goes to you. Since Vishal runs a retail mutual fund pocket, I want to ask him to analyze his peers. But you can definitely look at the space which is available for investors right now to invest in as right now, right? What would determine which of the asset managers will come up trumps over the next 10 years? Is it ones which combine traditional investing and alternative investing the best? Is it the technological edge? Who determines that amongst the, who determines or what will determine who's the first amongst equals or 1, 2, 3 amongst equals?
So I'll take a step back, and my way of looking at this question is very different. I don't think it's just about technology. I don't think it's just about products. I think it is about performance and hygiene. I think managers that continue to deliver on performance consistently, whether it is public markets or private markets, will win. And similarly, investors that continue to deliver on trust and transparency will win. See, 10 years ago, the mutual fund industry started institutionalizing. And today is a major milestone. I think with SBI mutual funds listing, now 50% of the AUM is listed. So first we institutionalized savings, then the managers themselves got institutionalized. In private equity, this playbook in India is yet to play through. Institutionalization of managers is just about to begin. And in a few years, you will see greater institutionalization. And what does institutionalization bring? It brings transparency, it brings succession, it brings greater equity ownership within teams, greater alignment, so on and so forth, and inspires more investors to come forward. So my framework for this is performance and hygiene. Some managers already have it. Those who manage to keep it, those who manage to excel on these two parameters of performance and hygiene will continue to succeed or will overtake others. I think selection of products, public plus private, public alone, private alone, technology, these are all enablers.
And Vishal, to you therefore, while we've determined that there are great growth opportunities for this space, what are the risks? Is it an attempt to grow too fast? Because Gopal made a pertinent point that it's not about just the other edges, but the fact that performance, which is a no-brainer. But what are the risks really to the growth of the space and the growth of a particular asset management firm vis-a-vis the others? What should people keep in mind when choosing where to invest within the alternative space or within the companies which are in this within this asset management space?
Let me take the second one first, which is the risk for a particular asset manager before we look at the space. Because the risks are slightly different. For a single asset manager, clearly, like Gopal mentioned, that performance consistency is a key driver, trust is a key driver. So therefore, sustaining that, especially performance, becomes a key growth enabler. And I think as we all understand that everyone goes through cycles, fund managers go through cycles, and also in the urge of trying to beat a very competitive peer set, how much risk do you pile on, and can you actually execute to that risk becomes itself, one of the challenges to manage. So performance consistency, and as an asset manager, how much risk are you adding becomes one of the things to watch out for. Now that risk could be in terms of how individual schemes are performing or distribution, technology, etc. So where have you invested? So those are things I would watch out for. Just using the anchor that performance consistency, trust, governance, and all the enablers that are required by the ecosystem is something that you've got to offer. Keep in mind, it is a very competitive space, and customer behavior evolves all the time. So you certainly can't sit on your laurels. So that would be, I would think, things to look out for in the individual asset manager.
Got it.
For the ecosystem, I would be sort of more bullish, because I think the risk fade away a bit, because the ecosystem, despite the individual performance cycles that asset managers go through, still has a lot of room to sort of allow some of these edges to actually be blunted, if I can call it that. There, I think it's really about the core trust and the behavior that savings or investors are showing. So the SIP growth story, the resilience that we've seen in the investor of not getting scared at every dip, I think those are the more fundamental drivers. So I would call the core trust in the vehicle as the primary driver. Expectations of investors. In the past, as we all know, markets have delivered fabulous returns. Now we expect that to keep compounding, despite the fact that nominal GDP or real GDP may come off a bit, given the fact that inflation has been more moderate. So getting your expectation retagged from maybe a high teens to a low teens or maybe just about double digit.
Sure.
They're not getting disappointed, because that will still probably be the best asset class, but not really getting disappointed in taking on too much risk by doing more exotic things. So those are things I would say which would impact the industry over the longer term.
Great. Gentlemen, both of you, thank you so much for taking the time out and being with us today and giving us this glimpse of what the AMC space could look like, and all the best with your respective businesses as well. I really appreciate your time.
It is my pleasure to introduce you to Nimesh Chandan, the CIO of Bajaj Asset Management. Nimesh, it is my pleasure to speak with you as always. Let me ask you about what you've made of the initial trends that you're seeing this earnings season, particularly at a time when just as we thought that the external front pressures would dissipate, they've once again seared upwards, right? So crude oil price back at close to $90 per barrel, but it seems like the print on the earnings is better than a lot of people had anticipated. What's your thought?
Hi, Alex. Always nice talking to you. If I were to summarize our view on so far the result season, I would say positive surprise. We were expecting, after all the geopolitical issues, the issues 2 months back, we were worried about oil supplies, gas supplies, inflation rising, super El Nino. Now, compared to all that, and now the result updates which have come in, or the quarterly updates that some of the companies have given at the beginning of the quarter, they look much better than expected, whether it is credit growth, whether it is consumption growth. So actually, we are positively surprised. Certain sectors are expected to be under pressure, like, for example, IT, where we were expecting slower growth. And that has impacted their valuations also. So that has gone as per expectation. So net, while we don't see a very sharp increase in earnings for the Nifty so far, but with the results that have come, the trends are definitely positive.
Nimesh, Hiralia, the trends are positive. Now, if you have to correlate that to what's happening in the markets, down less than 10% at least from the last highs as well in terms of Nifty 50. But what is concerning is that we've always remained range bound in the recent past right now, and that's what investors are concerned about. In that kind of a scenario, are you seeing any green shoots where investors should start looking at in terms of sectors then?
That's a very interesting question. Internally with the team, we've been debating whether we should give a market outlook only based on Nifty, or should we actually give a separate outlook for mid caps and small caps. Look what has happened in the market. Small caps have had a fantastic rally since March. And the index is up more than 25%. Similarly, mid cap index is at a new high. I think small cap also intraday it went to a new high. So it's a Nifty which is under pressure. Nifty is seeing some of the sectors, some of the companies having some specific issues because of which the overall earnings growth is looking a little muted, and it is also affecting the valuations. So while Nifty, we are still bullish, we still think that the intrinsic value of Nifty is around 27,000, which means we are hoping for a new high soon. But the momentum in earnings and in stock prices of mid caps and small caps is fantastic. Even in terms of sectors, we see green shoots, or we see positive commentaries from most of the sectors. IT is the only sector where we see some kind of pressure. In banking also, though the stocks have reacted very sharply, but if you see, the numbers are not that bad. And many of the large companies are seeing a turnaround in their credit growth numbers, in their NIMs. So that will continue for the year. So, and valuations are very attractive. It takes a little bit of patience. So I don't know which one will move first, but there is a good amount of companies to select from. If you're looking at the broader market, say in BSE 500, you can create a fantastic portfolio today which has quality, growth, and value.
जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूं? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
Now SEBI came out with BRSR, Business Responsibility and Sustainability Report. The important thing to notice there is that these are quantifiable numbers which can be compared. So these are comparable, these are quantifiable. So that is the more important thing.
Welcome all. Today, the Board of Directors of Adani Total Gas Limited successfully concluded its meeting and approved the financial results for the first quarter of fiscal year 2026-27. Let me take this opportunity to briefly share the current business operating environment. During the first quarter, geopolitical developments in West Asia continued to influence global energy markets, leading to elevated crude oil prices and a corresponding increase in Brent-linked gas contract prices, additionally affected by currency volatility. In addition, upstream LNG curtailments for non-priority sector were at their highest in April, but gradually eased as the quarter progressed, resulting in improving gas availability towards the end of the period. Aimed the supply side tightness, timely regulatory support, including the expansion of the waiver on imbalances in system disciplinary charges, provided relief to CGD industry. Additional gas allocation also helped in maintained uninterrupted supplies to consumers. Going forward, we are leveraging portfolio optimization, flexible sourcing contracts, and market-based procurement to efficiently manage our gas requirement and ensure supply continuity across all customer segments. Navigating these market fluctuations, ATGL ensured uninterrupted supply of gas to its consumers. This strategic approach has driven another quarter of resilient operational growth. During the quarter, gas sales volume reached 303 MMSCM, reflecting a robust growth of 13% year-on-year, led by 18% year-on-year increase in CNG volume to 218 million metric standard cubic meter, while PNG volume grew steadily by 4% year-on-year to 85 MMSCM. As we continue to scale our operations, we added nearly 38,000 new household connections during the quarter, taking our total PNG domestic consumer base to 11.41 lakhs customers. At the same time, our steel pipeline infrastructure, the backbone of CGD business, expanded to 15,987 each kilometers, strengthening our distribution network and supporting future growth. We also commissioned 5 new CNG stations during the quarter, taking our total network to 707 stations, further enhancing accessibility and convenience for our customers. Adding to this momentum, we have achieved strong traction in our industrial and commercial segment by adding 392 commercial customers and 56 industry customers, which is 3 times and 2 times of previous fiscal year respectively. Now, our commercial and industrial base stands at 7,277 and 3,145 customers respectively, and we intend to continue our growth movement in this segment. On e-mobility business vertical, our EV charging network expanded to 5,306 charge points with an installed capacity of 58 megawatt as on Q1 FY27. We delivered a robust growth of 100% year-on-year in electrons sold, thus reaching 3.3 million units during the quarter. This strong momentum reinforces our confidence in achieving our target of 10,000 EV charging points, alongside a continuous focus on improving network utilization and operational efficiency. Our joint venture, IOAGPL, continued to expand in their 19 operating geographical areas meaningfully. Together, we operate across 53 geographical area, which represents 14% India's population, spanning across 125 districts. Our customer base stands at 13.74 lakh PNG customers, along with 12,326 commercial and industrial customers. These customs are served by a robust steel pipeline network of 28,600 inch kilometer and CNG network of 1,167 CNG stations. Our strong operational execution was reflected in our financial performance with the revenue growth at the rate of 27% year-on-year to INR 1,910 crores during the quarter, and EBITDA stands at INR 281 crores. On sustainability side, our Kier Edge and CRISIL ESG scores have increased to 84 and 66 out of 100 respectively, thus placing ATGL among the best performing ESG companies in peer group. Dear shareholders, as India advanced through the Amrit Kal journey towards becoming a developed nation by 2047, we believe the energy sector will play a pivotal role in this transformation. The growing focus on cleaner fuel and Government of India's aspiration to increase the share of natural gas in country energy mix to 15% provide a strong foundation for the sustainable growth of your company. Building on this opportunity, ATGL is accelerating its evolution from a city gas distribution company into one of the India's most trusted integrated clean energy platforms, serving homes, mobility, industries, and the communities with affordable, reliable, and sustainable energy solutions. Through the continuous expansion of our energy portfolio, infrastructure, and digital capabilities, we are creating a future-ready enterprise that is well positioned to capture emerging opportunities, deliver sustainable growth, create long-term values for shareholders, and continue meaningfully to India's energy transition. Thank you so much. Namaste.
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूँ? 17 years of experience, largest database of elite profiles, or 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India's unshakable news habit. NDTV.com is India's #1 English news website.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी। ये आपके लिए।
कुछ तो बात है इस दिल में।
P Mark, the mustard specialist since 1933.
सरसों से सरसों।
The stakeholders are becoming more important than just the shareholders or the majority shareholders. So things have changed over the last 3 decades. In that background, corporates in India who are more focused on stakeholders, who are more focused on sustainable business growth, that has been the focus of the jury. We are looking at people or organizations where the focus is on long-term sustainable growth rather than doing something by cutting the corners and making a one-off improvement and one-off wealth creation. The jury realizes that wealth creation is important. These are people who are creating wealth not only for their company but for the nation. But it has to be in a sustainable way, in a long-term way, without harming the environment and the planet.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
Hello and welcome to The Big Question. I'm Vikram Oza, and this evening we're talking about a health warning that should really concern every Indian household. A study that has been led by ICMR, which is the Indian Council of Medical Research. Now that study has found that nearly 9 in 10 Indian adults have some form of cholesterol imbalance. And what is even more worrying right now, that this is not just about people who are overweight or diabetic or suffering from hypertension. The study is estimating that 355 million Indians have abnormal lipid levels despite having normal blood sugar, despite having blood pressure. And in other words, now if you take a look at the entire phenomenon, you don't have to just look fit or feel healthy or be young even. You could still be carrying a hidden cardiovascular risk, even if you're all of the above. And talking about that age phenomenon, the problem peaks as early as the age group of 30 to 39. So we're talking about much younger Indian adults. And the root cause could be low HDL. Now, HDL is the good cholesterol. It pumps out the bad cholesterol. So low HDL is clearly not good, and that is emerging as the biggest culprit right now. This comes at a time when heart disease in India, it's already known in the country as the biggest killer. It is responsible for nearly 29 lakh deaths every year. We hear of shocking incidents of people who are fit, who suddenly collapse. Now, cardiovascular disease is accounting for almost a third of all deaths in the country. So several questions emerge from this ICMR study. For one, is India staring at a full-blown heart health crisis? Are we too focused perhaps on treatment rather than prevention? And should cholesterol screening start much earlier, considering how this afflicts even the much younger people? It also raises the question that if millions of working-age Indians are heading towards preventable heart disease, is this no longer just a healthcare challenge, but also an economic one? That's the kind of list of questions that we have on The Big Question tonight. So yes, at this point in time, we are looking at this ICMR study, which is really raising some red flags. But what about the heart health crisis that India is in? How do we tackle it? How severe is it? Let's take that across to our panel that's joining us on the show. Dr. Sunila Garg is joining us as an advisor at ICMR at the Indian Council of Medical Research. Along with her, there is Dr. Anurag Mehrotra. He's chairman and senior cardiologist at the SIDH Multi-Speciality Hospital. Also with us to decode the lifestyle angle is nutritionist Shikha Agarwal. And Sujini Ponuswamy is joining us, precision health commentator. She joins us from New York. Thank you all for making the time for The Big Question. Let's get straight into this. Dr. Garg, not only is this study, the ICMR study, not only is it saying that almost 90% of Indian adults have some form of cholesterol imbalance, one of the most striking findings that I am looking at is that 355 million Indians have abnormal lipid levels despite having normal blood sugar and blood pressure. So does this fundamentally change the way that we think about cardiovascular risk in India, and how big is this health crisis, this heart health crisis that we're talking about?
Thank you so much, first of all, for having me on the show.
And it is so timely that day before I was in a meeting with the metabolic disorders where we discussed all these issues. And this study is very timely as we all need to know that primarily metabolic syndrome affects majority of our population. Because we know that, though, from the South Asians perspective, we know that baseline lipid profiles are significantly higher than the standard limits. And also we know that the good cholesterol levels tend to be intrinsically low. So that is important. So also, as you rightly said, that it is affecting almost about 355 millions of Indians who have got abnormal lipid levels. And another important thing is that it is not only when we talk about this part, as we go further, we'll also look at the diet part. We do have a good nutrition person with us. So when we call it as a metabolic syndrome, we know that majority of the Indians, when you say about, 85% and all, they are, exhibiting Asian Indian phenotype. So that means they are having high percentage of body fat, also central obesity also. But important part is also in those individuals where the person may be apparently looking normal. He may not be fat, he may not be having, central obesity, but still he has got abnormal lipid profile. So that is very, very important. So we do need to take some actionable steps in form of routine screening, targeting obesity, dietary modifications.
So I'll talk about what we need to do in a moment, ma'am. But just to understand the phenomenon, Dr. Mehrotra, as a cardiologist, are you seeing more patients who appear healthy on the surface, but they end up having serious cholesterol issues? Or is heart disease risk only showing up when they go for testing?
We are in midst of a tsunami of non-communicable disease.
You're calling it a tsunami, sir?
Of course, it is. The two biggest health challenge at this moment are non-communicable disease and the climate change. More than 70% of morbidity and mortality because of cardiac diseases, non-communicable diseases. What we are discussing today is only part of the problem. Cholesterol is one part. But the important thing is change in the lifestyle.
Right.
Such Asian, South Asian phenotype entities is there, where we are more prone for developing cardiac problems because of there are different factors for that. But it is not the only thing. The change in lifestyle, we have to look into what we are eating, how much exercise we do, how much time we sleep. There are studies. In the last 7 years, there is 3 times increase in the incidence of heart disease, from 1,300 per lakh to roughly 3,900 per lakh. In the last 7 years only, it was said that heart attack affect the people in elderly age, but not so in India.
Yes.
More than 25% of patients who present as a heart attack are in less than 40 years age group. And as the time is passing by, age is further coming down. We frequently see patients in 20s in our wards and CCUs with heart attack. So it is really a catastrophe which is happening.
So you're calling it a catastrophe, you're calling it a tsunami. Shikha Agarwal, since the doctor is talking about lifestyle, many viewers still associate cholesterol only with obesity. But the data is suggesting that even the thin, the active, the non-diabetic individuals, they too may have unhealthy lipid profile. So isn't this an easy misconception to have and yet a very dangerous one?
Yes, it's very rightly said that this is the biggest myth that, people has made this a, norm in their head that only obese people can, have cholesterol. In fact, I would like to put this on the fact that we call this TOFI, which is thin outside and fat inside, where you're very much, looking thin, from outside, but you're fat inside. That means you're carrying a lot of visceral fat. And that is very much possible with thin people also. That means they are looking thin, but their lifestyle is so messed up that they are developing this, problem of very high cholesterol. And moreover, more than the, bad cholesterol, they're not having enough good cholesterol that could protect this bad cholesterol. So because of their sedentary lifestyle, reluctance of, outside food, packaged food, disrupt sleep. And as I said, we say it, there's a very famous saying, jitna packet khulega, utna pet fulega. And when I say pet fulega, that means increase in the visceral fat. And that is the main reason for this, high cholesterol. And as ma'am and sir has put on this thing, it doesn't mean that, thin people can't have cholesterol.
But
So
the
this
study
thin
has
outside and
found,
fat inside.
but
Yeah.
like Dr. Garg, and perhaps I can ask you about this study, which has found that higher prevalence is reported in women rather than men. And there's very little difference between urban and rural India as well. So, Dr. Garg, does that tell us this is no longer a city problem or that much of a lifestyle problem that is confined to affluent Indians?
Definitely. I think when we talk about stress and strain, when we talk of mental health issues, non-communicable diseases issues, there is hardly much of a difference between the rural, urban or urban slum population. Because across, the boundaries, we do have higher burden of these diseases. And I will always, say that gender perspective should never be neglected.
Right.
Because you can see that, 91% of the women are there. First of all, they are, excluded from the system. They do not come for regular checkups and all that. And the second part is that, when they are leading much more sedentary lifestyle as compared to men. So they are much more vulnerable. So gender perspective becomes very, very important.
Sujini, what do you say about this? Looking at public health policy that is geared towards tackling a problem where you have nearly 9 in 10 adults having some form of lipid abnormality, does this go beyond a public health issue into an economic issue as well?
Hello, everybody. Thank you so much for having me. Yes, it is going to become an economic issue as well because of mainly, if you look at the study, it is targeted mainly the individuals from 30 to 39. And these are the people who are our working population today. And having any kind of abnormality in the system, not necessarily a full-blown disease, is going to affect the productivity, is going to cause insurance premium rises because of the health issues that they're going to constantly keep coming up with. So it is affecting the working population, which is the biggest paradigm shift I see in this, I see as a big takeaway from the study.
So, Sujini, if you look at the global phenomenon, when it comes to lipid abnormalities, India today is losing already millions of productive life years to cardiovascular disease. Now, if today's younger workforce is developing heart disease and it's happening earlier than it used to, then what could that really mean in terms of productivity, in terms of healthcare spends like you were talking about, long-term growth for the country as well? It's something that needs to be thought of in public health policy, right?
Yes, you're very right. Rightly put. Yes, public health policy needs to target screening individuals. Corporates need to start screening at a very young, when they start working, they need to start putting this as a mandatory requirement. Today, workforce does not have any mandatory checkpoints when seeking employments. These kind of packages should be incentivized by the corporates, by the governments, public and private, primarily to motivate people who are tending to follow healthy lifestyles, incentivize lower insurance premiums for them. So, and also at the policy level, create more, health kiosks in public places so that the awareness about getting screened early is not anymore an issue which will, they will be sidelined or they will not get employment. All those kind of things also needs to be taken care of when the policy is outlined, that it's more towards making India healthy rather than sidelining people from work or from discriminating them from anything else.
So if you look at it from a wider lens, Dr. Mehrotra, have we gone after treatment rather than prevention? Heart disease is already India's leading killer. It accounts for nearly a third of all deaths, as we are reporting. But are we still largely treating heart attacks after they occur rather than preventing them in the first place? And does public health policy need to kind of change to be able to get the prevention out first?
That is the crux of the problem. We have got the best of the treatment, but we have to look which is the population which is getting affected. I was listening to the discussion. It is a lower socioeconomic status persons. Most of the persons who migrate from rural area to urban areas, they are the persons who are getting most affected. They don't have the financial means to get them checked up. They don't have the time because if they go for the checkup, they will lose their day's wage. So we have to build a robust preventive program. That is what is the need of the hour. Government has started doing something regarding that. We need to screen those persons at the site where they work. for the various. There is a thing called cardiac profiling, where we are into that. We are a very large program, non-communicable disease elimination program. We are doing that. We go there to the side with our medical van. We do all the relevant checkups and the examination of the patient, and we profile them according to the risk, whether they belong to high risk, medium risk, or low risk. And I remember sharing some data which is for the study we are going. Almost 70% of the persons comes in the high or medium risk group in India, in that particular population, those who can't afford the treatment. So problem is there. What is the problem? Processed food and digital addiction. These are the two things which is causing the problem.
Right.
So, there is a data, we are eating more than 11.5 lakh crores of processed food every year.
Correct.
More than 5.5 lakh crores of food outside home. So these are the one, which type of food are we eating? This is not the food meant for our genes. We are not competitive with that. And it is that is leading. Other thing is this pollution, climatic changes. There are two things. You should have right kind of food to eat and right kind of breath to breath. It is
so we don't have the right kind of food to eat and we don't have the right kind of air to breathe. These are the fundamental lifestyle issues that we are facing.
We are not fit. And we don't do anything to remain fit.
So our lifestyle is not likely to change immediately, Dr. Mehrotra. The kind of cities that we live in, the kind of infrastructure problems that we face on a day-to-day basis, the way people travel in Mumbai, all of that remains a constant. We're talking about the monsoons, how it kind of sends the entire city into a havoc. And of course, we've seen how diseases really grow during this monsoon time as well. But, you know, that's a lifestyle issue that isn't going away. But then, if you are looking at prevention, then at what age should routine cholesterol screening ideally begin for Indians? Is the old belief that screening can wait until middle age, is that now outdated?
No. The problem starts from the teens itself. The type of food the children are eating nowadays. There is a recommendation from the American Heart Association, ACC, that first screening should be below the age of 2 years. Below the age of 2 years to detect, particularly in the children who are born to having history of premature heart disease and familial cholesteremia. Thereafter, each and every child should be subjected to lipid profile at the age of between 9 to 11 years to assess the risk for the cholesterol problem, which can later on develop into a cardiac problem. Thereafter, at the age of 19 and thereafter at every 5 years, one has to be screened for that. So it is at 0 to 2 years.
Yeah.
Then 9 to 11 is mandatory for everyone there.
Right.
It is more so with India. It is more so with India.
So now that we are hearing from the doctor what the lifestyle issues are, the culprits could be the ultra-processed foods, the sedentary jobs sometimes, the stress, the poor sleep, the lack of exercise, all of that, Shikha, considered. You tell us if Indians are becoming overly focused on calories and weight while they're ignoring metabolic health markers like cholesterol. Is that something that's happening and something we need to change?
Absolutely. So the thing is, the problem is people are so much obsessed, with the weighing scale and the weight and losing weight to look at it in a certain way. They are not bothered with the kind of food they are eating and whether the food is coming from an outsource or in the packaged form. So I always say that, all these packaged form, they are not meant for us. As sir rightly said, we have our certain genes. The way you have inherited look from your ancestors, we have inherited certain gut bacteria from our ancestors. And these gut bacteria, they don't recognize these packaged food. And this overconsumption of A, the availability, and B, the promise of not giving so much of calories so that you are in shape and, you don't gain weight. So all these marketing gimmick, they attract, these young people, to eat those food and which has nothing. They are not bothered about the nutrients. All they are bothered is about the calories and the protein or the carbs in that. But they are devoid of any fiber or any protein. And for cholesterol, the one important thing to have is a fiber in our diet. And slowly that fiber is missing. And because of that, this cholesterol is increasing and that cannot be controlled. So
by fiber, you mean vegetables and fruits, right? You mean vegetables and fruits are typically missing from most diets in...
Absolutely.
But this is an urban phenomenon.
Absolutely. Yes, correct.
But what about our
But this is
workspaces?
a
Yes, go on, Shikha.
So this is, if I say fruits and vegetables, this is what we are meant to eat.
Yes.
I mean, we are not meant to eat the fiber which is coming again nowadays. Everything is coming from supplements and everything. You cannot pack fiber in a supplement. We get easily from the nature. The more you rely on the plant food and the nature, and the less reliance on the anything which is coming from lab or factory.
Yeah.
Our gut recognizes that, and that is how you reduce your bad cholesterol.
Yes.
And these soluble fiber, not only you reduce your bad cholesterol, the LDL, also it is a food for your gut bacteria, right? Which automatically again helps to reduce your LDL. And that is simple what we need. We don't need to do some exotic stuff. We just need to come back to a tradition, old eating habit, the way we are meant to eat,
But that is exactly the point, Shikha. The point being made over here is that our urban lifestyles don't allow. It becomes a luxury to have that traditional kind of practices when it comes to consumption. But that indeed is the reason why we are in this kind of scenario health-wise.
Yes.
But Sujini, at the workplace, I'm just wondering if employers should be more proactive as well, given the financial cost of chronic disease. Do you think corporate India should invest more aggressively in preventive health and employee screening programs, because a lot more happens at workspaces?
Yes. Targeting workforce, as I mentioned earlier, yes, when they start work, giving importance about all the making screening mandatory is important, because we need to know the baseline levels which they currently have and where it is moving towards over a period of time, which also helps the individual track themselves better. Corporate India also provides today mandatory health packages. They have to make heart health an important aspect by providing qualitative food at the cafeterias that are available today in the corporate offices.
Yeah.
And also make it important or reward employees who tend to move and change their lifestyle, who are able to, they don't have to monitor, corporates don't have to monitor every data point, but the individuals who are able to see a lot of changes from where they started to where they are by implementing the practices should be given, should be rewarded adequately, rather than just doing just checks and just leaving it at that. I believe there's no actionable point or actionable reward happening at corporate level with regard to people tending to follow unhealthy to healthy, making unhealthy to healthy choices. It's just that you come, you work, and you go. That's about it, right? It's not more about, there's no more of any human intervention or interaction happening at the health point with corporates.
This is very true. So whether it's at the workplace or at home, Dr. Mehrotra, since we are talking about popping supplements as opposed to having the natural foods and having the fiber the natural way, there is often this confusion around the medication. At which point should people focus on lifestyle modification, and at which point should they seriously consider, these supplements or even undergoing medical treatment, of course under expert guidance, but still?
This is the topic which has to be answered by a specialist. For that purpose, one has to consider doctor. I would like to raise one thing about the prevention. I would like to congratulate Government of India that in the newer labor code it has incorporated that every person over the 40 years should be screened for health problems. This is now become mandatory for each and every factory owners and other establishment. And this is now mandatory. That is a very big step in the direction. With regards to the diet and what is good life, what is balanced life, that we have to learn about it. Which type of food we have to eat. We all know what we have to do, but we are not doing that. Problem is there. The other problem is many of the migratory population which lives in the cities, they don't have the means to eat the right food. They don't have time to buy the meat. They have to breathe in the air which is not worth living.
Yes.
This is the thing which is causing problem. This thing can only be addressed by government.
So I'm just wondering if, we need to start early. Schools, maybe they should be treated as the first line of defense. Dietary habits and health behaviors being shaped far too late in life is perhaps causing this problem. What do you say, Dr. Garg?
Yeah, I first of all say that India has got national program for prevention of non-communicable diseases.
Yes.
Which insists on screening at 30 years of age. And now we are thinking of bringing it down to 18 years of age. And it focuses on comprehensive healthcare. That means preventive, promotive, and curative. The program has gone down to, when we talk of 36 states and union territories, that is important. And we are focusing on at all stages. And as was pointed out by Dr. Mehrotra also, that, childhood obesity is now rising very rapidly.
Yes.
Also, our adolescents are becoming, obese. So at all stages now we have to talk of health promoting schools as well. But then, three things are very important. That means heart healthy diet, which is low in saturated fats, trans fats, and added sugars. And we must focus on front of package labeling. The second part is regular exercise. When we talk of 150 minutes of moderate to vigorous exercise in a week,
Yes.
or we talk and regular measurement of weight, and avoid toxins. When we talk of alcohol and substance abuse, that has got to be avoided. Medications come subsequently. That is important. When Dr. Mehrotra and his team decides, that is important.
Yes.
But important is your regular checkup. And most important is, as I said, our programs reach the last mile.
Correct.
And even ministry also focuses on, earlier we used to have all samosas and all. And here in this panel, I'll say that whenever any meetings are happening, see what diet are we having over there.
Yes.
The meeting is on metabolic diseases, but we are having samosas and all. We have to change ourselves.
Correct.
Change will begin from me. So that is important.
Very
and
important.
orders are already there that you focus on nuts and all during the meetings, and that should be integral part of our, eating also. That
Correct.
is important.
So it has to change at a grassroots level. India, if it's aspiring to become a $30 to $40 trillion economy by 2047, now we need to realistically achieve those ambitions only if we consider the population's health, particularly cardiovascular health. If it continues to deteriorate, this isn't boding well. So India's heart health challenge, not beginning in hospitals, it's quite clear, it's beginning years earlier. And it's happening silently in our homes, in our workplaces, in our daily habits. And if nearly 9 in 10 adults have some form of cholesterol imbalance, then prevention can no longer be a personal choice. It has to become a national priority. Thank you, Anurag Mehrotra, Sunila Garg, Suchini as well, Shikha Agarwal. Thank you for joining us with your views and insights. And yes, a quick reminder from my side, do not wait for the symptoms. Know your numbers before your numbers actually define your health. I'm Vikram Oza. Thank you for joining us on The Big Question. But before we wrap it up completely, let's tell you about one of the most prestigious honors in Indian business, which is back after a pause of 13 years. So the big day is 26th July. NDTV Profit brings back the Business Leadership Awards, celebrating the leaders, the companies, the entrepreneurs who have helped shape India's economic journey. 5 days to go now, and among the many awards that evening on the 26th of July, is the IPO of the year. Let me introduce you to the nominees for that award. The first one is Meesho. It's a listing that showcases the strength of India's digital consumption story and the growing maturity of its startup ecosystem. The second one is Grow, which brings one of India's most recognized fintech brands to public markets. This nominee for IPO of the year at the NDTV Profit Business Leadership Awards, capturing the imagination of a new generation of investors. The third nominee is ICICI Prudential AMC. It had a landmark listing highlighting the rapid evolution and growing importance of India's asset management industry. LG Electronics India is the fourth one among the contenders, one of the year's most anticipated public offerings. It combined global brand strength with deep consumer trust in India. And the last but not the least, Lenskart, a category creator in itself, successfully translating consumer leadership and innovation into a compelling public market debut. So those are the contenders for IPO of the year. Just 5 days to go, 26th of July. We'll see you at the NDTV Profit Business Leadership Awards.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूं? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
India's unshakable news habit. NDTV.com is India's #1 English news website.
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी।
कुछ तो बात है इस दिल में।
P Mark, the mustard specialist since 1933.
बरसों से सरसों।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's lovely to be back.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Hello and welcome. You're watching Market Express and I'm Himakshi Bahugna. Let's get straight into the show and see how the markets have really fared today first. So viewers, markets have witnessed a subdued expiry session with Nifty slipping below the 24,200 mark amid a lack of fresh triggers. Now, while benchmark indices remain under pressure, broader markets have showed some sort of resilience and outperformed, they've outperformed the benchmarks, also indicating continued stock-specific buying despite weakness in the frontline names. Talking about the sectoral performance, so that has remained mixed at the close. Public sector banks and information technology stocks have ended under pressure, while buying interest in the realty and auto shares have helped those sectors outperform the broader market. Viewers, next counter that was buzzing away in trade was Karur Vysya Bank. The shares have jumped nearly 10% after the private lender has reported its highest ever quarterly profit. Net profit rose 45% annually to 756 crore rupees, and this has been driven by strong growth in the net interest income and healthy loan expansion. The bank has also crossed the 1 lakh crore rupee advances milestone for the first time, while also maintaining stable asset quality. Next counter to look at is Bajaj Auto, which has reported a strong first quarter performance with consolidated net profit rising 46% year-on-year to 3,226 crore rupees. And while revenue has jumped 65%, the company has also delivered record standalone revenue, EBITDA and profit, and this has been driven by robust growth across the domestic and export markets. Now, strong demand for both two-wheelers and three-wheelers, along with rising electric vehicle sales and higher realizations, they have supported the performance of the company. US Paytm has reported its best ever quarterly operating performance, with revenue rising 28% year-on-year to 2,448 crore rupees in the first quarter of FY27. So the fintech major has posted a record EBITDA of 203 crore rupees, while net profit has surged 79% to 220 crore rupees. This is marking its fifth consecutive profitable quarter. So the strong performance was driven by growth in the payments, financial services and also merchant subscriptions. Now, despite the robust results, the company's board has decided not to proceed with the proposed bonus issue, choosing instead to focus on long-term shareholder value. Next counter to look at is Bluestone Jewelry. So the shares have surged 11%, putting the stock on track for its best single day gain since the listing, and after the company has delivered a strong first quarter performance. So the jewelry retailer has swung to a net profit of nearly 6 crore rupees as compared with a loss a year ago, while revenue growth has also remained robust for the company.
Next counter to look at is HDFC Bank. So the shares have fallen nearly 7% over the last two trading sessions, erasing around 80,000 crore rupees in the market capitalization after its first quarter earnings disappointed the investors. So while the bank has reported steady profit growth, concerns over margin pressure and also a softer near-term outlook has triggered the heavy selling. So despite the sharp correction there, most brokerages they remain positive on the stock, saying that its strong balance sheet and also long-term growth prospects remain intact. Next counter that was buzzing away in trade was TVS Motor. So the company has reported a strong first quarter performance with net profit rising 51% annually to 926 crore rupees. While revenue has increased 38%, the company has also recorded its highest ever quarterly sales, and this has been driven by robust demand across the domestic and export markets, along with continued momentum in its electric vehicle business. So strong volumes and improved operating leverage, they've helped boost the profitability, also reinforcing TVS Motor's position as one of the fastest growing players in the two-wheeler space. Next counter to look at is Oracle Financial Services Software, which has emerged as the standout performer in the Nifty IT index this year. So the stock has surged over 51%, making it the only Nifty IT constituent to deliver double-digit gains in 2026 so far. So in contrast, Tech Mahindra is almost flat, while every other IT stock in the index remains in the negative territory. Next counter that was buzzing away in trade was Arvind Fashions. It has reported a mixed set of first quarter earnings, with net profit falling 24% annually, even as revenue, it grew 15% to 1,279 crore rupees. The apparel retailer has said that higher operating costs and investments in the growth initiatives, they've weighed on the profitability despite healthy demand across its portfolio of brands. So the company, however, maintained that the consumption trends remain encouraging and expects momentum to improve as the festive season approaches. And viewers, the Reserve Bank of India's drive to attract foreign capital is gathering pace, providing a strong boost to the country's balance of payments. Now, according to reports, the RBI has already mobilized over $20 billion through special measures introduced last month, with the bulk coming from the FCNR deposits by non-resident Indians. So economists believe that the inflows could really help offset the pressure from the higher oil prices and even support the rupee, while also strengthening India's external position if the momentum continues. And India's core infrastructure sector has expanded 5% in June, marking its fastest growth in 5 months. The improvement was driven by higher output in cement, steel, electricity and refinery products, signaling strong industrial activity. The 8 core sectors account for over 40% of the index of industrial production, making them a key indicator of the economic momentum, and the rebound is expected to provide support to manufacturing growth and even strengthen the expectations of a healthy industrial recovery in the months ahead. Here's TSMC chip, the largest, world's largest contract chip maker, is reportedly planning to raise the chip prices by between 5% and 10% from 2027 to offset the rising cost of materials, advanced manufacturing equipment, and even overseas expansion. Now, according to Nikkei Asia, mature node chips could really see the steepest increases, with pricing negotiations already concluded. So while TSMC has declined to comment on the pricing front, the move could have implications for semiconductor customers and even the broader electronic supply chain. And viewers, Nissan is recalling more than 168,000 vehicles in the United States after regulators have identified the incorrect gross axle weight rating labels that could allow vehicles to be overloaded. So the recall covers select Nissan Armada and Infiniti QX56 and QX80 models. Now, according to the US National Highway Traffic Safety Administration, the issue could increase safety risk if vehicles exceed their intended load limits. Looking at some national news now, viewers, the flood situation in Assam remains critical, with 580 villages submerged and more than 10,000 hectares of crop has been damaged by the rising waters. Chief Minister Himanta Biswa Sarma has deployed 4 ministers to the affected districts to oversee the rescue and relief operations on the ground. Meanwhile, heavy rain has also battered neighbouring Nagaland, where the death toll from flash floods and landslides in the Mon district has climbed to 4, with 5 people still reported missing. And the Indian Army has stepped up flood relief efforts in Upper Assam under Operation Jal Rahat, rescuing over 200 stranded civilians so far. And flood relief columns have been deployed across Sivasagar and also Jorhat districts in coordination with the civil administration. Equipped with rescue boats, medical teams and relief supplies, army personnel are evacuating families from inundated areas while also providing emergency medical assistance and even essential relief to affected communities. And viewers, the Lok Sabha has witnessed repeated disruption as opposition members have demanded an immediate discussion on key national issues, forcing multiple adjournments during the day's proceedings. So the protests centered on allegations surrounding the NEET UG paper leak, with opposition leaders seeking accountability for affected students and raising concerns over the recent police action against demonstrators. Now, despite repeated appeals from the chair to restore order, the continued protests prevented the House from conducting its scheduled business. And viewers, hundreds of farmers from Punjab were stopped at the Shambhu border while marching towards Delhi to participate in Kisan Mahapanchayat opposing the proposed India-US trade deal. Now, Haryana police has erected heavy barricades at the border, reviving scenes from the 2024 Delhi Chalo protest. And after being denied entry, the farmers have staged a protest at the border itself, accusing both the Haryana and Punjab governments of restricting their democratic right to assemble in the national capital. And the Delhi High Court has allowed activist Sonam Wangchuk to be shifted from Safdarjung Hospital to a private hospital of his choice after concerns were raised over his medical care. And Wangchuk, who remains on a hunger strike during protest linked to the NEET paper leak issue, has said that he will continue his fast until protesters are allowed to meet the members of the parliament. Now, the court's formal order is expected later today. We are looking at some international news now. The Middle East conflict has intensified further, with the US carrying out a 10th consecutive night of strikes on Iran, as Washington has signaled operations will continue. So Iran has claimed fresh attacks on US military assets, while also a tanker was reportedly struck near the Strait of Hormuz, renewing concerns over the maritime security. Now, adding to the tensions, Yemen's Houthis have announced a blockade targeting Saudi shipping, raising fears of wider disruption to regional energy flows and even global trade. And the Middle East conflict has taken another dangerous turn after Yemen's Iran-backed Houthi rebels announced plans to impose a naval blockade on Saudi Arabia, raising fresh concerns over global energy supplies and also the shipping routes. Now, the escalation comes as the United States have confirmed more military casualties following Iranian attacks in the region. With tensions spreading beyond the Gulf, markets are closely watching the risk to oil's exports, maritime trade, and even regional stability. Yes, France is set to vote on a landmark proposal that would ban children under the age of 15 from accessing social media platforms. Now, if approved, the country would really follow Australia in introducing strict age-based restrictions amid growing concerns over the impact of social media on young users' mental health, safety, and even well-being. So while the move has support from many parents and teachers, it remains unpopular among teenagers and is also likely to spark a wider debate on online regulation. And viewers, before we wrap up this show, earlier today we spoke with Nimesh Chandan, CIO at Bajaj Asset Management, about the ongoing earnings season and why he believes that crude oil remains the biggest macro wildcard for the markets. Let's listen in to a snippet of that conversation.
And it is my pleasure to introduce you to Nimesh Chandan, the CIO of Bajaj Asset Management. Nimesh, it is my pleasure to speak with you as always. Let me ask you about what you've made of the initial trends that you're seeing this earnings season, particularly at a time when just as we thought that the external front pressures would dissipate, they've once again seared upwards, right? So crude oil price back at close to $90 per barrel, but it seems like the print on the earnings is better than a lot of people had anticipated. What's your thought?
Hi, Alex. Always nice talking to you. If I were to summarize our view on so far the result season, I would say positive surprise. We were expecting, after all the geopolitical issues, the issues 2 months back, we were worried about oil supplies, gas supplies, inflation rising, super El Nino. Now, compared to all that, and now the result updates which have come in, or the quarterly updates that some of the companies have given at the beginning of the quarter, they look much better than expected, whether it is credit growth, whether it is consumption growth. So actually, we are positively surprised. Certain sectors are expected to be under pressure, like for example, IT, where we were expecting slower growth, and that has impacted their valuations also. So that has gone as per expectation. So net, while we don't see a very sharp increase in earnings for the Nifty so far, but with the results that have come, the trends are definitely positive.
Nimesh, Hiralia, the trends are positive. Now, if you have to correlate that to what's happening in the markets, down what, less than 10% at least from the last highs as well in terms of Nifty 50. But what is concerning is that we've always remained range bound in the recent past right now, and that's what investors are concerned about. In that kind of a scenario, are you seeing any green shoots where investors should start looking at in terms of sectors then?
That's a very interesting question. Internally with the team, we've been debating whether we should give a market outlook only based on Nifty, or should we actually give a separate outlook for mid caps and small caps? Look what has happened in the market. Small caps have had a fantastic rally since March. And the index is up more than 25%. Similarly, mid cap index is at a new high. I think a fantastic rally since March. And the index is up more than 25%. Similarly, mid-cap index is at a new high. I think small cap also intraday it went to a new high. So
याद है ना मैंने क्या सिखाया था? सिल्वर के लिए स्टर्लिंग मार्क, गोल्ड के लिए हॉल मार्क और
मस्टर्ड ऑयल के लिए सिर्फ पी मार्क।
इस बार तो माँ से भी बेहतर बना।
P Mark, the mustard specialist since 1933. बरसों से सरसों, कुछ तो बात since 1933. बरसों से सरसों, कुछ तो बात है इस दिल में।
जानते हैं मैं एलीट मैट्रिमोनी क्यों रेकमेंड करता हूँ? 17 years recommend करता हूँ। 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
This is India Inc.'s Roll of Honor, recognizing the leaders shaping India's growth story, where ambition, enterprise and excellence meet. In the presence of the Finance Minister, Nirmala Sitharaman. NDTV Profit Business Leadership Awards, 26 July on the NDTV network. India's unshakable news habit. NDTV.com is India's #1 English news website.
From a PwC standpoint, we actually set up criterion for each of the categories that we discussed with NDTV. A criterion was set up. Different KPIs were adopted for different categories. These are of course discussed, internally. We challenged ourselves, etc., and we made sure that the data sources were all very robust, so that the trust could be built in. So I think that's what defined, and of course, we eventually went through the jury process, and I'm glad the KPIs, if I may call it so, for the winners were ratified by the jury. In some ways, that's a ratification of
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
Let's kickstart this conversation with Vishal Kapoor, CEO of Bandhan AMC. In a bit, we'll get in Gopal Jain of Gaja Capital Partners as well. Vishal, great having you. Thanks so much for taking the time out and being with us. As a lot of your peer sets get listed and people get a slice of buying into the stocks of those or shares of those companies, one would love to understand from you, as somebody who's running this business actively, how do you see the growth path for an asset management firm over the course of the next 5 to 10 years?
Jigat, firstly for having us, but on the question, we are slightly conflicted because we are in the asset management business, but we do believe it is a fabulous business to be in. It's not just one or two or three, but many levers that are helping us. Firstly, of course, there is nominal GDP, which is growing quite well, and that has its own income and savings effect on, on a large demographic which is beginning to come into the middle class. In addition, we have a larger financialization theme. So as people save more, a lot of more proportion of that assets is coming into financial assets. And within that financial assets, over the last decade or so, we've seen that mutual funds have been beneficiaries and clearly getting established as the primary savings vehicle and investment pool for retail savers. So these three factors combined is, I think, giving us a runway, which is really, I think, still in the early phases of its growth. We've done very well, as you know, as an industry. The industry has grown assets at significant high double digits. But as I look ahead, I think there is still so much room to grow. Like I said, it's still in the early innings of growth. Clearly, over the next 5 years, I would expect this to continue growing at significant double digits. Doubling from here would not be surprising at all.
Interesting. Okay. Gopal Jain of Gaja Capital also joins in, and Gaja, I believe, is slated to come out and get listed sometime later this year too, in the alternative space. So not in the retail mutual fund, or not in the mutual fund space, but in the asset management space firmly. Gopal, good having you. Thanks for joining in. Kickstart this conversation with Vishal, talking about how while there has been some road to growth already established over the last 5, 10, 15 years for the mutual fund industry, for asset management as a space, there is, according to Vishal, a lot of room to grow for the next 10 years at the very least, maybe even longer. What is your sense, Gopal? How do you see the next 5, 10 years for the space?
No, absolutely. If you just look at the numbers speak for themselves. I think Vishal was being very modest when he was talking about the growth in the mutual fund industry. If you look at the last 10 years, mutual fund industry has grown 6.3x. And, the tailwind for asset management, for the tailwind for savings in general, and equity in particular, is longevity. So, India is broadly, in terms of its social indicators, in terms of median age, in terms of life expectancy, where the US was 40 years ago. And you see how far the US has come in terms of allocation to both mutual funds and funds in general and alternatives. So alternatives in the US were less than 1% about 40 years ago, and they are 3 to 5% now. Similarly for equity. So the drivers are longevity, the tailwind is longevity, the drivers for the two businesses are a little different. The growth for mutual funds has been 6.3x. The growth for alternatives in the same phase has been 43x. This is just the base effect. So mutual funds were growing off a larger effect. Both the industries are compounding, and Vishal would have a better estimate as to how does he see the industry growing forward. But you can expect, as the bases become larger, both for mutual funds and AIs to keep growing, but maybe not grow at the same rate that they've grown in the last 10 years.
Which is fair also. So Vishal, let me take that question to you. MFs have a larger base. The next vectors of higher than average growth, do they come by deeper penetration and use of technology, or do asset management firms like yourselves, which are powerhouses in the mutual fund space, also adopt alternative products as a way of growth? Because that space, you can argue, relative to the world or even in absolute terms, is still in its nascency, if you will.
Question, Neeraj, and I think at least for Bandhan AMC, I can say that we look to grow on the alternate side as well. So we do have a Vidarth alternates platform. We are in the SIF space as well. So that's the new emerging product, as we all know, in the middle with our Aruda SIF. So a full service asset management company offering mutual funds, SIFs, alternates, etc., can definitely be one format for driving growth across the various segments that are emerging. And I think, like Gopal mentioned, the growth ahead is just many fold. Just looking at our penetration, AUM to GDP is a simple measure that is used globally to look at how much more headroom we may have. We've done very well, but we are still in the 20% odd mark. Keep in mind that most developed markets are more than 100% AUM to GDP. The global average is close to 70%. So even if we look at the next 10 years of doubling from here, we are still looking at about 30-35% AUM to grow. So from there, you can still double and still come to average. So you can get an estimate of how much more room we have. Certainly from a larger base, mutual funds, and really this depends on which products deliver how, but the growth rate on a smaller base for alternatives is faster. It's also reflecting what investors are choosing. So as investors mature, maybe looking at more sophisticated strategies, taking on more risk, and looking at nuances in their portfolio is becoming the next phase of growth. And certainly both alternate managers as well as mutual funds or AMCs such as us, which also have an alternates platform, can be both growth engines for us.
Now, Gopal, because of the base effect and the fact that we're still in the nascency, the growth mark of alternatives can't be questioned. The question will literally come is that what mutual funds have done beautifully is democratize investments, single stock investments, which could have been large and not as safe, into something which is safe and available for the small ticket investor as well. Obviously, alternatives can't go down that far at 250 or 500 rupees, but as you look far, right, and you know, I mean, there is a need to connect domestic savings more effectively to private markets. How can alternative managers do that while maintaining investor protection?
So that's a great question, and we see this happening in 3 steps. First is democratize institutional access. So there are many institutions today who cannot participate in alternatives, leave retail investors. What does that mean? When tomorrow EPFO, NPS, etc., start investing in alternatives, then in one stroke, crores of investors, underlying investors, get access to alternatives. The second step is regulated intermediation. So SEBI has just come up with the SIF category, which lowers the threshold from 1 crore to 10 lakh, and it has worked very well. And I think in 1 year it has raised close to 18,000 crores. And the third step is accreditation. This is a beautiful step that has been initiated by SEBI, which is accreditation moves away from minimum ticket size of 1 crore to income and wealth as a criteria. And I think this will further broaden access for investors. And then, of course, there are listed products. There are REITs, InvITs, and down the road, there'll be listed managers. These also democratize and mainstream alternatives, furthering access for alternatives to those investors who either do not want to commit 10 to 15 years or who cannot invest, like vast sections of retail investors who will neither qualify to be accredited nor meet the 1 crore minimum.
Okay. Now, Gopal, this question goes to you. Since Vishal runs a retail mutual fund pocket, I want to ask him to analyze his peers. But you can definitely look at the space which is available for investors right now to invest in as right now, right? What would determine which of the asset managers will come up trumps over the next 10 years? Is it ones which combine traditional investing and alternative investing the best? Is it the technological edge? Who determines that amongst the, who determines or what will determine who's the first amongst equals or 1, 2, 3 amongst equals?
So I'll take a step back, and my way of looking at this question is very different. I don't think it's just about technology. I don't think it's just about products. I think it is about performance and hygiene. I think managers that continue to deliver on performance consistently, whether it is public markets or private markets, will win. And similarly, investors that continue to deliver on trust and transparency will win. See, 10 years ago, the mutual fund industry started institutionalizing. And today is a major milestone. I think with SBI mutual funds listing, now 50% of the AUM is listed. So first we institutionalized savings, then the managers themselves got institutionalized. In private equity, this playbook in India is yet to play through. Institutionalization of managers is just about to begin. And in a few years, you will see greater institutionalization. And what does institutionalization bring? It brings transparency, it brings succession, it brings greater equity ownership within teams, greater alignment, so on and so forth, and inspires more investors to come forward. So my framework for this is performance and hygiene. Some managers already have it. those who manage to keep it, those who manage to excel on these two parameters of performance and hygiene will continue to succeed or will overtake others. I think selection of products, public plus private, public alone, private alone, technology, these are all enablers.
पर जब इंसान प्रकृति के साथ सामंजस्य को आत्मसात कर लेता है तो वो मधुर और लालन पोषण करने वाली बन जाती है। पी मार्क सरसों के तेल ने प्राकृतिक तरीके से सरसों के तेल को बनाया है शुद्धता और गुणवत्ता के साथ।
The mustard specialist since 1933. बरसों से सरसों।
कुछ तो बात है इस दिल में। जानते हैं मैं एलीट मैट्रिमोनी क्यों रिकमेंड करता हूँ? 17 years of experience, largest database of elite profiles, और 100% confidentiality. Elite Matrimony, India's most successful matchmaking service for the elite.
आपका पार्सल फिर से हमारे घर पे आया है।
कुछ तो बात है इस दिल में।
माँ भी हमेशा पी मार्क मस्टर्ड ऑयल में ही खाना बनाती थी, ये आपके लिए।
कुछ तो बात है इस दिल में।
P-Mark, the mustard specialist since 1933.
सरसों से सरसों।
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kinds of awards and jury lineup. You have two.
Good evening. You're joining us on the show that gets you the complete picture of the business day from the headlines right down to the bottom line. Welcome, I'm Vikram Oza, and these are the news stories that we are tracking on the show tonight. The market ends in the red this Tuesday because of fresh developments in the Middle East. The Nifty erasing more than half of Friday's gains in the first two sessions of this week. SBI and HDFC Bank are the top losers on the Nifty today, and the broader markets have outperformed the benchmarks. Bajaj Auto's net profit has jumped 42% on record exports and EV growth in the first quarter, the management announcing a heavy new launch pipeline for the next 6 weeks. Meanwhile, Adani Energy's revenue rises 42.4%, while its EBITDA is up 30%. The SBI Funds Management stock closes 6% higher than its issue price on its market debut day. With that listing, the company has become India's second largest asset management company by market cap. Brent back in the green after staying in the red all day as mediation hopes grow between the US and Iran. Brent is near $89 a barrel. The Houthis have expanded the Saudi shipping blockade threat. Now the warning has been issued to all commercial vehicles. Maruti Suzuki has announced a price hike for its vehicles of up to 30,000 rupees across all models. It's effective from the month of August. It's the second hike by Maruti Suzuki this fiscal. Day 2 of the monsoon session in Parliament. In response to questions, the government highlights strong FDI momentum, with inflows rising 18% to $58.85 billion in FY26. And even as customs and DRI stay on alert, gold seizures have jumped to 161 kilograms after the import duty hike. India summons Russian diplomat over the death of 4 Indian seafarers in the vessel attack off the coast of Ukraine. India conveys an unequivocal condemnation of the Russian attack. Our top line is a new story that is stirring up quite a lot of political heat. Farmers from Punjab, Haryana, Himachal Pradesh and Rajasthan have been on their way to Delhi. And this is for a large gathering protesting the proposed trade deal between India and the United States. But they have been stopped at the Shambhu border by the Haryana police. Now, with the entry to the capital that has been blocked for them, the protest has shifted to the border itself. So at the heart of this concern is a simple question. If India is opening up more of its market to American farm products, what really does it mean for Indian farmers? Farmer groups are fearing that it could put pressure on incomes, it could hurt allied sectors, and that it could have ripple effects through the rural economy. The government, though, is pushing back against those fears. It says there will be no compromise on farmers' interests, that key agricultural products remain protected, and that any agreement with the the Americans will be signed only after safeguarding of Indian agriculture. So now the question is this concern justified or is it premature? What exactly is on the table? Where are the red lines when it comes to Indian farmers? To help us decode that bit, agriculture economist D. Chandrasekhar is joining us. Good to have you with us, Mr. Chandrasekhar. Just to be able to understand how this is poised as a debate question. The trade deal has not even been signed yet. So what exactly are farmers really worried about? What are they seeing that has prompted protests at this stage?
It's like this. There have been a lot of news reports over the last several months, probably a year, about the imminent but impending trade deal with the United States. One of the focus areas would obviously be agriculture commodities. And therefore, farmers are apprehensive that if India were to open up its agriculture markets for the US agriculture products, including genetically modified crops and seeds, then it could really compromise the income security of domestic farmers. That's an apprehension. But I know the government has repeatedly assured that they will do nothing that would compromise the interest of Indian farmers, Indian growers. And therefore, at this point of time, I see no reason, or I don't know what is the trigger that has brought farmers from Punjab and Haryana towards Delhi. But I also think we need to be sympathetic to the farmers. Somebody from the government, some representatives must go and talk to them, engage with them in a conversation, try and understand from them what their concerns are, and allay their fears, saying that the government is committed to safeguarding their interests. I think it's a matter of diplomacy, conversation with farm leaders and allaying their fears.
But Mr.
Chandrasekhar, I think it's premature.
Yes, but you think this is premature. But like you said, this is about the negotiations that have been going on for a while. So which are the sticking points in those negotiations? Is it dairy? Is it maize? Is it soya beans, apple, poultry, ethanol as well? Where are the sticking points right now? The pressure points, where are they emerging as far as the negotiations go, which could be the reason why farmers are apprehensive?
Yes, I think that all those commodities and crops that you mentioned, the trade talks, these are the sticking points primarily. For example, India does not want genetically modified soybean to come into our country. We do not want genetically modified corn or maize to come into our country. And dairy, of course, for us is absolutely sacrosanct, and therefore there is no dairy product would come into the country from the United States. We will not open up these commodities and crops for trade, for import in particular. But at the same time, look at this. We are large importers of vegetable oils. We import 16, 17, 18 million tons of various edible oils, including soybean oil. We import large quantities of cotton. Last year, we imported 5 million bales of cotton. We also import a lot of pulses. We import pulses from the United States also, lentils, for example. And therefore, we allow import of a number of commodities. Obviously, the US would be happy if they have a slightly higher share of the Indian markets in commodities where our import policy is open. But our import policy is not open to, for example, genetically modified crops. Therefore, these are the challenges for the Indian government to let the US policymakers know about domestic sensitivity. Second, farmers fear excessive import may depress domestic prices, which will in turn reduce their incomes. And therefore, the government of India must allay their fears by saying that there will be, if need be, quantitative restrictions. There will also be sanitary, phytosanitary, and qualitative restrictions, etc. I think it's a matter of negotiation. It's a matter of discussion and conversation with the farmers to allay their fears.
So allaying fears at one level, but how, when you talk about the competitive landscape, and you did talk about it, that the farmers have this fear that if you're going to have subsidized American goods coming through in the Indian market, then what does it mean for the rural economy? What does it mean for their livelihoods? Are they able to compete at the stage which we are at? Are those concerns valid?
In my view, yes, those concerns are valid because the US gives huge amount of subsidies for many of their agriculture commodities, and therefore we would actually be importing subsidized American agriculture commodities, and therefore we can have tariff measures to ensure that the subsidy part is neutralized when those commodities come into our country. This is one. But I think the more important part for the government of India to do is to actually strengthen our domestic agriculture. And that's, of course, a very different conversation. There are multiple actions that the government of India needs to take to strengthen our domestic agriculture so as to make it globally competitive. We are today not globally competitive, but we have to move towards global competitiveness, for which a huge amount of political will, financial commitment, and will to implement is what is required. But that will require a very long debate primarily.
But Mr. Chandrasekhar, if I can ask you very quickly, one of the demands as well from the farmers is that there should be greater transparency in what is discussed with the Americans when it comes to the trade deal. Is that also a fair demand, you think?
I don't think, when these trade deals take place, and you have several rounds of discussion, I don't think the policymakers or the government representative can keep on announcing, this is what we discussed today, this is what we're going to discuss tomorrow or whatever. I think when we reach a particular point of agreement, and just before the agreement is signed, possibly there could be an announcement saying 1, 2, 3, 4, 5. This is what we've agreed. But it would be premature for anybody to even expect that on a day-to-day basis, when negotiations go on, that the government would come out and make announcements. I don't think things work that way.
So the debate may be over tariffs and trade, but the real challenge now is balancing India's global ambitions with the livelihood concerns. And this is about millions of farmers. Yes. They really form the backbone of the rural economy. Mr. Chandrasekhar, always a pleasure getting your insights. Thank you so much for joining us on The Bottom Line this evening. Meanwhile, we are looking at farmer leaders and individual farmers joining the ongoing student-led NEET and exam irregularity protests that are going on at Jantar Mantar in New Delhi. Already, Congress leaders led by Mallikarjun Kharge and Rahul Gandhi as well as Priyanka Gandhi Vadra are staging a protest near Prime Minister Narendra Modi's residence in New Delhi, and they're demanding answers from the government over the alleged NEET irregularities. Several senior party leaders have joined the demonstration. So after nearly 20 minutes, Minister of State in the Prime Minister's office, Jitendra Singh, has met the protesting leaders and has urged them to end the dharna, but the protest still continues. We'll keep watching for more developments on that count. But yes, it is day 2 of the monsoon session. The government has shared fresh details on the progress